given that drop of 0.3% by the close yesterday. FTSE 100 futures, despite the beats coming through for BP and Barclays and the higher oil price, currently pointing modestly lower, but just by 4 points. We'll see how that
expecting it at an index level to deliver very much. The FTSE 100, as Tom predicted, not doing very much. We're down by 0.1%. These are not big moves that we are talking about here. The CAC 40 is expected to open in a similar sort of story. Stock 600, basically that's just a reflection of the FTSE at this point in time, plus a few other single stocks. We'll wait and see what happens there. But nothing exciting to report. But I can tell you that below the surface, exciting things are happening. Single stocks are moving. We're getting a lot of activity in terms of the corporate reports this morning. So the AEX down by 0.2. The IBEX is up by 0.4%. A little bit of outperformance coming out of Spain this morning. The DAX, I wonder if the DAX will take a little while to get going this morning. So we'll park that one for now and talk to Tom about what's happening in the sector story.
On the sector-by-sector story then, energy, not a big surprise, of course, given the upside that we've seen in Brent in the session today. So 8 straight days, 7 straight days of gains and above $110 a barrel. Energy, 0.7%. That is the best performing sector so far. Basic resources up 0.5%. Utilities gaining as well, just 0.3%. In another way, of course, a headline, flat market across the stocks 600. On the downside, healthcare. So Novartis, a drag there on the broader sector. That is the biggest loss across your sectors is healthcare, down 0.7%, at least so far. Tech also lower by 0.3%. Again, energy on the upside, biggest gain across your sectors, up 0.7%, and some individual moves that are pretty interesting as well, Anna.
Yeah, we've got Barclays down by 3.3% on the back of the numbers there, perhaps not necessarily getting the best of the gains for the FIC traders that we saw for other Wall Street rivals. BP is moving to the upside on the back of its strong trading performance. So we've got two sides of that trading narrative. So there's been a lot of volatility in who managed to make the most of it, I suppose. BP winning out in terms of today's price movement, price action. Novartis down by 2.9% on the back of its numbers. So that is that one just opened actually across the European markets.
So Barclays is being punished, which I think is interesting. So I'd seen two calls, one of which was higher, one was flat, but it is down quite sharply, nearly 4% to the downside. So Barclays under significant pressure this morning on the back of its numbers. BP is outperforming the sector, so the sector is higher. You've got names like Total and Shell, they're up by kind of 0.6%, 0.3%. BP is outperforming, and it's up by 2% this morning. So this is based on numbers. This is not what we're seeing in terms of the commodity trade, which is interesting. It is, though, getting a lift from that too. But it's interesting to see that we are seeing Novartis down. But you've also got AstraZeneca soft this morning. Just want to check that it's not one of the ex-divs, of which there are a few. LVMH, Christian Dior, Henkel and Bouygues are ones that stand out. So it looks like pharma is under pressure this morning as a sector, and Novartis maybe is the catalyst for that.
Let's get another view on these markets then. Jeff Hughes joins us, Senior Market Strategist over at BNY. Jeff, good morning to you. So I wonder whether you are, well, energy stocks once again to the fore, energy prices moving higher, oil prices at 110 on Brent, up by another 2.4% this morning. Do you see any reason not to lean further into energy names?
It's almost the safe haven sector right now. If you look at our flow data, our holdings and figures, what's interesting is some asymmetry coming through. We've been tracking sort of how this gentle recovery has been taking place across sectors, be it semis, even consumer staples and all of that. But what's happened is, even though you've seen a bit of a risk recovery across all themes, energy hasn't come down. So there's no rotation, let's say, out of energy and into some of the sectors which have actually suffered. People are staying there, and I think this means they want that defensive hedge for oil prices for many, many months to come at least.
Right, so for many months. And so tie that expectation for energy stocks to what your wider expectations are for European stocks then.
Well, for Europe, I think right now it's all about financial conditions and the supply shock. And to be frank, heading into Thursday, the last thing that the ECB should be thinking about, I think, is tightening rates, right? So I think the stock market heading into that decision needs to be very cautious in terms of their outlook. And I've seen a bit of a pullback in terms of their language, I think, amongst some of the hawkish members of the governing council. Yep. You don't lean into a demand contraction. So I think from the earnings outlook, both on the private side and also for corporate investment, of course, they need to get the input side in place, but they need to know that X energy, X supply, that financing, what the ECB does, that is not an additional constraint. And to be frank, that's what I'm worried about heading into Thursday.
You're worried that essentially the ECB makes a policy mistake by hiking rates because of that single mandate on price stability. That's a constraint for them.
Absolutely. And if you, again, going back to our flow data, what's interesting is you've seen about 50, 75 basis points being priced in a couple of weeks ago. Well, more so, for the BOE and the ECB. Okay, fair enough, right? But then we also saw that divergence in terms of cable flow and euro-dollar flow. Clients were hedging euro-dollar again, not too keen on European exposure, but they were buying back sterling. So you had this rare instance where the more aggressive central bank expectations become, the more detrimental it was actually for the currency. Normally currencies don't behave like that, right? So I think that was the market, or rather the equity market, and certain parts of asset allocators hedging their equity flows, also telling the ECB this may not be the right approach.
How does that pound story play out then on the back of the BOE?
So where we'll see what the BOE signals, but even from some of the hawkish members. So maybe you get one or two hikes. I think markets look for 8.1, 7.2 at most. But from the outset, if you look at the communication in March, for example, there wasn't that willingness to hike A and B. I think a greater recognition, almost a dual mandate, back to your point, a recognition that because the household is in a very different place compared to 2022. I just look at the savings rate in the UK; it's close to 10%. In 2022, it was on the 2 handle. So households are far more retrenched compared to where we were, and the BOE recognises that. Is the governing council of the ECB recognising that, going to acknowledge that? I think that's going to be the key challenge for Thursday. Yeah.
If the Fed cut rates, what would be the implication? I think if the Fed cuts rates, the ECB hikes rates this year.
So that probably is actually going to be euro-dollar lower. Right. Again, because the Fed it's almost status quo, supporting the US equity story. So I've actually heard the phrase US exceptionalism come back. And what that means is stronger US equities, firm flows into fixed income, but crucially, the dollar strengthens as well, independent of what other central banks do. That's the key element there. So that is coming back into the lexicon. So January, February is all about hedging dollar, hedging your US exposures. That's sort of come off.
And completely reverse that now.
Indeed.
Right. The US story, though, is predicated on the idea that the tech story continues.
Yes. Yeah.
We've got this kind of weird situation where we've got rising oil prices globally. The global economy is going to come under strain. Yet the tech story appears to be independent of that. Is it independent of that?
So I guess you can make a stronger argument for the time being on the US side of it, and I say this pointedly, the US side of it, given the US is a net energy exporter right now, it's pretty much achieved energy independence. It's going to struggle less with the supply side of things, and also, tech has almost always been, let's say, inflation neutral, input cost neutral, because it's a secular story. I guess 2 to 3 months down the line, we haven't been talking about helium supplies, for fabrication for South Korea and Taiwan. I think that side of things is what the market will need to lean a bit more to. So it's not about the investment demand and the cyclicality of it. It's more, will supply constraints actually affect the actual manufacturing process and the fabrication process? But I guess markets are just assuming that we'll have some kind of a deal and the straits will open at some point. If it doesn't over the coming weeks or months, if the manufacturers, the fabricators start to signal supply constraints, I think that's where some readjustment of expectations will be needed, but we're not there yet.
So interesting to see if those two stories do come together. I mean, yesterday we were watching those headlines drop about Meta talking about getting its power from space. I mean, getting it, this is the extent to which this is a sector that does have power needs. They're talking about investing in space.
It's quite the reach, isn't it?
It is. It is. So you wonder whether these two stories will find each other. So going back to where you were talking earlier on, Jeff, about FX then, and the way you're seeing these really interesting moves in FX markets. So are FX markets not really moving on interest rate differentials then? That's not the driver. Is that the message?
I think it's policy optimality first. If you look at some other, so names like Norway, for example, maybe some weakness heading into month-end rebalancing. But Norges Bank, they've signaled one hike. The terms of trade situation for the commodity names in general, that overweighs that. So for the commodity names in FX, for the carry trade, especially in Latin America, again, that's another area where our clients are long the FX, they're long the bonds as well. It's almost price for perfection. That's where I'm seeing, I think, a bit of a recovery, or rather a bit of an adjustment is needed because the carry trade's gone a bit too far. But for European economies in general, I think anywhere, if they hike, leaning into a demand shock story on the back of a supply shock. Just look at every single PMI print, consumer confidence print. It's been really soft right now. That probably is not the right way forward. But having said that, in Asia, Southeast Asia in particular, with the Philippines last week, for example, that's where you're starting to see tightening come through. So they're more attuned to the balance of payments issues, and that's where some divergence may come through as well. So it's not about tightening per se, it's about tightening for the right reason or the wrong reason. Yeah.
Jeff, on the earnings story around tech and US big cap tech names reporting this week through Wednesday and Thursday, Amazon, Microsoft, Alphabet, etc., through to Apple.
Yeah.
The markets reward them if they start to suggest and point to a little bit of cooling in terms of the capex spend. If they start to show that they're being a bit more conservative on the capex spend, does the market reward them, or do they get punished because of fears that maybe the AI story is not coming to bear quite as some had expected?
I think it's adjusting, so addressing the right balance. I don't think punish is the right word, but I think there's going to be greater appreciation for your ROI. So what is your case, from the capex, right now? So if you can match your capex, with a solid demand story, I think that there is a middle path where markets can actually find the right way. But also there needs to be some acknowledgement about wider circumstances.
It's like a Goldilocks moment, really.
Well, I think we're searching for that Goldilocks moment. But again, Goldilocks is US exceptionalism, right? So is the market jumping back on that story, that AI-driven US exceptionalist story, a bit too early, given what's going on? It remains to be seen, but we seem to be so...
Is the market just looking for somewhere to hide, though? Because you clearly got an energy crisis that is forming around the world. Right. Every day the Strait of Hormuz is closed. And what do I invest in? Probably the least affected sector I can find. But there's an awful lot of money crowding into a space that is like the semi-sector, very cyclical historically, quite small, and there's a lot of money going into that right now.
So I think history might show that safe havens are safe havens until they're not, right? So should be treating the AI theme and semiconductors as a safe haven right now. If you look at flows into South Korean equities, how they've recovered into Taiwan, that's still being seen again as a secular theme. I think safe haven in the current environment is, as you say, something that is insensitive to the energy shock or to price constraints. But when financing becomes difficult, and crucially, if inflation in the US, if inflation expectations start to pick up again, and then the Fed may need to, so subject to Walsh coming in and all of that, they may need to adjust their views on where financing comes in, where the cost of money comes in. That's when things change. Right.
It wasn't that long ago. We were pricing in 2 cuts. We're probably, Jeff, nice to see you. Always a pleasure. Thank you very much indeed. Jeff Hughes, Senior Market Strategist, joining us in BNY. Call 6 looks like this morning. It's definitely a morning for single stock stories to watch out for. In terms of the numbers we're watching, LVMH is XD today. Defence stocks are a little higher. The chip space is mixed this morning. Nordic Semi is certainly having a good day. Elsewhere, the pharma space is under pressure. Let's get some more details. Barclays is having a tough morning on that FIC miss. We'll talk about that. And we've also got BP out with a trading story as well. Charlie Wells, what do you got?
Good morning, guys. So it really is a single stock day, and these are the sort of mornings that I really live for. Let's start with BP, right? They're up over 2.5%. This is on the back of a really strong earnings report. We knew going into this that their oil trading was going to be up. BP has had, a really good past couple weeks because they have that limited footprint in the Middle East. So again, this looks like it's positive news coming from that trading front. This is a boost for their 4th CEO in the past 6 years. So again, is this a different trajectory? trajectory for this company, at least this morning, that is what we're seeing. Different story when you go to Barclays. Let's bring that up and see how the market is digesting their earnings report that just broke in the past hour. Barclays down almost 3%. And this was, again, a story of trading, but a story of trading that didn't bode as well as a lot of its peers in the United States. So we know that market volatility had been really good for a lot of trading desks, but at Barclays, we saw weakness coming from their fixed income side. We saw an okay quarter for their equities trading. They beat compared to last year, but they just didn't have that bonanza that a lot of these big Wall Street banks had. So a challenging day for Barclays, especially as we think about some of their exposure to that non-bank lender market financial solutions. Bayer, also in the red, down over 4%. This is interesting. So this seems to be the market interpreting the comments that we were getting yesterday at the Supreme Court in the United States. Bayer faces a lot of litigation risk from this, from Roundup, which is that weed killer. There are allegations that it should have listed it as cancerous. That is a case that's going through the Supreme Court right now. It was mixed results coming from some of this commentary. So this seems to be the market not liking what it was hearing out of the Supreme Court. Let's flip and take a look at Novartis, right, in the pharmaceutical space, because they had a negative earnings report this morning, down over 4% here. And again, they face some competition from generic drugs that kind of stands in contrast to their strategy. They really have this cliff, this patent cliff coming up, the biggest in history for them. So again, struggling there, a lot of this competition coming from generic drugs at Novartis. Let's end on post-NL. So again, this is an interesting read on the market right now. It's a really interesting read on kind of the geopolitical situation right now because they are down. They also had a disappointing earnings report, and their management was talking about the environment that we're operating in, this challenging macro environment, consumer confidence down, right? Consumers not buying and spending as much, so not shipping as much, and then also fuel costs coming into focus. So again, today we're getting a lot of that energy, we're getting pharmaceuticals, and we're also getting shipping, but we're seeing how they're really linked.
Charlie Wells, thank you very much indeed. We're also going to focus in on Nordic Semiconductor because that stock is up close to 6% after a beat in the first quarter. Executives there talking about their exposure to AI and edge computing, devices, Internet of Things, typically is where this company has exposure, and they're growing that expansion, but they're talking up that AI edge story. The margin's looking pretty healthy as well. Gross margin for Nordic Semiconductor in the first quarter at 52.1%, and there's the stock up close to 6% in the session today.
How close are we to the point at which the market has, how much more, these companies have got to deliver a lot of good news going forward?
Yes, and these yes, indeed, these the companies need to, and this is having an impact on where value is being found or where market cap is being found around the world, isn't it? So we've got yes, the European story here, but a lot of the a lot of the tech enthusiasm right now is in Asia, right? It's in South Korea and it's in Taiwan, and we've seen the South Korean market now become larger than the UK's, and this follows after the Korean stock exchange. The Taiwanese stock exchange became larger as well than the UK.
You just have to look, back in 2024, the UK market was twice the size of the South Korean market, and now the South Korean market above 4 trillion with that growth of around 40%, 45% this year versus 3% for the UK market. So yes, we've been eclipsed again.
Old economy, new economy. Quick line out of Ueda, Governor Ueda, that's coming right now. A hike is possible, Governor Ueda says, and this is the press conference, it's ongoing, if the economy doesn't have a big slowdown, which I think is really interesting. So is he focusing on the hit that could come from higher oil prices, higher energy prices, higher prices more broadly, and that is a tax effectively and a slowdown, i.e. it is going to slow the economy down rather than worrying about the inflationary story, which will potentially come from it as well. That's the kind of the dual mandate debate that is going to be happening around the world, maybe not at the ECB, but elsewhere certainly. And that's what they're trying to balance right now. They see the inflation, but they also see the risk of a growth slowdown.
Really complicated picture. I will say that the dollar yen is entirely flat now as a result of this press conference. So he's said a lot of things, and that one recently pushing the dollar yen back to flat. Coming up on the programme then, we will talk about BP and its share price performance this morning. This one of the beneficiaries of strong trading over the past quarter. BP's earnings jumping. The Iran war, of course, leading to a surge in profits. Its trading arm doing very well, particularly around oil. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Haslida Amin in Davos, Switzerland, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
BP stock up 2.7% right now. It's reported numbers this morning. First quarter pickup led, of course, by the disruption that has been caused as a result of the situation in Iran. Oil trading, certainly a big beneficiary of that. Bloomberg big oil reporter, Mitchell Furman. That just came out weirdly, I'm sorry. Trading did well.
Yeah, it was an exceptional quarter, as BP characterized it, and you know, this is big for the company as their rivals saw some of their operations in the Middle East disrupted and production offline in that region, and BP was able to escape more of that than most of their peers, and because of their trading operation, they're really able to kind of capitalize on these market disruptions.
What does this mean for the relatively new CEO then, Meg O'Neill? I mean, to what extent does this bolster her prospects? This is a company that's had to kind of rethink its strategy a number of times. She's now at the head of the operation, trading performing well. They're benefiting, it's uncomfortable truth, but they're benefiting clearly from the disruption in the Middle East. How does that set her up?
Yeah, a lot of work to go for the new CEO, but analysts are characterizing this as a positive start and a strong debut. You know, this is a tailwind as she seeks to repair the balance sheet and bring down debt. Debt did rise in the quarter. That is partially a result of a working capital build, but no doubt earnings more than doubled from a year earlier.
I mean, clearly, the focus very much on the strength in the trading area, Mitchell. I was looking through the statement, and every time they mention trading, the word exceptional is somewhere in the text, somewhere around that. So clearly, that's done well. Are there execs in the industry, though, in big oil, who are concerned about demand destruction if prices stay this high, or are they just happy to take these kind of prices?
Yeah, no, I mean, look, at these higher prices, there are other issues that are introduced, right? The companies themselves have to pay higher prices for products. You know, BP mentioned today in the statement that refining margins, which were strong in the quarter, but they remain sensitive to the Middle East uncertainty, and, you know, as BP, you know, they need to pay more to source their products.
Mitchell, thank you very much indeed. Bloomberg's Mitchell Furman on the results for BP and how that sets the company up for the quarters ahead. Now to what's happening in the tech space. OpenAI reportedly missed its own user and sales goals This according to reports in the Wall Street Journal, suggesting that it's fueling internal concerns that the company may struggle to support its astronomical spending on AI infrastructure. Neil Campling, Bloomberg's senior strategist, joins us now. Neil, the context is that OpenAI has promised to invest or to be involved in about $1.4 trillion of infrastructure spending. It's worth noting that those, not all of those are lock-solid, concrete commitments. It's more of an aspiration. But nonetheless, it's causing some concern. We saw that reflected in the SoftBank stock today. That's a clear read on OpenAI. There is concern amongst investors that maybe OpenAI is not getting the traction needed to support that spend.
Very fair. Fair summary. Not even sure why you need me here. To be honest,
additional context,
the
Neil,
additional
how
context.
investors are looking at this. Is that the right read on this?
I think
and is this a question about competition versus Gemini and Anthropic, or something else going on here?
I think it is highly likely to be about competition. Anthropic, which the developers came out of OpenAI originally. Yeah. So let's look at the context here. In that OpenAI put out a statement at the end of March saying they were running at $2 billion of revenue a month. Mm-hmm. Bloomberg News reported last month that Anthropic were already running at $20 billion a year, where they're only a fast follower. So they're already catching up really quickly with OpenAI. The question is asked, if they haven't reached the 1 billion of active weekly users at OpenAI, whether that's reflective of these competitive challenges. I suggest the answer is yes, it is. And if you look at the stocks involved in these various AI complexes, the Google AI models, which have not had a recent update, but they've had a fantastic run. You've seen a lot of we saw the SOX index, as we've mentioned before on the show, that has had this record run, which came to an end yesterday. So I think there are definitely questions about, back to the old questions, are we going to see the return on investments from all of these massive AI spends? And that question remains to be seen. But leadership changes so quickly in tech. Where do you justify the $1 trillion of spend that's coming through?
We talk about batteries. CATL, overnight, raising money in Hong Kong. Had to price it at this is a private placement. This is a stock that's listed. This is a private placement. But they priced it at, what, a 7% discount, bottom of the range. Why did they have to price it at the bottom of the range?
It's a huge raise, for one thing. And the returns investors are going to get on this particular product is a long-term out, because what are they mainly using the money for? Guess what? It's AI related. It's data centers. It's storage. It's energy storage for the data centers. So again, it's not like where you're going to get a quick return on any of these kind of investment cycles. It's a very long dated. The AI data centers, some of them are taking 5 to 10 years to actually come up to sort of commercial viability. So I think you have to price this at a reasonable discount because the investors are going to take a long time to get returns on those investments.
Neil, thank you very much. Thanks for joining us, Bloomberg senior strategist Neil Campling. Coming up on the programme, we'll check on Barclays and discuss European bank earnings. Chris Hallam will be with us, head of European Financials Group at Goldman Sachs Global Investment Research. What do we take away from the Barclays numbers in terms of the performance at the top line versus Wall Street? It seems as if that is something that is weighing on the share price today. What do we know about the rest of the European bank earnings season? We're about to get some other earnings this week. We'll get into that as well. This is Bloomberg.
What's great about it is it's a well-developed gaming ecosystem, right? So folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed. This gives you both that upside and the downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are gonna unleash this with a bunch of creators, and they're gonna go figure out stuff that we didn't even imagine that they can do with that interactivity.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome back. This is the opening trade, 30 minutes into Tuesday's session, and it's a negative one, but just down by 0.1% or so. So that's the overall picture on the Stoxx 600. The DAX is one of the worst performers of the major markets, down by 0.25%. Bayer is one of the stocks under pressure on the German market. The CAC is pretty flat. The FTSE 100 also pretty flat, but just to the upside, energy and utility stocks, Guy, no surprise that those are moving higher today, and they cushion the FTSE 100 from the worst of the downside, given that oil prices are higher.
Basically, indexes aren't moving very much this morning, and you can see the reason why right here. This is the Stoxx 600, 290 stocks up, 289 down. Basically, kind of one for one in terms of what we are seeing. Obviously, there's a weighting issue, and that is a factor. Volume is once again slightly weak, and that is a consistent theme that we see in these markets, which are struggling, I think, to get full interest from all of the normal investment groups, and that is why you're getting that number. But we're basically in a balanced market. So let's talk about the leaders and the laggards, because it's a single stock kind of day. Nordic Semi is having a great day on the back of its numbers. It is rising sharply. It's off its earlier highs, but still up by 6.5%. BP has had a very solid day as well. You can kind of understand why with what is happening with the oil price in terms of the basic, we are a producer of hydrocarbons business story. But actually the story here is about trading, and the trading has done very well. BP up 3% on the back of that. Anglo's also rising. So commodities are having a good day. We're up by 1%. It's got numbers out this morning. Downside. Let's talk about the downside. Novartis. I wasn't expecting this morning, but we got it. The numbers look weak, and the market is reacting quite negatively to Novartis on the back of those sort of numbers, and it's dragging the entire pharma space with it. Pharma is definitely under pressure this morning. Bayer is also under pressure. This is a ruling from the Supreme Court, which obviously relates to the Monsanto acquisition. It is down by 3.41% on the back of that. That's a big drag on the German market. Barclays is the interesting one today. And the narrative here basically is not as good as Wall Street, seems to be the story. Equities did pretty well, but it's the FIC miss that seems to be actually the factor that is concerning people here on the trading side. But there are other elements which we'll get into in a few minutes' time. But Barclays on the back of this is down by 3.3%. And basically what you've got today on the FTSE is the commodity side of things and what is happening on the pharma side of things. And both of those two are kind of offsetting what we're seeing in the FTSE 100. But Barclays is down 3.4%. I think the call with Venkat is ongoing as we speak. Anna, what do you got?
Yeah, let's talk about some of the other stories we're covering then this morning. The Bank of Japan left its benchmark interest rate unchanged in a split vote. The 6-3 vote represents the biggest divide under Kazuo Ueda's governorship, suggesting swelling pressure to normalise policy, with traders seeing a 74% chance now of a rate hike when the BOJ next sets policy. That'll be in June. Bloomberg has learned that Blue Owl investors have rebuffed a share buyout offer led by Saba Capital's Boaz Weinstein. Sources say holders tendered less than 1% of shares in Blue Owl Capital to Saba and Cox Capital Partners, which had offered to buy them at a steep discount. It suggests the malaise in private credit has its limits with investors. And 9 jurors have been seated in the trial between Elon Musk and OpenAI chief Sam Altman, a case that could determine the future of the AI company. Musk accuses co-founder Sam Altman of abandoning the company's altruistic principles and converting to a for-profit company. Altman and the company say that Musk is trying to undercut competition for his own AI startup. Musk is seeking $134 billion. Tom.
Let's get back to the banking space right now and what's happening with Barclays. Barclays shares lower, as we were marking this morning, after the company reported that traders struggled to capitalise on a volatile quarter, with returns falling short of their US rivals. Let's bring in Chris Hallam now, head of European Financials Group at Goldman Sachs Global Investment Research. Chris, thanks for joining us. I want to start on the fixed income story for Barclays then, that Guy and Anna have been zeroing in on. By comparison, so JP Morgan's FIC trading came in 21% increase. Morgan Stanley's 29% increase, Citigroup 13% increase, Barclays 1% rise in FIC year on year. How much of a problem is this for them longer term?
I think there are two things to think about within the print this morning, and as Guy mentioned earlier, Barclays a little bit lower with a P&L that's a slight miss versus expectations. But before we come to that FIC point specifically, there are a few different elements within the P&L to consider for the first quarter. So they had a motor finance top-up, they had an expected provision on a one-off name in the IB, and they had a slightly higher level of underlying OPEX, which they're sort of talking about as accelerated investment. If you exclude those things, then the P&L is a little bit better than people thought it would be. It's sort of very easy, though, to say if you remove all the bad news, there's good news left over. So I think that's something to consider. Specifically within FIC, I think it's really difficult to read into one quarter. We need to look at one quarter, first quarter last year, 2 years ago, 3 years ago. There is a broadening narrative, though, about capital intensity within the markets businesses. Broadly, we're seeing a narrative across the IB space that the markets businesses are holding up really well. But it is a competitive world, so there's more balance sheet being put to work. You can clearly see that from Barclays, not just in FIC, but in equities as well. And to what extent can these banks keep up with some of the competition, particularly when you've got certain banks, Barclays is one of them, that self-imposes a cap on how much of their group balance sheet they want to put to work within the IB versus the UK versus the US consumer business, for example.
So today's market reaction is an overreaction, or it's fair?
I think today's market reaction is an early reaction, I think, to begin with. It is a pretty messy P&L, I think, if you dig through all those different line items I talked about. And then I'd also say, this bank has been an unbelievably good story for the last 18 months or so. Very strong capital markets day at the beginning of this year, multifaceted business plan, big, I think, focus on the potential for shareholder distribution to exceed how it's been guided to, so people looking for upside in that regard. But your question on competition within FIC actually speaks to capital intensity of your growth. So if your growth is becoming more capital intense and the narrative in part around the story is increased capital flexibility, those two things to a degree stand in contrast to one another. And so we need to sort of digest whether overall capital flexibility is being reduced by some of these dynamics you talked about.
Is it unfair to compare European banks to Wall Street banks, just in terms of the capital rules that they both work with?
I think comparisons are never perfect, you're right. And look, I think the direction of travel was quite clearly in two different directions for a lot of the last 6 to 12 months. You've seen in the last 6 weeks or so a little bit of news flow that maybe is supportive of an easier approach from the European side. We had a proposed rule change effectively delayed last week, so that makes it easier for some of the European trading operations. The UK has always been slightly more accommodative. I think less so on the regulatory side, but also just clearly in terms of scale, right? So you look at the banks which are number 5, 6, or 7 in some of these markets businesses. The banks which are the top 3 are sort of double or 3 or 4 times the size of those. So there's just economies of scale to consider here as well.
European banks have had a great run over the last few years. But I'm looking at PMI data, I'm looking at economic data, and that's telling me that maybe we're seeing an economic slowdown. The oil price could be a big factor in that, but there's other stories to plug in as well. Do I want to own banks in an environment where you are seeing PMIs rolling over pretty sharply, where I am seeing economic growth rolling over? What is it going to take to get European banks, in terms of the upward trajectory we've seen in share prices, back on track? Can they do that with this macro backdrop?
So I think history would tell you you absolutely do not want to own banks in periods where the macro news is getting weaker or rolling over. But I think today is a little bit different to where it's been in the past, and we can talk about that. I think we've said, is there value in this sector, and is this sector resilient? There's clearly value in the sector. The sector trades at 10 times earnings. European equities are at 15 times. They're paying out effectively all of their earnings. So you get paid best part of 9-10% a year to own a European bank on average today. Are they resilient? So there's two question marks there. One is, what have you been lending over the last 4 or 5 years, and what's your risk on credit losses? To your point, higher energy prices, higher unemployment, et cetera, et cetera. We think that risk is much lower than it's been in the past, partly because the lending patterns have changed so much in the last 5 to 10 years. So the balance sheets of themselves are less risky. The balance sheets are less committed to lending than they've been in the past. So loan-to-deposit ratios have come down. Actually, banks make a lot of money off their liability income. You've seen that with Barclays this morning, increasing their hedge income. So they're less reliant on lending to generate a unit of revenue. That means they're less susceptible to credit risk increasing because they're doing less lending. And then you've got things like the growth of the SRT market, which enables them to sort of push risk into other areas of the financial system and not sit on all of it themselves.
Chris, good morning. Do you ever worry about that SRT reflex, that the sort of removing it from your own balance sheet and put it somewhere else?
So in theory, I worry about it a little bit, yes. I think there's different ways to worry about it. First, does it all fall apart? No, and we don't worry about it from that perspective. These are very well-structured deals. I think, do some banks become more reliant than they should be on SRTs to provide them with regulatory capital? And then what do they do with that? If you do an SRT, your capital ratio goes up, simplistically. How much of that are you doing? How much are you inflating your capital ratio? If we get into a weaker macro scenario, to Guy's point, do you then end up with less of a SRT market to keep using and keep relying on for that capital? That's where I think we think about it, but no bank is getting close to that level yet. Okay. So the yet is doing a lot of lifting in that sentence.
Okay, so it's quite a marginal activity at the moment for these banks. What about the overall interest rate environment then? To Guy's point about watching these PMIs roll over, in particular on the services side in the Eurozone, I'm thinking here. And now there's, a real intense focus on how the ECB is going to play this. Are they going to hike because inflation matters so much? Are they going to not hike because they're worried about growth? Are they going to do both but at different time horizons? How are banks thinking about that?
So I think banks are thinking a lot about that, and we've got 20 banks reporting this week, so we'll know a lot more by the end of the week than also this morning. But I think there are two things to think about. Are these hikes good or bad? They're good mechanically for the P&L because net interest income rises a little bit because of the higher rates, as you mentioned. But there are reasons as to why they're doing that, and those sort of concerns can show up elsewhere in your P&L. I think, and Tom and I have discussed before, I think there has been a sweet spot assumption that 2 to 3% on a euro policy rate is sort of the sweet spot. So if you look at market implied forward policy rates, we're going from 2 to 270. So there's sort of 2.5 hikes kind of embedded into the curve. That is still within our sweet spot. So not so high that you're going to start to squeeze some credit exposure, but not so low that you're going to start to see really your P&L collapse from having lower net interest income.
Rest of the week, what are you looking for? What are the big names that stand out? Where do you think the surprises could come from?
If I knew that, my job would be a lot easier. I think, look, there's 20 banks reporting. There's going to be a lot of news. I think the consistent message is going to be or consistent question, how are you considering the impact of higher rates, to this question earlier? And what are you seeing on the credit side, if anything, that gives you cause for concern? I think the growing debate as well is, how does the real economy respond to an extended period of uncertainty? And in theory, you'd say lower activity, lower growth, lower lending. But when we've seen this happen in the past, particularly in 2022, you saw restocking, you saw companies buying more inventory at elevated prices, and actually you saw loan growth increase slightly. So if we go into the back half of the year and
but demand was strong. The economic cycle feels different this time. Last time we had strong demand, this time we don't.
Yeah, I think so. The economic cycle definitely feels a little bit, never feels the same in two different downturns. But I would say simplistically, because these banks have on a relative basis been growing that lending slower than they have done, let's say, than deposits have been growing, they've got the headroom to be there for clients. They've got the capital headroom and the liquidity headroom. So they can lean in a little bit. We talked about thick balance sheet, capital consumption. If they do lean in, the P&L in the second half becomes more reliant on lending. You lose a little bit of RWA flexibility. That will feed into slightly lower capital.
I keep this conversation going for ages. We didn't talk about private equity, private capital. There's all kinds of other things that we need to talk about. Fantastic to see you. Thanks for stopping by to see us. Chris Hallam, Head of European Financials Group at Goldman Sachs Global Investment Research. Thank you very much indeed. Coming up, we're going to take you back to the oil price and talk about what is happening there. The oil price continues to tick higher. This is the number you're looking at on the screen in front of you. Still got a Strait of Hormuz that is closed. Apparently, the US is weighing another proposal from Iran. We'll have the latest for you next. This is Bloomberg.
world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies.
With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Welcome back. This is the opening trade. Brent crude prices heading higher once again. It's the seventh day where we're seeing this. We're actually over 111 now on the Brent price. This as traders weigh the next steps towards peace talks, with the United States discussing a proposal from Tehran, we understand. For more, we're joined by our Middle East energy reporter, Anthony DePaola. Anthony, good to speak to you. So what do we know about the proposals put forward by Iran and whether they are likely to have any impact, to be agreed to?
Good morning. Yeah, we have heard from the White House yesterday that they are discussing these proposals. Obviously, meetings didn't go ahead over the weekend between U.S. envoys and the Iranian foreign minister, who had traveled to Pakistan. There, he apparently delivered some of those proposals to his Pakistani counterparts before then traveling on to Russia. So, what we're hearing about that are plans to potentially talk about opening up the Strait of Hormuz as kind of a way station to then discussing the broader issues of the nuclear program, of a potential nuclear deal. So from what we're understanding is that the Iranians have proposed to potentially allowing vessels to pass through Hormuz if the U.S. Lifts its blockade, which is interdicting any kind of Iranian vessels, Iranian-linked ships, or ships that have called at or are going to Iranian ports. So Iran wants to be able to move its vessels in return for allowing other ships to go through. That's, of course, a key factor for the global economy. But a lot of the producers inside the Gulf will be loath to resume production, ramp up fields, start refineries, unless they know that this is going to be kind of a lasting opening, unless they'll be able to keep oil flowing out of the Gulf and keep getting tankers into the Gulf. So Iran does retain that kind of threat there, and that's something that the Gulf countries really don't want. Of course, this is a problem that didn't exist before the war. Iran closed the Strait of Hormuz during the war, and this is the first time they've really been able to do that and impose these kind of restrictions and threats on global shipping. But the idea that would be kind of a temporary agreement to reopen travel there, and then allow the U.S. and Iran a longer period of time to discuss the nuclear program, potentially things like missiles or proxies, which the U.S. wants to discuss, but Iran doesn't want to discuss. So right now the U.S. is reviewing that. Trump is talking with his top advisors. We'll have to see if they decide to move forward on that basis or propose something else.
Anthony, thank you very much indeed. Anthony DePaolo joining us out of the Gulf, talking about what is happening with the energy story. Let's go from one energy producer to another energy producer. I want to take you from the Gulf to Norway. The ramifications of the conflict in the Middle East, I suspect, are top of mind at Norway's Sovereign Wealth Fund annual investment conference, which is taking place today. There, to be part of it, is Bloomberg's Francine Lacroix, who joins us now from Oslo. Fran, I'm assuming that the energy story, the Gulf story, is top of mind. You've got a good range of guests today to talk about that. What are you expecting to hear? What are the early indications from this event?
Good morning, Guy, and everyone. Look, I think, this event is perfect to take stock of what's really going on. It's trying to understand, to read between the lines on what happens next. So first of all, I'm very excited to speak to Nicolai Tangen. He's in charge of the world's largest fund, Sovereign Wealth Fund. It hasn't gone great just because of the volatility. If you look at the first quarter, look, they disappointed, investors a little bit. They're worth $2.2 trillion. It was down to 1.9. This also was an impact because the Norwegian krona was one of the best performing currencies amongst the G10. But the question, the broader question is really there seems to be a mismatch, and I know you, Guy, and Anna and Tom talk about it every day, between inflation expectations, what central banks do, and equity stocks. Now, again, they own so much of these equities, especially in the U.S., they can't really change so much because they're long-term investors. But I really want to try and understand how he sees the future, what positioning looks like, and whether he thinks big is better. And then we have Ken Griffin here, of course, from Citadel. He'll be on stage. We'll be hearing from Jamie Dimon. And then we'll look into the world of sports with Stefano Domenicali, the chief executive of Formula One. They may have, races to reschedule in the Middle East, so we'll try and get an answer on that, too.
Okay, fantastic. A fantastic lineup of guests will be across all of those, of course, over the next few hours. Bloomberg's Francine Lacroix on the ground for us from Oslo. Francine, thank you. Here's what else to think about then throughout the day. King Charles III and Queen Camilla in the US, of course, for their first state visit. And at 9 a.m. UK time, Euro area banking lending survey that crosses in a little under 5 minutes or so, a little over 5 minutes. 11 a.m. UK time, Norway Wealth Fund Investment Conference begins. Of course, Francine was on the ground for us with a fantastic lineup of guests. And this is a tantalizing one. Get out your popcorn because it's Musk versus OpenAI and Sam Altman. That trial begins. Also later, earnings from Airbus and out of the US, Starbucks, Visa and Robin Hood. Let's bring in Skylar Montgomery-Canning now from our Bloomberg M Live team. And surely and certainly earnings will be part of your focus, but also what's happening here in the UK as we build up to that BOE decision. We had the BOE standing pat, so we have to think about how much there's a read across to other central banks. But gilts are selling off again today. Yields are up. How are you thinking about UK gilts and the BOE decision later this week?
Yeah, I mean, absolutely. It's kind of this perfect negative storm for gilts, and that energy shocks are much worse for the UK market. We've seen there's a much higher correlation between bonds and energy prices than equities and energy prices, because we know there'll be a central bank reaction, because we'll know they'll feed into inflation, and so that means higher yields. But for England in particular, in the UK rather, it has a large proportion of its debt that's inflation linked. So if you go back to 2022 and you look at net interest payments as a percent of GDP, that followed inflation up and then followed inflation down. And so it's very bad from a fiscal perspective. And at the same time, in the background, you have these worries around whether or not you'll get a new prime minister, whether that means more fiscal loosening. Politics isn't going to stop being a negative driver into the future. And then you have the Bank of England later this week, where last time around we had a very, very hawkish shift. You went from expecting a cut in March to shifting very aggressively towards expecting hikes. And I think that's the risk we get from this meeting as well. You'll get new projections, so inflation is likely to be revised up. We've had stronger activity data also. That's largely a seasonal thing, but because Q1 GDP was stronger than expected, that means also likely a revision up in growth forecasts and a risk that you'll see a couple of members vote for hikes.
Yes, it's certainly going to be a busy news day in the UK context, isn't it? With the King over in the United States, with hearings at select committees that sort of distract the politics quite a bit. So there'll be a lot of headlines. We'll see if anything moves the conversation on, or whether we wait for the Bank of England. We're also waiting for the ECB, then, Skylar. We had an interesting conversation with Jeffrey Yu earlier. He was saying his fear is that the ECB is going to be more tempted to hike than he would like them to be, and he doesn't think that hiking into a growth slowdown is a good idea.
I mean, I don't think it's a good idea either. I think there's a large temptation to do that because there's a recency bias, right? We've just had a very big inflation shock where you had a supply-driven shock, particularly in Europe. It was much more supply-driven in 2022 than demand-driven, and it fed into inflation persistence. And the worry is that you'll get that now, and particularly for this meeting, because a hold is expected, there's no reason to lose optionality for hiking in June, which is, I think, the expectation from quite a lot of analysts. And then you do 1 or 2 hikes, and you're not actually that far away from kind of even the middle of your neutral range, and it can be okay, and it's a signaling thing to the market that you shouldn't have inflation expectations de-anchor. But certainly at this point, there's no reason to lose optionality. We've had a month of data. You've seen input costs rise significantly. Yes, growth has also come under pressure, but we've had another month of higher energy prices, so there's no reason to be less hawkish than the last meeting.
The high of the year on Brent is 112. We're at 111. We're rocketing higher as we speak. How much longer can risk assets, I'm talking about equities here, just ignore the oil price? The two have gone in different directions over the last few days. Do we start to see a reconnection maybe at some point soon?
I don't think this week, in particular because we have earnings, so that's a story that can come to the fore. If they come in strongly, that will certainly drive the U.S. equity market higher. I think eventually you need to focus on growth because it'll come through in the data. It'll come through in earnings. But, you know, we're still 3 months away from second quarter earnings season, which is when you'll see it there.
So I can just party until then, basically.
Well, like you're just seeing most markets focus on inflation rather than growth. We've just talked about it for the Bank of England and the expectation for hikes. If rates were thinking about growth more, then you'd see hikes followed by cuts. Even if you look at currencies, the Norwegian krone and Canadian dollar, they're energy exporters, so they've benefited, but they've beat out the dollar more recently because it's this positive risk sentiment, when realistically, if you have a supply shock, that's very negative for these economies, even though they're energy exporters still. So everywhere, the focus is very much on inflation rather than growth, and you need to see it coming through the data to see that shift, I think.
I guess the question is, if you think that the growth story is going to be eroded and therefore the equity story gets derailed at some point, maybe that's the second quarter story, how much of a pullback do you see when the lights are turned off, when the chandelier crashes to the floor and the music is stopped? How much do you pull back?
Wow, you go to some great parties.
Is that how it ends?
It's been a while. I'm projecting.
See ya. I don't know. That is the question. And then you start, we were talking to Michael Gapin about this in the first hour, then you get the ripple through into the US economy. There's so much spending being driven by the relationship with the equity market and just this wealth effect that is being created. So if you do see that start to come under pressure, you see a big effect.
And we're always looking for headlines, aren't we, that could move the oil price. So, you know, you're always aware of that as well. I mean, President Trump might be distracted by the royal visit today, so I wonder if you get any progress. But certainly we're always alert to the possibility that the narrative just turns, doesn't it?
It does, and quite quickly. And we've seen that certainly a few weekends ago. Was it Friday afternoon when it was all clear and the oil price came down really sharply? Scarlett, nice to see you. Thank you very much indeed for stopping by to see us. We've got some great interviews lined up. Airbus's CFO is going to be joining us a little bit later on. Airbus has got numbers out after the close today. That's one of the great interviews we've got lined up. It is a big day for markets out there. Really, a lot of corporate news to price in and deal with, and it's going to continue throughout the rest of the week. And we've got some great coverage. Francine is in Norway. The Pulse is next. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in Oslo, where the Norwegian Sovereign Wealth Fund is hosting its investment conference. We're excited to be here, and these are your top stories. President Trump convened his national security team to discuss Iran's proposal to end the war, but the White House says it maintains red lines on any deal. The Bank of Japan left its benchmark rate unchanged in a split vote that actually increased the likelihood of a hike in June. And OpenAI reportedly fails to meet its targets for new users and sales, fueling concern that it may struggle to support its huge spending on data centers and chips. Now, live from Oslo this hour, our guests include Nicolai Tangen, the Chief Executive of the Sovereign Wealth Fund of Norway, and Stefano Domenicali, the Chief Executive and President of Formula One. Again, a lot going on in the markets, so let's start there. I know we have a lot of central banks. It's not only the Fed, it's the ECB, and of course the Bank of England. Overall, I'm looking at technology stocks. I can do that using the Bloomberg terminal on the move. Look, technology stocks seem to be leading global equity markets a little bit lower. There's concern over whether the vast amount of investment in artificial intelligence will pay off. Surfaced oil kept on rising, again, as the Strait of Hormuz keeps on remaining shut. Euro area March 1st, actually for March 1st year CPI expectations, again, rising to 4%. That's higher than the estimate of 2.8%. So, as I was saying, we're here at the annual conference for Norway's Sovereign Wealth Fund, which owns some 1.5%, listen to this, of all listed global equities. Now, the fund did lose 1.9% in the first quarter of this year, pointing to AI disruption, but also private credit concerns and the Iran war. It still beat its benchmark by 1 basis point, and the results didn't capture the market upturn after the first ceasefire in the Middle East on April 7th. So there's a lot to discuss with, of course, the world's largest sovereign investor. We'll talk about positioning and volatility coming up with Nicolai Tangen, Chief Executive of Norges Bank Investment Management. Nicolai, as always, thank you so much for joining us.
Thank you.
I mean, the markets, it's different or difficult to understand exactly how they're positioned, because if you look at traders in fixed income, it's different to equities. Where do you see the biggest market dislocation right now?
Well, the strange thing is that we, in my mind, haven't got a very big location, because if you had told me, laid out the events, I would have thought the market should be down a lot. And indeed, it's actually up on the year. I think that's quite surprising.
Yeah, it's up, it's down. I mean, does this angst not come to fruition? I mean, we look about inflation, even the latest figures from Europe. Inflation could be a worry, and yet actually equities choose not to see that.
Yeah, no, I think it's remarkable because based on what's going on in the Middle East, you would expect this to feed through, higher energy prices, higher food prices, fertilizer prices, and so on. It is, to a certain extent, starting to hit Asia. We should expect it to hit Europe and the US through higher prices, and typically that is bad for the markets, but the market is really taking it in stride.
Do you worry about inflation expectations, and the fact that there could be some kind of policy mistake from central banks?
Yeah, inflation is what typically gets the markets, and so that's something we really have to watch. On the other side, we have artificial intelligence and what we think is a deflationary effect, and I think that is what the market is kind of penciling in just now.
Do you have question marks about artificial intelligence? Again, there's so much capex going on there that as soon as there's a little bit of a wobble, like we saw with the OpenAI, the market is very concerned.
Oh, absolutely. Lots of capital going in there. Now, we are basing our view on how we are using it ourselves and the effect that we are seeing on our business. We think we have taken out nearly 20% productivity gain just over the last year. We are using it to help us reduce trading costs. So it's a huge benefit for us, and we are putting it in everywhere we can. Now, whether that's now more than reflected in share prices of these companies, I think is very, very difficult to say. Yeah. If it's a bubble, I think it's a pretty good one.
Yeah, how do you say? I mean, I guess the bubble is fine as long as, until the point it bursts.
Well, that's true, but it's also putting in a lot of capital into infrastructure projects, data centers, and so on, and building capacity that we do need to implement AI in society.
Nikolai, I mean, you said on a massive fund, right? It's 2.2 trillion. Is that an asset or is sometimes a disadvantage?
No, I would say what's, well, first of all, that amount of money is for sure an asset. When a fund is that big, you need to just think a bit differently about how it's positioned, and you need to have a very strict mandate, and we have a very good one from the Ministry of Finance, which basically explains to us how we should be invested. Pretty accurate guidelines for what we should be doing, and I actually think in this environment, it's easier to invest in the market, to be part of the market, than actually picking individual companies and sectors.
But do you sometimes feel, I mean, you can't really move as quickly, and again, is that a good thing or a bad thing? If
well,
you have something
depends.
So big like the Middle East.
So it depends. Sometimes it's good to be able to move, sometimes it's good not to be able to move. And if you look at the volatility we've had so far this year, well, I mean, the fund is up several percentage points this year. I think if you had been able to move as much as you wanted to, perhaps you would have made some stupid decisions.
I mean, does that go to, I guess, investors' anxiousness that people maybe sometimes move too quickly? I don't know. How do you perceive risk and risk-taking in markets?
Normally people move too much. There is something called an inertia analysis, and that means that you basically look at your results, what they would have been like if you had just kept your portfolio from the beginning of the year and not done anything. And then you look at your actual results. Very many people subtract performance by moving things around too much. So sitting still is sometimes the most difficult thing to do.
Especially in volatile periods?
Absolutely.
How volatile do you think this period is and will stay?
No, I would say it's not, I would say it's kind of medium volatile. It moves on policy decisions, it moves on geopolitics, it moves on uncertainty, it moves on wars, it moves on energy prices, it moves a lot basically.
I mean, do you have to take a view on what happens in the Middle East? Because again, it's very difficult, and a lot of the market positioning was towards something optimistic, where actually if you look at the geopolitics, there was no real end in sight or even a way to go down a notch.
Yeah, it's a very complex situation we have in the Middle East now, and I think the outcome there is very uncertain.
Nikolai, talk to me a little bit about this idea that AI is disinflationary.
Well, we are seeing the productivity gains from this. You can do things with fewer people. You can automate more things. I think there are a lot of jobs which are going to disappear. Do we need as many lawyers going forward? Probably not. Do we need as many accountants? Probably not. Do we need as many consultants? Probably not. Now, is that going to make the world a worse place or a better place? Perhaps even a better place. And I think also we can stop doing things which are repetitive, which are boring, and we can just spend more time thinking.
But does that show up at what point does it actually show in the inflation numbers? Because we're just at the cusp on maybe in certain points in inflation seeing it, but it's not widespread enough in the economy.
No, it's not widespread because we have the offsetting effect, which is from the energy market on the back of what's going on in the Middle East. So we have these two intersections and two effects coming together.
I mean, is that why it's hard? It's because you actually have two opposing things, and central banks also have to make a decision on that.
Yeah.
So again, as an investor, how do these two tensions play out?
Well, the way we deal with it as an investor is to be broadly diversified and very long-term in our thinking. And I think that's a pretty good place to be just now.
What's your take on private markets?
On the private market, so we are actually not in the private market.
And that's in the statute. I mean, you can't, right?
We cannot be in the private market, but we do observe the private market. We look at it. We are seeing some signs of worry there, some early signs of stress. I think if rates went up a lot and we had an economic downturn, that probably would crystallize more of it. But I think it remains to be seen.
Is there a worry that it's something systemic? Is there something in the private markets that makes you worry about your investments?
No, we don't have any reason to believe that there's anything systemic, but for sure there could be losses that people had not expected.
Such as?
We'll see when rates go up. If rates go up and we have an economic downturn, that's typically when you see whether people have the right types of credit.
So what's the next 4 to 5 months that are particularly crucial if the price of oil stays at this level?
Well, I don't know when we potentially will see these type of effects, but when they happen, we for sure will see who has written good credit.
How do you see ESG going forward?
Well, we think it's important that companies continue to be sustainable in the way they do business, and the reason why we argue that is because it makes sense from a financial standpoint. You know, if you don't have a sustainable business, it's going to be a bad investment. If you don't have a sustainable business, you're not going to get people working there. You're not going to get bank loans, insurance, or anything like that. So we are consistent in our view, but we always make sure that it boils down to financial considerations. It's important because those type of risks are financial of nature.
Where do you think we are worldwide on this? Does the energy crisis in the Middle East make it more likely that there's more investment and money being poured into ESG as we find other sources, or is that actually just securing the old way of finding energy?
Well, I think we are seeing it in several different ways. One, of course, it would be a continuation of fossil fuel and exploration. We are seeing some reversion back to coal. We are seeing an acceleration potentially in nuclear, but we are also seeing a rally in renewable infrastructure, which is a very positive development. And we think some of the investments in that field look really interesting.
Anything on real estate that you worry about or actually you're excited about?
Well, we have big real estate investments around the world. We have nearly 1,000 properties. The real estate market has been not great over the last few years, starting with COVID, some banking issues, rates, and so on. We think it looks more attractive now than in the past.
Nicola, I'm a big fan of your podcast, and on it, actually, you talk about, you speak to incredible people, and you talk a lot about, optimism and pessimism, and the fact that psychology kind of also changes the investment attitude. Where are we in 2026? We had COVID, we had, the war in Ukraine, then you have the Tariff Liberation Day, and now you have the Middle East. Are people broken?
No, I don't think they are broken, and I think it depends very much from person to person. I think we are probably medium to negative on the sentiment scale. We probably should be more positive because there are a lot of positive factors going on in the world, in particular, AI and so on. But of course, people are worried when they see policy decisions which they don't understand, when they see war, when they see geopolitical events which they hadn't expected. It's a tough landscape to navigate. I think it's interesting because in the past, I think you needed to look through the world either through a microscope or a telescope. Now, I think you need to look through a kaleidoscope, because, one of these things you had when you were little and you turn this thing and suddenly all the shapes changed. That's the way the world is like now. Many things are being turned upside down. You see new shapes, new colors every day. And you need to look at the world in a much more broader fashion than you did before.
But that means more risks, doesn't it, for investors, but also for consumers? Do you worry that consumers may stop consuming as much as they did even in the West,
I don't think
CapEx?
I don't think you'll ever get consumers to stop consuming. They may change their habits for a little while, but we need things and we will want to buy things.
But if you look through a kaleidoscope, I mean, what changes fundamentally? Is it CapEx? Is it M&A?
Well, I think if you look through the kaleidoscope, everything is changing, right? I mean, just over the last few years, you have a difference in geopolitical tension between the superpowers. You've had the new aspect of technology. You have China becoming much more competitive in many more different industries. We are coming out with a podcast in a couple of weeks with Pfizer. They talk about, the cancer research in China being very, very strong. Some of these factors are new. You see the development on the battery front coming out of Chinese companies. Incredible. You see Xiaomi. We did a podcast with them. Wow, they go from a mobile telephone to a supercar in 3 years, And so the type of speed and development and innovation coming out of China is unreal.
How will that impact your portfolio going forward, like much longer term?
No, I think you'll see the impact on, we are invested in China. It's not a very big market for us, but, we have investments in these companies. Of course, it's going to be problematic for some of the European competitors. It's a tough landscape to navigate.
But for the moment, you're committed to AI in the U.S. There's not, we don't really know if China takes over the AI race.
Well, the way we read it and what we hear from the companies is that they are very good at applying it. So maybe slightly behind in terms of developing the models, but in terms of applying it and using it in everyday life, they are doing really, really well. And I kind of think that's Europe's opportunity as well. We don't have the big language models here, but we could become really good at applying it because we are educated and we are very digital.
Nikolai, thank you so much for joining us. Nikolai Tangen there, the Chief Executive of Norway's Wealth Fund. Coming up, we'll have plenty more. We also discuss the challenges facing private credit specifically. That's next, here from Oslo, Norway, and this is Bloomberg.
Business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television. The Bank of England makes its next interest rate decision against the backdrop of conflict in the Middle East. Investors will look to BOE Governor Andrew Bailey for signals on the rate path ahead.
Our next decision is at the end of April. A lot will have happened.
Tune into Bloomberg for live market reaction and analysis from the studio and on the ground at the Bank of England. It all starts Thursday at noon on Bloomberg. Context changes everything.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacroix here in Oslo for the Norwegian Sovereign Wealth Fund Investment Conference. Now, disappointment for Barclays investors today after the British bankers' traders struggled to capitalize on a volatile quarter, with returns actually falling short of their U.S. rivals. Well, let's bring in Tom Metcalf from Bloomberg's EMEA finance team. Tom, always great to speak to you. Now, the bank calls it a solid quarter. Given current market volatility, what do you make of these numbers?
Yeah, we just had the CEO and CFO on a call with journalists, emphasising, hey, we are actually in the middle of the pack here. We're actually pretty happy with the trading performance. But yeah, it's one of those tough comparisons, right? You look at the Morgan Stanleys, those kind of Wall Street firms, they came out this first quarter absolutely firing. And, Barclays has certainly done okay. I think equities actually beat estimates up 16%. But yeah, against the context of those US rivals, which Barclays likes to sort of portray itself against, just, if not disappointed, maybe just in line. And it's the kind of environment where the expectations are so high now that if you're not kind of really sort of blowing it out of the park, it's hard to impress shareholders.
Tom, with other European banks reporting this week, where does Barclays stand compared to competitors?
Well, yeah, it'll be interesting. We've got Deutsche Bank tomorrow, UBS. Particularly Deutsche Bank's a great comparison, and then the French banks later on. So I'll be just curious to see if there's a divergence here. Maybe the Deutsche Bank FIC traders do a fantastic job. That will kind of raise more questions on the Barclays front. But yeah, if broadly speaking, they're sort of in line with the other European lenders, I think probably there's a bigger narrative here of, the Wall Street firms, basically increasingly get market share, after a sort of several quarters where the European lenders looked like they were coming back somewhat. So it'll be interesting to see what particularly tomorrow brings.
Tom, thank you so much. Tom Metcalf, it is a big week, not only for central banks, but earnings, especially bank earnings. Now, private credit has suffered some reputational damage this year as a series of high-profile losses has made investors more cautious about the asset class. Now, my next guest argues that the problem lies in stale pricing and opaque valuations and advocates for more frequent pricing and greater transparency. Well, joining us now is Hugh Van partner and vice chair, and Oliver Wyman. Hugh, as always, thank you for joining us. Look, private credit is getting a bad rap, but I have a lot of bankers saying we're overblowing it, and then others saying, no, there's real concern out there, but it probably won't be systemic. How do you read it?
Well, thanks for having me on, Francine. Look, I think private credit is definitely going through some growing pains. And I think what's really striking is some of the issues are really around software in the BDC vehicles. I think we all now know that something like a quarter of the loans were to software, but they were struck before Claude. And I think when you really look into detail, what's very striking is it's quite localized. So probably about half of the bad debts are actually deals struck in 21 and early 22 when interest rates were zero. So some of this is really the aftershock of interest rates going back up, combined with AI coming through now. But I still think if the overall category is much broader. So there are these localized issues. Like with any innovation, we need to have some reforms. But I think on the whole, it's actually still very much here to stay.
Is there a concern that as we worry about inflation, as the energy prices could go higher because there's no resolution in sight in the Middle East, this is the shakeout time for private credit and private equity markets?
Well, it's interesting. One thing which is very striking to me this year is that institutional inflows have remained resilient, whilst wealth flows obviously come back. And I think the thesis there is that actually this could be quite a good vintage as you can pick up some loans to restructure, as many of these loans from 2021 do get put through a stress test. So I think, look, there's always a bull market somewhere in the world, and there is an opportunity set there. I think the other aspect is, whilst the direct lending market is coming under a bit of pressure, actually the broader investment grade part of the market remains very resilient. And our research suggests almost half the market is serving insurance companies with investment-grade products. So we need to also be careful that it's not the entire market.
Where do you see opportunities at this point?
Definitely looking at restructured loans, so funds where maybe where there are going to be opportunities to refinance at higher spreads. Secondaries, when there are people with weak hands who need to sell to strong hands, and clearly with some of the redemption pressure, some of the BDCs will be looking to sell. And the third really is the whole sort of, look, you were talking with Nikolai about, it's the data center, it's the energy infrastructure, both fossil and clean. There's an enormous infrastructure opportunity, and some of that long-dated capital will find a home there.
BCDs are so interesting, but do you think we're paying enough attention to them?
Look, I think so what's interesting is we look at what we can measure. The BDC is clearly a flashpoint, and it's clearly because of some of the redemptions. What I think the market didn't get is, so there were something like 22 billion of redemptions requested, about 11 billion delivered. There was 6.5 billion of inflows in the same quarter. No one reported that. So I think obviously that.
Why is that?
Well, I think obviously the devils have the best tunes. I mean, I think it's okay. Part of this is how the mighty have been humbled and so forth. I do think it is important. You know, some of the BDCs were heavily overweight software. And, you know, I like to think, one of my industry friends like to say, the loans were struck BC, before Claude. And I think that's the challenge here, that it's going to take a couple of years to work through what the impact of software is. Some of the companies will clearly make it through brilliantly, and some won't. So that seasoning takes time, and that comes back to why I was worried about the pricing. I think with the BDCs, there was one thing that we've seen many times in markets before, is when you have a stale price, there's an opportunity to arbitrage it. And I think that some of that stale pricing amplified the redemption requests. Obviously, people aren't happy, but I think that it's been exaggerated.
Hugh, talk to me about the UK, because there's a lot of political concern about the Prime Minister and his future. What does it mean for businesses?
Well, look, I think for businesses, and particularly if I think about the Bank of England, it's financing costs which really are the key transmission mechanism. And really the market's actually trading through pretty well the political instability and really focusing on the energy shock. As you know, 10-year bonds are up about 60 basis points since the war started, and it's really thinking about what does that mean for fiscal room and fiscal space. What we're struck with our client base is actually they're just getting on with things, whether it be AI implementation, whether it's deals, whether it's efficiency. There's a bit of wait and see, and I think that's where the political instability comes through.
I was going to ask you about the wait and see. We've also seen quite a lot of volatility when it comes to gilts. So does that put off for investors or investment that could have come in from abroad?
Well, some of the really long-dated investment takes time anyway, and so I think some of the energy... I think it's the very high energy costs and the extra financing costs, which maybe at the margin put off some of the capital expenditure projects. But we're equally seeing interest in... Look, the pound has been very resilient, which also tells me that... Which is normally a good sort of kite mark for what's going on in political. So I think there is still very much interest to invest.
I mean, it's quite tricky for the Bank of England. We're probably not expecting anything this week, but it's tricky to look at inflation. Do you worry that filters through chief executives that you advise in terms of CapEx spending or how they the future, even possible M&A?
Yeah, I think at the margin it may a little. I mean, at the beginning of the year, I think there was a lot of bullishness that we'd gone through peak pessimism in the UK. And I think we still have. I think that some of the issues come through. But obviously, if we're now looking at a situation where the Bank of England will struggle to cut, or if they do cut, I mean, the market's signaling the UK's got a structural inflation problem, given gilts have widened far more than any other G7 bond. And I think that nervousness, and particularly what it means for energy, but that's really in the capital-heavy part of the energy sector.
But how does that crystallise?
So it comes through house prices is one channel. Obviously, house building, which has been really lacklustre in the last 2 years. Also, employment. I mean, obviously, I think the national insurance impacted youth unemployment from 2 budgets ago. But we're now at a situation where youth unemployment is now higher than the EU average. So all of those Brexit benefits are struggling to come through.
Hugh, thank you so much, as always, for joining us. Hugh Van Steen is partner and vice chair at Oliver Wyman. Now, coming up, BP announces a huge rise in profits, the oil giant cashing in on soaring prices triggered by the Iran war. So we'll have a full roundup of earnings. We'll have a full roundup, of course, of BP and other companies reporting. This is Bloomberg.
about 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in Oslo, and these are your top stories. President Trump convened his national security team to discuss Iran's proposal to end the war, but the White House says it maintains red lines on any deal. The Bank of Japan left its benchmark rate unchanged in a split vote, but increased the likelihood of a hike in June. And OpenAI reportedly fails to meet its targets for new users and sales, fueling concern that it may struggle to support its huge spending on data centers and chips. Now, the White House says President Trump has convened national security officials to review Iran's latest peace proposal. Well, Tehran had sent across a plan after talks in Pakistan failed to yield any results, which reportedly included a deal to reopen the Strait of Hormuz in exchange for an end to the U.S. blockade. Well, let's bring in Bloomberg Horizons anchor Jumana Bersachi. Jumana, what do we know of this proposal and the president's red lines?
Yeah, well, what's become apparent over the last 24 hours is that Iran has presented a proposal to the U.S. via Pakistani mediators with what they would like to see in order for the war to end. So they put forward a certain number of conditions, including the lifting of their blockade on the Strait of Hormuz in exchange for the U.S. lifting theirs. So it would be a mutual lifting of blockades happening at the same time. But then also, crucially here, deferring the discussions around the nuclear file until a later point. Now, yesterday we heard from the White House Press Secretary Caroline Leavitt. She said that the U.S. are reviewing the proposal that's come through from Iran. Media reporting this morning from New York Times, Wall Street Journal, suggesting that many of the conditions that Iran have included in this proposal are non-starters for the U.S. because it's also been reported that they've asked for war reparations and guarantees that the war isn't going to happen again before they proceed to talk about the nuclear file. And of course, as far as President Trump is concerned, he has reiterated this many times that you can't have a deal with Iran unless you have actually sorted out the question about the enriched uranium stockpile and a degree or capping their level of uranium enrichment. So still a lot of question marks. We don't have a formal response from the U.S. left. But one thing that I will say is when it comes to the Strait, though, President Trump, and also we heard from Marco Rubio yesterday, we're talking about the success of the U.S. naval blockade, and our own reporting suggests that within the next 10 to 12 days, Iran's storage capacity units will start filling up, which means that they will become less capable of getting their oil out to the market, cutting off a key lifeline for the Iranian economy. The thinking is the longer the U.S. naval blockade goes on for, the more pressure there will be on Iran to come to the negotiating table and perhaps yield more and perhaps come a little bit closer to what the US are demanding out of them.
The German Chancellor, Jumana, says the U.S. is being humiliated by Iranian leaders. Do these comments show that U.S. allies are just getting fed up with the situation in the Hormuz Strait?
Truly remarkable to hear those comments from the Chancellor overnight. He was speaking at a school, so unclear whether he knew that these comments were going to be broadcasted. But essentially, he was saying that it doesn't appear as though the U.S. have an exit strategy, and that the Iranians have been dragging out these negotiations or negotiating very, very well. So remarkable to hear that from a European leader. He says an entire nation is being humiliated by the Iranian leadership, but also perhaps is demonstrative of the position that many foreign leaders around the world have, which is that this conflict, the state of the strait and the fact that there is limited passage of ships going through the strait is a situation that has gone on way too long. There needs to be a resolution, and it is unclear at this point what the conditions are in order to break that stalemate, and whether the U.S. indeed does have an exit strategy here or a plan to ultimately lift the blockade and get all these energy flows going again. And by the way, it's not just European leaders. We also heard from the Australian Foreign Affairs Minister this morning as well, who too reiterated that Asia-Pacific region is bearing the brunt of the economic harm that the closure or effective closure of the Strait of Hormuz is doing to the world. And so there is a feeling from many foreign nations that we can't continue in this environment of a stalemate around the Strait of Hormuz and a Cold War in the region for the indefinite future.
Jumana, thanks so much. Jumana Bersachi there from Dubai. Now, OpenAI has reportedly missed its own user and sales goals. The Wall Street Journal reports that it's fueling internal concerns that the company may now struggle to support its astronomical spending on AI infrastructure. Well, Neil Campling, Bloomberg's senior strategist, joins us now. So, Neil, thank you for being here. Who's putting them under the most pressure?
It seems likely that Anthropic, whose leaders came out of OpenAI itself, are likely to be posting some competitive pressures on them. In addition to which, the Google AI complex as well has stolen a march in recent months as well. So there's clearly, OpenAI had the first mover advantage in terms of the platform, but now we're moving to the second phase of these AI infrastructure platforms. There are questions clearly there to be asked. And it happens just hours after we heard that Microsoft and OpenAI have ended their exclusivity arrangement. So that clearly is also signaling some concerns that maybe OpenAI's hyper-growth is now normalizing somewhat. And meanwhile, Anthropic seemed to be, based on a Bloomberg News exclusive last month, catching up fast in terms of the revenue run rate to OpenAI.
So, Neil, overall, what does this actually signal to investors?
I think the biggest signal to investors is the question around ROI, the return on investments that will be questioned for the investors, because there's a projected $1.4 trillion spend associated with the OpenAI platform. When are investors going to see significant returns on those investments? That'll be the questions that they were asking. When you have hypernormal growth, those questions get put on the back burner. But if we're seeing a slowdown in the growth, or we're seeing a slowdown in terms of meeting internal targets, it's going to send some ripple waves through the AI complex for sure.
Neil, thanks so much. Neil Campling there, Bloomberg's senior strategist. Now, BP's shares rose as much as 3.3% after a jump in first quarter earnings as the Iran war led to a surge in profits from its oil trading operation and, of course, spiraling energy prices. Now, for more on all of this, we're joined by Will Kennedy, Bloomberg's news director for EMEA. Will, good morning. So what's been the impact on its Middle East operations?
Good morning, Francine. I think BP in its latest quarter benefited from two things. One, as you say, they flagged that their oil trading unit, and BP in common with Shell has a big, basically oil trading house within, allowing it to profit from the dislocations of the market. Those traders roped in billions of dollars, an exceptional result. And then the other advantage that BP has is that in contrast to other majors, it has no production inside the Gulf of Hormuz. So its production profile has not been affected by what's been going on in the Middle East. And that's in contrast to Exxon, which has big operations in Qatar, as does Shell. So those two things combined meant that BP had a very strong quarter. And with oil steadily going higher as this impasse in the Strait of Hormuz continues, those strong earnings are likely to continue.
And well, this is obviously a huge boost for Meg O'Neill, the chief executive, as she tries to cut debt.
That's right. So this is the first earnings for which Meg O'Neill has been in place. It's a good start for her. She is very focused on improving the operational profitability of the company, getting down debt, and putting in a position where they can reward shareholders through buybacks and dividends. That debt didn't actually fall that much in this quarter, I think, because those traders took up quite a lot of working capital to make those profitable trades. But that's clearly what she wants to do forward and emphasize the pivot towards renewable energy and focus on the core oil and gas business and maximizing output and profits there. And obviously, it's a favorable market backdrop for her to do that.
Elsewhere, is Shell's ARC deal signaling that Canada's ability to be a stable provider for energy markets is real, Will?
That's right. I mean, obviously, there's a good political backdrop there that Mark Carney, who had been a champion of action against climate change, has recognized that the oil and gas industry is an important part of the Canadian economy. It's clearly a place where people can feel confident in investing, which doesn't carry too much political risk. The purchase appears to combine well with Shell's existing operations in Canada, where it has an LNG export plan. And the thing that it's really trying to answer is that Shell has performed well on the cost-cutting side of things, streamlined the operations since the current CEO took over, but people had been a little concerned that there was not the growth profile. It was hard to sustain oil and gas production. And while Sarwan will hope that for investors this acquisition answers that problem and allows sustainable oil and gas production at Shell.
Will, thank you so much, as ever, for joining us. Will Kennedy, Bloomberg's news director for EMEA, with a lot to unpack there from a lot of the oil majors. Coming up, a teenager leads the F1 championship, but 2 races have been lost due to the Iran war. We'll get up to speed on the racing business with Formula One chief executive and president Stefano Domenicali. That's coming up next, and this is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. Is here.
Certainly valuations have shifted quite significantly.
Maybe a bit of optimism.
Bloomberg is first to break the numbers.
We're talking about a move away from U.S. assets.
So much corporate issuance.
Let's get the reaction and context.
With the smartest insights.
We're observing what's happening in the Middle East.
The situation is volatile.
We're closely monitoring the impacts on supply chain and logistics.
Cross-border M&A, still such a difficult thing to get done in Europe.
Continuing coverage on Bloomberg.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in Oslo for the Norwegian Sovereign Wealth Fund Investment Conference. Now, the war in Iran has, of course, disrupted so much of the global economy, and that includes sport. Formula One races in Bahrain and Saudi Arabia have been postponed, but one of the world's most glamorous and lucrative sports franchises resumes this weekend in Miami. Well, now, Formula One Chief Executive and President Stefano Domenicali is here. Mr. Domenicali, thank you so much for joining us. Look, I'm Italian, I've always been an F1 fan, but it's incredible the resurgence of F1 thanks to Netflix shows and all of the brouhaha around it. How do you continue keeping on that momentum, especially when now Americans are really into your sport?
Well, Francine, I think that the duty of a company or a business that is always under pressure or thinking that the problem is part of our life is keep growing and making sure that all the opportunity that we have in front can be taken. Today, of course, you're right. We are living a great moment for our sport, and despite the economical and the crisis that we are living, we have the duty to keep our fans, our stakeholders still connected to our sport. And I think that there is a lot of things that we can do even better and stronger. Yeah. But that's where we are.
So where do you see the next opportunity for the franchise?
Next opportunity the franchise is to exploit the new market that have just started. For example, US is one of them. Yeah. We're just the beginning of something that could be bigger and bigger. We need to get into the culture of the American fans. Right. Because the sport is culture. It's not only something that you go there and having fun. It's something that we need to keep being resilient to achieve that target.
What does that look like? It's
looking good. It's looking good. Don't forget that a couple of years ago we have only one race in the US, for example, with 60,000 people. Now we have 3 races with the average, for example, in Austin of 450,000 people. We are in Miami this weekend where everyone wants to come. We're going to be in Vegas in November, so the vibe is high, and the duty for us is to be resilient and relevant. American fans.
You're teasing me. So more races in the U.S.?
No, I don't think so. I don't think, well, I think that today the request and the money is very high also there. But as I said, we are a worldwide sport. We need to respect that. And I think they're already thinking that we have 3 races. Okay. It's a big number, but never say never.
So you're also, partners are actually really flocking to, Formula One in terms of partnerships. What do you think they're looking for in the sport?
Well, you're right. The last 5 years we moved quite significantly in terms of not only quantity but quality partners. I think that they recognize we can offer to all of them different objectives they want to achieve through us. Visibility, experience, and a connection with an incredible and unique things that they can do together with us. That's what we are focusing, and that's why we are successful also with them.
But has that changed? So is it investments that used to be in other sports, or do you think that just business is getting closer to sports full stop, that the experiences, that the guest experience and the partnerships will grow and grow for sports in general?
I think both, because we see the different parts that we have are coming from different sectors. We definitely have shifted a little bit from B2B business only to B2C. Now we are partners to attract younger audiences that are very, very important, common, as you know, in the world. And that's why I think that we are a sort of transversal platform, can be very good for everyone.
You've had to postpone 2 races because of geopolitical concern. The world is getting more complicated. Are you expecting to, how do you navigate that? Are you expecting more uncertainty to follow?
Well, definitely our geopolitical risk is the highest that we have to face because we travel to almost 12 months per year around the globe. And today the biggest effect is not only to have postponed or cancelled 2 races in Bahrain and Jeddah, but also the cost of fuel, the cost of logistics is getting higher and higher. That's something that we have to face, we have to manage. We are ready with plans. Yeah. Of course, there are moments where we need to decide if, and hopefully not, the situation will not evolve, how to react to that, but we have plans.
So plans, for example, are you going to reschedule Bahrain GP and Saudi Arabia?
I think that to reschedule completely the 2 events is quite difficult because at the end of the year, our calendar is already quite full. We may recover 1, but we need to wait and see how the situation will develop.
I mean, we're talking about new races, and I know you're announcing circuits such as Portugal and Turkey also being added in 2027. How do you balance all of this?
The balance is between traditional market, balanced with the street circuit, with traditional circuit. The balance is we can achieve that because there is a great demand, a great request, and the fact that all the countries that wants to host F1 would love to have it, put us in a great position because we can have long-term deal with them, but also ask them to invest because we don't have to forget, for us, the fans are at the center.
Yeah, so what does that mean? Is it rotation? Is it new venues? Is there a percentage? Like, how do you think about, trying to get the balance right? Because it is balance.
I think that we already started next year to have a rotation with 2 European Grand Prix. We have at the end of the year, actually in August, the last event in Zandvoort, in the Dutch. But, we're going to have the next rotation of calendar can happen after 2030. So it's a good stuff to talk because, as I said, we are in a privileged position to make the choice.
Stefano Domenicali, I mean, some critics say that actually they worry about F1 teams having, more than one interest or more interest in one team. Like, how do you respond to that? Do you think there'll be rules around it?
Well, there is actually one exception, that is Red Bull having the control of 2 teams, because that's related to a historical situation. Red Bull did a lot for our sport, and there was a sort of recognition of what they did with us, but all the others are very clear. They have one ownership, and even if there could be potential, which is not clear yet, some financial investment, this is not related to any kind of governance to the team. So it's something that for us is very clear the future. So one owner to each team.
So what you're telling me, it's a one-off and no
Correct.
one else could really do that?
Correct.
So there doesn't need to be an overhaul or rules being put in place or anything like that?
No, because actually, once again, there is a lot of investors that would love to come in Formula 1. So the beauty of also their understanding with the actual team that are there to see what is the future to be stronger in the next couple of years is a relevant point for us.
F1 Academy was, I guess, put in place to also look at female drivers.
Yeah.
Do you see that like a Formula 2 or Formula 3 happening with meaningful impact?
I think it will happen. It's already happening. I mean, we were the first not to talk but to invest in a sport that we believe has a reason to be there. We have today an incredible platform where 40%, for example, in US, are female who attend or follow Formula 1. It will take time. It will take time because it's not given for granted that you will find an immediate talent that can be competing. For us, one thing is to give the possibility for the female to have the chance, but also the stopwatch is one. So we don't have to forget it's not only a matter of passport or age or gender, it's a matter of being very strong and competitive. We want to give the platform for them to be able to compete and be able to also attract younger generation, because we saw that as an effect.
Yeah, and actually it's incredible that you have Kimi Antonelli, right, who's only 19. Does that help? When I speak to chief executives and business leaders, they always worry about catching the next generation.
Yeah.
You have a winner.
We have a winner, and we have an incredible opportunity because we have now, in the last couple of years, the age of people following Formula 1 has decreased dramatically in a positive way. So that's what we have today. We are in the strong foundation is really because younger generation see them aspirational and they want to follow, they stay connected, they know better than me, and this is great.
And it's also risk. I mean, it was risk-taking, right? Choosing him.
Yeah, it's a risk that I have to say in that respect. Mercedes did a big call, and I think that Kimi has to be left under his journey to make sure that he can grow. But the effect has been phenomenal.
Stefano Domenicali, thank you so much for joining us on Bloomberg. That was, of course, the Formula 1 chief executive and president. Now, also a viral video on X falsely linking Ukrainian President Vladimir Zelensky to Jeffrey Epstein has been exposed as Russian disinformation. So we'll just leave you with today's big tape. The clip used forged emails, including impossible dates, yet still reached millions before being flagged. Now, investigators say it's part of a pro-Kremlin operation using fake documents and AI tools to spread fabricated narratives online. So it is today's big take. Stephanie Baker, our senior writer who wrote today's big take, but also author of one of my favorite books called Punishing Putin, looking at the economics of the war, joins us now. So Stephanie, how sophisticated are these disinformation tactics today, and why are they still so effective? And good morning.
Good morning. Yeah, they are sophisticated, but just in the past year, when we started tracking this operation, they've gotten even more sophisticated, with the use of AI tools to create some pretty convincing deep fakes. But here's the thing, they don't need to be that sophisticated to go viral. As we've seen, the U.S. government has dismantled various government agencies that had been put in place over the past 10 years to expose covert state-backed disinformation campaigns. And that has really allowed some of these stories to spread widely. And I think, you may have the same experience, Fran, as I have, where you meet friends or acquaintances who repeat a story that they've seen online, and you have to say, wait a minute, that's not true. So I think this is really the defining challenge of our time, is the spread of misinformation, disinformation backed by state actors. And if we don't have an agreed set of facts to work off, then we're not going to have a functioning democracy.
Yeah, and you're right, it does happen when also well-informed people just got blindsided. So what do we know about the network behind this campaign, Stephanie?
Right, so we believe that the disinformation, the information war, is overseen and driven broadly from the Kremlin, and specifically by Putin's deputy chief of the presidential administration, a man named Sergei Kiriyenko, who holds regular meetings on this topic. But for this specific operation, Storm 1516, that we've documented online, which has spread almost 200 fake stories, many of which have gotten millions of views, that operation is backed by Russia's military intelligence agency, the GRU. Western and Ukrainian officials have told me this. The Ukrainians say that this is backed by a specific unit of that military intelligence agency named 29155, which has been responsible for various hacking and sabotage operations in Europe. But there's also a foundation that was founded by the late mercenary leader Yevgeny Prigozhin, which is amplifying some of these narratives. A think tank in Moscow that was founded by a Russian nationalist philosopher that's had links with the GRU that is also helping. And essentially, though, the key to the success of it is the influencers they deploy specifically on X to spread this content. And what you have is, because so many established politicians are still using X as a communication tool with voters, and you have all this disinformation spreading on X, that is where what is called the narrative laundering happens. The fake stories get picked up by established politicians, and they become part of the mainstream online conversation. It's kind of akin to money laundering, the way offshore companies are used to move illicit finance and get laundered into the established financial system. So the influencers are really key, and I think the fact that X is not really doing any serious content moderation is a real problem.
Yeah, Stephanie, thanks so much. We'll have to talk a lot more about the platforms and what they're doing about it, if anything. Stephanie Baker, our senior writer and author of Punishing Putin. Now, we also have some interviews from Bloomberg's CityLab event in Madrid, which brings together mayors but also innovators to tackle urban challenges. The Spanish Prime Minister Pedro Sanchez giving a speech. We'll also hear from Mayor of London Sadiq Khan. The markets, tenterhooks, not only earnings, but of course it's a big central bank week. Technology stocks leading equity markets lower. This is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Asia is at the forefront of some of the world's biggest stories. I'm Chevryan in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. President Trump weighs Iran's proposal to end the war. His remarks said to be coming very soon. Brent climbs back above $110 a barrel. Futures lower after stocks hit fresh records yesterday. And earnings continue to roll in with GM, Coca-Cola and Starbucks all on deck. So let's get a check on markets around the world now. Winnie Su is in Hong Kong for the latest from Asia. Winnie.
Good morning, Bonnie. We're seeing Asian stocks under a bit of pressure today with the higher oil prices, and also technology shares losing a bit of steam. Now, bucking the trend, you can see that the South Korea Kospi index actually closed in the green, and its market cap, in fact, surpassed that of the UK, making it the world's 8th biggest stock market, thanks to the boom in AI. Now, you flip the board and take a quick look at the Japanese yen, because today we had the Bank of Japan delivering a hold as expected. The yen initially strengthened on how there were 3 descendants who voted for a hike. However, those gains quickly reversed during the presser, where we heard Governor Ueda sounding less hawkish than expected, as he signaled very little clarity in terms of where the rate path will go going forward. And for now, we are expecting 66% of chances of a June hike versus 75% earlier.
All right, so those chances lower. Winnie, thank you so much. We are 2 hours into the European Open. Here's Justina Lee in London. Justina.
Good morning, Vani. Here we're seeing European stocks swinging between gains and losses this morning. But when it comes to Swiss stocks, it's definitely in the red here after that Novartis earnings report. And in terms of bonds, I mean, generally yields are up today after the European Central Bank said that inflation expectations jumped in March. Now, if we kind of look at UK long and gilt yields in particular, those have been up pretty kind of drastically all year. Of course, part of that is oil, but could it also be a political risk premium with UK Prime Minister Keir Starmer facing a vote on a potential investigation today, Bonnie?
All right, Justina, thank you so much. Justina Lee there in London. Let's take a look at this oil market, because we topped $112 a barrel on Brent just a little while ago. We're back below that now, but still up almost 3%. And if you look at WTI, we are just fractionally off $100 a barrel once again. If you remember, at the peak, we saw Brent at 120, so we're really not far off the peak that we've seen Brent at during this war. Pump prices also at 411, almost at the peak for this war season. We are 2 months in, of course, and there doesn't seem to be any improvement. Floating storage is at a record now. like an all-time record. We're seeing yields creep higher. The 30-year yield also close to its high of the year. And if we look at stocks and equity index futures, as you might imagine, they are pointed lower today. Though this market does seem to be throwing off the oil risk just a little bit. We have NASDAQ 100 futures much lower than S&P 500 futures on the AI story. Gold perhaps showing it just a little bit more. Gold at just over $4,600 now, down 1.2% today. And daily average volume has been lower this month than any month this year. So perhaps investors are just taking a step back to wait for some other development. Let's get to some individual movers now. And for that, we'll go back over to London and Charlie Wells. Charlie.
Good morning, Vonnie. So really, pre-market U.S. seems to be digesting a lot of earnings news that we've been getting. So Bed Bath & Beyond, they had a really strong revenue beat here. We're seeing pre-market up over 22% here, almost 23%. Let's flip and take a look at Joby. This is the air transportation company. Yesterday, they had some test flights for basically their, kind of vertical flights from JFK to Manhattan, up almost 3% here. And finally, let's end on Rambus. That is a semiconductor technology company. They had a miss on earnings per share, and the pre-market not liking what it's seeing here. High bar in the semi space. This stock had a great 2025, but again, market not liking that miss on earnings per share for Rambus.
No, a nasty drop there, 15%. Charlie, thank you so much. We'll be seeing Charlie again a little later. Great lineup for you all together this morning. Mark Haveley of UBS joins us on his outlook for growth and inflation. Also this hour, Kayla Sater of State Street as we push ahead to the Fed decision. But first, President Trump prepares to address Iran's proposal.
The proposal was being discussed. I don't want to get ahead of the president or his national security team. What I will reiterate is that the president's red lines with respect to Iran have been made very, very clear, not just to the American public, but also to them as well.
Joining us now from Dubai is Jumana Bersecci. Jumana, what's the holdup, and is there some kind of a concern over who might have submitted this proposal from Iran?
Yeah, well, what we understand is the proposal came through from the Iranian side after the Iranian foreign minister's whirlwind trip through the region over the course of the weekend. Several trips to Islamabad, then to Oman and to Russia yesterday, after which Pakistani mediators presented their version of what they would like to see in order to end the war to the U.S. Now, we haven't got an official response yet out of the White House. Caroline Leavitt there is saying that the response will come soon. But what we do know about the proposal and what was being reported by Iranian state media over the weekend is that they are presenting almost two phases to the conditions that they think are necessary to proceed with discussions. Number one is a mutual lifting of the blockade around the Strait of Hormuz, and only after which a deferral of sorts around the negotiations of the nuclear files. So segregating the two issues. Now, this morning we've heard from reports on other media, New York Times, Wall Street Journal, suggesting that some of the conditions that Iran have put forward would be unacceptable to the U.S., namely because they are also asking for guarantees that the war won't be restarted again, war reparations, and of course, President Trump has reiterated time and time again that you can't separate the nuclear file with Iran from everything else and with the lifting of the blockade around the Strait of Hormuz. So as we await the formal U.S. response, one other element to consider as well, Vonnie, is that in President Trump's eyes, and this is also comments that were echoed by Marco Rubio, the Secretary of State yesterday, the U.S. naval blockade is actually being successful. And so the question here is, why would they lift it if they deem that over the next 10 to 15 to 20 days, the Iranian economy will start hurting more and more because of the curtailing of oil shipments? Why would they give up that leverage now? And so this is a question that I think we need to get an answer to in the coming days to determine whether this blockade will be lifted or indeed we can proceed to the second round of negotiations.
Jumana, tell us what the Strait of Hormuz looks like right now. At one point, we actually had been seeing tankers get through. That's completely stopped now, right?
Yeah, essentially it's been very, very quiet over the last couple of days. Very few vessels getting through. But one of note, though, overnight it seems as though the first carrier carrying or first vessel carrying LNG actually was successfully made it through the Strait of Hormuz. This is the first LNG shipment that has occurred since the beginning of the Iran war. So it's been 2 months since an LNG ship actually made it through That seems to have gone through, and it was carrying gas that was loaded from a UAE facility. And then also in the last couple of hours, we've been monitoring the movements, again, of another tanker that appears to be carrying oil from Saudi Arabia as well. So maybe some of the lines are beginning to, or some of the hurdles are beginning to be softened. But I will say as well that there's lots of evidence to suggest the buildup of those Iranian tankers and that they have been unable to get into the U.S. blockade zone, which is exactly what the U.S. CENTCOM and what the U.S. president would like to see.
Yeah, absolutely. Jumana, thank you so much. That is Jumana Bersetti. So as we've been saying, Brent crude rising above $110 a barrel as traders await a response from the U.S. to Iran's proposal. Joining us now is Bloomberg's Will Kennedy. Will, what are traders pricing in now? I mean, we saw 120 at the peak fear, right? But prompt month at 112. What is that suggesting to us?
We have seen prices ratchet steadily higher over the last couple of weeks since the US imposed that blockade on Iranian exports. And I think that's the big change in the market that Jumana was describing. Previously, the Hormuz was closed to most ships, but Iran was able to get its oil out of it, a really important source of supply for China in particular, perhaps 2 million barrels a day or so. And clearly we can see that's been severely curtailed. We can see that because of the tankers loaded but not crossing the Straits of Hormuz that we described a moment ago. So that's been a big change in how traders assess the balance of supply and demand over the last couple of weeks. And as talks between the US and Iran appear stalled with a no breakthrough in sight, that means we're seeing prices steadily ratchet higher because there isn't the oil available that traders were expecting a few weeks ago.
Yeah, and floating storage or crude stuck in the Middle East is now at a record. So what happens next? I mean, do oil fields have to start getting shut in again at some point?
That's a question. I mean, obviously some oil fields remain shut in countries like Kuwait and Iraq because they haven't been able to export their oil for many weeks now. The US bet here is the blockade will force Iran to shut in oil fields, and that will be very painful for the Iranian regime, both because it will deprive it of oil revenue and it will cause lasting damage to its oil industry. It's a really important question how that comes out in the future days and weeks ahead. Iran, it's worth saying, has confronted challenges to its ability to produce and export oil before. In the previous Trump regime, where there was this policy of maximum pressure, exports plummeted, but the regime survived and the oil industry survived. So then how this plays out and how the pressure on the oil industry feeds through into negotiations will be all important to how the market develops in the coming days and weeks, Bonnie.
Speaking about energy, the companies are starting to report, obviously, and BP profit just blew everything out of the water, right? So it's been a boon, obviously, for some energy companies, but there must be some concerns in the background as well for energy companies in terms of supply lines. Also, you know, demand destruction must be coming down the pike at some point.
There are two things to say about BP. One, it has a big trading business, and that trading business performed exceptionally well in the early weeks of the war. It allowed traders to really make money as they readjusted and helped the global picture adjust to the facts of the closure of the Straits of Hormuz. And the second thing is that uniquely among some of the biggest oil companies, BP does not have big operations inside the Strait of Hormuz. So its production, in contrast to rivals like Exxon and Shell, has not been adversely impacted by the closure of the Strait of Hormuz. And it's able to take advantage of these high prices while maintaining its production at pre-war levels. So that's why BP has done well. Longer term, yes, clearly this is a problem for the oil industry, especially those companies that do have production inside the Persian Gulf. But there are opportunities there as well, principally in the form of higher oil prices for the rest of their portfolio.
Will, fantastic context as always. Thank you so much for joining. That is Bloomberg's Will Kennedy. Now to other top stories trending on the terminal this morning. The Bank of Japan held steady, leaving interest rates at 75 basis points. The vote was split, though, 6-3, boosting the odds of a rate hike in June. BOJ Governor Kazuo Ueda said the outlook is now less likely as the war in the Middle East clouds growth prospects. Barclays traders struggle to capitalize on a volatile trading quarter. First quarter results beat expectations but lagged much of its Wall Street rivals. Fixed income traders brought in about $2.3 billion, broadly flat year on year. Barclays is the first major UK bank to report first quarter results. And late-night host Jimmy Kimmel came to his own defense after backlash over a joke he told last week, saying First Lady Melania Trump, quote, "You have a glow like an expectant widow." Kimmel responded to the First Lady, calling the comments, quote, "hateful and violent."
I agree that hateful and violent rhetoric is something we should reject. I do, and I think a great place to start to dial that back would be to have a conversation with your husband about it, because... point out, Donald Trump is allowed to say whatever he wants to say, as are you, and as am I, as are all of us, because under the First Amendment, we have, as Americans, a right to free speech.
Coming up, Mark Haefele of UBS joins next on his Global Growth Outlook. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Our researchers revised down our growth estimates in the US and around the world slightly, maybe slightly less in China. And we've revised up inflation more than 140 basis points in Europe, for example. So we really see an inflation shock coming through to some extent, and we see growth mitigated.
Mark Haefele of UBS also weighing in on growth, writing, quote, "We think growth should stay resilient. Inflation is likely to undershoot market expectations, and there is adequate demand to meet higher supply of debt. Our base case is that the growth drag from higher oil prices is manageable." Mark joins us now. So Mark, why so sanguine? Why do you think growth will hold up and inflation might perhaps not meet what the market is anticipating?
Well, I think the clip you just played, which we didn't pre-schedule that, but that just set it up perfectly, right? Which is that you're talking about perception in the markets of inflation shock. So I guess what we're saying is that growth, yes, our growth expectations have come down some, but we still see positive growth. You know, the U.S. growth slightly higher this year than last year, on the back of continued CapEx spending, on the back of government expenditures. And on the inflation side, yes, headline inflation will pick up. It could have a four handle on it. But what we're saying is that the central banks are not as likely to start hiking rates as the market seems to anticipate. So higher growth, higher growth, lower than it was originally expected, higher inflation, but yet central banks probably not as willing to hike as some in the market think.
In fact, you think the Fed will still cut this year by 50 basis points between now and year end. Explain why 50 basis points will be necessary.
Well, I think that there's a couple of things. First is and I'm sure you have heard Kevin Warsh's testimony, there is an inclination to take on board some of these effects from AI and other things that point in a dovish direction. Secondly, there's the risk case where, in fact, the economy does start to feel the effects of a prolonged war. And, in that case, growth starts to be questioned. And that's probably also not a place where the Fed wants to just leave rates alone. We came into this year thinking that they would cut rates. That's been slowed considerably. We don't think they're going to cut right away. But that if the war ends or if the war continues, both of those scenarios could actually lead to rate cuts.
You say that investors should definitely diversify their exposure beyond mega tech companies at this point, but at the same time you also like China AI. Can you explain where investors should diversify to? And then we'll get to the China bit in a moment.
Well, I think that the messaging there, there's a couple levels. First, while our base case is that the growth continues and that earnings growth is going to continue, the longer we go with this high in oil prices and the longer that a lot of the feedstocks and other things can't get out of the Strait of Hormuz, there are some things that are going to start to break in the supply chains. Maybe somebody was saying to me, well, if you can't get the components out to make the plastics, somebody's going to have an assembly line somewhere where they can't get an air hose or something like that. And so those things are going to start to happen soon, and those are kind of individual cases. But when you take a step back from that, it's the quality companies that have the margin power that are probably going to continue to be able to get whatever they need. So that's one level of where you should be looking through this. And then a second is we've had these big themes of AI, power and resources, and healthcare, and those have held up remarkably well. In fact, coming back to your point, with AI, it's just done so well that we have many clients who really now have outsized bets on some of the mega cap tech companies. And we're saying, look, in this base case, we expect this rally to broaden out, and given the uncertainty as well, maybe there is some room for diversification in portfolios.
So I'm curious about the China part, though, because the latest DeepSeek model didn't seem to impress that much at all, and apparently China is still 6 to 12 months behind the US when it comes to agentic AI and so on. Why are you recommending that perhaps customers get exposure to China?
Well, the China tech stack is separate from a lot of these other bets. So one, it is a diversification bet. Two, DeepSeek may not be the best frontier model out there, but it is also significantly cheaper than some of the best models. And so, there's the flip side risk, which is actually that Western companies start using it because it gets the job done. And it does it at a cheaper cost as well. So there's two sides to this. As part of the diversification, playing both of those elements makes some sense.
Mark, we have to leave it there. Thank you so much, Mark Hapley of UBS Global Wealth Management. This is Bloomberg.
case you missed it, on Bloomberg Crypto.
There's a debate going on right now in DC that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Time now for your front page news. First up, the Wall Street Journal reporting OpenAI recently missed its own targets for new users and revenue. The Journal says it's raising concern about how it's going to support its spending on data centers. Next up, the Financial Times reporting Wall Street dealers' treasury holdings have jumped to the highest since the global financial crisis. They now represent about 2% of the total. And finally, coming up on the Washington Post, we have the Washington Post reporting the Supreme Court is considering blocking lawsuits alleging Monsanto's Roundup weed killer causes cancer. It would be the largest wave of product liability litigation in the nation's history. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. President Trump weighs Iran's proposal to end the war. His remarks said to be coming very soon. Brent crude climbs back above $110 a barrel. Equity index futures lower after stocks hit fresh records. And earnings continue to roll in with GM, Coca-Cola, and Starbucks all on deck. Let's take a look at those markets then, because Brent crude is now above $111 a barrel, and WTI is so close to $100 a barrel. No surprise that pump prices are close to their highs of the year at $4.11. The war peak for a barrel of Brent, by the way, was just $1.20, so we're really not far off that peak. Obviously, that's impacting everything else, but also you had semiconductor stocks breaking their 18-day winning streak yesterday. You can see S&P futures are lower. NASDAQ 100 futures in particular, much, much lower, partially on that AI story, the OpenAI story, and gold down 1.4%. We have the VIX a little bit elevated, but it is lower than this time yesterday, and yields close to their highs of the year. The 30-year is very, very close to its high of the year. Let's get to some individual movers now, though. Here's Charlie Wells. Charlie.
Good morning, Vonnie. Well, the market seems to be reacting to that report about OpenAI missing sales targets and user targets. If you take a look at these companies that serve as something of a proxy for OpenAI, you can see a lot of red behind me. So negativity in the market on that report about those missed targets. Different story when you look at Bed Bath & Beyond. They had a really positive earnings report yesterday, beating revenue expectations, up over 26% this morning as they try to expand into different parts of the consumer experience, saying they had a lot of engagement from consumers. Different type of consumer engagement if you think about Joby. That is the aviation company. They this week have been flying test flights of electric taxis from JFK to Manhattan. You can see up over 1% here. Excitement about that as the U.S. pushes more into the space.
Yeah, they are looking for regulatory approval. Apparently no passengers yet, Charlie, but they will have them potentially later this year. It's exciting. That is Charlie Wells in London. Kayla Sader of State Street looking ahead to the Fed decision tomorrow, writing, quote, "The conflict with Iran has not materially changed near-term rate expectations. Instead, the most notable impact has been to forecast 6 months and beyond." I'm pleased to say Kayla joins us now. She's macro multi-asset strategist at State Street. So we just had Mark Hafley from UBS Global Wealth Management basically saying growth is going to hold up, and we expect 2 cuts later this year. Is that pretty much where you're at as well?
I don't think we need quite 2 cuts. But I definitely agree that the economy is holding up okay. We had strong retail sales. We've had a still robust labor market, even if we are kind of at the equilibrium level. And I think what that means is that it opens up the Fed to focus more on inflation. So that's why I would push back on the 2. However, I think the market is really hesitant to move away from a prospect of the next move is going to be a cut. And so I think that's why 1 cut is not out of the question this year.
How do you weigh up all the dynamics? Because we know there may be a bias towards cutting if Kevin Warsh gets confirmed, and assuming that he takes over from Powell immediately after Powell's next press conference, right? So there is a bias towards easing potentially, but then you also have those inflation dynamics, and no one's quite sure how that's going to ripple through into the economy, right? It's not supposed to. They're energy prices, but we know that in this case they will.
Yeah, I think watching does headline feed into core is going to be extremely important. So I would keep an eye on that. So far, what we see in our daily measures of inflation is that it's not feeding into core yet. So that gives the Fed some time to stay on pause if they need to. The other thing I would look at are inflation expectations, because if we see long-term inflation expectations rise, it's going to be challenging for the Fed to ignore that, especially because the Fed has been out of mandate for so many years in terms of getting inflation back to 2%. And so when we look at long-run inflation expectations, I think there's two ways to look at it. One is looking at the consumer, the second is looking at the market.
So what happens if we do get a cut later this year, right? I mean, growth is supposed to hold up, we get a cut and suddenly, what, we get a booming economy once again and the stock market continues to just blow past everybody's expectations?
I think the stock market could continue to blow past expectations, but in terms of will one cut really cause that, I don't think it would. You know, right now we're already in this neutral territory, and that band of neutrality could be somewhat wide. And so I think just getting one more cut is not going to make a huge difference in terms of stimulating the economy. I think it's much more about what are expectations for the path forward from there. If the market gets very excited that there's going to be tons and tons of cuts, I think that could propel sentiment. But in reality, the data are just too strong right now to expect many cuts.
Let me read something that BlackRock has been writing, and it pertains to yields being higher, right? Because we're very close to our highs of the year, and there's no saying where they'll go, but BlackRock writing this: we think higher yields are here to stay, and that long-term government bonds are no longer effective diversifiers against equity declines. Now, you're not really expecting equity declines, but if you want some kind of a hedge in there, where would you go now, Kayla?
I think it matters within the equity space. So you can diversify within, the asset class. One thing that we've seen is we have started to see a bit more demand for energy. One thing that's interesting, though, when we think about concentration risk and where do you want to be if the Fed is going to cut, but maybe not by that much. I still think tech looks good in that environment because we still see high measures of quality, so high ROE, and less leverage risk relative to a lot of other parts of the market. And the reason why that matters is that even if the Fed cuts, there's limited room to continue to cut by a large magnitude. And so sticking with higher quality parts of the market, I think, makes sense here, especially because the future outlook is just so uncertain.
Do you have to be more discerning when it comes to tech now, though? Bloomberg Intelligence put out earnings estimate expectations, and ex-tech, we're only looking for earnings, or at least net income growth of 4.1% this quarter. But if you include AI themes, you're talking about 28.2%. I mean, is it still AI and only AI?
Not all parts of tech are created equally. So, thinking of it as large cap versus small cap, definitely still preferring that large cap area. And then also keeping an eye on industry group performance as well, because software hasn't been as attractive in terms of what we see in our real money data as tech hardware and semis. Tech hardware and semis have attracted continual demand over the last year, whereas software has wavered a little bit. Now, the flip side of that is that now software positioning is much lower relative to tech hardware and semis. And so theoretically, there is more room for upside, which is challenging to find given we've been in this tech run for so long. Where else is there room to add?
What about the gold trade, Kayla? Is it over? Is it done?
I think what we've seen with gold is that it hasn't proven to be this hedge that everyone thought it was going to be. And so I think what that means is you have to really struggle to find what is the safe haven. So one thing that has changed in terms of safe haven demand that we saw about a month ago is we are definitely starting to see more demand for the dollar. Now that has actually started to reverse, and we're not seeing demand for the dollar quite so much. In fact, we're seeing really strong selling out of the dollar. And so I think taking a step back, a lot of the questions have been, what is the safe haven right now? Is it the dollar? Is it gold? Is it tech? Is it certain parts of treasuries? And I think really what we've seen investors remain comfortable with over this entire conflict is still this tech space.
All right, Kayla, we have to leave it there, but thank you so much. Pleasure to have you in the studio, Kayla Sater of State Street. Now to other top stories trending on the terminal this morning. The Bank of Japan holding steady, leaving interest rates at 75 basis points. The yen strengthened soon after the decision, but paired gains after BOJ Governor Kazuo Ueda cast doubt on the economy's outlook during his news conference. Barclays traders struggling to capitalize on a volatile trading quarter. First quarter results beat expectations but lagged much of Wall Street. Fixed income traders brought in about $2.3 billion. That was broadly flat on the year. Barclays is the first major UK bank to report Q1 results. And late-night host Jimmy Kimmel came to his own defense after backlash over a joke he told last week, saying First Lady Melania Trump, "You have a glow like an expectant widow." Kimmel responded to the First Lady, who called Kimmel's comments hateful and violent.
I agree that hateful and violent rhetoric is something we should reject. I do, and I think a great place to start to dial that back would be to have a conversation with your husband about it, because... should point out, Donald Trump is allowed to say whatever he wants to say, as are you, and as am I, as are all of us, because under the First Amendment, we have, as Americans, a right to free speech.
Coming up, Brent crude marching higher, above $111 a barrel, as the world awaits Washington's response to Iran's proposal. More next. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong U.S. tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Welcome to Bloomberg This Weekend. I'm David Burke.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
The proposal was being discussed. I don't want to get ahead of the president or his national security team. What I will reiterate is that the president's red lines with respect to Iran have been made very, very clear, not just to the American public, but also to them as well.
President Trump weighing Iran's proposal with his aides as the war now enters its third month. Mika Solner of Bloomberg Government joins us live from Washington. When should we expect a response from the president, Mika?
Yeah, negotiations are very tense right now. There's no concrete timeline as to when we may see an update on this. And the main issue that could potentially lead on this issue is obviously opening the Strait of Hormuz. And that would be in exchange for the U.S. Temporarily ending its blockade, which has been a tension point. There's still broader negotiations to be made as well related to Iran's potential nuclear ambitions, which they have denied, but that's Trump's main issue here. But we should see more news maybe this week, next week. The president's schedule is very full this week, but there should be an update very soon, as we just heard Caroline say.
What about the King Charles visit? Did it improve relations at all with the United Kingdom?
Yeah, the visit comes at a really fragile time right now. Of course, the president has not been shy to criticize UK Prime Minister Keir Starmer for not supporting essentially the US's military intervention in Iran. So there's a lot of tension there. Overall, things have been really calm, but of course, the royals' visits also come during a time of heightened security concerns in Washington after Saturday's incident at the Correspondents' Dinner. So it's very fraught. We're going to see more activity today between the royal family and the White House. So we'll stay tuned there as well.
And what update do we have about the suspect in that potentially assassination attempt?
Yeah, we saw that the suspect yesterday was charged with trying to assassinate the president, as well as bringing weapons, firearms across state lines. And this is a very fragile and sensitive situation to everyone involved in Washington beyond the White House. There are many of us who attended the dinner, including myself, who will be watching this closely and also really aware of some of the rise in political violence. So we heard from the White House that it's potentially open to changing some of the protocols there, but we're going to see what happens when it comes to security around the president.
Okay, Mika, thank you so much. Bloomberg Government's Mika Solner. Oil continues to march higher. Brent crude staying above $110 a barrel, bringing the gain just this week to almost 6%, and it's only Tuesday. Joining us now is Bloomberg's Anthony DePaola. Anthony, we're just a few dollars off the war high. What is this market saying?
Good morning, Vonnie. Yeah, oil had cooled off when there was discussion around talks towards a deal, potential movements towards opening the strait. But because those talks fell through last weekend, we didn't have any advancement. Oil has come back, added some of that risk. We've seen some of the risks still around shipping there because even though we do have a ceasefire in place, so we haven't had active attacks going on across the Gulf, we have still had that Iranian effective closure of Hormuz going on. And then just beyond that, the U.S. blockade. So the U.S. is stopping any Iranian vessels from leaving the Persian Gulf or any vessels that are heading towards Iranian ports. So remember that even during the conflict, Iran had continued to export some of its oil. So that was one of the few producers that was able to ship oil through the Strait of Hormuz. And that has been halted now by the U.S. blockade. And the U.S. has even interdicted a couple vessels and stopped them from traveling on to their locations. So really the key factor that we're watching there is Hormuz, is the free flow of oil. And without that, we're really not going to get prices that are going to be sustainably lower. So they're still really being elevated by the blockage of that shipping there, Vonnie.
Yeah, Anthony, I mean, can we, tell how much each marginal day adds to a barrel of prompt futures or even further out futures?
Yeah, well, we're still at this risk premium kind of area. We are saying, as you say, we're off of that high, but that was a high. Remember when we saw when there was actual conflict going on. So we are still pricing in the risk of some of that conflict coming back. Some capacity has been taken off, but really people are pricing what's happening now because it's difficult to look at what's going to be going on with the future because a lot of those benchmarks that are coming out of the Gulf Dubai crude, for example, is not coming out, so it's difficult to price those crudes. So really, people are pricing higher what's now coming out based on the current risks, and that's a real question mark as to whether even next month we'll have new barrels coming on the market, and then what happens to the market then. Clearly, there's going to be continued demand in the market, but we have seen some demand destruction. We have even seen some margins for refiners that are hurt. So it's going to take time to get that oil back to the market, and that's going to impact, how quickly that can come back, how quickly buyers can take it, and that demand destruction is also going to hit that uptake as well too, Vani.
It's been good news, at least for the likes of BP. This quarter, we saw net income more than double because of a surge in profits from trading and refining in particular. But will it always be a boon to energy companies in general, Anthony, or is there a certain point at which it starts to become a problem for them too?
Yeah, the general accepted figure is somewhere north of 120 for crude that we start to get that demand destruction, and so that's a bad picture. It's positive if you're going to sell your main product at a higher price, but if it gets too high in the case of oil, people start using less. If we look particularly at this region, of course, we've got Saudi Aramco will be coming out with its earnings in 2 weeks' time, and they have probably gained some money from the higher barrel price. Of course, they've been able to sell fewer barrels during the month of March, the main month that the war was taking place here, but they got a higher price for that. But of course, that's got to be weighed against the damage to the broader economy. There have been attacks on facilities, so that's going to cost money to repair, to the reputation of the Gulf as a destination for capital and for people to come and invest and even live. So weighing that against the broader economy, of course, it looks like a loss. Plus, yes, even with companies like BP, like Exxon, you've got to look at the fact that they've also lost production because they are big producers here in the region as well too. So it's really weighing those different factors. But when you're talking about interregional war like this, the net effect is going to be a loss.
Yeah, for sure. Anthony, thank you so much. Bloomberg's Anthony DePaola. Turning to earnings now, with GM set to report before the bell. Let's get a preview from Stefan Nicola. So, Stefan, what should we expect given that it's a tough comp year over year?
Yeah, exactly. It's a very tough comp. Last year, the same time, buyers rushed to car showrooms to lock in prices before President Trump's tariffs hit. So the expectation is for a slight decline in sales and profit for GM. But the bigger question will be, how is demand looking? What's happening right now? What are the expectations for demand going forward, especially with all these geopolitical crises going on right now?
What about gas prices and how that's going to be impacting sales going forward? Are there particular models of GM that, might even get discontinued, or, that production will at least move a lot lower?
Yeah, I mean, I don't think we're at the point of discontinuing models yet. But of course, the big question is, how will demand for GM's big SUVs develop, right? The Cadillac Escalade, the Chevy Suburban. These are very profitable models. And, customers may opt to go for more efficient, smaller cars, maybe even EVs. So, yeah, that's the big question for GM, but also for the U.S. auto industry as a whole. Will these fuel prices dent demand for cars in the long run? One thing's clear, if the war continues for much longer, then the risks will elevate for GM, but also for the U.S. auto industry as a whole.
All right, Stefan, thank you so much. Stefan Nicola will be looking out for those earnings before the opening bell. And don't miss our interview with GM CFO Paul Jacobson. That's at 7:30 a.m. Eastern. Coming up, earnings from consumer-based companies as well. We'll get you set up for your trading day. This is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today. Earnings galore, of course. We're going to hear from General Motors and then Coca-Cola, Starbucks, and many other consumer companies as well. Data-wise, we get ADP employment change. That data out at 8:15 a.m. Eastern. And the U.S. Treasury is auctioning off $44 billion of 7-year notes. That's at 1 p.m. Eastern. Plus, keep an eye out for Bill Ackman's Pershing Square IPO pricing today. Some movers before the open. Oracle and other OpenAI-linked stocks are lower now, including AMD, also CoreWeave, all down in pre-market trading, following the Wall Street Journal report that OpenAI recently failed to meet its targets for sales and new users, which is causing some concern, I would say, in this market. Bed Bath & Beyond, though, is ripping, up almost 27% and extending post-earnings gains after first quarter revenue beat estimates. And Joby Aviation, well, we all know what the story there is. Flying taxis in New York City. It started testing them yesterday. No passengers yet, of course, but looking for regulatory approval. This is your macro picture as we head into just the Tuesday session. It feels like a week already, but S&P futures pointed lower after hitting that record yesterday. The dollar index up. And look at Brent. We are just $9 off the war peak. That is it for Bloomberg Brief. Surveillance is next. This is Bloomberg.
Day 7 at the Mutua Madrid Open. Linda Noskova fought back from 4-1 down in the third set to upset last year's finalist Coco Gauff and reach the quarterfinals. The victory was Noskova's first over the American after losing their previous 2 meetings. And don't forget, you can watch all the action live daily. Head on over to tennischannel.com to download the app.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on Filmed for IMAX sets. but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
We're kind of seeing everything rally.
Obviously, there's going to be some pullback.
Earnings are strong, but a lot of that strength is being driven primarily by tech.
We have to look through to the actual earnings and fundamentals.
We still see higher equity markets by the end of the year.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Tuesday, tech stumbles, OpenAI fueling anxiety, reportedly falling short of growth expectations. As the diplomatic effort is stalling, Brent advancing for a 7th consecutive day. And the door opening for what could be Fed Chair Jay Powell's last decision, the 2-day meeting begins later this morning.
All right, so Anne-Marie can go through the politics, and then we'll talk about how this is really going to be all about Jay Powell, his future, whether he'll stay on as a governor. I'm actually really interested in the economics, which no one else is right now, because the Bank of Japan just came out and had a 6-3 decision, which was split, and I thought that was really interesting and highlights just how much a stagflationary shock really put central banks in something of a quagmire. So does this Federal Reserve think of it that way? No one will be talking about that. Absolutely, that will be on the back burner, will not make the headlines. Instead, it will be the future of Jay Powell.
Well, it should be the future of Jay Powell because we need to know, because not only is it just a matter of is it going to be some sort of shadow Fed chair if he sticks around and hovers around Kevin Warsh, but also if he does decide to leave, that opens up a governor's seat. And do we see someone like Steve Myron be able to stay on the Federal Reserve, or does he have to leave because Jay Powell wants to stay till 2028?
These are all questions we can explore throughout this morning. There's a few things in the equity market we need to touch on. Oracle, down by close to 5%. Equity futures on the NASDAQ, a little bit softer, lighter, negative. Why? This from the Wall Street Journal on OpenAI missing its own targets for users, for revenue growth, and the CFO. I'm going to read this paragraph verbatim for you. Sarah Fryer has told other company leaders that she is worried the company might not be able to pay for future computing contracts if revenue doesn't grow fast enough.
This is incredibly important because OpenAI was the linchpin behind almost $1 trillion or more than that at one point in infrastructure pledges to build out what they thought was going to be an ecosystem for the next great thing. Well, it turns out they're losing market share to Gemini in terms of defections for subscribers. They also have seen defections to Anthropic when it comes to coding and some of the more technical aspects of their business. And so suddenly this raises this issue not only for the likes of OpenAI, but also for SoftBank, also for CoreWeave, also for Oracle, and you see the shares of all of those companies down in the pre-market trading.
Tough week as well for the company because Elon Musk, of course, the trial begins when it comes to OpenAI, so a tough week for Sam Altman. On top of that in the story, not just are they missing internal targets, and you have to think internal targets, you make those internal targets thinking you could clear that bar and maybe in more some. Also in the Wall Street Journal, the CFO has expressed reservations about its plans to go public by the end of this year because of what is going on internally.
This company, incidentally, just had the largest funding round in Silicon Valley history, $122 billion. A lot of investors had thrown a lot of money at this company.
What I find amazing is we're at record highs on the S&P 500, we're at record highs for the NASDAQ and the big tech chips, and we've seen NVIDIA gain more than $1 trillion of market capitalization in the past 4 weeks. And we are talking about the biggest potential black swan that people were saying earlier this year, which was, what happens if OpenAI collapses? And there are hints of not it collapsing, but it's not going to fulfill its promise. And people are almost shrugging. A couple of companies have their shares down. But is this a bigger problem, or is this just sort of, well, it's too bad, but they'll pick it back up again?
Noise or signal? Equity futures this morning, negative by 0.2% on the S&P. Coming up this hour, we'll catch up with John Stolfus of Oppenheimer as AI fears drag stocks just a little bit lower. We'll speak to the U.S. Energy Secretary, Chris Wright, as pressure builds in the Middle East. And Samantha Data, Goldman Sachs, hiking her year-end crude forecast. We begin this hour with stocks pulling back as concerns over AI return. John Stolfus of Oppenheimer with the street's highest S&P 500 target, writing, avoid letting the noise and drama of day-to-day market activity obfuscate the intermediate and longer-term signal that can help stocks climb the proverbial wall of worry. John joins us now for more. John, good morning.
Good morning.
The OpenAI report in the Wall Street Journal, noise or signal?
I would say it's near-term signal, but you want to avoid the noise around it because it creates drama. Anytime you have an advancement in innovation like AI, you're going to have disappointments near-term. The question is, how do they get through that? Where are we headed? And I think that's very much what intermediate to long-term investors take advantage of at times like these.
Draw a distinction between the signal and the noise. Which component of that report coming into this morning is signal?
Well, I would have to say that signal is the fact that they didn't meet their own expectations, in essence. That's the signal. The noise it's sort of like in a chicken coop when all of a sudden the dog comes out and grabs some eggs. Everybody goes crazy. And then, you know, in a few minutes, the farmer comes out, he feeds the chickens, everything's all right, new eggs are laid. It's like, life goes on.
I saw that you were coming up today, and I was so excited because I was thinking it's going to be a therapy session. You know, we're all going to freak out and say all the potential worries. You're going to tell us it's all going to be okay. The world goes on, and markets go up. But I just wonder if this is highlighting a potential fragility as we're at record highs, and we're seeing moonshot gains in the tech stocks. We're seeing on track for the best monthly gain for the S&P 500 tech stocks going back to 2002.
Well, you know, when I look at it this weekend, we were taking a look, and from March 30th of this year through the 27th, you know, we've got the S&P is up 13%, Infotech is up 24.5%, communication services up 19.4%, consumer discretionary up 14%. But what a lot of that had to do was the hedge funds jumped in and did a play where they went long, and now they're going to probably going to go, some of them will go short, or they'll have to change their positions because they're highly leveraged. But the overall trend remains pretty well intact.
Wait, hold on a second. Are you subtly saying that you expect a downdraft in some of these names and that it's near term, but longer term, you're still bullish, you're still John Stolfus?
Yeah, and I'd say, and that near term could be, the biggest thing is good news and bad news is discounted so quickly today versus when I started in 1983. It used to linger because when you read the Journal, it was a newspaper that was reporting news that was 2 to 3 days old as a result. Today, everything is instantaneous practically with the digitalization of news flow. And it's not only traders, but intermediate to long-term investors have learned how to discount good news and bad news. So, you know, life's uncertain. Well, you can't do anything about it. Live with it. Embrace the uncertainty. I think that's what Steve Jobs said when they came out with the initial little iPod, you know, that had music on it. You got the selection that it decided upon. And I recall reading somewhere, the shuffle, and it was embrace the uncertainty was sort of the pitch. And eventually they got it so you could program it and everything else.
Well, we're in uncertain times right now when it comes to the Iran conflict. And based off the reporting from the New York Times, the Wall Street Journal yesterday, the president doesn't seem to be buying the Iranian proposal. How much could we continue to just grind higher with this impasse?
Well, I think the idea of grinding higher without interruptions would be unrealistic. But I do think the depth of a pullback here will probably be, I can just see the shorts coming at me right now, right? But it's like, it would be relatively mild compared to what the drama would imply. What's the longer term trend? AI is here. The technology genie comes out of the bottle. It never goes back in. It continues to morph going forward. And for all the uncertainty around it, it does appear that there's a lot of investment. There's a lot of smart people behind it.
That's why you like tech. I've got that. But you also like discretionary.
Yeah.
And to Anne-Marie's point, we've not settled the issues in the Middle East, and Brent crude's back up to 111. WTI is just short of 199 this morning. Why is this a good environment for discretionary?
Well, for one thing, it's a very much disfavored sector. And with the U.S. Consumer, the tendency is whenever either interest rates are rising or there's an increase in unemployment numbers, automatically it's figured that the U.S. consumer stops shopping. In our experience, the U.S. consumer, when times are good, they spend like a sailor who'd been on a long tour of duty, suddenly finds they got shore leave. When times are tough, they buy private label, they buy used cars versus new cars. They suddenly buy used clothes and call them vintage clothes. And they keep rolling, because in the U.S., the consumer judges their success in terms of their job choice and how they live, not only by what they can buy for themselves, but what they can buy for their loved ones.
You have to have been born here or lived here for a significant period of time to have a real appreciation for American culture and the structural bias to be pro-investment, pro-spend for the U.S. consumer.
This is a consumption-first economy. When you're feeling sad, you go buy. When you're feeling happy, you go buy. When it's a holiday, you go buy. All of the holidays have special holiday seasons, and you can go out. The inventory is in the stores 3 months in advance. At the same time, you do wonder whether there potentially is a lack of recognition of the fact that not only are oil prices higher, but longer-term oil price expectations are reaching the highest levels of the contract for December, and that suddenly changes the game. I mean, are we boiling the frog, at least on the margins in parts of the consumer sector?
I don't think we boil the frog. I don't think that's a nice thing to do. But the point is, related to that, you've got to figure
that
would
be upset.
This stuff, it's the tide comes in, the tide comes out. What you want to watch for, the tsunamis. That's what worries you, okay? But the tsunamis generally don't occur on a regular basis. Related to oil, just think of it. If John Kerry had succeeded in killing the traditional fossil fuel energy during the Biden administration, we'd be in trouble like Europe right now, in trouble like most of Asia. Instead, we have more oil. Our biggest problem is that oil is priced to the world price. So, even though we've got plenty of oil, it's like a lot more expensive at the pump, even though I have not owned an automobile since 1985. Because I live in the city.
John, it's good to see you. God love you. We love you. John Stolfus of Oppenheimer there on the bull case for this economy right now. Data's been good. Retail sales have been good. Jobless claims were low. But this economy is absolutely hated by consumers right now, based on, not their consumption trends, but based on what they're telling us about how they feel. So what are they doing? This one is something to watch. I'm not saying it's dreadful. It's going to be ugly for the next several months, the rest of this year, but something to watch. It came from Bank of America. Air travel has slowed substantially, falling below its 24 and 25 levels just in recent days. So this is a really recent trend. Certainly doesn't describe what things were looking like going into this war, but just over the past few days, things have softened just a bit.
Yeah, well, prices have gone up about 15 to 20%. If you try to book flights, you can experience that. And what also has happened is a lot of the airlines have reduced capacity in addition to try to increase their profits so that they are more profitable on the routes they do fly. So there is a baked-in decline in travel that was expected. And do we see this in other sectors as well?
That's a trend to watch. If it is a trend, and we'll be talking about the airlines a few times throughout this morning. If you're just joining us, welcome to the program. Equity futures negative by 0.25% on the S&P 500, with an update on stories worldwide this morning with your Bloomberg Brief. Yahara Anand has more. Hey, Yahara.
Good morning, John. The White House says President Trump and his team are discussing Iran's latest peace offer. Iran is proposing reopening the Strait of Hormuz in exchange for the U.S. ending its blockade. Tehran wants to postpone negotiations over its nuclear program as well. The Bank of Japan holding steady, leaving its benchmark rate at 0.75%. The votes coming in split at 6 and 3, boosting the odds of a hike in June. BOJ Governor Ueda saying it is less likely the central bank will meet its outlook for the economy as the war in the Middle East clouds growth prospects. And pressure mounting for OpenAI, the Wall Street Journal reporting the company failed to meet its own goals for sales and weekly active users for ChatGPT. The shortfall is fueling internal fears that OpenAI may struggle to fund its massive AI infrastructure spending. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara later this hour. That story from the Journal just weighing on risk appetite a little bit this morning, weighing on single names like Oracle. That's down 4 to 5%. Equity futures, you'll notice the NASDAQ underperforming. It's not just the equity story on the tech side, also crude. Brent back to 111 on a 7-day winning streak. Up next, holding firm on Iran.
The proposal was being discussed. I don't want to get ahead of the president or his national security team. What I will reiterate is that the president's red lines with respect to Iran have been made very, very clear.
So what is happening in the global energy market? Up next, we'll catch up with U.S. Energy Secretary Chris Wright, live from New York City this morning. Good morning.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Live from New York City, welcome back to the program. Here's the state of things, the scores this Tuesday morning. Good morning to you all. Equity futures declining, down by 0.25% on the S&P 500, following 2 days of gains and back-to-back all-time highs on the S&P 500. The tech trade starting to come undone just a little bit, but relative to the major gains we've seen, it's nothing. 18 days of gains for chip stocks coming undone in yesterday's session over that period, a gain of almost 50%. Unreal. This morning, a wait to the tape. Let's talk about where it's coming from. The Nasdaq's down about 0.65%. Notable underperformance there. The why? We've seen names like Oracle trading a lot softer. The why? The Wall Street Journal. OpenAI reportedly falling short of its own goals, and they're committed to a lot of spend.
You know, this is really problematic on several fronts. It depends on kind of nosebleed type of growth rates in order to justify the amount of spending that it has committed to, which is north of $1 trillion. And given the fact that it just had the most expensive funding round in the history of private companies of $110 billion. So again, it really underscores a question of how much, A, OpenAI has really driven a lot of the race to solidify some of the data center capacity, and B, whether they justify it with respect to what their output is, or whether they're getting cannibalized from the likes of Gemini as well as Anthropic. ultimately you're seeing this on the margins at a couple of companies. Does it represent something bigger? I think that's really what people are looking for.
It's a 1-2 punch to risk appetite this morning. That's the first one. Here's the second. It's in the commodity market. Brent and WTI. Brent up for 7 consecutive days. Brent crude this morning, 111, and up another 3%.
This comes after the New York Times and Wall Street Journal talking about that the president, according to the Journal, is skeptical of Iran's offer, but then the New York Times is saying he's just not satisfied with the offer. And this does make sense because for Trump, really, the hardest red line has been Iran would not be able to get a nuclear weapon. So why, when the U.S. has this leverage in terms of a blockade, Kepler saying 12 to 22 days, they are not going to have enough availability of storage? I think that means that the president, why would he make a decision now? He'd wait.
Brent crude, 111.55. Under surveillance this morning, holding firm on Iran.
The proposal was being discussed. I don't want to get ahead of the president or his national security team. What I will reiterate is that the president's red lines with respect to Iran have been made very, very clear.
Here's the latest this morning. Brent climbing back above 111 as President Trump weighs Iran's latest proposal to end the war. The Treasury Secretary Scott Bessent saying the U.S. blockade is forcing Iran's oil industry to shut, with gasoline shortages to follow. Joining us now to discuss, I'm very pleased to say, the U.S. Energy Secretary Chris Wray joins us for more. Mr. Secretary, you are in Croatia, I believe. We can talk about the relationship between the U.S. and Europe in just a moment. We have to lead with Iran this morning. Mr. Secretary, in your mind, how much storage capacity does Iran have left, and what's informing that conclusion at the moment?
Well, look, there's monitoring of storage tanks at Karg Island and around the nation of Iran. But, yeah, they don't have a huge amount of storage capacity, and they've got old reservoirs that are low pressure, which means it's much more destructive if they have to shut in their production.
Kepler, Mr. Secretary, is talking about 12 to 22 days left that Iran has in terms of storage before they have to shut in. Do you see the president making any sort of decision on Iran's proposal before that time period is up?
The president's focused on getting the right deal. That could be independent of their storage, but obviously that puts great heat on Iran. If we can get the right resolution, that could be tomorrow, that could be 2 weeks from now. But the key thing is the right resolution. Iran, and let me just put the context again, Iran has roughly 1,000 pounds of 60% enriched uranium. There's no commercial, peaceful use for that. That's bomb material, and that's 10 days, 2 weeks tops to turn that into highly enriched uranium for bombs. So this is an existential crisis. I'm very proud of the president to stand up and put an end to Iran's efforts to get a nuclear bomb.
Well, so it doesn't sound like the president would take this off-ramp from Iran, which is reopening the Strait of Hormuz. Obviously, the U.S. blockade would have to end, and then kicking the can down the road when it comes to talks on nuclear.
Yes, again, the critical outcome here is that we end the ability for Iran to have a nuclear weapon. There's many ways that deal can be structured, but the compromise will not be made on the principle, no nuclear-armed Iran.
We see gasoline prices on average rising again this morning. They're above $4 a gallon. You recently said the administration plans to do more to bring down U.S. gas prices. We saw the waiver on the Jones Act extended. What else are you thinking about?
When you also saw announcements on the EPA for blending requirements this summer that allows our refineries to produce a lot more gasoline. Unfortunately, a few states foolishly did not go along with it, so California is still going to have outrageously high gas prices. New York State, I don't know why, also did not go along with the federal regulations. But we're doing everything we can to increase refinery throughput. American oil production is at record high. American oil exports to our allies abroad are at record high. So look, we're going through a period of discomfort to solve a 47-year crisis. And gasoline prices are still $1 a gallon cheaper than they were during the middle of the Biden administration.
Well, I'm hearing that the administration is also considering an export ban on U.S. products. Is that accurate?
Absolutely not. Absolutely not. Look, here I am in Dubrovnik in Croatia signing multi-billion-dollar deals to sell American energy exports. That is the fastest growing export out of our country. We're selling American natural gas, American oil, American jet fuel, diesel, and gasoline all around the world. we're not going to stop those exports. We're going to grow those exports.
Secretary, how much are you trying to ameliorate some of the price considerations in traditional allies of the United States, as this does potentially drag on for a longer period of time? I mean, how much is cost a big part of some of these exports?
Yes, everyone understands, particularly over here in Central and Eastern Europe, people understand the existential threat from Iran. Everybody wants to see that the United States successful in ending Iran's nuclear weapon ambitions. Nobody likes, of course, high prices in the short term, but they understand increased American energy exports, increased energy addition policies, lean into more energy production. That's what President Trump is all about. We've got to get away from those Western European policies of intentionally making hydrocarbons expensive and energy subtraction policies. The future of Europe, the dynamic growth of Europe, is going to be in these Central and Eastern European nations that lean into President Trump's American agenda of more energy, more economic growth, more opportunities for citizens.
Marie was alluding to this idea of potentially having restrictions on exports, and this has been deployed before, in part because prices were going up, and it increased the price when we were exporting a significant part of resources in the United States. How do you plan to have exports continue to increase to U.S. allies while not necessarily having the ramifications of much higher prices here?
Because the refinery capacity we have in the United States now is greater than all of the consumption in the United States. If we didn't export our diesel and jet fuel, we'd have to turn down our refineries. Who would want to turn down their refining capacity in today's world? We want them to, the higher utilization they run, the higher throughput they run on, the more efficient they are. They produce more products. That puts a downward pressure on prices, not just in the United States, but for everyone abroad. That's what America is about, bringing more energy to the world and pushing prices down.
Mr. Secretary, and you're announcing today Trump peace pipelines. Will it be something that all of our allies in Europe can get a handle of?
Absolutely. This Trump peace pipeline agenda is to grow the connection between the nations of Europe. Where I'm standing right here in Croatia, these nations were at the end of Russian Soviet Union energy system. They were at the behest, they were beholden to Russia. That's not a good place to be. What we're doing here is expanding this pipeline network so they can import oil and natural gas from the United States and then transport it among the nations in this region so their economies can grow and they can realize lower prices for their citizens and greater economic futures. I think the idea of the Trump peace pipelines, there's many of these, huge. We'll announce today a couple historic agreements in this regard.
Mr. Secretary, I know you've got a tight window this morning, so thanks for making time for us. The UN Energy Secretary there, Chris Wright, on the situation for global energy and U.S. energy doing a ton of heavy lifting.
The U.S. is almost an exporter for the first time ever, and this is as a result of all of those exports that have been accelerating to meet the demand that has been left from the lack of oil supply in the region.
Up next, we've got some new targets over at Goldman Sachs. They're looking for $90 crude on average for the fourth quarter. We'll talk to Samantha Dahn at Goldman Sachs in just a moment. Live from New York City, you're watching Bloomberg TV.
80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Coming off the back of 2 days of gains on the S&P 500, back-to-back all-time highs and pulling back just a little bit on the S&P this morning. We're down by 0.2%. On the Nasdaq, we're down by 0.6%. A big OpenAI theme in the equity market this morning. We'll spend some time on that later. I just want to sit on the risk in the Middle East and just go through some numbers for you. So that's the equity picture. Here's the commodity story this morning. Brent and WTI. Brent crude, 7 days of gains, 111, up by close to 3%. Approaching the closing high since this war started. The closing high was around 118, so not too far away. So retesting those highs or getting close-ish to doing so. Likewise in the bond market, by the way. This is important. 30s, just 1 basis point away from the closing high. And the closing high in the bond market for yields was only 3 days before the closing low for the equity market. So this is a strange dynamic at the moment. So let's work through it. You've got bond yields retesting the highs of the year. You've got crude doing the same. Almost, not too far away, and you've got equities 13% off the lows on the S&P 500. Equities very disconnected away from this story.
Yeah, and in particular, the technology stocks, which have been on an absolute tear, their best month going back to 2002 right now, if we hold these gains where they are. Is this a situation of people closing their eyes to the reality, or is this a situation where the U.S. consumer can keep diverging from the rest of the world? This is the question that Stuart Kaiser addressed yesterday in a note where he was saying oil prices may reach a tipping point from a long-term blockade. He said the catalyst for that case is simply time, and that ultimately is what we keep looking at. What's the tipping point for this equity market to pay attention?
Well, it's not the earnings story just yet. Just got these numbers from General Motors. EPS for the first quarter, adjusted EPS came at 370. The estimate was 260. The full year outlook now for adjusted EPS, they offer a range of 11.50 to 13.50. They had seen 11 to 13. So I see that as a beat and a raise, Bramo, from General Motors.
Yeah, and some of the headwinds, like tariff costs, actually coming in much lighter than previously expected at $2.5 billion versus the $3.5 billion expected. But what this really does show is ongoing resilience and profitability, even with a slight miss when it comes to vehicle sales in the first quarter. Nonetheless, it's UPS, it's a Lending Club from yesterday. It's pretty much all of these consumer-facing names that we keep seeing that also are outperforming in tandem with the tech stocks.
The stock is up at a pre-market by 1.3%. In the next hour, we'll catch up with the CFO, Paul Jacobson of General Motors. Looking forward to that conversation as those numbers come in better than expected. Let's get you some more single names, some morning movers. Yahira has more. Hey, Yahira.
Hi, John. CoreWeave, Oracle, and AMD all getting dragged down lower by that Wall Street Journal report that OpenAI missed some of its own sales and growth targets, raising questions about whether it can keep up with its massive AI spend. And that matters for this group because Oracle and CoreWeave, of course, are right at the center of the AI build-out. Both have deals with OpenAI, and AMD is locked into a massive partnership with OpenAI on the chip side. Speaking of chips, that record run we had in the chip sector has come to an end after yesterday. We were not able to notch a 19th straight day of gains on the Philadelphia Semiconductor Semiconductor Index. And we're seeing some weakness again today. Some of that maybe having to do with that Wall Street Journal report on OpenAI. SanDisk falling 2.25% in the pre-market. But make no mistake, that stock has been on a tear, up more than 350% year to date. And we end on Bed Bath & Beyond, those shares soaring nearly 35% in the pre-market after it topped revenue estimates and posted a narrower than expected loss. But what's really driving this move is the company just delivered its first meaningful revenue growth in 19 quarters. John?
Ira, thank you. That word resilience coming up repeatedly this morning in the equity market with regards to earnings. General Motors, Kimberly-Clark as well. Kimberly-Clark with decent numbers this morning, a beat from them too. Resilience across the board.
I'm not sure if Kimberly-Clark, though, is going to be necessarily a positive signal or a forward-leading signal, because we keep talking about whether this is going to be a pandemic-related shock. And ultimately, I've actually been spending some time trying to find out if there's a toilet paper index to see if maybe the price has been going up, to see if perhaps that's a forward indicator of people preparing for supply chain disruption.
At least one of the households around this table, very long huggies at the moment. So
that's so cute.
No doubt supporting that name.
Well, you know, that's a good thing to be long.
On our radar this morning, President Donald Trump telling advisors he's not satisfied with Iran's latest proposal to reopen the Strait of Hormuz. The administration previously insisting any deal must include strict curbs to Tehran's nuclear program. Elsewhere, the Bank of Japan holding its benchmark interest rate steady. The split vote boosting the chance for rate hike in June. The Fed set to announce its decision tomorrow, followed by the Bank of England and ECB coming up on Thursday. And finally, one of our top stories this morning, OpenAI failing to meet its own goals for new user acquisition and sales, fueling fears over its AI spending. The Wall Street Journal reporting that CFO Sarah Fryer is concerned that the company may not be able to afford future computing needs.
Let's talk about what those spending commitments are. $1.4 trillion in AI infrastructure. That's how much OpenAI has committed to over the past couple of years. They've increasingly gone out to customers, to clients, to a lot of funds saying, please give us money. And plenty of them have, although Microsoft may be backing away from some of the terms. SoftBank recently committed $30 billion to the latest round of funding. And now you see SoftBank getting hammered. So again, we were talking about circular financing. OpenAI was at the center of a lot of it. And all of a sudden, it's losing share to the likes of Gemini and the likes of Anthropic. Is this signal, as you said, or is this noise? Increasingly, right now, it's being treated as more noise than signal because it isn't having a broader, huge response in markets, just a couple of select names. That said, does this indicate that it's a sort of set pool of customers and it's people cannibalizing from one another?
Does the capital expenditure now, do these deals potentially go on the sidelines, or do they just go to Anthropic and Google Gemini, which seem to be eating OpenAI's lunch? I still can't believe they set an internal bar and weren't able to clear it internally. And now the CFO, according to the Wall Street Journal, is actually concerned about whether or not they can make their IPO target this year as well.
Taking down Oracle, taking down the equity market just a little bit, explaining the underperformance in the NASDAQ so far this morning. That's one of the big market drivers this morning. This is the other one. Crude climbing to a 3-week high, with naval blockades keeping traffic through the Persian Gulf near zero. Samantha Dart of Goldman Sachs hiking her fourth quarter forecast for Brent and WTI, writing, we now assume a normalization in Gulf exports by the end of June. The economic risks are larger than our base case alone, suggests. Samantha joins us now for more. Sam, good morning. You just followed, I'm sure, our conversation with the Energy Secretary just moments ago. What's your understanding of how close we are to breaching storage capacity in Iran?
Yeah, it's hard to say. Data is not transparent, but it's important to remember that Iran has gone through extended periods of time in the past with very low production. So it's not obvious that this alone is a binding condition for something to really change fundamentally here.
Can they outlast us? That seems to be the question lots of people are talking about. We've had a severe inventory drawdown. You and the team have been crunching the numbers. How sustainable is that inventory drawdown? Because that's really supported things globally. It's kept a lid on prices to some extent. This would have been a whole lot worse.
Yeah, we'll find out. I mean, we're literally in unprecedented territory here. Even if things are normalized starting today, global inventories are likely to just dip below the historical lows. So we will find out how comfortable markets are with that, because the issue is we have these global numbers, but the reality, the physical reality, is a bit more heterogeneous than that. And some places might look tighter than other places. I think at the end of the day, the issue is a physical one. And right now, the way that this shows up in the headlines the most is thousands of flights canceled. And that seems a little bit like discretionary demand being impacted. Seems like an inconvenience. I think things will get more visible and potentially more serious when we have a real shortage on the chemical production side, because chemical products are used in 95% of all manufactured products.
Well, this is actually the key point that a number of analysts have made, and I'm curious to speak with the GM CFO to see if they're trying to stockpile ahead of any kind of lack of, whether it's chips or other supplies that they need to come into their cars. I mean, how close do you think that we are to that?
I think we're about a month away from running out a lot of feedstock supply for chemical companies, and probably 2 to 3 months away of running out of chemical products in a lot of regions that produce it. At least this is what we've been hearing from industrial users. And sometimes these industrial users are sitting, let's say, in Europe, but their chemical supplier is in Asia. And what they're telling us is our supplier called us and they said they have 2 months of supply. And after that, we have to cut back our own production. So this is how things can get more into broader supply chains.
So we were talking earlier about how the longer this goes on, the longer it takes to restart everything, whether it's production and whether it's just getting the ships onto the sea so that they can make their deliveries. How quickly, let's say it ended today, let's say the Strait of Hormuz was open fully, no constraints, how long would it take to restart some of those supply chains to avoid what you just laid out?
Yeah, so on the chemical side in particular, what we hear from our analysts for the region is that we haven't had a lot of infrastructure damage, which is good news. On the oil side, we go back to a pressure issue. The longer you stay shut down, if you're not actively investing in your infrastructure, your pressure is not going to be that great. So when you try to restart, your volumes just are slower to normalize. This, we think, is the case more with Iraq, whereas Saudi is going to ramp up, I think, more quickly.
When it comes to U.S. policy risk, you say it's not your base case, but you don't rule out an export ban. The Energy Secretary has been emphatic. He said absolutely not, that they are studying that. Is he going to basically regret those words maybe into the midterms?
It's hard to say. When prices go up, political pressure grows. And when we look at the differential between TI and Brent, it still suggests that the market does assign a probability, a non-zero probability of that happening. So we don't think it happens in our base case because it's not obvious that it helps. If you curtail exports out of the U.S., the margins for the refineries in the U.S. are going to drop. So it's not even clear how much product they will put out in the market. So are products in the U.S. going to get cheaper or more expensive because we're not producing enough of it?
What policies would help? We saw the extension of the waiver for the Jones Act, which is definitely helping New York, maybe California. Will they hit the SPR again?
I think that would help. More SPR releases, it does help moderate the pace at which inventories are drawing down. And I think right now, this matters more than it did, say, a month ago, because a month ago, we had a lot of oil stocked up on water, so you could draw down from that. That's now pretty much gone. So now you're drawing from storage on land. So it becomes a lot more visible, and if you're a refinery trying to buy that oil right then and there, it's scarcer. So more SPR releases, I think, would help.
This is a moving story. I just want to finish on this. When you say things like, we now assume a normalization of Gulf exports by the end of June, what informs that base case for you? When you look at the calendar, where's that coming from?
Yeah, I think a lot of that comes from the developments we've seen towards, say, a ceasefire, and a headline just not long ago, now it seems like longer, but not long ago, saying the strait is completely open. Okay, just to be closed the next day. But these headlines, what they signal to us is that there is a desire, there is an intention to end this thing. It's not helping either side. So that intention, and I think this is what keeping risk premium in broader markets limited to some extent as well, but that intention shows that they want to resolve it.
Samantha, it's good to see you. Thank you. Sam, Samantha down there of Goldman Sachs. That's helping the forward look a little bit better than expected. It's doing nothing to alleviate the concern in the here and now when it comes to clearing supply and demand.
Yeah, and I keep thinking about what Halima Croft of RBC had to say, which is that the fact that it's keeping control over the long end of the oil curve is actually creating more of a problem for the front end of the curve, because you're not seeing demand destruction that you normally would see if prices were significantly higher. So the normal reaction function in pricing just isn't happening, leading to more demand, which only increases the front end pressure. So this really is a difficult, and that's why I keep going back to boiling the frog. It's not very nice, but it does feel a little bit like that.
Brent crude, 111. 111.20. We're up by close to 3% this morning. Let's give an update on stories worldwide this morning with your Bloomberg brief. Yahira has more. Hey, Yahira.
Hi, John. We are seeing GM shares rising nearly 4% in the pre-market. The company reporting first quarter earnings that beat analyst estimates. GM also raising its full-year guidance following the Supreme Court's decision to strike down President Trump's tariffs. Coming up at 7:30 a.m. Eastern, GM CFO Paul Jacobson will be joining John, Lisa, and Anne-Marie. Meanwhile, shares of BP also rising, up 3% in London after its first quarter earnings far exceeded estimates. A surge in oil prices and market turmoil caused by the Iran war led net income to more than double. And the DOJ charging a California man with trying to kill President Trump over the weekend, the 31-year-old making his first appearance in federal court, where he was also charged with gun offenses. The suspect sent a manifesto to family members that was included in the charging documents. That's your Bloomberg Brief. John.
Yahira, thank you. Appreciate it. More from Yahira in the next hour. Up next on the program, supply chains under pressure.
There may be some fits and starts and some quick answers that could be delivered, but once the strait is open, there is a lot of work to do in the supply chain. More than likely, what we'll see is a reset at some point.
Up next, we'll catch up with Brandon Oglensky of Barclays from New York City this morning. Good morning. You're watching Bloomberg TV.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal with athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Just eyeballing this, you'll notice the gap between the S&P and the Nasdaq and the underperformance you're seeing on the Nasdaq 100 this morning. The Nasdaq is softer, lower negative by 0.75%. The Wall Street Journal out with a report on OpenAI this morning, indicating they're falling short of their own targets. So that's weighing on some of the companies exposed to that in public markets, the likes of Oracle.
And this was the existential threat earlier this year. What if OpenAI isn't the next big thing, and you have all of these big companies that have invested so much in it? Is this the first sign that that's the case? Ultimately, we'll have to see. But right now, you can see the companies that are closest to it seeing the biggest declines.
And that's weighing on tech this morning. Oracle's down by more than 5%. This is weighing on risk appetite as well. Crude up again. Brent, 7 days of gains, 111.21. Under surveillance this morning. Supply chains under pressure.
For every 1 day of service disruption, it takes about 3 days to catch up. There may be some fits and starts and some quick answers that could be delivered, but once the strait is open, there is a lot of work to do in this supply chain. It will take some time to get these products moving in and out.
So here's the latest this morning. UPS shares falling in the pre-market, down 3%. The company leaving its full-year guidance unchanged, even after reporting first-quarter earnings that beat estimates. Joining us now is Brandon Oglensky of Barclays. Brandon, good morning.
Good morning, John.
Good to see you. The word that's come up repeatedly through earnings season is resilience. Do you see that with UPS this morning?
Well, and John, we've seen actually other freight companies already report, and we're seeing a little bit of a positive inflection across not just the consumer supply chain, but importantly, the industrial supply chain. Unfortunately for UPS, though, they're dealing with something structural within their own business, which is Amazon, which was a 20% customer of their domestic network even a year and a half ago, decided effectively to take half of that business and insource it into their network. So they're still dealing with those volume declines. I think they're losing another 5 points of volume through June or July of this year.
Some might call that idiosyncratic. How does the situation in Iran right now, fuel costs, etc., fold into what we're seeing on the screen this morning?
Well, for sure, what UPS and FedEx, because there's a lot of fuel surcharge revenue here, and actually we think that revenue probably exceeds the incremental fuel expense, so there's a lot of pricing tailwinds. And for sure, UPS's goal here to get rid of some of this Amazon traffic is to increase mix, increase yield, and hopefully turn the page on margins longer term. But unfortunately, there's friction in all this, and they are a unionized network. They tried to get rid of, I believe, 10,000 drivers, and effectively the Teamsters sued them. They came to an agreement with the union that said, maybe we'll let fewer drivers go on this buyout program that they had. So there's just a lot of challenges when you try to shrink these time-definite networks, especially when you're a unionized business like UPS.
Is there a signal in the fact that UPS has increasingly leaned on the lever of layoffs to try to increase margins, to either shrink capacity or just sort of right size to a market that now has a much greater degree of competition?
Well, and that's precisely what's going on here. I mean, you have the highest cost network is UPS, probably the least flexible labor, just because they have the union contract and all the work rules. And we're not anti-union by any measure, but FedEx has effectively an independent contractor network. Amazon really replicated that in the last 5 to 10 years. So you have Amazon insourcing, which is UPS's largest customer, and you have FedEx that's lower cost and arguably higher service right now than UPS. And I think their only answer is, can we retreat to a core base of business-to-business revenue and small and medium business shippers that maybe pay a little bit more where we can derive that margin? But the problem is, as you shrink the business, your fixed costs don't go down as fast. So you ask for more price from your customers, and your customers say, well, there's alternatives. I can use FedEx.
So this might be more of a structural, idiosyncratic, maybe, type of situation based on the fact that it has a high union membership and it has serious competition. On a broader macro level, some of the airlines have come out and either reduced their guide for the full year, given a sense that they expect demand to really drop off. Some initial indications, as John was mentioning earlier, that that's actually happening. What do you see in terms of how much consumer demand really is responding to those higher prices?
Well, I know there's a lot of credit card data out there. Our competitor banks publish on that. But I think the most recent that we've heard from all the airlines is actually things are getting stronger as we progress through April and into peak summer travel months. So I'm not sure that we're seeing significant slowdown in the consumer yet. In fact, I think that's been accelerating. This was probably the first that we've heard any inklings that things are slowing.
Yeah.
And the airline guide's coming down. That's really from an earnings perspective because fuel is such a significant portion of their cost structure, going from like 30 to 40% of cost. So you're definitely going to see negative earnings revisions. Importantly, though, the revenue revisions have been very positive, I'd argue.
You mentioned that last time we caught up, that things are getting better.
Yes.
Not worse through this war. Is that just a pricing story, or is there something else happening here?
Well, I mean, we're firmly of the belief that the consumer's been on solid footing. It wasn't shocking to us that retail sales surprised because we can see it again maybe more in real time with airline spending. And in fact, FedEx beat estimates last quarter. Most other freight transport names are beating estimates. So I know everyone looks at UPS as kind of the bellwether, like, oh, they're one of the largest transports out there. But unfortunately, again, they're going through this very difficult process of trying to shrink their business.
Can I ask you something that Lisa's talked about a few times over the last several months? Do you think the situation in the Middle East is actually dampening what could have been a boom in this economy at this point?
Absolutely. As a transport and airline analyst, I feel like there's been something every year here where we constantly are resetting numbers lower. This was setting up to be a very big year, I think, of earnings for across our sectors. But if anything, I think markets are reacting because you look at most of our stocks, maybe apart from some of the smaller airlines, we're in line with the S&P, if not even outperforming, especially on the freight side.
But jet fuel and diesel are going up tremendously. At some point, will it hit?
I think that is the fear, that if this is a prolonged duration event, and again, we don't have any agreement, I think, between the parties right now, right? So
we do not.
If this is prolonged, then we could see demand destruction for sure, because this is an input cost, to a lot of the supply chain. And
that changes from hour to hour, though, and I haven't seen the latest Axios report, which usually drops around now, about 90 minutes before the cash open.
Well, it's true, but also from my thinking, if Kepler's reporting that Iran is 12 to 22 days before they hit maximum storage capacity and they have to have shut-ins, that's basically how much longer I think this blockade and the closure of Strait of Hormuz last, because why would Trump make a move until Iran feels the maximum economic pressure?
Brandon, just quickly on jet fuel.
Yep.
The transatlantic London-New York corridor, Lisa's talked about this so much just in the last week when catching up with the likes of United Airlines. How close are we to these airlines needing to make some tough decisions about the kind of routes they can do and the kind they can't?
Well, again, I think we talked about this last week too. At least from a U.S. carrier perspective, no one's really worried about the availability of jet fuel, even looking through peak summer operations. I think the concern is going to be what is the price that we're paying.
They can get to London. I'm just wondering if they can get back.
I think the concern is more in Eastern Europe and supply shortages there. But, we've heard from some European carriers saying that this is a little bit overblown at the moment. So we have to wait and see.
Brandon, it's good to see you. Thank you, buddy, as always, for an update. Brandon Oglensky there of Barclays. Lufthansa, the first one out with some big numbers, and you wonder if that was masking some other choices they were trying to make over in Germany.
The bottom line is short flights are not that profitable, right? Those commuter flights to big cities.
They're the ones that are gone.
They're the ones that are gone, and they're the ones that really just can't justify themselves in terms of the cost. And those are going to be the first to go all around the world. The highest margin flights are the international ones, particularly the transatlantic ones. Those are not going to go anywhere because that will maintain a lot of the profitability of the airline. So this might be a sort of rationalization of some of the routes and exactly what actually pays the bills.
Dampening what could have been a boom.
100%.
This has been your theme. It's kind of the story, looking at the data and the earnings.
If you see the reacceleration of consumer spending, and this is what people were talking about with the one big beautiful bill, we said, really, isn't that baked in? Well, maybe not, and actually we're seeing that come to fruition. But there always seems to be hair on it, doesn't it? And right now, there's a pretty big suppressor.
Up next on the program, Darryl Cronk of Wells Fargo, General Karen Gibson of Academy Securities, GM CFO Paul Jacobson, and Seth Carpenter of Morgan Stanley. The second hour of Bloomberg Surveillance just around the corner.
Tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We've already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
There are questions around the direction of economic travel.
The market recognizes there's going to be an inflation problem.
You can't cut rates in a rising inflation environment.
Clearly, the shift has been to a wait-and-see mode.
I'm not calling for more Fed rate cuts this year.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores, the price action, looks like this. Following back-to-back all-time highs on the S&P 500, pulling back by 0.2%. Underperformance on the NASDAQ 100, down by 0.6. Underperformance for some single names, including Oracle, down by 4 to 5% in the pre-market. Following this, from the Wall Street Journal, OpenAI missing its own targets for users, for revenue. The CFO telling other company leaders she's worried about the company and their ability to pay for future computing contracts if revenue isn't growing fast enough.
This is potentially a massive story for the entire tech complex, given the fact that OpenAI has committed to spending about $1.4 trillion on infrastructure projects tied to data centers and beyond, financed by all sorts of tech companies and investors who are adjacent. Does this indicate just simply a cooling of demand or just fierce competition, or is there something bigger here that indicates that OpenAI and the hopes and dreams and all of the money that went into it might have been a little bit overblown?
All these tech companies that have partnerships with OpenAI should be asked this on the earnings call this week, and hopefully we'll find out what they think about the future of OpenAI, which according to the Wall Street Journal is losing ground when it comes to Anthropic as well as Google Gemini, so much that they're concerned about the IPO maybe being on ice this year.
The AI story was a pillar of support for this equity market since the lows of the end of last month. We've had a 13% rally off the lows on the S&P 500. The headwind is coming from crude. It's still coming this morning. Brent's up for a 7th consecutive session. Brent crude this morning topping 111, higher by almost 3%. There is no deal in the Middle East. There is hardly any traffic going through the Strait of Hormuz, and the tension is just building day by day, day by day.
And I know that the first thing, or one of the first things that you do and I do in the morning, is take a look at the December contract for Brent, and you can see that it's at the highest level so far on record for this contract, north of $87. People aren't just looking at this as a near-term issue. People are extending the time frame slowly and slowly and slowly, and at what point will it hit the U.S. economy? It's hitting other areas. But this is sort of the disconnect that people feel. Could this be a real supply chain shock akin to what we saw in 2020? that the market just hasn't wrapped its head around yet.
Trump could have potentially taken this off-ramp from the Iranians, which is reopen the Strait of Hormuz, but kick the can down the road when it comes to what is going on with Iran's nuclear ambitions. And it doesn't sound like the president wants to take that, because that is the hardest of his red lines. So he's unwilling to take the opening of the Strait of Hormuz if it means that Iran basically has a win when it comes to nuclear, which is why you see oil prices moving up. And this is going to get a lot harder for Iran in the next 3 weeks. This data from Kepler is key. 12 to 22 days, they are going to hit tank tops, and there's going to be nowhere else for this crude to go.
Let's break up the market, individual asset classes. Let's start with commodities. Bramo said it, long-dated contracts making new highs. Check out the bond market, really stealthy stuff, not being talked about enough. We're looking at retesting new highs for the year as well on 30s, so at the long end of the US curve, on 10s in Germany, on 10s in the UK. They've got their own problems, I know. But you're starting to see that retest again in yields, in fixed income, just as you see those new highs coming into crude. At the same time, equities are 13% off the lows. We've had a 13% rally off the lows on the S&P 500. Why? It's hard to fight the earnings story. When you look at the names coming out this morning, GM, Kimberly-Clark, Coca-Cola, just moments ago.
Yeah, and this is just the highlights. This highlights how multifaceted this earnings boom really has been. We talked about the tech giants and how they're expected to outperform. Coca-Cola just raising their full-year forecast for earnings based on the fact that they're seeing strength in things like their concentrate sales. They have, of course, CapEx that actually is exceeding expectations. So the CapEx boom, they're underway. Seeing demand just continue, even though people are worried about the consumer spending backdrop. So, we could be gloom and doom, but then these companies come out and they seem like things are going really well, given the fact that one after the other is beating forecasts.
Coca-Cola higher by 2.3% so far in the pre-market. Equity futures negative by around 0.2% on the S&P. Coming up this hour, we'll catch up with Darryl Cronk of Wells Fargo. As OpenAI fuels some anxiety in the tech sector, we'll speak to General Karen Gibson of Academy Securities as President Trump considers Iran's latest offer, and the General Motors CFO, Paul Jacobson, as the automaker posts an earnings beat. We begin this out with stocks pulling back ahead of tomorrow's tech earnings. Darryl Cronk of Wells Fargo writing 5 of the Mag 7 report this week and will set the tone for the balance of the Q1 reporting season and overall market direction in the near term. Darryl joins us now for more. Darryl, welcome to the program. We heard from the Wall Street Journal earlier on this morning indicating that OpenAI are falling short of their own sales targets, their own growth targets. Darryl, is this a house of cards, and who's exposed?
Well, good morning, John. No, I don't think it's a house of cards at all. In fact, when you look at, people are trying to figure out why such an explosive rally in the month of April, all you have to do is look at tech and financials being 45% of the market cap, almost half of the entire index from a market cap weighting standpoint, and tech earnings are growing at 35% for this quarter, and financial earnings, which doesn't get the same press that it probably should, are growing at 22% this quarter, right? So even though we know the quarter is going to be mid double digits, call it 15% with an average beat ratio, probably pushes you closer to 17, 18%, it's not a house of cards. But to the point, right, I think what the markets are watching intricately and closely is you don't need to see a deceleration in CapEx expectations coming from those big private companies or even the public companies. You just need to see indications that, well, maybe that trend has peaked. And if it's peaked, I think then you start to reprice some of the models about what you can expect going forward.
So, Darryl, let's break this up because this is important. Let's start with tech. Let's just park financials and what's happening in the bond market just for a moment. I want to come back to that. But just for tech alone, let's say you don't see that continued acceleration in CapEx from the big spenders, and we see more sign of that perhaps later this week. I don't know, but we'll look out for that tomorrow afternoon. What does that mean for how this market is priced? The moves we've seen in chips, in semis over the past 3 weeks?
Yeah, I think it might have, we might be a little bit overbought here. So we actually came on the show about a month ago. At the same time, beginning of April, we upgraded tech to an overweight. We had downgraded it last October. It had traded sideways, upgraded it, and took the money out of energy because we just thought the energy stocks had gone too far, too fast, unsustainable. That's just been one heck of a trade, a high convexity trade in the month of April. To us now, it looks like they're a little bit ahead of themselves, right? I don't really see a sustainable trend, though, John, yet, that we'll see that peak of CapEx and, it's starting to roll over. What I would say, and what's interesting is if you look at the numbers on like engineering and construction backlogs, they're starting to build, right? So the choke point here may not be the tech companies and all those wheelbarrows of cash and willingness to spend, it may be, in fact, how fast we can actually monetize and build those data centers and everything else because of things like engineering and construction backlogs, or because not getting the energy needed to power them, all the kind of things that could become actually down the road choke points.
Daryl, how much of this was independent of what we're seeing in the Middle East, and how much do you expect some of these big tech companies to talk about how that's adding to some of these frictions and the time that it takes to build some of these data centers and beyond?
Yeah, I think that's real, Lisa. I mean, obviously it adds to the whole mix I just talked about. I mean, it's interesting, when you talk to the energy companies, like the refiners and some of the export companies, they will tell you in the physical market, getting access to physical oil is much more expensive today than even the financial markets print. So we're talking about this morning, the spread between WTI and Brent crude. It's back at $10 basically, which suggests that there's stress and low shortages or low inventory out on the global floating marketplace, right? But if you talk to actual refiners, they're telling you, I have to pay way above even what Brent prices are to get the physical oil into the refineries to start to move it through the ecosystem. And I think that's what's got to catch up. There's a little bit of complacency. You've been highlighting it all morning, Lisa. Complacency in that forward market, just like there's a little bit of complacency near term in the equity markets about all of this gets resolved, all of it moves to the sidelines quietly, nicely, and easily. By mid-May here, in about 3-4 weeks, you're going to start to see some material demand destruction that could push, and I emphasize the word could push oil prices back to something like, 120, 125, 130, 135. That's not out of the cards if we don't get the strait reopened.
Daryl, there are a lot of different markets that are kind of intersecting to create the stability and resilience that we've seen over the past couple of years. You say that we're probably a bit overbought here. Jonathan Krinsky was saying that in the tech sector, when things go parabolic, like they have in semiconductors in particular, they tend to retrace with similar vigor. Are you looking at that type of retracement in the weeks and months ahead, or are you looking at just sort of a deflating of the balloon?
Yeah, I don't think you're going to get into any long-term sustainable trend. We didn't downgrade tech, to be clear, right? We just think the positioning got a little euphoric. Obviously, it's been led by those 18 straight days of semiconductor stock outperformance. But what's interesting is you get underneath the surface in tech, and tech breadth is broadening across the sector. We all know what was the trade here kind of 30 days ago, which was long semis and hardware, short software, right? That has kind of flipped, and some of the software names have come back and started participating, which I think has been really key to this tech rally, right? Yes, it's led by semis and hardware, but it's not exclusively semis and hardware like it was maybe 2, 3, 4 weeks ago. So you could get some moderation, but I don't look for any sustainable downtrend unless something breaks here, and I don't see what's going to break. The earnings are there, the cash is there, the willingness to spend is there. Like it's a little bit of a high convexity trade still, we think.
Darryl, something is breaking higher, and I promised you we'd come back to it. So yes, you like the financials. I understand that steeper yield curves underpin some of that call. That break high we're seeing again in yields, quite stealthy, not seeing too many headlines on this at all, but retesting the highs of the year. On the 30 in America and abroad, we're looking at 10s in Germany, 10s in the UK. What do you think's happening here?
Well, look, it's no secret when you get out on the long side of the curve, what it is it's an interest rate with a term premium, an inflation premium, and a growth premium stacked on top of it. That's how you get to long-term interest rates, whether it's in the U.S. or internationally. Obviously, with $111 crude, those inflation premiums are going higher. We think they should. When I was on 30 days ago, I said, look, one of the things that's underappreciated, we think, in this market is the long side of the U.S. yield curve is still too low. If you look at the 10-year, it's been trading essentially at 4.3% back and forth for almost 3 years plus running now, since almost October of 22. It's just been stuck in a very tight range. We think those interest rates need to go higher, right, for the reasons I just talked about, stacking those premiums. The question becomes, and it is the existential question here, John, is where do those higher interest rates start to create indigestion for equity prices and equity markets, right? We think in the U.S., it's somewhere north of probably 460, 475 on the 10-year. We're not there yet. but we do think rates need to go higher, and it's exactly what's happening right now.
Darryl, thank you, sir. It's good to see you. Appreciate the catch-up, the update. Darryl Cronk there of Wells Fargo. 10-year notes this morning, yields up 2 basis points, 436.
Yeah, and you've got a $44 billion auction of the 7-year notes later today at 1 p.m. And do we get the same kind of indigestion? Yesterday we saw short-term notes auction. Just want to say, it does feel like this is a different kind of sell-off in the bond market because it's for the right reasons. It's for the strength that's in the underlying economy, not necessarily totally in tandem with oil prices. Nonetheless, I feel like the theme of this week is boiling the frog, just slightly boiling the frog.
Which John Selfus is very disappointed in.
He just thinks it's not very nice to the frog.
Yes, apparently. He was very emotional, sentimental this morning.
The chickens are going buck, 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 and the frog is getting,
anyway.
getting upset.
If you missed that, don't worry. Yields are up across the curve this morning. 10-year yields very close to 440, 435 this morning. Let's get you an update on stories worldwide this morning with your Bloomberg Brief. Yahara has more. Hey, Yahara.
Hi, John. We are seeing UPS shares falling nearly 3% in the pre-market. The company posting first quarter earnings that exceeded expectations, but the courier opted to leave its financial guidance unchanged. JetBlue shares, meanwhile, are slightly lower in the pre-market. The airline reporting first quarter earnings that missed analyst estimates. The company also announcing plans to slow hiring in the second half of the year to align with reduced capacity. And President Trump welcoming King Charles to the White House at the start of his first state visit to the U.S. since becoming king. The trip comes at a tense time for UK-U.S. relations, with Trump repeatedly criticizing Prime Minister Keir Starmer over his stance on the Iran war. That's your Bloomberg Brief. John.
Yahara, thank you. Thanks for the update. More from Yahara in about 15 minutes' time. Up next on the program, holding the red line with Iran.
The proposal was being discussed. I don't want to get ahead of the president or his national security team. What I will reiterate is that the president's red lines with respect to Iran have been made very, very clear.
Up next, we'll catch up with General Karen Gibson of Academy Securities, live from New York City this morning. Good morning.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Here's the tale of the tape this morning. We're negative by 0.4% on the S&P 500. On the NASDAQ, here's your underperformance, down by 0.9%. Story keeps going back to the Wall Street Journal. Fantastic reporting from them, by the way, suggesting that internally over at OpenAI, they're falling short of expectations. The CFO seems to be worried about the commitment to spend And the people receiving, or will be receiving, should be receiving some of that spending, trading much lower in the pre-market this morning.
This is a name, OpenAI. It is a private company, but it has a huge footprint when it comes to the investments by public companies that have really thrown their faith behind this one company. Increasingly, when it released ChatGPT, it was novel. It was something that attracted everyone's attention of the promise of artificial intelligence. Now we've got Gemini, now we've got Anthropic, now we have every single company putting in their own iteration, and raises questions about OpenAI's place in the future.
It's the worst of both worlds this morning on the tech front, on the oil front as well. Brent crude out to 111, pushing 112, higher this morning by more than 3%, as Lisa has indicated. Some of the longer dated contracts making new highs. Big focus on December as we approach year-end, or at least start to think about that. The tension builds, and you see it in crude prices this morning.
Tension building, no impasse. We're still at an impasse. There's been no breakthrough. And based off the reporting yesterday, the president is very skeptical and doesn't like this idea. The Iranians are floating, which is, we'll reopen the Strait of Hormuz, but we're not going to negotiate just yet on nuclear. That's unacceptable to the United States.
Crude this morning up more than 3%. Under surveillance this morning, holding the red line with Iran.
The proposal was being discussed. I don't want to get ahead of the president or his national security team. What I will reiterate is that the president's red lines with respect to Iran have been made very, very clear, not just to the American public, but also to them as well. I wouldn't say they're considering it. I would just say that there was a discussion this morning that I don't want to get ahead of, and you'll hear directly from the president, I'm sure, on this topic very soon.
So here's the latest this morning. President Donald Trump telling advisors he's not satisfied with Iran's proposal to reopen the Strait of Hormuz. Bloomberg's Tyler Kendall has the latest from Washington. Good morning, Tyler.
Hey, John, good morning. Well, this White House still maintains that there needs to be curbs on Iran's nuclear capabilities for any sort of deal. In fact, the U.S. Energy Secretary Christopher Wright was pretty clear on this program last hour that it's not something that the administration is willing to compromise on. The thing is, it doesn't appear that it's something that Iran is willing to negotiate on, at least for now. Instead, the country is proposing that we could see a potential reopening of the Strait of Hormuz in exchange for the U.S. lifting its naval blockade and maybe making some other concessions, according to Iranian state media, including compensation for damages, assurances that Iran will not be attacked again, and then a legal structure for the Strait of Hormuz. But as you mentioned, it appears that the administration is wary of this proposal because, in large part, a lot of these points have been non-starters, at least publicly, for the U.S. You had Secretary of State Marco Rubio just yesterday saying that Iran cannot retain any control over the strait and that the U.S. isn't going to lift the blockade because, in large part, it's been such a big point of leverage. Anne-Marie's already mentioned that research out from Kepler that it appears that they are estimating that Iran only has about 12 to 22 days left of spare oil storage capacity. And John, at this point, new data analyzed by Bloomberg shows that it does appear that the first LNG shipment did make its way through the Strait of Hormuz, but our own analysts are cautioning while this may give some renewed sense of optimism, at this point, all LNG tankers appear to be staying put, at least for now.
Tyler Kendall with the latest in Washington. Tyler, thank you. Let's extend and build on this conversation. General Karen Gibson of Academy Securities writing for us, reopening the strait is a matter of urgency and Iran knows it. I suspect Iran is gambling it cannot last us here. General Gibson joins us now for more. General Gibson, that last line, is there good reason to believe that Iran can outlast the U.S.?
Well, I think it's a matter of political fortitude on our part. And if we want to achieve the objectives of this campaign, which were, as we've just heard, to impose very strict limits on Iran's ability to gain nuclear weapons, then this key leverage is something that we need to sustain. I think it's telling the actions that Iran is taking right now and indicating, as you said, that, you know, the combination of previous sanctions, of the wartime infrastructure damage, and now essentially a maritime blockade, our interdiction efforts are probably beginning to take a toll on a regime that has previously proved very resilient to economic pressure.
Well, if the Iranians are so resilient, do you see the United States doing anything before they reach their maximum capacity on storage in the oil industry called tank tops?
I think that the strategy that we have now, really this post-kinetic phase of using our military assets mutually, Iran is doing the same thing, to exert economic pressure on one another, Iran preventing essentially the flow of traffic in and out of the strait, and the U.S. Navy preventing the flow of traffic in and out of Iranian ports, is proving to be pretty successful. Again, I think when we look at Iran's negotiating strategy at this point, trying to decouple the economic pressure from the nuclear discussions. I think they're seeking economic relief. They want military relief in terms of sustaining the ceasefire, and then that would allow them to postpone, drag out, or negotiate at least on the nuclear aspects from a position of a less coercive position, greater advantage to them.
If Trump cannot open up the Strait of Hormuz diplomatically, will he do so with the military?
I think in terms of opening it with the military, that would really mean escorting tankers and other vessels, as we've talked about before. It's certainly a feasible military option, and I don't think that Iran would be in a position to really strongly contest that. They could strike, take pot shots at vessels that are going through, but I think if they did that, they would be inviting more of those very punishing airstrikes that we've levied in the past.
General, what do you make of the comments we've heard from both the administration and other analysts that there really isn't any kind of cohesion in the Iranian leadership, that there isn't anyone like the former Ayatollah who could have come out and said, this is the route that we're going to take, the poison chalice that we're going to drink, and we're going to come to this agreement? Do you think that that's an accurate reflection of things on the ground?
Well, I certainly think it's fair to say that the current Ayatollah lacks the strength of his father to act, certainly with greater authority. But I think that the IRGC is really the Iranian Revolutionary Guard Corps, remains probably pretty cohesive. I've often heard there are no real moderates among those who are in charge. It's just various factions of hardliners. And I'm not sure we see yet concrete evidence that there's significant friction within the Islamic Republic's leadership.
General, what do you make of reports that there is some dissension from the rank and file that aren't getting paid because of a lack of cash coming into the regime?
So I think that's where we would probably be more likely to see some friction. Some of the indicators I would look for would be defections or units that are no longer willing to carry out orders. But now that we're not conducting kinetic operations and Iran is not responding in kind, that's a little harder to detect, but those are some of the indicators I would look for that would lead me to believe that there was a growing friction within the security establishment.
General, always appreciate getting some time with you. Thank you very much. General Karen Gibson there. Thank you of Academy Securities on the latest situation in the Middle East. Iran is very good at dragging things out, making negotiations go on for a long, long time, stringing people along throughout political cycles and looking way beyond the next 3-5 years, looking out decades. But the stakes this time around, given the pressure, and the pressure is different, the stakes are a lot higher.
It's potentially holding the global economy at hostage, and it might potentially tie the hands a little bit more on the U.S. side. At the same time, the stakes are higher in Iran as well, because ultimately they could have their purse strings completely tapped because their people are willing to close the Strait of Hormuz and any shipment of Iranian oil in a way that just hasn't happened before. This is where the pressure gets sort of into a question of who feels it more first to bring someone to the table.
If you see what the Iranians are doing in terms of going after empty vessels, trying to put some oil, which is very difficult, on a train to China, you can see that they are very desperate, and it's just a matter of weeks until they really are going to run out of that storage capacity.
Making new highs this morning in the oil market, making new lows in the equity market. We're down by 0.5%. You'll just notice Microsoft rolling over just a little bit. Nvidia making new lows for the session as well. That stock is down by some 2%. The pressure on tech this morning, the resilience elsewhere. We'll catch up with the GM CFO in just a moment.
9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Tuesday was meant to be a snooze. Wednesday was the big day for financial markets this week. Still is, but some moves this morning worthy of exploration. Let's talk about it. We're down by 0.5% on the S&P. On the NASDAQ, we're down by 1 full percentage point. Attention very much on that report from the Wall Street Journal, indicating that over at OpenAI, there's some difficulties, and they're falling short of their own targets. That's weighing on things like Oracle, weighing also on NVIDIA. And this is where the conversation gets a little bit more compelling for me. Obviously, the read across is, okay, OpenAI have got all these spend commitments. What does it mean for the likes of Oracle? I'd ask the question, too, what it means for everyone else who's spending all this money trying to fight off the OpenAIs of this world. What does it mean for them as well?
Yeah, we've been talking about this over the past couple of months, that OpenAI was bidding up a lot of data center space, saying we want to just secure the data compute so that we can get out ahead, and that caused the likes of Meta to come out and actually secure space that they didn't even need in order to avoid having OpenAI get a hold of it. Is there sort of almost a bubble of existential risks that's been baked into some of this data center valuations that needs to come out as people right-size their expectations of what's actually needed in the face of demand? It's coming through, at least according to this report, slightly less than people expected.
How existential is that existential risk? That's a story we can talk about tomorrow. We have had a fantastic run for the chip sector over the last month, so taking some heat, just a little bit of heat out of a massive rally. Let's turn to the other reason things are breaking down a bit in the equity market. Yields are breaking out. So the high of this year on a closing basis on a 30-year bond, the long bond, 496, this morning, 496. So retesting the highs for certain parts of maturities in the yield curve. Same story over in the UK, in Germany as well, doing the same thing with this taking place in crude. Brent, WTI, making new highs for this morning. Brent, close to 112. WTI back in triple digits this morning and higher by close to 5%.
It's just been creeping higher and higher and higher as we get further and further away from some sort of agreement. Yes, you can get a headline. Maybe Axios will be out with something in a bit. But
Poor
either way,
Axios,
okay. I mean, yes, although it's turning into a meme online. I mean, let's just be honest. It sort of has been pretty well timed. That said, I mean, great. There are talks about talks, but the market's saying, okay, we aren't going to necessarily take that bait every single time because it hasn't come to fruition.
Talks about talks have been doing a lot of heavy lifting.
Correct.
That's for sure. As we count you down to the opening bell, lots of stock stories to talk about. 2 hours away from the cash open with some morning movers. Yahara has more. Hey, Yahara.
Exactly, John. Lots of earnings to get through. And we start with GM, a standout. Shares are up 4.4% after it posted a beat and a raise. The driver is strong demand for its pickup trucks and SUVs, even as gas prices climb, that helping to offset some weakness in its EV vehicles. But the big question is, how long can that resilience in its gas-guzzling vehicles last if gas prices continue to climb? Moving on to the consumer with Coca-Cola, shares are up 3.25% after it beat sales expectations. That's because the company has been able to push through higher prices and shoppers are still buying their products. But in a sign of some stress or maybe the GLP-1 effect, Coke saying that some of its growth is due to shoppers buying smaller sized bottles. And we end on UPS down some 3.75% in the pre-market because even though it beat on earnings, it held its outlook steady. Compare that with FedEx, which boosted its outlook, and you get some disappointed investors. John?
Yahaira, thank you. More from Yahaira in just a moment. Let's talk about some earnings. General Motors reporting better than expected first quarter earnings and raising its full year guidance. The General Motors CFO, Paul Jacobson, joins us now for more. Paul, welcome to the program. The buzzword this earnings season appears to be resilient. I think it would be unfair just to call this resilient. It looks strong, sir. Paul, where is that strength coming from?
Well, good morning, John. Thanks for having us. You know, this quarter was a really strong one for us, but I think that resiliency word works really well. It's something that we've demonstrated for the last several years, whether it was the chip crisis or tariffs or inflation. I think the teams responded really well, and this quarter was no exception. When you look at some of the challenges that we faced around inventory levels, the go-to-market team did an outstanding job dealing with the traffic that we saw in the stores, which continued to be strong and steady and has continued through April. So we feel good about the quarter, and you know, we're able to take up our guidance as a result of the IEEPA tariff accrual that we took in the quarter. And you know, so far it looks like we're able to handle some of the pressure that we've seen in inflationary items, primarily resulting from energy prices.
Well, Paul, let's talk about that. It's an important topic. Your supply chains have been battle-tested, battle-hardened. The pandemic, the tariffs, and now this. What challenges are you working through as a team at the moment?
Well, I think right now, obviously, the team's done a really strong job of maintaining it through even some of the DRAM memory chip issues that we saw in the middle part of last year. I think a lot of that has calmed down, but what we're really seeing across the board right now is inflationary effects in raw materials, aluminum, steel, just overall transportation and logistics costs. We're calling out about $500 million of pressure that we've added to our forecast for the year. So despite our beat, we're not taking up our guidance by nearly as much as that beat, primarily because we're continuing to adjust the business. But we feel good that we're a little bit ahead of it right now, but we are cautious about how long this might last.
How much are you able to pass along those extra costs, Paul, to consumers in the face of already relatively high prices, but a very strong consumer demand?
Yeah, so we came into the year saying that price was only going to be up by about 0.5%, which really was the annualization of model year 26 price increases. We haven't built any significant price increases into our models. In fact, what we're seeing is the industry discounting a little bit more. There's some competitive pressure out there, but our team has held up well. I think when you look at the GM portfolio, we've really got a vehicle for every consumer out there. We're known for our trucks and our SUVs, but we sold over 700,000 vehicles last year with a starting price of approximately $30,000 or less. So we've got that portfolio. The Chevy Trax is hitting record levels for us last quarter. So we feel like we're in a good spot depending on where the consumer might be.
Has there been any pushback against some of the large vehicles, the SUVs, the pickups, in the face of higher gasoline prices, or have you seen no ramifications whatsoever?
You know, we really haven't seen any changes. In fact, our light-duty pickup sales were up about 8% year over year in the quarter. And like I said, traffic has been strong. If anything, we probably were a little bit light on inventory coming into the quarter because we had such a strong December, and with the weather in January and so on, we had difficulty making up those inventory levels. So we're down quite a bit from where we were a year ago. It gives us an opportunity to replenish that stock and make sure that we've got product in the stores at our dealers for customers when they come. But so far, traffic has remained steady.
Paul, when it comes to the tariffs, how is it going in terms of getting the refunds back from the U.S. government?
So, you know, we're exposed a lot differently. I think many companies out there are principally focused on IEEPA. Many of our tariffs are under Section 232. And there's been a pretty robust process. We haven't had any challenges with the offsets and making sure that we're getting the accounting right with the government to make sure that the cash is flowing efficiently. With IEPA, with the Supreme Court decision that was somewhat unexpected, we took the accrual. We have not moved our free cash flow guidance like we did our EBIT because we're not sure when that refund is going to come. We haven't applied for anything yet, but we're going to work through that with the government in partnership because I think that partnership has worked really well as we've adjusted and tried to benefit the U.S. auto industry the best we can.
Well, how deep is this partnership? A few weeks ago, there was a report that the Pentagon is talking to General Motors and other auto companies about making munitions and helping in the war effort. Is that accurate, and where are those conversations now?
Well, I can't comment on anything specific, but we do have a growing GM defense business, particularly with the infantry squad vehicle, which has been great for the troops and for the department as well. But this is taking advantage of really strong U.S. manufacturing, and that's where we lead the way, I think, as automakers and do a great job. So, while we would rather not be paying tariffs across the board, we understand the environment that we're in, and we're making sure that we can pivot the business the best we can to adjust to that reality. And I think the team's done a good job when you look at the consistency of our earnings over the last several years.
The earnings speak for themselves, Paul, at a difficult time. And we talked all throughout this interview about the challenges on the horizon. How does that inform your approach to capital returns for the year ahead?
Well, our capital allocation policy starts with investing in the business. We'll put $10 to $12 billion in. Much of that this year is actually onshoring work that was previously done internationally. We're bringing that in as a result of our tariff response. The second pillar of our capital allocation is making sure we've got a strong balance sheet. And when you look at where our balance sheet is, how funded our pension plans are, we're in a really, really strong position. And what that's allowed us to do is take some of that free cash flow and allocate it back to shareholders to reward them for their confidence in the GM story and make sure that they're generating the returns for their customers as well. During the quarter, we were able to repurchase about $800 million worth of stock at about $75 a share, taking advantage of some of that dip and continuing to be very, very consistent about the way we apply our capital allocation.
Paul, when you look forward and at the potential priorities of General Motors, how much do you see EVs as playing a bigger part just because of some of the questions around oil, as well as, of course, autonomous driving?
So while we did take a number of charges, special item charges last year and even in the quarter as we continue to right-size our EV footprint as a result of the new regulatory environment, unlike many of our competitors, we're sticking with our models. We discontinued the right drop van for very specific reasons, but we're not impairing any of our other EV programs like some of our competitors. We continue to believe that we can make EVs work through our winning platform. They're not affordable or not profitable at these levels right now, and that's something that we've got to work on. So we've got a number of battery chemistry architecture initiatives coming in over the next couple of years that are going to get the costs down and where we think we can take and continue our leading role. We're already number 2 in the U.S. In EVs, and think we can continue that and to continue to grow it in the future.
Paul, before we go, inquiring minds want to know, the Corvette behind you, what kind of money do we need to come up with?
It's definitely in your price range, John.
We'll have a whip around the table. Thank you, Paul.
Whip around.
Thank you. I'm pleased that Paul believes that I can afford it, so that's something.
Wasn't that the whip around at Blackstone? Wasn't that the one where they went around?
I don't think our whip around this table is quite the same as Blackstone's whip around. What did they come up with?
$15 million.
$100 million.
$100 million
Something
for
like
you.
That. Yeah.
It's the Corvette.
It's a beautiful car. Paul, thank you. Appreciate it, sir. Thank you very much. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Yahira has more. Hey, Yahira.
Hi, John. The DOJ charging a California man with trying to kill President Trump over the weekend. The 31-year-old making his first appearance in federal court, where he was also charged with gun offenses. The suspect sent a manifesto to family members that was included in charging documents. Investors in a Blue Owl fund tendered less than 1% of shares to Saba Capital Management and Cox Capital Partners, which had offered to buy them out at a steep discount, but they said no thanks. Sources telling us here at Bloomberg the offer expired at the end of last week and was not extended. And 9 jurors have now been seated in the case of Elon Musk versus Sam Altman. The lawsuit claims Altman broke with the original mission of OpenAI, shifting from a nonprofit vision to a profit-driven model without Musk's knowledge as a co-founder of the company. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in the next hour. Up next on the program, the Fed on the sidelines.
Clearly, the shift has been to a wait-and-see mode. I think it'll be a pretty high bar for Warsh when he comes in to build consensus around the idea of rate cuts anytime soon.
We'll catch up with Seth Carpenter of Morgan Stanley in just a moment. From New York City this morning, good morning. This is Bloomberg Surveillance.
In case you missed it, on Bloomberg Crypto.
There's a debate going on right now in D.C. that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield that on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazla Amin in Davos, Switzerland, and this is Bloomberg.
Equity futures session lows, bond yields session highs, likewise in the oil market as well. Equity futures breaking down by 0.6. Big tech story this morning, down 1% on the NASDAQ. In the bond market, check it out, 2s, 10s, 30s, the long bond, the 30-year. Yields up just a single basis point, approaching 496, which is the closing high of the year, and 2s up 4 basis points, getting interesting at 384.
This isn't necessarily coming from histrionic discussion of mass rate hikes at all of the central banks. Nonetheless, it is coming with better than expected growth and higher, longer-term expectations for oil prices. I'm sorry to repeat myself, but boiling the frog. You're seeing this in oil prices, and you're seeing this in the bond yield space. That's giving a pretty interesting signal right now.
Heading into the Fed's 2-day meeting, under surveillance this morning, the Fed on the sidelines.
clearly the shift has been to a wait-and-see mode as opposed to a we need to cut. There's plenty of officials who are worried about, the stickiness of inflation, the impact of higher oil prices. So I think it'll be a pretty high bar for Warsh when he comes in to build consensus around the idea of rate cuts anytime soon. Powell's comments are going to be less focused on his view and more about what the committee's saying.
So here's the latest this morning. Traders expecting the Federal Reserve to hold rates steady tomorrow in what's likely to be Jay Powell's last policy meeting as Fed chair. Seth Carpenter of Morgan Stanley joins us now for more. Seth, good morning.
Hey, Jonathan, how are you?
Good to see you, sir. Are you expecting more explicit two-way guidance at tomorrow's meeting?
I am expecting a lot of caution on Jay Powell's part, not at all because of the political environment, but because if you're writing down forecasts, at this point, you have to write down a whole set of scenarios, and then if you ask yourself, which scenario are we going to be in? As Lisa said, there's sort of pressure for maybe higher oil prices forever. Most history says oil prices go up, and then they come back down. Then the news cycle happens, and you change your view. We're in scenario 1, we're in scenario 2, we're in scenario 3. I think Powell has no choice but to accept that fact. I don't know how you can do monetary policy. I don't know how you can do economic forecasting other than to say we have to see how things go when it comes to oil prices.
The priority at the last news conference was to anchor inflation expectations, at least do that verbally. With that in mind, do you think there is good reason to come out and say, even if they don't believe it, there is just as much chance as a hike as there is a cut for the year ahead?
So I'm not convinced that they need to go that far, although it's clearly possible. I think right now where we've been, the Fed feel very strongly that the excess inflation that we have right now, so core inflation, call it just over 3%, that the bulk of that in the Fed's view, if not all of it, the excess, is coming from tariffs, and that should be fading over time. I share that view, if perhaps not quite their conviction. And then I think they will also want to say that history tells us that the pass-through from oil prices, energy prices, into U.S. inflation, clear at the headline level, much more muted at the core level. And so I think, in some sense, he might want to lean into that history as a way of trying to remind people of why inflation expectations might stay anchored.
That's all predicated on the idea that there actually is demand destruction, and that actually some consumers stop spending or are unable to spend as much and actually growth slows. One of the interesting aspects of the past couple of weeks is that we've seen earnings beating expectations, consumer indicators actually showing an acceleration, not necessarily a retrenchment. At what point can they honestly say that they've seen a real cooling in the labor market, given the fact that it's unclear exactly what that dynamic is?
No, I think you have highlighted exactly the path to a rate hike, which is inflation stays higher than they expect. The cooling, the deceleration that they've been looking for just on prices doesn't happen. And then the real side of the economy not only doesn't start to buckle, but maybe gains a little momentum. Now, we've been of the view that the momentum of the economy is there. It will probably sustain itself, broaden in the second half of the year. If that happens, and not only does inflation not fall, but maybe starts to rise, we're going to see a very, very different tone from the Fed.
Does it matter what the Fed says right now? Because it doesn't matter if Fed Chair Jay Powell isn't going to be the Fed chair in the next meeting, and it will be very interesting if he stays on as governor. That's all that anyone is ever going to ask about at this particular meeting.
I think it does matter for a few reasons. One, there's a very high chance that Chair Powell stays on as a governor, and I think in that sense he'll be a permanent he'll be a permanent voter. I think second, one of the things that the chair tends to do at the press conferences is try to reflect the view of the committee, reflect the range of views on the committee. And if everything goes according to the plan and Kevin Warsh is confirmed and becomes chair in short order, the committee as a whole isn't going to turn over that much. There's going to be that change, the chair, and the chair clearly matters, but it's not as though the committee is going to be completely different. And so whatever Powell is able to reflect about the thinking of the committee, I think we need to take that seriously because it will inform where policy goes, at least for the rest of this year and into next year.
Do you think there's more of a chance he stays on than doesn't?
You know, in some sense, that's like the oil price. Each day there's a new headline, and I have to revise my expectation. You know, he said that he wants to stay on until the investigation is well and truly over. I think he has to define for us exactly what that means. I'm not sure I have great insight as to what exactly that means. I feel reasonably confident that your peers in journalism there at the press conference will ask him that once and then again and then again.
Let's hope it's the first question, not like the 6th or 7th, like the last Fed press conference. But in terms of the politics surrounding this, if he were to stay on, does that create confusion?
The list of confusion for me, at least, in forecasting the economy right now is very long. I would put that further down the list. I mean, like I said, I think for me, when it comes to what monetary policy is likely to do, especially, say, for the balance of 2026, really comes down to where the core of the committee is. The committee is a committee. Votes are taken. People make a big deal when there are dissents because policy decisions literally are votes. And because we're going to get a new chair, that can help adjust the tone, maybe what the debate is at the table, but I don't think it ultimately makes a big difference for this year for where policy ends up.
Do you think the way that policy is communicated might change? And is that important to you as an economist who follows these institutions?
Yeah, no, I think almost certainly communication is going to change over time, but we've seen that essentially with every chair. I was at the Fed when Ben Bernanke introduced the press conferences, when he introduced the summary of economic projections and the dot plot. The press conference itself evolved over time. The statement itself evolved over time, and now there's a structure to it where the first paragraph has this important, looks backward, the second paragraph does something different. So an evolution of communication, I don't think is to be feared. I think it should be expected. But it's also very context specific. One of the things that Kevin Warsh has said is that forward guidance maybe has not served the Fed well consistently. And if you look at the economic academic literature, there's a lot of similar views that at the zero lower bound, for example, maybe forward guidance is particularly effective because you can anchor expectations. But when you're away from the zero lower bound, I think there's a consensus among macroeconomists that forward guidance is probably less important. And so, again, that evolution, person to person, chair to chair, committee to committee, but it's also very context specific.
Yesterday we had an economist on who was saying that he expects Jay Powell to stay on as governor as Kevin Warsh reshapes the Fed in some capacities, that he would want to vote in exactly how things get restructured. Do you see that as a likely case?
Well, I mean, so we can go by some of what the chair has said, that he wants to stay on until he sort of feels like the legal questions are fully settled. I would say, having worked at the Fed when Jay Powell was there, he tends to make decisions very much based on what he thinks is right for the institution, for the country, for the economy, for the Fed's mandate. So I think that's going to be the primary motivating factor for him.
Seth, it's good to see you. Thanks for breaking it down.
Thanks.
Appreciate it, sir. As always, Seth Carpenter there of Morgan Stanley. The Fed's two-day meeting begins later on this morning, concludes tomorrow afternoon.
Yeah, and that will be the first question, I'm sure. And will you stay on as a governor? I am curious, though, about the economic questions, too. How do you set the bar and anchor inflation expectations, given the fact that there is momentum in the underlying economy, and higher oil prices aren't going to necessarily go away so quickly?
I'm slightly worried, somewhat concerned, that this question over Powell's future introduces a dependency issue when it's not clear there is one. That we start to believe that in order to defend central bank independence, Federal Reserve independence, we need Chairman Powell to stay on this Federal Reserve board for the next 2 years. That brings its own problems if you start to think that way.
Well, it ends up in the 1948 to the early 1950s of the Eccles Federal Reserve. And are we in a parallel moment of restructuring? And I think a lot of people are wondering that.
Inflation expectations would say no, but maybe inflation expectations are wrong and reading this story completely the wrong way. We'll have that debate tomorrow. Up next on the programme, a man who upgraded his price tag on the S&P 500 at the very start of this war. That's next.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time
We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
We're kind of seeing everything rally.
Obviously, there's going to be some pullback.
Earnings are strong, but a lot of that strength is being driven primarily by tech.
We have to look through to the actual earnings and fundamentals.
We still see higher equity markets by the end of the year.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. The price action, the scores, looks like this. Pulling off all-time highs on the S&P 500 in back-to-back sessions. We're pulling away from them this morning. We're down by 0.7% on the S&P, underperforming on the NASDAQ. The NASDAQ 100 down by 1.3%. The why? The Wall Street Journal indicating OpenAI are falling short of their own targets. That's taking down Oracle by more than 6%. And it's not just the tech story. Commodities out to new highs this morning. 7 consecutive days of gains for Brent, up by 4%, 112. WTI, triple digits. And with that move, this move in bonds, yields, 2s, 10s, and 30s. 2s up 5 basis points, 3.85.
Heading into that two-day meeting of the Federal Reserve after we got a Bank of Japan decision that was split because there were a significant number of members, 3 of them, that did want the board to hike rates from 0.75%. How does the Fed take a look at a stagflationary shock given the fact that we've seen earnings remain intact? At the same time, do we start to see some pushback with the OpenAI type of report leading to maybe similar types of nodes in the other tech earnings? I mean, how much does that really set the bar that much higher for what we hear tomorrow?
WTI north of $100 a barrel is massive for this White House. They've been wanting to keep it below $100 a barrel. And right now we have Chris Wright talking to us early in the program saying that Iran doesn't have a huge amount of storage left. They're at this impasse. It doesn't seem like the president is willing to take the Iranian proposal, we'll open the strait, but kick the can down the road when it comes to nuclear. And the administration says they're absolutely not even though I've heard otherwise, they're absolutely not studying this idea of a ban on export of oil products. So basically, what we could potentially see going to peak driving season is a lot higher gasoline prices.
420 around those levels right now, 420 a gallon on average in this country in the last 24 hours. That's a new high since this war started. This cross-asset mix gets my attention this morning. Longer-dated crude prices out to new highs. Bond yields, not just in the US, but in Europe as well, retesting the highs of the year. At the same time, the equities are 13% off the lows on the S&P 500, supported by earnings. And the earnings, the good news, because we've talked about the bad news so far, the good news is the earnings so far this morning have been pretty decent.
Yeah, GM coming out, beating expectations. Coca-Cola upgrading their full-year forecast. We've seen even LendingTree coming out and actually outperforming, as well as all of the major credit cards. Airlines outperformed, even though we are hearing on the margins that people might be cutting back a little bit in the past couple of weeks. You put all this together, it is a toxic brew for the Federal Reserve because there's enough strength to maintain the price increases that might pressure their ability to really respond to any weakness in demand destruction with any kind of rate cuts.
That Fed decision tomorrow afternoon, futures, negative 0.7% on the S&P. Coming up this hour, Vinu Krishna of Barclays with the market rally stalling. Lindsay Piagza of Stifel saying a Kevin Walsh confirmation could lead to Powell stepping down. And Ben Reitzes of Melius Research with concerns growing over the future of OpenAI. We begin this hour with stocks pulling back from all-time highs. Vinu Krishna of Barclays writing real money demand could normalize considering how far inflows are running, but portfolios have room to continue re-risking. Vinu joins us now for more. Vinu, good morning.
Good morning.
Credit to you, sir. Let's give you a victory lap. Just briefly, I think it was March 24th you came out and raised your target for the S&P 500, which fell absolutely bonkers at the time. Since that day, what have we moved? 10%? Almost 10% off those levels?
I think last I checked, 13%.
13 off the lows. 13 off the lows. Your call was about a week before the lows. Don't get too excited here, Vinu.
Last I checked, like he doesn't wake up every day and check.
Okay, Vinu. Let's talk about the reset. Massive rally from where we were. Earnings seem to be supporting that so far. What's the outlook look like now?
I think the outlook still is optimistic, but obviously given the pace of the move and the speed, and we noted that this was one of the fastest moves in the last 35 years from a trough. So I think the speed itself gives you a little bit of reason to take a step back and take a deep breath. But once again, I think like the driver behind our optimistic outlook a few weeks ago, the core earnings strength is very, very strong. If you look at some of the big investment growth drivers, they've actually expanded. So earlier we were hanging our hat on AI CapEx spend. Now with the war, interestingly, across the developed markets, you are potentially looking at a defense spending cycle and an energy security cycle, right? You put all that together, there's a lot of sort of capital which will come into existence. And I think the other important thing, the AI narrative, the stocks did stumble from late last year into early Q1, but that is very much intact. In other words, the capital spending is higher, their earnings are strong, adoption is increasing, and the expectation is that the spending on AI will broaden to include sovereigns and enterprise, so expanding. So I think this mix at a time also when you look at the macro point, consumer sentiment has been weak broadly for the last 2 years.
Yeah.
But that is not reflected in hard data of what they're spending. So the resilience of the US consumer is an important factor behind this, and that hasn't broken as yet. So, and the last point I think to note is that typically, if you look at the earnings revision cycles, they start high and they get cut, and they reach a low point by the end of March. And then things actually are better at the end of the year versus where we are in March. This is one of the rare years in which we've gone the other way. Numbers are going up. Now, in all fairness, that's largely being driven by tech and other adjacent industries which are benefiting from the capital spend. But, one way or the other, the point is that the market remains dependent on tech, which by our estimate, depending on how you define it, is approaching 50% of the market, and there the strength is intact.
So let's talk about tech and let's talk about CapEx. You alluded to this. Are the sources of the CapEx broad enough for us to sit here this morning, appreciate the importance of that OpenAI story, but look past it?
No, OpenAI is very important, right? If you look at what is going to happen one of the questions we get from clients a lot is, how are investors, for example, going to readjust their portfolios given that massive pipeline of IPOs coming to market? OpenAI is a big part of it. What OpenAI and Anthropic and all they reveal in terms of their financials, in terms of the growth, in terms of the customer base and models and everything else, is going to be critical to the whole AI infrastructure. And of course, with the case of OpenAI, they have the tentacles deeply embedded across the whole AI ecosystem. So I think it is definitely worth watching, and it definitely will. That's why you're seeing a little bit of a dampener this morning. But my instinct is to look past this. One data point is not going to change the story. The narrative has broadened, in fact, in the last 6 months. And there is, in fact, it is now a consensus view that this AI narrative is indeed transformational.
Which is the reason why I think some people are getting a little skeptical and wondering if valuations have gotten a little bit high. A lot of it's also predicated on the idea that technology can be completely independent of a lot of the events that are transpiring, whether it's with respect to oil prices, whether it's respect to interest rates. It just is this existential risk that people just keep needing to spend it on. At what point do you think that'll get tested, given the fact that we are seeing oil prices creep higher and we are seeing a question around just how far this can go?
I think right now, as you point out, effectively there is a disconnect between the macro concerns right now and what is happening in the risk assets, whether it's credit spreads in the high yield, IG, or equities, risk premium, or to that extent equity earnings. They're all robust. I think disconnect will happen when you start seeing the impact of that flow through in the growth expectations and dynamic, and perhaps on the inflation expectations as well. That hasn't happened to a meaningful extent right now. And that's the reason why, even though the rates market has moved higher, and there's some uncertainty, but it has been reasonably well anchored. I would say 10s below 4.5. Like I've said in the past, I think the 10-year especially moving higher, beyond 4.5, going towards 5s, which we tested, by the way, in the last 12 to 18 months, is something which means that the macro risks are indeed spilling over, and equity markets will have to react and recognize that risk. But right now, we are in a relatively sort of safe spot where the earnings story is overpowering and strong enough with growth rate accelerating. Last year, we posted over 14% growth, higher than what we expected. This year, we are saying 15, 16%. Consensus is already closer to 18, 19%.
But it's all consolidated in the biggest companies, and you're seeing a lot of the gains really increasingly concentrated there. JetBlue reported earnings. We were just hearing about that from Yahaira, and they missed completely. They have a wider than expected loss. They're probably going to be laying people off. They've talked about how we don't have to declare bankruptcy. Yeah, you never want to hear those words. I just wonder from your perspective, how much of a warning shot is this versus just a market where the weakest players are going to fall out, and you want to just stay focused in the largest ones?
Largest one for sure. We have been saying that for a while. We've liked big tech from Q4 of 22, and we haven't changed our opinion. But also note that what you're telling me is exactly what has been happening in the market for the last 18 months, which is correlations are extremely low. Returns dispersions are very high. We have moved away from a storyline of rising tide lifts all boats in the AI perspective to a winners and losers sort of a story. And that is extending across every sector in terms of who's managing the costs well, who can pass through, who have better pricing power, who's less disrupted by AI, whose model is more defensible, right? So that story is rolling, and I think we are in that phase. Idiosyncratic risk is extremely high. That's why, if you look at the options market, the earnings this week is a bigger catalyst in the FOMC decision.
We agree with you.
That just tells you that a third of the market cap, roughly approaching, is reporting, and the market is spruced up and ready to take cues, right? And if something goes wrong, going back to the answer, that's where the cues will start coming. So it's worth watching. Let's see what you heard from OpenAI, right, which is still private. Let's see what the five guys say when they report this week down the,
What happens if that company doesn't make it? What would happen?
OpenAI?
Yeah.
That's a tough question. And we've sort of bizarrely gotten this query, I think, in the past as well.
You get a lot from clients, don't you?
Yeah, every now and then we get that. I just think that ecosystem is too big. They're too central. And I think they've shown to be very flexible, right? For example, look at Meta. how they did a 180 on their business model. Look at a company like Microsoft under Satya. They changed, they moved 800 pound tanker, massive tanker in the whole business model. I think OpenAI is too central. They'll adapt, but they're large enough players where this is a capitalistic setup. I think the market will absorb all these sort of moves.
Too big, too central, too big to fail.
I'm not too sure. Because the ecosystem has significantly bigger players. Look at Anthropic. Look at how they are racing ahead in terms of their revenue print. Look at companies like, for example, Cursor, which is a private company. Look at their revenue run rate. I think we are at a very pivotal moment right now in which significant amount of changes are unfolding right now. I think it's important. It's an important risk factor given how deeply they are embedded. But I'm not too sure that it's worth, frankly, even speculating that something goes wrong. I think they'll figure it out. The system in aggregate will absolutely figure it out. There'll be others who will step in, and it'll dissipate quite seamlessly across the system.
Vinu, right now, capacity constrained seems to be the view of things in this particular sector, and other people will be looking to step in.
Yeah, if they can't afford their data centers, well, probably Microsoft and Google and some of the others will. So that's the expectation that's maybe upholding.
That's the bull case, the rosy view of things.
The less rosy view is that maybe all of that capacity wasn't needed because it was being built out in the hopes and dreams that didn't really come to fruition.
Vinu, it's good to see you. Thank you, sir.
Thank you.
Top call, by the way. Fantastic. Thank you. Vinu Krishna there of Barclays. Let's give you an update on stories elsewhere this morning with your Bloomberg brief. Yahira has more. Hey, Yahira.
Hi, John. As you were discussing, pressure mounting for OpenAI, the Wall Street Journal reporting the company failed to meet its own goals for sales and weekly active users for ChatGPT. The shortfall is fueling internal fears that OpenAI may struggle to fund its massive AI infrastructure spending. Saudi Aramco is suspending liquefied gas shipments due to damage at its main export facility from the Iran war. Sources telling us here at Bloomberg that Aramco has informed buyers that shipments will be suspended through May. The news coming as Brent crude prices are pushing past 3-week highs. And we are seeing Coca-Cola shares rising 3% in the pre-market after first quarter sales topped expectations. The company has been raising prices on its drinks and consumers are still buying, plus some of that growth is coming from shoppers opting for smaller sized bottles. That's your Bloomberg brief. John.
Yahira, thank you. Thank you very much. More from Yahira later this hour. Up next, the morning calls. Plus, we'll catch up with Tom Fitzgerald of TD Cowen, breaking down the latest results from a struggling JetBlue from New York City this morning. Good morning.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
You know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
The president's focused on getting the right deal. That could be independent of their storage, but obviously that puts great heat on Iran. If we can get the right resolution, that could be tomorrow, that could be 2 weeks from now. But the key thing is the right resolution.
It was going to catch up with the US Energy Secretary, Chris Wright, a little bit earlier on this morning. Taking off the table the potential of an export ban. Some speculation at the moment, that speculation making a comeback with gasoline prices in this country approaching $4.20, new highs since the war started, and crude building on gains more recently as well. Check out equity markets, we'll start there. Pulling back from all-time highs. We're negative 0.7% on the S&P. On the NASDAQ, we're down by 1.2%. If you switch up the board and get to the commodity market, you'll see crude out to new highs this morning, session highs, 112 on Brent, a 7th consecutive day of gains, up by 3.5%, and WTI back into triple digits, 100.50 this morning. With that move in crude, this move in bonds, yields up at the front end of the curve, two's up by 5. Two's at 384, still some 16 basis points away from 4%, which was a level that we were starting to talk about maybe we settle at with the prospect of a Federal Reserve thinking about hiking interest rates. That was the conversation of, let's say, 6 weeks ago. Things settled down since then. So I wonder what things look like going into the Federal Reserve meeting tomorrow afternoon.
Yeah, and what it means when the entire world is facing the same dynamic, the entire developed world is seeing their bond yields creep higher in face of higher oil prices, but also the likelihood that they're going to have to incur more debt in order to finance some of the programs to offset these higher energy costs. The Federal Reserve is going to be somewhat hamstrung by discussions about the political future, but also questions about how high the bar is for them to hike rates, not just cut. Will they put that back on the table?
The move in the commodity market has been a headwind for this market, a cyclical headwind for this market for the last 2 months. The support was coming from tech, not this morning. Oracle is now down by 7% in the pre-market. Keep going back to this journal story. That's what's driving things this morning, that OpenAI is falling short of its own targets.
Yeah, you can see CoreWeave, for example, which is also highly dependent on OpenAI, also absolutely plunging. Is this signal for what we're going to get tomorrow and Thursday after the bell with respect to some of the tech names that could signify that maybe demand is coming in just a bit softer? Or is this an OpenAI issue where they lost subscribers to Gemini, when they lost business to Anthropic, and simply they're trying to catch up and figure out how to keep some of the subscribers in tow? Is this just weakness, or is this really a tell?
Tomorrow afternoon could be wild.
It will be wild.
Amazon, Microsoft, Meta, Alphabet, all reporting after the closing bell tomorrow. Let's get you some morning calls. That's the price action, the debate of the morning. First up, Citi, lowering its price target on Palantir to 210, noting the multiple compression in software. Your second call from D.A. Davidson, initiating coverage of Micron with a street-high price target of 1,000, seeing strong AI tailwinds for the chip maker. And finally, Mizuho, raising its price target on Amazon ahead of earnings, citing positive quarterly growth from its chip and AI revenue. That name down this morning. Like a lot of tech names, we're down by 1.5%. Let's turn to the airlines. JetBlue shares sliding after reporting a wider than expected loss for the first quarter. Tom Fitzgerald of TD Cowen maintaining a hold rating on the company while remaining bullish on the overall industry. Tom joins us now for more. Tom, welcome to the program. We'll spend some time talking about the industry, talking about the earnings in just a moment. I have one question with regards to JetBlue. Is there something in this company that the likes of United might want to buy?
Well, I think, there's been a lot of discussion about United's interest in getting back into JFK, so I think that would be viewed as the crown jewel. But they also have a great Caribbean franchise, major presence in Boston, and a huge fleet of Airbus. So I think there's a lot of assets that JetBlue has.
Right now, though, Tom, is JetBlue just indicative of how much pain there is in some of the more domestic and vacation-focused airlines, given the fact that ultimately all of them seem to be either having their hands out or reporting earnings that are somewhat negative?
Yeah, I mean, I think JetBlue was, they started from a deeper hole maybe in the last couple of years, just given some of the challenges that had beset that company, many of them out of their control, like the GTF engine groundings. So I think if you're just starting from a position of fragility, any of these type of crises that seemingly hit the industry every year, it's that much harder to absorb them versus the Deltas or the Uniteds of the world, who are starting from where they're a little more buffered by their profit base.
Do you think it is appropriate for some of the budget airlines to get a government bailout to survive? Do you think the consolidation is the best route? What's your take on that?
It's something that investors are grappling with. I think that prior to the last couple months, one of the bull cases on the broader industry was that you were seeing this process of unprofitable capacity leaving the system, and that would be supportive of a multiple re-rating, that there'd just be more rational players like other quality industrial subsectors. I think now this wild card that maybe there's just a set amount of capacity that won't be allowed to leave the system because it's deemed too important for price-sensitive consumers. That's a new risk investors have to grapple with, and maybe that whether it crimps the multiple re-rating story for the broader group or possibly causes more dispersion between the haves and the have-nots. That's something we're watching very closely. I think frustrating for JetBlue, given their presence in Lauderdale, given the opportunities that they would have there, they were viewed as a major beneficiary of ultra-low-cost rationalization. So I think every day it seems like the direction's changing, but yeah, it's definitely top of mind for investors right now.
Tom, you still like the industry. When you say you like the industry, is that just one or two names? What does that mean?
No, I think broadly it's still been an overall, the industry continues to gentrify, as United CFO likes to say. I think it's a lot healthier than it was 10 years ago, 15 years ago, 25 years ago. They have these crown jewel credit card programs. The earnings and revenue volatility is dampening. There's a nice deleveraging story going on a lot of names. It has consolidated into a healthier group of companies that work on diversifying revenue, that are getting better at charging more for their product and not underpricing and earning their cost of capital. I think Delta and United are out ahead of the group, and they have been for years. But I do think the industry continues to offer a lot of upside for investors over the longer term.
Tom, appreciate your time. Not great results from JetBlue this morning. Tom Fitzgerald there of TD Cowen. As we've been conducting that conversation, an interesting developing story in the oil market. This from the UAE, deciding to exit OPEC and OPEC Plus starting on May 1.
This is a really big deal. For years, they flirted with this, especially when they've come under, maybe I would say, pressure from the kingdom. And the UAE would say, we want to chart our own course. We want to produce more oil. We want to export more. Now they've finally made this decision, and it's coming officially that they decide to exit OPEC, OPEC Plus. They've been a member since 1967. They're the third biggest producer. This is a really big deal, and I think it shows that the Gulf is fractured at the moment on a number of issues, including energy policy.
Well, and some more headlines just crossing that the UAE is going to boost oil production gradually. So this would be the goal of exiting OPEC Plus, having their own control over how much oil they produce, and that OPEC's exit will help the country meet changing demand. You did see an initial move lower in oil prices. I do wonder, though, just to pick up the point that Emery made there about how much this signals a fracturing of the Middle East and what this says for the United Arab Emirates relationship with Saudi Arabia, which really has held sort of clout over OPEC Plus. Does this indicate something deeper, or is this just a practical decision in order to meet demand at a time of a lot of uncertainty?
As Anne-Marie alluded to it, it's been somewhat of a long-standing issue. What's interesting about this is you want to handle your own affairs coming out of this crisis. But that's a big move that indicates that this could be the new normal looking beyond this particular crisis.
Yeah, and also I think it just shows that the Gulf is not a monolith. These countries want to chart their own paths, but this is a massive move for Abu Dhabi.
Crude this morning, 112 on Brent, triple digits on crude, big market moves, equity futures, near session lows.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Equities near session lows were negative 0.75% on the S&P 500 following an epic rally for big tech in this country, pulling back 1.4% on the Nasdaq 100. Some jitters around OpenAI, informed by a story from the Wall Street Journal that they are falling short of their own internal targets. That's wank on the equity market. This is too. Crude, Brent, WTI, Brent 7 days of gains. Just short of 112, 111.88, and up this morning by more than 3%. Triple digits on WTI. So new highs this morning, session highs for crude. At the same time, we get session highs for yields. Yields this morning, 30s. New high for the year, 496. On a closing basis, if we have those levels, 2s at 384, up by 4 basis points so far today.
Stocks have been able to dance to their own music, even as you do see yields rising and you do see oil prices rising, as long as the earnings story hangs in there. And we keep talking about that. The earnings keep proving why this resilience makes sense. What happens if there's a hiccup in tech? And that ultimately is the hint that we got from this reporting about OpenAI not meeting their targets. Do we get a flavor of that in some of the earnings reports that come after the bell tomorrow?
Well, that's the story that's holding up the equity market. That's the reason we've had this massive parabolic rally off the lows of March. A move of, 18 days on chips of close to 50%, which is crazy talk, but it happened. That's the support factor. That's been the support. Now it's starting to fracture just a little bit. I wouldn't make too much of that at this point. The headwind that's coming from crude continues to build. And when I look cross-asset this morning, when you start to see crude, long-dated prices make new highs, when you start to see bond yields retest the highs of the year so far, get your attention just a little bit more.
Well, because everyone's been saying this is a short-lived type of crisis, and once this ends, we can normalize and things will be okay. But, I keep going back to something Stuart Kaiser wrote over the weekend where he said that time is the catalyst here, and that the longer this goes on, you hit a tipping point where suddenly you do get supply chain disruptions that are very hard to paper over, and at what point are you looking at something that looks very different for the equity market than currently what's being priced in?
What's Brent off now? About $6 away? The front month anyway, $6 away from the closing high of the year.
Yeah, it's not very far.
And equities are 13% off the lows.
It's creeping higher, and it isn't as much of a surprise. So it's the pace of change. It isn't changing, but the changing and not changing is part of the problem. If you've got a stalemate, that the longer this goes on, the more you have a growing problem in the physical world.
Brent crude, 112, up by 3%. Let's get you some single names. Big tech factor this morning. With those morning movers, Yahira has more. Hey, Yahira.
Hi, John. We are seeing CoreWeave, Oracle, AMD, and NVIDIA all lower in the pre-market. On that Wall Street Journal report, we've all been referencing this morning that OpenAI missed some of its sales and growth targets and raising questions internally about whether it can keep up with that AI spending. And that is putting pressure on names like CoreWeave and Oracle because they're right at the center of the AI build-outs and have deals with OpenAI, and AMD and NVIDIA also have massive partnerships with OpenAI on the chip side. Turning to earnings, we are seeing UPS shares now down 5% in the pre-market because even though it beat on earnings, it held its outlook steady. Compare that to FedEx, which raised its outlook last month, and you get some disappointed investors. And we end on GM. Shares are rising in the pre-market, up just 0.1% now, trimming some of its earlier gains. The driver was strong demand for its pickup trucks and SUVs, even as gas prices continue to climb, that helping to offset some weakness in its EV sales. But of course, the big question is, can it maintain that resilience in its gas-guzzling vehicles if the Iran war continues and gas prices continue to climb? John?
Yahara, thank you. Thank you for the update. Lots of stock stories out there this morning. Federal Reserve meeting kicking off later on this morning. Two-day meeting concludes tomorrow. Bloomberg's Mike McKee has a preview of what to watch. Good morning, Mike.
Yeah. Well, we're watching that guy. We'll see if he gets confirmed tomorrow by the Senate Banking Committee and then sent to the floor. He could be the chairman at the next meeting after this one. Could be Jay Powell's last one. So do they do anything to sort of mark the end and to do something about the economy? Well, there is an argument out there that they should make some kind of move. They're not going to change interest rates. We know that. There's no SEP. There is no dot plot change. But PCE inflation Thursday, we get the number for March. It's expected to be 3.5%. $100 oil, tariffs to come. Do they change this statement and say that the next move is either up or down? There's been a move towards that two-sided idea over the last couple of meetings. More and more members have been saying that. The key line to watch in the statement is this one. In considering the extent and timing of additional adjustments to the target range for the federal funds rate. That hasn't changed in some months. That's basically saying we think we're going to be cutting again, and we're just waiting to see what kind of factors push us in one direction or another, but they may get rid of that and change it to something that says we could do either one. The setup for that is they could ratify the market view that there is not going to be a cut this year, which is the way the markets are thinking right now, and especially the longer the war goes on. But it would clash with the Kevin Warsh remit from the president, cut rates as soon as possible. And since this is Powell's last meeting, what kind of guidance does he give about what the Fed's thinking going forward, and how much attention do people pay to it? So watch the statement at 2 o'clock, and then we'll listen to Jay Powell talk about that. And then, of course, we'll get into the important stuff of what's Powell going to do next.
Mike McKee, thank you, sir. Looking forward to your coverage, as always, down in Washington, D.C. One element of that jumps out for me, two-sided risk. Is this a chair that looks to anchor inflation expectations and suggest, even if they don't believe it, that the chance for a rate hike is equal to the chance for a rate cut this year?
And how much support would he have on the committee to potentially do that, given the fact that we've heard from a number of the members who are very concerned about the inflationary push and what that could mean longer term?
Would that be awkward for the incoming Fed chair to take on a more neutral situation on the committee, or is that an ideal position to take up?
He might come in and say, it is two-sided risk, we're going to cut rates. And I don't have to explain it because no communication is necessary.
We're going to ban communication.
So that's
it's not a dictatorship, Brammer. It's a committee.
It is a committee, and he could talk about reshaping. Look, he's not going to do anything for a while anyway. He's gotten the clear signal from Treasury Secretary Scott
I actually think it's really important.
I do
over the last month or so.
I think that might be more important.
Just some heat coming off the institution. I've heard that from Besant, from Hassett, Pirro as well. If you take that as a suggestion that they're taking down the heat a little bit.
Yeah, well, ultimately, the economy has to speak for itself. How many crises can they deal with at one time? So maybe he has some potential reprieve, at least in the short term.
Looking ahead to tomorrow, Lindsay Pieter of Stifel writing, if the Senate Banking Committee confirms Kevin Warsh on Wednesday morning, Powell could potentially announce he is stepping down at the press conference. Lindsay joins us now for more. Lindsay, good morning.
Good morning.
Is this the last meeting for Chairman Powell then?
It certainly could be. It looks like the blockage to Warsh's confirmation has been removed, and if he is confirmed on Wednesday, that means he could be sitting in that seat by the June meeting.
When he heads to the exit, Chairman Powell, what does he take with him? What changes at this institution?
Well, I think he's done a remarkable job navigating very difficult conditions. And I think that's what he takes with him, that he was able to maintain the credibility, the independence of the Fed, despite pressure from the market, despite pressure from different administrations. And I think that's all a chairman can really hope to take away from.
Do you think that he will signal two-sided risk, given the fact that oil prices are expected to remain higher for longer and the U.S. economy seems to be hanging in there?
I don't think we're going to see that specifically in the statement. And I think more than anything from the press conference, what we're going to hear from Powell is uncertainty. Like we heard last time, there were multiple times when he said, we just don't know. And I think he's going to underscore again the uncertainty that is plaguing the economy, not only because of the international conflict, but the aged nature of the recovery, where we are on this pathway. And given that, I think he's going to emphasize the need for patience. The Fed has opened the conversation to not only holding policy steady, but potentially rate hikes. But the bar is extremely high. So more than anything, Powell is going to reiterate the need for patience to understand the evolution of the data and continue to remain in this steady pace of policy for now.
As much as everyone just wants to hear uncertainty again and again and again, I'm sure a lot of the commentary is going to be around whether he's going to stay on as governor and what that could mean, especially given Kevin Warsh's desire to reshape the way that the Fed operates. Do you expect Fed Chair Jay Powell to want to have a say in exactly how that is, as he views himself as trying to navigate any kind of change and maintaining an independence of the Federal Reserve?
I think he would. And remember, when Warsh is talking about reshaping the Fed, what he's talking about is giving more firm guidelines in terms of the relationship between the Fed and the federal government, which he says has become perverted over the past several decades. If we go back historically, there was a firm accord that said the Fed is independent of the federal government, but more recently, that relationship has become muddied as we see this massive expansion of the Fed's balance sheet really facilitate this massive expansion of government spending. So Warsh is saying, let's go back to grassroots, go back to that traditional relationship and have a firm guideline which could help to rein in government spending and by extension then reduce the inflationary risk and potentially then lead to a lower interest rate environment. So if that is a longer term pathway, I think Chair Powell would want to be somewhat part of that. But again, it's not necessarily the traditional pathway to remain on the board once the chairmanship is over. So it remains to be seen what he sees as his longer-term career pathway at the Fed.
If Powell does remain, doesn't that, in essence, also create problems for Fed independence because he's breaking a precedent?
It's not unprecedented. We have seen it before. If we go back to Eccles, for example, he did stay on the board even after the chairman. Well, it's not unprecedented. It has occurred. So I don't think that questions or raises questions about the Fed's independence.
You say there's going to be a lot of uncertainty with the economy and that the Fed is facing a number of issues and catalysts. Does Powell need to come out with certainty about his future?
I don't know if that will necessarily add any certainty to the outlook for policy. I think right now what the market is looking for is a better understanding of where the Fed's focus is. We were starting to see the pendulum shift towards employment, but now with Powell coming out and acknowledging that maybe the equilibrium is at a net zero level, the focus is shifting back to inflation. And the market wants to understand how much of a concern is that for the Fed? Are we going to see policy simply hold steady? Are we going to reintroduce the whole notion of a transitory impact? Or is the Fed actively considering a reversal in the course of policy?
On Powell's future, I'm not particularly interested whether he stays on or leaves. Good for him. It's his life. It's his career. I'm sure he's earned his retirement. Go for it. If he stays, whatever. What interests me is why he would choose to stay. And the way he's framing this right now is a defense of central bank independence at a time where there seems to be no concern about central bank independence in the price of inflation expectations. I know plenty of economists are concerned. I understand why. But right now, the market's not. I hate to do either ors, but someone's wrong here. Either Chairman Powell's wrong or inflation expectations have got this wrong. Is it one or the other?
Well, I have to say that I was a little concerned about the Warsh nomination, not because he was well known to the market, he's had his years at the Fed, but because of the change in his underlying principle. He was previously an inflation hawk. Then he began to align himself with the administration, calling for a regime change and significantly lower interest rates. But during his testimony, he didn't make the case for lower interest rates. He acknowledged the elevated level of inflation and the upside risks to inflation, also the narrow window of time that the Fed has to rein in inflation, and at the same time acknowledging that the employment picture is pretty much at full employment. So he had the opportunity to make the case for lower rates. He didn't, which suggests that he may be more of a neutral, more moderate Fed official than we're giving him credit for.
We'll see. We'll see what happens tomorrow afternoon. Lindsay, it's good to see you. Thank you.
Thank you.
Lindsay Piegster there of Stifel. Equity futures near session lows. Let's give you an update on stories worldwide this morning with your Bloomberg brief. Yahara has more. Hey, Yahara.
Hi, John. The UAE is officially exiting OPEC and OPEC Plus starting May 1st. The bombshell move is aimed at seizing control of the UAE's energy futures, state-run news agency WAM reporting the shift will allow for a gradual domestic production boost to meet surging global demand. Meta is preparing to unwind its acquisition of the AI startup Manus after China banned the transaction on national security grounds. The Wall Street Journal reporting that Beijing gave the companies a deadline of 2 weeks to fully restore Manus's Chinese assets to their original state. And key Republican senators are pushing to use federal funds for the construction of a White House ballroom. The senators are citing increased threats following Saturday's shooting at the White House Correspondents' Dinner. The construction project is expected to cost $400 million. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks for this morning. Up next, we'll set you up for the day ahead. Plus, we'll catch up with Ben Reitzes of Melius Research, with concerns growing over the future of OpenAI. Equity futures, negative 0.7%.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
The AI narrative, the stocks did stumble, but that is very much intact. In other words, the capital spending is higher, their earnings are strong, adoption is increasing, and the expectation is that the spending on AI will broaden one way or the other. The point is that the market remains dependent on tech, and there the strength is intact.
That was Vinod Krishna of Barclays on the program a little bit earlier. We'll see if this dip gets bought, because we've got a dip this morning. Equity futures on the NASDAQ down by 1.2%. JP Morgan have said use any market weakness to add to positions. Bank of America have said fundamentals are holding up. Morgan Stanley pullbacks are likely to be shallow. This is your pullback. There's some single names that are pulling back quite a lot in the pre-market. They're connected to this Wall Street Journal report that's indicating that OpenAI is falling short of its own growth targets. Getting caught up in that, Oracle, CoreWeave. CoreWeave actually responding to this. That stock is down in the pre-market by close to 8%. And they're pushing back.
Yeah, they're sending out an email statement coming out and saying that their business is supported by a diverse set of customers. OpenAI is a terrific partner, not the only one. Again, the emphasis being on OpenAI not being their sole business partner. We've seen this from others as well. Microsoft amending the agreement with OpenAI to be less exclusive. CoreWeave, though, much more dependent on OpenAI for a lot of the business and has been raising debt recently. I mean, this has less of a debt component, too, to finance the build-out that is tied to OpenAI demand. Again, it all goes to the question of how much is OpenAI at the center of an ecosystem that has built out incredibly rapidly to meet demand that seemed insatiable.
CoreWeave, we continue to see demand exceed supply across the ecosystem. That's the pushback from that company so far this morning. That's not the only story driving stocks lower this morning. Also this in the commodity market. Brent up for a 7th consecutive session, up by 2.6%. 111 was around 112. The oil market picking up once again. WTI briefly in triple digits, 99.60. And a bit of a headline out of the Middle East in the last hour or something. On OPEC Plus, UAE heading to the exit.
After decades of being part of the cartel and a very prominent member in the group is deciding to leave, I am not shocked at all that by this decision, because this has been really a long time coming. What is a little bit more surprising, though, is they decided to make this announcement in the middle of a conflict. And I think this just goes to show how fragmented the Gulf is right now.
Is that the end of the cartel? Questions being asked.
I think it means on the margins, potentially, yes, because why won't other nations decide they also want to chart their own future? What means that Iraq and who knows, other countries, Oman, Algeria, decide, you know what, I'm done with this, I'm also going to leave.
That's the latest on crude on OPEC this morning. Our top story, the Wall Street Journal, reporting OpenAI failed to meet its own goals for new user acquisition and sales. The report fueling fears over AI spending and weighing on tech, on CoreWeave, on Oracle. Ben Reitzes of Mirius Research joins us now for more. Ben, good morning, sir.
Hey, John.
Hey, it's good to see you. What was your reaction when you read that in the Journal this morning?
I thought it was a hit piece, really. It was very negative. Sam's a little polarizing to some, and it was seemed very pointed
you
to
thought
the
it was
negative.
Personal?
You never know. It was a very pointed piece that some of it wasn't even really to us new news. I mean, they have definitely slowed their user growth. That's very well known. And it was sort of glass half full, because you can't really talk about OpenAI without talking about Anthropic and some of the others, and Anthropic's crushing it. So net AI spend is through the roof, and this is probably a buy on the dip opportunity.
A buy on the dip of what this
everything.
morning? CoreWeave, anything getting called up? Oracle?
Everything getting hit, really. I mean, look, Oracle doesn't generate any cash. I could see why you'd get more upset about Oracle, but I'm more focused on the chips and some of the hardware names and whatnot that can balance things throughout a bunch of clouds. I mean, I get why Oracle would be down, because they don't generate any cash and they are very levered to specific projects with OpenAI, and if they don't win, Oracle doesn't win. CoreWeave seems a little overdone because they have a very diverse customer.
Our valuations have gone. It isn't just a question of buy a dip. The dip is 2% on NVIDIA, less than that, after a $1.25 trillion rally over the past 4 weeks. It's not exactly as though we're talking about a massive dip. I mean, how do you justify that the pace of growth has been adequately reflected by how far the rally has taken us?
Well, I mean, you've got to take a step back on where we're going with AI. AI is generally an AI factory is really a software factory that tokenizes labor. You could argue that labor TAM is $60 trillion when you put white collar plus physical labor, and we're just scratching the surface on that. Now, not all labor will be replaced, but it will be augmented. The labor TAM probably goes up, and that's what we're attacking here, big picture, and we're in inning 1 of that. So this build-out needs to continue, and it will continue, and economies are in a race to do it, and there's really an arms race between the U.S. and China. So we're not slowing down just because of a negative article in the Wall Street Journal about a polarizing figure.
What would you have to see in earnings tomorrow after the bell that would make you rethink that?
Well, there's a lot of earnings, so which ones? The CapEx is really the key, is that of all the major hyperscalers, there's Microsoft, there's Amazon, there's Google, or the big three. I think all, I think the CapEx figure is what you got to be laser focused on. And I think that Google and Amazon may not have upside this quarter to their forecast for the year, but the one who should raise CapEx, who needs to the most, is Microsoft. They've been behind in terms of adding capacity. They have the least amount of upside to their cloud revenues, and they also have to train a brand new frontier model that they're working on because their OpenAI partnership isn't working out, because OpenAI wants to go it alone. And so that'll be interesting. But I think in general, the CapEx news will be positive, and that the hyperscalers will articulate a vision that AI has a payoff coming down the line, and we should see huge upside coming to the clouds, especially at Google and Amazon, because they have the capacity.
It's not a good week for OpenAI. I know you don't particularly like the Wall Street Journal story, but also he'll be in court, and he's getting sued by Elon Musk, who's all over Twitter calling him scam Altman. Do you think any of this is going to hurt their IPO prospect?
Doesn't help, but you'd like to have a positive narrative coming out. I mean, you've seen the CFO all over. She's been doing a lot of public appearances, but they just put out a great model. I think, look, there are these articles and these narratives, blah, blah, but at the end of the day, they put out a great model. The model is very capable. Their coding revenue is growing. We need to know how much, and we need to know how much the mix is shifting towards enterprise from consumer, and if enterprises are willing to adopt them versus Claude, or even both, and how that's going. And we need to also see what the gross margin projections are going to look like. So there's a better narrative around Anthropic these days in general because of their enterprise focus, because there just seems to be more anecdotal stories about, wow, I adopted Claude, and oh my God, my work has gotten so much better, and all that. And there's definitely a lot more of that, but there's a very capable model that just came out from OpenAI and Spud, and it's awesome, and we'll see. And NVIDIA trained that thing, and we'll have to see how it goes. Sometimes the models, tell the story, not the media.
Ben, it's good to see you.
Yeah, great to see you guys.
Thank you. Ben Rice is there of Melius Research. The PR around one company is a little bit better than the other at the moment.
Well, yeah, Anthropic's had better PR, and this certainly was underpinning this recent article. Can Spud change everything? Spud versus Claude. I can just imagine the Super Bowl advertisement.
We'll see. Big afternoon coming up tomorrow afternoon. Tons of earnings. We'll break things down with George Goncalves of MUFG. Angelo Zeno of CFRA will speak to the Ocean First CEO, Chris Marr, and the former Kansas City Fed President, Esther George, heading into tomorrow afternoon's Fed decision. From New York City this morning, good morning. Thanks for choosing Bloomberg TV. This was Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions.
a poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Markets lower after hitting a new all-time high again yesterday at the close. 30 minutes now until the start of the cash trade today. I'm Matt Miller. Danny Berger is off. Bloomberg open interest starts right now. Coming up, stocks tied to OpenAI tumble on a report the startup missed its own targets for sales and new users. Plus, the UAE is leaving OPEC starting May 1st. Oil briefly pairs its advance, though it remains firmly above $110 a barrel for Brent futures. And earnings continue to roll in as consumers grow cautious with energy prices on the rise. It hasn't stopped them from buying General Motors SUVs and pickup trucks, and we'll talk about that in this program. Stocks to watch include the AI infrastructure stocks. They are plunging on a report that OpenAI is failing to meet its own internal goals on sales and user metrics. That could have a material impact on partners and investor sentiment around the nascent technology. OpenAI, obviously not yet publicly traded, but these stocks are the most closely linked to OpenAI. And as you can see, they're down pretty severely with the drop in CoreWeave, the biggest. Bloomberg Tech co-host Ed Ludlow joins us now from San Francisco. And Ed, I have so many questions about this. I think it's probably important for a company to set a high bar, but then they have to meet it in a market like this, don't they?
Yeah, I mean, the concern now is that the market wants real evidence of growing demand, sustained demand. What the Wall Street Journal details is, yes, in part, metrics from the 2025 financial year that were missed, but the one that the market's now really zeroed in on is not just necessarily user growth and revenue, but the idea that ChatGPT has not yet hit contemporaneously right now 1 billion weekly users. So that is kind of the mainstay focus of the market's response. Oracle is its principal cloud infrastructure partner, right? That stock is down severely. CoreWeave has massive exposure to OpenAI and runs a number of workloads for them. They've issued a statement making the point that OpenAI is brilliant, but it's not their only partner, and that they're continuing to see a market where demand is greater than the neocloud's ability to supply. But clearly markets are spooked by this, and it's gone beyond the idea that you want to just focus on the commitment to build infrastructure, CapEx, to now wanting signals or data that supports demand on the other side for the models themselves is sustained.
When do we expect, Ed, an OpenAI IPO, and how does news like this affect that timeline?
Well, our reporting is that, it is a race against Anthropic to do that by the end of this current year. We still believe, of course, that SpaceX will go in mid to late June, which, is a factor, right? Because either it sucks the oxygen out of the market or it doesn't. This is the other point of the Wall Street Journal's report with OpenAI, that, leaders within that company are basically saying they're worried about the rate of spending and the rate of commitment that they have to build out compute without having revenue growth on the other side to support it ahead of an IPO, and that is concerning.
All right, Ed Ludlow will be back with Bloomberg Tech. That kicks off at 11 a.m. this morning, and we'll continue to follow the AI story for you. Obviously, it's a huge part of powering this market, maybe the only part powering this market to all-time highs. Well, oil producers actually have been a little part of that as well, and the underlying commodity is higher right now on fears that the Iran war will remain in a stalemate, and countries are making changes to adapt. For instance, the UAE will leave OPEC after 6 decades as it plans a strategic realignment in the wake of the war. Bloomberg oil reporter Alaric Nightingale joins us on this really huge news, Alaric, and I wonder first what it says about the relationship between the GCC countries amidst this war, and also, what it means for production. Can the UAE put more oil barrels on the market without the constraints of OPEC?
Well, in answer to the last question, that's really at the heart of the issue. The UAE has long kind of pressed to be able to produce more oil without any kind of constraints from OPEC, or has been one of the countries that has been eager to add more barrels. And by doing this, once the war is over, this gives it an opportunity to do so. In terms of the kind of unity of Gulf countries, I think that really, in a way, this is an opportunity for the UAE to do something when it's not going to cause a market stir. We know when the market or when the situation in the Middle East hopefully returns to normal, that the UAE is all of the countries are going to need to try and ramp up and get supply to the market. That's obvious. And right now they can't. There's a big shortfall that needs to be recovered. So they and others are going to be doing that. And in the early stages, this gives them an opportunity to do that like everybody else.
The UAE, of course, stuck like most of the Gulf countries are in terms of exporting its oil while the Strait of Hormuz is closed. If you take a look at the map, they need to get up and around and through the strait in order to get their oil out. How much can they put on how many barrels can they put on the market right now, Alaric?
This makes no difference here and now, which is why you see no sustained reaction in prices, really. There was an immediate kind of move, but in practice, until there's a clear kind of change in the security situation in the Strait of Hormuz, and in terms of regional production, this is a kind of a moot moment. There is not a lot of difference in supply that's going to come in the next week, in the next month, and even when Hormuz does start to normalize, it's not going to be an overnight process. So even then, the addition of barrels, both in terms of production and exports, is going to take a while.
All right, Alaric, thanks very much. Alaric Nightingale leads our oil trading coverage out of London, and of course we continue to see the price of the underlying asset rise. Let's get to earnings at a company that is very closely affected by the price of oil and the price at the pump. General Motors hiked its outlook by $500 million as it navigates tariffs or the lack thereof. Truck and SUV sales continue to climb despite higher prices at the pump. The CFO of General Motors, Paul Jacobson, joined Surveillance after the earnings.
What we're really seeing across the board right now is inflationary effects in raw materials, aluminum, steel, just overall transportation and logistics costs. We're calling out about $500 million of pressure that we've added to our forecast for the year. So despite our beat, we're not taking up our guidance by nearly as much as that beat, primarily because we're continuing to adjust the business.
For more, let's bring in Bloomberg's Detroit bureau chief, David Welch. And David, first of all, on the $500 million and the tariff effect, how is that math going to work? Why are they adding that back to their forecast?
Well, some of the tariffs were basically thrown out of court, and the Trump administration has also put in some more relief over the course of the past year. And I think you're seeing some of these lower tariffs flow through finally, reducing the impact that GM and other automakers thought they would have. Problem is, now we're seeing inflationary effects on metals and some other things coming out of shipping costs and elsewhere that are kind of mitigating the bonus they're getting from that. So, a lot of crosswinds here. I think early in the morning, pre-market, shareholders really liked the numbers that they saw, and then as they kind of started reading through things, listening to Paul Jacobson on TV, they started to realize, okay, there's some future inflationary pressures here that could, have supply chain impact and hurt the business going forward, and some of those gains have been given back.
I look often at 3AGS REG, the index for the AAA unleaded regular price across the country, the national average getting back up towards 420 right now. David, are they able to sell more of their electric vehicles? Do they expect to be able to sell more of their electric vehicles because they have a much broader offering than pretty much any other manufacturer in the world? And they're quite good cars on the Ultium platform. Are U.S. consumers buying them?
You have to really see high gasoline prices sustained for quite a while. And the general rule of thumb is at least 6 months before you see consumers really start to change behavior, buying fewer gas guzzlers, buying smaller vehicles, or going electric. Going electric's a pretty big decision. You could go out and buy a hybrid if you're worried about gasoline prices. You don't need to go all in and buy an EV. I think it will help them for sure if gasoline prices stay high, but that's not good for their profits. And I think the market likes when GM sells more SUVs and fewer EVs because the EVs lose money. And that's sort of the push and pull here. I think GM does want to see success with their electric vehicle platform. They want to get scale. They want to keep developing battery technology, and they want to be a leader here because they still see it as a long-term strategy they need to push. But near term, investors would rather see cheap gas prices and lots of SUV and pickup truck sales.
All right, David, thanks very much. David Welch is our Detroit bureau chief. Listen, by the way, to my podcast about cars. It's called Hot Pursuit with Hannah Elliott. She covers the luxury side of things from Los Angeles. I focus more on the pickups and SUVs that David Welch was talking about. We both care deeply about Porsche 911s. Check on the markets right now. We're looking at red arrows in terms of futures as we hit an all-time high again yesterday on the S&P at 71.73. Right now you can see futures down a little more than 0.5% as the price of oil continues to rise. Brent crude there at the bottom of your screen up 3% at $111.47. Let's get a look at some of the other movers on our radar. UPS earnings topped estimates as its network overhaul takes shape, but it kept its outlook unchanged due to uncertainty around tariff policies and rising fuel costs. And you can see that investors don't like that in the pre-market. The stock is down more than 5%. JetBlue is cutting some flight capacity in the second half of the year as it grapples with soaring jet fuel costs. JetBlue is down almost 2% in the pre-market, and Coca-Cola KO earnings beat expectations as price hikes and smaller drink sizes pay off. The stock is up 3.4% in the pre-market trade. Coming up, Ken Griffin responds to Mayor Zoran Mamdani's push to raise taxes. We'll hear from him next. This is Bloomberg Open Interest.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys,
buckle up.
Sorry.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Let's get to high interest now. Look what's making headlines around the world. Billionaire Ken Griffin is firing back at New York City Mayor Zohran Mamdani after the mayor targeted Griffin's $238 million penthouse in a viral post. Speaking on a panel moderated by Carlyle co-founder David Rubenstein, the Citadel CEO warned the city may be drifting toward what he called socialist-style policies.
The willingness of the mayor of New York to make this a policy debate, a personal attack, just demonstrated a profound lack of judgment. I'm meeting with the governor Thursday. Okay, you'll figure it out. And we'll talk about our future direction in New York. Here's the real question. Is New York going to put their fiscal house in order and run itself from a position of a strong government that's pro-business? Or are they looking to play, why do the Americans think we can do socialism?
It's not really a new sting. Anyway, Griffin will be meeting with New York Governor Kathy Hochul, as he said, to discuss the future direction of the city later this week, and that is where he has massive leverage because of a more than $6 billion investment in building here that's going to require 6,500 construction workers and maybe hire 15,000 permanent positions. Ken Griffin obviously contributing massively to New York City. Now, a review of Ares Management's largest publicly traded private credit funds finds that about $1 billion in software investments face at least medium risk from AI disruption in the coming years. Most holdings remain low risk, but unrealized losses jumped to $357 million. The firm kept its dividend steady, signaling confidence as AI reshapes credit markets, especially those that are drastically exposed to software. President Trump is meeting with national security aides as Iran floats a limited deal to end the 3-month war and reopen the Strait of Hormuz. Tehran wants sanctions relief and partial shipping control, but the White House isn't convinced. As oil tops $111 a barrel, Energy Secretary Chris Wright says the U.S. is absolutely not considering an export ban.
Here I am in Dubrovnik in Croatia, signing multi-billion-dollar deals to sell American energy exports. That is the fastest growing export out of our country. We're selling American natural gas, American oil, American jet fuel, diesel, and gasoline all around the world. We're not going to stop those exports. We're going to grow those exports.
Joining us now is Bloomberg's Washington correspondent Tyler Kendall. And it strikes me, Tyler, that Chris Wright is kind of talking against the oil independence that we're so proud of, right? If we're taking part still in this global market, then our prices will rise with prices around the world, and we don't reap the benefits of producing so much at home.
Right, Matt, your take is exactly right there. And that question that was posed to the U.S. Energy Secretary from Anne-Marie Herdern was about trying to help lower prices for American consumers. At this point, it shows that the diplomatic efforts to end the war are continuing to stall. Now, the Energy Secretary ruled out the export ban, but he did tout the idea that the U.S. has already extended the waiver for the Jones Act, for example, and that there's a push to get waivers to have higher ethanol content gasoline hit the market. We also know that the Trump administration has floated such a proposal, such as asking Congress for a federal gas tax holiday, because this is definitely becoming a political issue for this White House as we head into the midterms. And at this point, it doesn't really feel like we're getting much progress, because at the top there, you mentioned that Iran has put forward this proposal that doesn't appear to show any sort of movement around its nuclear program. And the U.S. Energy Secretary went on to say that this isn't something that the White House is willing to compromise on. The only issue is that Iran doesn't feel like it's willing to negotiate on its nuclear program right now, instead floating this shorter-term proposal that could see the reopening of the Strait of Hormuz in exchange for the U.S. lifting its naval blockade and maybe some other concessions, according to Iranian state media, such as damages, compensation for damages, a legal framework for the Strait of Hormuz, things that typically, at least publicly, have been considered non-starters for the U.S. Just yesterday, Matt, we heard from Secretary of State Marco Rubio, who said that that naval blockade is not going anywhere, as we actually get this new estimate from research firm Kepler that it appears that Iranian oil storage capacity could be filled up in the next 12 to 22 days.
Yeah, so they're basically saying, like, how about you end the blockade and we'll sell more oil, right? I mean, they're basically asking for their own unconditional surrender here. Is this something that the White House is going to even consider?
At this point, it doesn't feel like it. We haven't really gotten any indications that this is something that the White House feels strongly about when it comes to a potential end to the war, though we know that, of course, they want to see a reopening of the Strait of Hormuz. Administration officials have been very firm that this needs to be a deal on the U.S.'s terms, and that has to include those curbs and capabilities when it comes to Iran's nuclear program, its ballistic missiles as well. So it's going to have to be something at this point to watch. And Matt, at this point, we'll see where it goes. President Trump met with some national security officials, but we haven't gotten an update, though they say it's coming soon.
All right, Tyler, thanks very much. Tyler Kendall there in Washington as we look at Brent and NYMEX crude back up, NYMEX back up over $100, Brent firmly over 110. Joining me now is New Edge Wealth CIO Cameron Dawson. And Cam, it does feel like, you know, we continue to see these incremental climbs in crude, and yet strategists aren't taking down their earnings expectations for the S&P. We hit all-time new highs like every close. What's going on?
Well, you know what hit a new all-time high, or not all-time high today, but recent high, is U.S. gasoline prices. And that's what really matters for the U.S. economy as well as U.S. earnings, because oil prices can at short times diverge from gasoline prices, but the fact that they dipped lower at the start of April probably helped give that boost to sentiment that we've seen with markets rallying. But they're back on the climb again and rising to a new high of this war. And so that just suggests that eventually we will start to see the economic impact of this. The question is, of course, is what is the ultimate impact to earnings? Because what's been driving earnings is very idiosyncratic things that aren't sensitive to necessarily oil as an input to the prices, because it's all being driven by semiconductors. But we do all breathe the same economic air, so if gasoline prices continue to rise, that could be something that would be a headwind to fairly lofty earnings expectations.
Yeah, I saw the national average yesterday at, I think, 417, 418. So a new high since, you know, we were at $5 in the Biden administration. How much higher can it go without, not just the price at the pump, really, but, you know, if Brent holds at these levels, without strategists starting to say, okay, you know what, $300 looks kind of iffy for 2026?
Well, we are starting to see GDP estimates start to get cut. So they came into the year with an expectation of 2.5% growth for 26. That has been trimmed down to 2.2% growth. And the key point is that what we're starting to see is sectors that are sensitive to oil prices. So your consumer-facing sectors, your industrials that may not be sensitive to the AI trade, those areas of the market are actually seeing estimate cuts. But the thing thing that we're seeing with overall S&P 500 is when the tech sector, which is 33% of the S&P 500, is seeing huge estimate revisions higher because of semiconductors. That's what's masking some of this weakness under the surface, and also is the reason why we're seeing markets become less broad, a lot more narrow, because you're seeing that pressure on areas that are more economically sensitive.
All right, we're going to keep you with us. I'm lucky enough to have you join us as our kind of guest co-host throughout the hour. Cameron Dawson is sticking around. Coming up next hour, Meredith Whitney joins me to further discuss earnings results, the Fed, geopolitical shocks to the markets as well. This is Bloomberg Open Interest.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
Welcome back to Open Interest. Let's get a look at some of the big movers on our radar. Spotify reported results that underwhelmed Wall Street as it struggles to grow market share and implement AI. You can see the stock has been decimated in the pre-market. Bed Bath & Beyond reported its 8th consecutive quarter of bottom line improvement. But the overall loss per share was wider than expected. Still, I think a lot of investors were like, Bed Bath & Beyond is still a going concern, and they bought the stock. It's up 32%. Hilton's results failed to meet expectations. The hotel operator's second quarter outlook was hurt by the war in the Middle East, and the Hinckley Hotel reminder doesn't help. You can see those shares down 2.5% in the pre-market. We are just 4 minutes away from the opening bell on the New York Stock Exchange, and the NASDAQ futures are lower, about 0.5%, but we hit once again an all-time high on the cash trade yesterday for the S&P 500. We're back with more from Cameron Dawson. This is Bloomberg Open Interest.
don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We see futures down this morning, and the concern is based on a Wall Street Journal report that OpenAI is missing its internal targets. Because of that, a lot of the stocks related to OpenAI, which are the stocks that have driven this rally, driven us to new all-time highs at the close yesterday, are down. You can see S&P futures off 0.5%, NASDAQ futures off 1%. The Dow is actually gaining, but not back to the 50,000 mark that we're all watching so closely for Pam. Joby ringing the opening bell at the New York Stock Exchange, and the stock hasn't really done very well, but they are bringing their eVTOLs, so electric vertical takeoff and landing air taxis to New York for 10 days of flying back and forth to JFK, but no passengers on board. So, like, what is honestly the point? Give me a ride in your eVTOL. I'll be up there in a heartbeat. Operation Hope, which is a literacy, financial literacy and real literacy deal by John Hope Bryant, ringing the bell at the NASDAQ. We're looking at a ton of earnings out this morning that are not really tech related, so they're not necessarily going to drive the major indexes, with the exception of the Dow Jones Industrial Average. You can see Coca-Cola up 5% right now, so old tech important. UPS down 6%, and General Motors is actually off. General Motors actually off 1%. They were up in the pre-market because of boosting their outlook, adding $500 million to profit. But AI infrastructure is really the story driving this market. Those stocks plunging after a report in the Wall Street Journal that OpenAI is failing to meet its own goals on sales and user metrics. You can see, obviously, OpenAI is not traded, but those that are so closely linked to it, NVIDIA, CoreWeave, and Oracle, are down right now. Joining me at the desk is Cameron Dawson, New Edge Wealth CIO. And Cameron, the tension in this market, to me, today, seems to be that we feel like AI has to make up for everything, right? Okay, we're in a war that doesn't seem to have an end. We're looking at a blockade at the Strait of Hormuz. Oil has doubled in price, but CapEx is $650 billion from just 4 companies this year. So today, when there's a little bit of concern, obviously you're going to see a drop.
Yeah, and we always say that one man's CapEx is another man's earnings, and the reason why earnings have been so resilient during this war uncertainty has been because of semiconductors. So the really big question is not whether or not there's going to be spending today. We know we get that $650 billion this year in 2026 on AI CapEx. The expectation or the question going into the earnings tomorrow will be, what does that number look like in 2027? Do you see another period of very strong growth? But if you have one key player potentially pulling back on CapEx, does that suggest that other people might find some discipline in their spending? And so that's likely one of the reasons why markets are reacting negatively. We also have to appreciate that semiconductors got extraordinarily overbought last week. They traded up to 48% above their 200-day moving average. The last time we saw anything close to that high was during the peak in 2000. So some of this is just digestion of a truly extraordinary move that we saw over the last 2 weeks.
By the way, you're so good at this, the math side of things, as well as the theory. So semiconductors, I keep hearing, are responsible for this huge jump in earnings, this massive margin on the S&P, but are they really that big a business?
Yeah, so semiconductors are the largest industry group in the S&P 500 now. That's because we've seen such a big rally in all of these names. They're at a 14% weight in the S&P. That's effectively double the peak that we got to back during the tech boom in the late 90s and early 2000s. And the thing to remember with semiconductors is that they are a very cyclical industry. Yes, they are in the super cycle to end all super cycles of up cycles, but being in a cyclical industry means that you have things like pull forward of demand, big inventory swings, that kind of bullwhip effect. So one of the dynamics that we've seen in this upcycle is massive margin expansion in semiconductors because they have a lot of fixed cost overhead that they can absorb as revenues go higher. So margins have now gone up from 30% to 44%. If you start to see growth slow, you likely get margin pressure. And because now there's such a big part of the S&P 500, it means you're going to see it in S&P 500 margins as well. So it's a great time to be a semiconductor name, but we have to appreciate that those great times typically don't last forever because it's a cyclical industry.
You are so good at what you do. Honestly, I mean, I asked without prompt and you deliver. That's a lot of great intel, so I appreciate it. By the way, I'm just looking at a Trump tweet, and we have a story, or had a story out yesterday on the fact that the biggest moves in these markets have been driven by the president. I don't think it's a coincidence at all that he waited until 9:29 to put out this tweet. He knows when the markets open and intends to move them. He says, Iran has just informed us that they are in a state of collapse. They want us to open the Hormuz Strait as soon as possible as they figure out their leadership situation, which I believe they will be able to do. He's very optimistic for the Iranians. Thank you for your attention to this matter, President Donald J. Trump. How do you trade on these, if you do, tweets? Because they really, you can make a lot of money if you can anticipate, or maybe you happen to know what the president is about to say.
Yeah, if you happen to be on the inside and you have the information. Look, I think at the end of the day, for investors like us, we try to stick to our knitting as much as possible, looking at company fundamentals. We're quality investors when it comes to equities. And so insofar as oil volatility or stock market volatility could impact our names, we have to keep a consideration of that. But this is a whipsaw that is extremely hard to trade.
All right, Cameron, you're going to stick with us. New Edge Wealth Chief Investment Officer Cameron Dawson on the desk with me here at 7:31. Let's get a check on what's going on in the markets post-Trump tweet. We do see, still see losses, but they are better. We were down at 71.30 or less before this post came out, or before maybe many of us realized it. I'll go ahead and shout out Anthony Santos Stefano for alerting me to it. Thank you, dude, for giving me that tweet. I'm looking at the move screen here on the S&P 500, and you can see that we have good breadth again today, 353 up, 149 down. The problem is that today, those on the downside are pretty heavy. So while we have Apple, Coke, Exxon, Berkshire, J&J, JP Morgan, Chevron all gaining, and this is why you'll see the Dow up today, you have NVIDIA down, and it's off almost 3%. Broadcom down 3.5%. Amazon off 1.4%. And AMD, as Cameron said, these chip makers are so important, also down 3.5%, along with more of these Mag 7 names, and we're going to get a slew of them. Amazon, Microsoft, Alphabet, all out with earnings tomorrow after the bell. In terms of what we see on the industry level right now, you have energy doing the best as Brent crude and NYMEX rise. Consumer staples are up, as well as financials today. You saw JP Morgan on the winning side of that ledger. On the downside, IT is falling. This is the OpenAI effect. Communication services, those are the hyperscalers. This is the OpenAI effect, and industrials as well. Coming up, speaking of, JetBlue earnings coming in line with estimates as it cuts its flight capacity to offset higher jet fuel prices. We see that across the industry. We'll talk more specifically about this airline, jet fuel, and the industry next. With Sid Phillip, this is Bloomberg Open Interest.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a little ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now that these 2 fingers, top to the bottom, make the sushi shape more beautiful. 3. Then, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is 1 to 6.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox. That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Time now for our top calls. Some of the analyst action in focus this morning. First up, D.A. Davidson is starting Micron, speaking of those chip makers, with a buy rating and a street high price target, saying AI is keeping the memory boom going longer than usual. The firm sees solid upside for the company. Next up, Baird is cutting the chip maker Rambus, saying growth may slow next year thanks to ongoing memory chip shortages. The firm says Rambus relies on volume, so when supply is tight, it can't make up for it with higher prices. And finally, UBS is downgrading Nucor, saying that despite the strong first quarter volumes from the steelmaker, the stock's upside looks more limited after its recent run. The firm also expects steel prices to cool and warns that trade negotiations could add uncertainty. Now that is key for JetBlue. Earnings came in line with estimates as it adjusts to higher fuel costs. The airline is cutting capacity and hiring in the second half of the year to offset those higher costs. It's on track for positive free cash flow, though, by the end of 2027, which feels like an incredibly long way away right now. Joining us is Bloomberg Chief Aviation Correspondent Sid Phillip, New Edge Wealth CIO Cameron Dawson still with us. And Cameron, I'll tell you, Sid has been ruling the roost on airlines for many years. You can ask him anything you want about this. He knows the answer. In terms of capacity cuts, Sid, it seems like they're just joining the crowd, right? This is the story for at least U.S. airlines cutting capacity in
absolutely.
Second half.
So every airline has talked about how this earnings cycle they're going to be cutting capacity, and the large part of that is to say that unprofitable flying should not really be on their schedule, and that's because there is an expectation that people will sort of cut back on flying as prices get higher and higher, and there is an expectation that some of those flights where you can't make money are just not worth flying at all. I mean, United was the first one to talk about that, and then we've had Delta talking about it, and now we have JetBlue joining the crowd.
On the demand front, there was some optimism that we were seeing an acceleration through this year. Have we started to see any signs that that is slowing, given the fact that prices are going up?
So airlines continue to say that demand remains strong, but there is a sort of finite amount people are willing to pay before that demand starts tapering off. And so we still haven't reached that point where we're still certain that there's actually a slowdown in demand, but the airlines are expecting it, saying that that's basic econ. I mean, Scott Kirby talked about it, calling it Econ 101, where he said demand will come down as ticket prices go up.
Didn't you used to actually be an industrials analyst?
I did. I covered the airlines too.
I thought I remembered that. So what do you think about the airlines in this situation? I mean, jet fuel prices are high. I mean, but in Asia, they're starting to ration, right? And in Europe as well. And it's not an issue as much for JetBlue, but when these big airlines fly over there, they don't bring their return fuel with them, right?
Well, we used to always trade the airlines up higher, actually, when oil prices went higher, because it would introduce capacity discipline, and that the worst thing for airlines was plunging oil prices, because it would allow very aggressive pricing on seats and adding way too much capacity. So it's interesting to see some of these names be a lot more resilient. I think it's the question of, does demand hold up? Because if you get any sign that consumers are starting to pull back on travel spending, then that's something that likely people won't celebrate.
What do you think about it? And also, what's with the divergence in shares? It's like there's the good, United and Delta, and the bad, JetBlue and American.
So it's a question of dealing with basically their consumer base. So Delta and United have sort of talked about how they're going after the top end of that K economy, where consumers are buying more premium tickets, they're buying more first class and business class route. And so that consumer base has been more resilient than the bottom end of the consumer base, where they are sort of more price sensitive. They're looking at sort of not taking as many flights or taking fewer flights or flying on a different date. And so they have less pricing power at the bottom end of the market, and that's sort of reflective of why there's this sort of dichotomy in the airline industry.
Does it make sense, by the way, that we would even consider a bailout of Spirit beyond the politics, right? Does it help the business? Does it help consumers? Does it help?
Well, Spirit flies to a lot of places that other airlines don't fly to. So there's some kind of infrastructure necessity of having Spirit still being a going concern. I think the question is, does it make sense to have a tie-up with another airline? And I guess the big question is, do we see another wave of big mergers, given some of the disruptions we've seen, some of the financial pressures in some of these airlines, as we have seen in other times? So are we considering something that one day UAL and AAL could be together?
So that is Scott Kirby's dream. I mean, Scott Kirby reiterated his sort of vision for that deal, on Monday, where he talked about how it would have created economies of scale, it would have created a competitive airline that would challenge the rivals in the globe. It will be the world's biggest airline by a large margin. So that is Scott Kirby's dream, to have a big United American alliance. But that's sort of a no-go at the moment, given the sort of antitrust concerns and the fact that American isn't engaging with that.
Sid, great having you on the program as usual. Thanks so much for joining us. And Cameron, it's been an absolute dream, a pleasure to have you here. Thank you so much for joining us. Cameron Dawson, CIO at New Edge, but also former industrials analyst who followed the airline. So perfect timing to have you on set with us. Coming up, AI stocks are falling after a report that OpenAI is missing its own sales and user targets. We'll talk about that with Anurag Rana next. This is Bloomberg Open Interest.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on what stocks are doing. Just about 20 minutes into the session, we see losses on the S&P 500 and bigger losses on the NASDAQ. So right now, S&P in the cash trade worth 71.45. NASDAQ trading at just over 27,000. So still very high levels after all-time records at the close yesterday. You can see the Dow actually rising as more of the old economy stocks are gaining. It's the AI stocks and especially tech stocks that are falling today. Brent crude is up as well, and that helps the kind of oil producers that are listed on the Dow Jones Industrial Average. But NVIDIA is down more than 2%, and that a $4 trillion company is very heavy, especially when added together with CoreWeave, AMD, and Oracle all falling. We have Microsoft actually gaining right now and Amazon down a little bit. These companies are going to be out with earnings tomorrow after the bell. We're paying very close attention this week to the Mag 7. I think we get 5 Mag 7 companies with 4 tomorrow and 1 Apple on Thursday. Bloomberg Intelligence analyst Anurag Rana says that this will have an impact throughout the entire AI infrastructure ecosystem, with Oracle as the most exposed in terms of its risks to its financial goals. And this, I think he's referring to OpenAI reportedly missing internal targets. So Anurag, how do you read that? Because it seems to me that the street may just have a lack in Sam Altman's leadership, a lack of faith in his leadership, I should say.
See, OpenAI is still doing very well. I mean, let's not get that wrong. But at the same time, sometimes you don't go up in the similar directions. You're going to have, off months as well. But at the same time, you're seeing Anthropic doing really well. So, there are questions about whether OpenAI can keep up with over 700 billion commitments is already made in the market throughout the entire cloud infrastructure ecosystem for future computing needs. And I think that's what you're seeing today.
So Is this a buying opportunity in that case, Anurag? I mean, I was listening to Bloomberg Surveillance, and analysts on that program were saying, if you see drops this big, take them, maybe not for Oracle because they're so dependent on the success of OpenAI, but the other companies have exposure to all of the hyperscalers.
Yeah, I mean, that's part of what we wrote this morning, that when you look at somebody like a Microsoft or an Amazon and even CodeWeave, they have a long list of customers that are there. Now, even in the case of Oracle, I mean, they will have other customers running to their cloud infrastructure. But the fact is, when you look at OpenAI's commitments right now, the biggest commitment it has made is with Oracle with over $300 billion. And that's really what you're seeing in the market right now.
What is the story with Oracle? I mean, how singularly exposed is it to OpenAI?
So as I said, if you look at their backlog, 300 billion of that backlog or over that is squarely from OpenAI right now. It is OpenAI's largest cloud provider when it comes to commitments it has made. And then Oracle is going out and raising debt to create the data centers. Has announced it's going to raise equity also in order to fulfill those needs. And then it's going to fulfill the OpenAI demand for infrastructure in the coming years. And that's the process we are seeing right now. But one of the things that, we pointed out as well, when this agreement was made, OpenAI and Amazon were not in the picture. OpenAI was squarely tied up with Microsoft. Microsoft allowed them to work with Oracle. But in recent months, OpenAI and Amazon's gotten together very closely with commitments north of 100 billion. Amazon's investing money in OpenAI. So we think that relationship is probably a little bit more stable for OpenAI, given that AWS is the largest cloud provider.
What's the outlook, Anurag, for the chip makers, and not just NVIDIA, but these memory chip makers that have such massive margins and have really driven earnings estimates higher?
So one of the things we want to point out is if this sales growth story is true, that they didn't meet targets, this more is OpenAI specific. There is no shortage of demand in the entire ecosystem for AI infrastructure right now. We have seen that across, almost everybody at this point. So I think the bigger ecosystem is not going to get impacted as much as one or two of these players.
When I first woke up and read this story, my thought was, isn't this actually good? I mean, don't you want a company to have high internal targets? It's better to have that carrot at the end of the stick, right? You don't want to let the donkey get to it. Were their targets just too high? Was that by design?
No, I mean, it has been the case for OpenAI has just done exceedingly well over the last few years. But one of the other things that we have seen is just as far as coding is concerned, Anthropic has come out with it. Now, one of the things we also observed was OpenAI was, for example, very, very exclusive to Microsoft products. Last year, Microsoft started adding Anthropic models in its GitHub Copilot, giving customers the choice if they can use OpenAI or Anthropic. And that's what I think is going to happen down the road. When it comes to enterprise adoptions, customers will choose either OpenAI or Gemini or Anthropic. So the competition for the model providers is also getting tough, which is potentially one of the reasons.
Hey, we have only 30 seconds here, Anurag, but what does that horse race look like? How much ground is Claude gaining?
I think all of them would do pretty well. It's just a matter of, which category somebody will pick. It is basically like, think of an operating system in the older days. And I think everybody is going to do well over time. It's just a matter of which month one gets ahead of other.
All right, Anurag, great to get some time with you. Bloomberg Intelligence analyst Anurag Rana standing right there in front of Wrigleyville at our Chicago office. Coming up in the next hour, Meredith Whitney and Kathy Bostjancic discuss earnings, the Fed, and how the Iran war is impacting their outlooks, and the consumer, most importantly. Plus, we'll talk to Atomic 6 CEO Trevor Smith about data centers beaming energy from space. This is Bloomberg Open Interest. I'm Matt Miller.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute geopolitical news whenever and wherever it's happening. I'm Anne-Marie Hordern in Caracas, Venezuela, and this is Bloomberg.
The White House is further evaluating its safety procedures after what happened outside the White House Correspondents' Dinner on Saturday.
Trump's chief of staff, Susie Wiles, calling the meeting this week to, quote, discuss protocol and practices for major events, according to a senior official. The White House is standing by the Secret Service, commending their quick work rushing President Trump off stage.
ABC Chief White House Correspondent Mary Bruce, ABC National Correspondent Stephen Portnoy has more on the continued calls for a more secure White House ballroom.
An overnight filing written in the syntax and tone of the president's own social media posts accuses the plaintiffs in the ballroom lawsuit of suffering from Trump derangement syndrome and being, quote, very bad for our country. Government lawyers now insist the president needs the ballroom for his safety. But in pointing out the inherent risks of large-scale events in D.C., the filing also raises questions about whether the Secret Service can keep the president safe at any event outside of the White House.
The United Arab Emirates has announced that it is pulling out of OPEC effective on Friday. The UAE says the reason is to further its longer-term economic goals. However, Dubai has increasingly clashed with Saudi Arabia over foreign policy. King Charles addressing a joint meeting of Congress today. ABC's James Longman has more from the White House.
Charles is here to mark 250 years of American independence, but there are other issues that are looming large, namely the Epstein scandal and the war in Iran. We know that the British Prime Minister has been the subject of multiple attacks by Donald Trump. Angry Britain has not joined the United States in its war there. Charles will address both houses of Congress, and there'll be a dinner here at the White House.
The reaction so far from the U.S. has been no to Iran's proposed reopening of the Strait of Hormuz and to restarting nuclear talks at a later date in exchange for the U.S. lifting the blockade on Iranian ports. Opening statements this morning in Elon Musk's lawsuit against OpenAI's founder, Sam Altman. You're listening to ABC News. Taylor Swift is making a new move to protect herself in the fast-growing world of AI.
Swift's likeness has already been used without permission for numerous AI fakes, including on Meta's AI chatbot. Pornographic AI images of Swift circulated on X back in 2024, the platform removing them after public outcry. Later that year, then-candidate Donald Trump shared AI-generated images of Swift inaccurately suggesting she had endorsed him.
ABC's Hannah Battah. A proposal for a new tax on billionaires in California is advancing. It surpasses the number of signatures needed to put the issue on the November ballot. The measure would impose a one-time 5% tax on the assets of more than 200 billionaires living in California, factoring in their stocks, their artwork, their collectibles, and their intellectual property.
Governor Gavin Newsom, along with Silicon Valley tech executives, fiercely opposed the proposal. Opponents saying the exodus has already begun to Florida, Texas, and Nevada.
ABC's Sophie Flay, one of those billionaires fleeing, Meta CEO Mark Zuckerberg, has a $170 million, 24,000 square foot compound just built in Florida, 3 doors down from Amazon owner Jeff Bezos' compound. Police in Greece are still looking for a gunman who opened fire on a Social Security office and a courthouse in central Athens today. There were some wounded. No one was killed. Those who think they know the man say he's 89. Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube. We're streaming live on Bloomberg.com as well. We got red and green on the screen here today. Coming up, we're going to check in with Dana Peterson, Chief Economist at the Conference Board. We had some consumer confidence data came out a little bit better than the forecast, a little bit lower than last week, but we'll break it down there. Tyler Kendall, Bloomberg Washington correspondent, look at the latest news on Iran, as well as the visit King Charles to the White House. So some big news there. Brian Jacobson, Chief Economist at Annex Wealth Management, discuss his outlook for the markets. Steve Mann, Bloomberg Intelligence Global Autos and Industrials Analyst, give us the latest on some earnings coming out of General Motors. Look pretty solid to me. George Ferguson from Bloomberg Intelligence, he'll break down the JetBlue earnings as well. So we get into it with a lot of corporate earnings today, a lot of eco data, and we'll stay on top of it all. It is Scarlett Fu and Paul Sweeney. This is the Bloomberg Intelligence Program. Let's kick it all off with John Tucker and a Bloomberg Business Flash. John.
All right, this Bloomberg Business Flash, guys, brought to you by EisnerAmper. EisnerAmper provides assurance, tax, outsourcing, and advisory services to businesses that need more than a generalist. Whatever the challenge, we have a team for it, EisnerAmper.com. So this is one of the big themes investors latching onto today. The Wall Street Journal had that report that OpenAI recently failed to meet targets for sales and new users. So shares of their partners, they're taking a hit. Tech in general, that's lower today. The OpenAI story reviving worries about how fast companies can actually monetize all that big AI spending. JetBlue, you just mentioned that. We're going to take a deeper dive coming up, reporting a widening loss. Yes, you guessed it, higher fuel costs and volatile demand. GM raising its profit outlook for the year by $500 million. Spotify forecasting operating income of the current quarter, missing analyst estimates. Shares of the music streaming company, they are sinking right now. And as we look at oil, Brent, the active contract up 2.8%, 111.26 on the international benchmark. WTI just under 199.89 a barrel, the highest I've seen it this morning, 420 at the Wawa. By the way, you go to the Quick Check across the street on 36. That was $4. I don't know what the 20
Guy's a little slow. Guy's a little slow raising the prices.
Maybe. We'll see. Nadia Lovell, meantime, of UBS, remains bullish of equities.
Ultimately, this is a S&P that is on trend to get to 7,500 this year. And we actually think that there's risk to the upside from that, just given the earnings momentum. And, of course, assuming that we don't get any sort of re-escalation in the war.
The S&P 500, 27 points lower. The NASDAQ Composite Index down 167. The Dow right now is higher, 51 points higher. I thought this was an interesting story, and I guess it has to do with consumer spending, et cetera. Las Vegas Strip casinos seeing business cool, rising costs pushing tourists away. But the off-strip neighborhood casinos are actually benefiting. That's because the locals are going there. They don't go to the big casinos.
You cannot find a $10 craps table on the Strip anymore. Doesn't exist anywhere. I don't care if it's Tuesday morning, 4 a.m. No way.
I don't know what that means.
Yeah.
Is that good or bad?
No, it's bad because now you got to go to the $25 minimum table.
Okay.
Unless you go off Strip, and then you can go to where the locals go, right? But then you don't get any of the bells and whistles.
But I'm a Strip guy. I'm a Bellagio guy. I mean, you know.
Of course you are.
I have my own
Possibly
table
has painted himself into a corner here.
Exactly. So I'm kind of screwed there.
Anyway, we checked the markets and other stuff for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and the player, Paul Sweeney.
I have a hard time calculating the bets in my head. I've got it down for the $10 table, but when I get to the $25 table, I have a hard time. So that's
best to go with small stakes.
Yeah. So, but we'll see how it goes. All right, John Tucker, thank you so much. Appreciate that. Scarlett Fu, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Market Drivers today is brought to you by IBKR. Will the Fed raise rates by 25 basis points in June 2026? Trade your predictions alongside your stocks and options at ibkr.com/predictions. Last trading day is June 17th. So as John was just reporting at red and green on the screen here when looking at the indexes. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Avalon Purnell. Avalon, what are you looking at today?
Well, we can start off with Oracle. That's ticker ORCL. Probably one of the bigger stories today, falling now about 2.8%. That's after the Wall Street Journal reported earlier that OpenAI recently failed to meet its targets for sales and also new users. And this report just is reviving worries among investors on the scale of that AI spending ahead of especially the big seven tech earnings that are happening later this week. Bloomberg Intelligence writing in a great note that while OpenAI's miss will have an impact throughout the AI ecosystem, Oracle is potentially the most exposed in terms of risks to its financial goals, though Wedbush is saying that they would be buyers among the weakness in Oracle and also those tech stocks.
All right, good stuff. And certainly we'll continue to watch for the ripple effect from this. Next one.
UPS, that's also ticker UPS, sliding now about 5.2%. That's after the delivery service firms left its financial guidance unchanged despite topping Wall Street's expectations for first quarter sales and profit. UPS continues to face challenges across the board from shifting U.S. trade policies to rising fuel costs and also higher labor. And Citi says that the weakness really reflects rising expectations against that reiterated guide and also domestic margin misses.
No air conditioning in the UPS trucks.
That is painful.
I always feel sorry for the folks out there doing that. Like those really hot days. Oof,
is that still the case?
I think so. I mean, there's good.
Yeah, but the door's always open.
That's true.
That would be a waste.
But UPS, their thing is they're just bare bones. We're tough. We're low cost. That's kind of the work.
The unions would go for that or would allow for that.
I don't know. It's interesting, but I always feel sorry for those folks. All right, Centene, what else you got for us here?
Yes, that's ticker CNC, rising now about 6.4%, most intraday since January, making it one of the top performers in the S&P 500 this morning. And that's after the health insurer boosted its profit outlook and also reported a first quarter beat. What's really important to mention is that Centene's Obamacare membership loss was less than initially expected. And that's pretty important when you kind of think about the risk pools. It means that potentially they can stay widely the same. And the print is really another sign of recovery among health insurers, especially as the sector comes off a pretty rough year. Jeffries is writing that Centene posted quite strong results, especially compared to a lower bar from the Wall Street expectations.
All right, thank you so much, Alan Parnell, with our equity movers this morning. And for more conversations like this, subscribe to our Stock Movers Reports, where we offer 5-minute audio reports on the biggest winners and losers in the stock market. You can find that on Apple Podcasts, Spotify, or anywhere you listen. We did get some confidence numbers, Paul, and it looks like it was better than expected. Unexpected gains, in fact.
Yeah, the best so far this year here. So let's break it down with Dana Peterson. She is the chief economist at the Conference Board. Dana, I'm just looking at the consumer confidence headline number. 92.8 was the actual number. The consensus was 89, so a little bit better than there. And it's just a little bit better than the revised upward from last period. What's going on with the consumer these days?
Well, consumers are feeling a little bit better about employment, both currently and in the future, and also their incomes, their future incomes. And so that helped offset their concerns about the business environment, both now and in the future. And so when that added up, we had, a net upward movement in confidence. And that's the second month in a row we've seen that. But still, no, it's not terribly optimistic relative to what we saw, 18 months ago. And consumers are expressing, especially through their inflation expectations and also their write-ins, that they're very concerned about the war, inflation, and prices.
I'd like to pick up on that point. Tell us a little bit more about what shows up in the write-ins and how that's changed as the war in Iran is now in its 8th week.
Absolutely. Before the war, most consumers were complaining about, yes, prices, but also tariffs and the impact that tariffs were having on basic things like food and clothing. But once the war began and our survey overlapped with the war and even the worst spikes in oil prices, they shifted over and they said, we're very concerned about this, both in the March report as well as in the April report. And indeed, those concerns about the war and implications for them increased from March to April.
Dana, I'm just trying to get a sense of what a reading of 92.8 kind of means and contextually. And if I look over the last 5 years, that consumer confidence number's been, if I had to just draw a line through and try to find an average or mean, somewhere north of 100, 105, maybe something like that. So well below kind of the 5-year average here. What's the biggest driver of consumer confidence?
Well, it's a number of things, but I think at this point it's jobs. Most consumers are still working and they are seeing their incomes come in. But we did notice that their optimism relative to their finances was a little less positive. And I think that's because finances include debt, right? And also people think about how much extra they have to spend on things that they need because prices are higher. And so I would say that fundamentally, consumers, yes, are still spending, but they're shifting on what they're spending. And I think inflation definitely is putting a damper on their confidence overall.
Dana, what surprised you the most in the reports that we've gotten the last couple of months here? Because there's a lot of negative headlines, and yet we all point to, and companies themselves point to, the resilience of the U.S. consumer, the resilience of the labor market, the resilience of the U.S. economy.
Well, I'm not actually surprised about the resilience, and companies are actually playing a really big role in making sure that consumers remain resilient. We've noticed from the payrolls data and unemployment data that most companies are not letting people go. They're holding on to their workers. Some of that's because of uncertainty, and they don't want to just shed a bunch of workers if they don't know what the end goals are regarding tariffs and the war in the Middle East. And so they're just kind of holding on, waiting. They're investing here and there, but also they're not hiring people, and people aren't quitting. So we still have a labor market that's still very close to full employment. And if people have money coming in, they're going to spend it, even if it's shifting to things that they need versus want. So I think between consumers and companies, they're holding up the labor market.
Dana, thanks so much for joining us. Really appreciate it. Dana Peterson, Chief Economist for the conference board here. What are you looking at here? Is we've got pretty much the markets kind of turning all red here, Scarlett. We've got the S&P, the Dow, and NASDAQ all in negative territory here. And again, and we've got crude oil moving higher, markedly higher today.
Yeah, markedly higher, although, still within that, we haven't seen it explode to the upside, and the story in Iran is still kind of very much the same, that we're waiting for some signs of progress. I think the difference today is the news that OpenAI reported, failed to meet targets for sales and new users. That AI story was so strong in kind of supporting the market here, but now you've got people looking at the weak links in the AI ecosystem, and a lot of people have set on Oracle as kind of the obvious target here.
Yep. And I guess on the oil front, we also had news earlier this morning, which I thought was very interesting, because I can't remember this happening before, that the UAE is quitting OPEC as war upends oil markets and Gulf tensions rise. So that was something you don't really see very often, so we'll stay on top of that.
But for a while, it seemed like OPEC didn't really have the lockhold over oil price action that it used to.
That's right. That's exactly right, because the U.S. is now a net exporter. Coming up, we're going to check in with Tyler Kendo, Bloomberg Washington correspondent, get the latest on Iran and the latest on the visit of King Charles to the White House. Brian Jacobson also is going to join us in this hour, chief economist at Annex Wealth Management, to get his outlook for the markets here. Right on the screen with the S&P 500 down 33 points. The NASDAQ down 180 points. This is Bloomberg Good Morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Stocks and corporate bonds will do those as well, linked to the data center firms. They're lower. This comes after the Journal reported OpenAI recently failed to meet its own goals for new user acquisition as well as sales. So Oracle shares, let's pick on them. They're down over 3%. And CoreWeave, that's down 2.6% right now. A group of big techs that represent a quarter of the S&P 500's value. They're going to get ready to release their earnings. Alphabet, Microsoft, Amazon, Meta Platforms. So investors waiting for that at this point. Right now, energy is the best performing major indices group in the S&P 500. It's up overall like 1.2%. This as oil continues its push higher. Brent 111.22 a barrel. West Texas right above $100 a barrel. And consumer confidence, we heard that at the top of the hour, unexpectedly edging higher on a more upbeat view on the outlook for the job market. Among the best individual performers in the S&P 500, shares of Coca-Cola up over 5%. Well, the company's efforts to offer beverages at different price points, paying off sales volumes of those little mini cans.
I love the mini cans.
They're growing. Why do you like them?
Because I can't finish a full 12-ounce can.
Oh.
It's a perfect for me. Now, if I'm paying less, I don't know. So I may be paying the same price for a smaller can. I don't know.
Do you use less rum with the smaller cans?
Yes, exactly.
That's the key question there. We check the markets for you. Just kidding. All day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube and at Bloomberg.com as well. We want to get right down to Washington, D.C. A lot happening down there in D.C. today. Tyler Kendall, Bloomberg Washington correspondent. She is down at our Washington, D.C. camera here. Let's start with the king and the queen in Washington, D.C. Talk to us about the agenda for this visit, Tyler, from, it's a big deal.
Yeah, it is considered a big deal, and it's a jam-packed week for the royals here in the U.S. Of course, they arrived yesterday. There was a big greeting today. We are expecting another greeting to take place on the South Lawn. Those were the images that you were just seeing if you're joining us on YouTube. And then there's a series of other events that are happening today. 11:10 a.m. Eastern, signing of the guest book. There's going to be a guest greeting line, and then that's going to be followed by a private bilateral meeting between President Trump and the king. That's at 11:40 Eastern. Press isn't going to be allowed inside, but we could expect the two to discuss, of course, current affairs as it relates to the U.S.-UK relationship. And that will set the stage for later today. To keep your eyes out on this, 3 p.m. Eastern, the king is set to address a joint chamber of Congress. And we did get a little bit of a preview here from some royal aides reportedly saying that the king will discuss how critical military alliances like NATO and AUKUS are, and he is also expected to talk about Ukraine, because Paul and Scarlett, this visit is set to mark 250 years of the U.S. declaring independence, but we know that the underlying thread here is that there have been growing tensions between the U.S. and the U.K. when it comes to President Trump and U.K. Prime Minister Keir Starmer. In fact, President Trump told the BBC earlier this week that he, quote, absolutely thinks that the king's visit could help repair that transatlantic relationship.
I have a question, of course, about security, because that has been, it was always going to be very intense, but it's really been stepped up following Saturday's shooting at the Washington Hilton, or the attempt at least, during the White House Correspondents' Dinner. Can you tell us a little bit about how that looks and what it feels like, at least in the area?
Yeah, I mean, Scarlett, whenever there's a world leader here, the White House and the area around it does shut down. Now, Lafayette Park, which is essentially the perimeter around the White House, I wish I had a map to show you. That has actually been shut down for the past few weeks because it's undergoing construction. So there's already sort of a bigger buffer, but I can tell you that around that area, it's very difficult to get through. When I'm going to the White House these days, I have to account for extra time to get through that security. Now, that was before we saw the incident this weekend, and after yesterday, the DOJ announced that one of the charges against that suspect is an intent, they say, to have tried to target and kill President Trump. That definitely ramps up the stakes and the security precautions, though if you ask the administration, they say that this week's visit by the royals is expected to go off as previously planned. It is our understanding a few of the events have been tweaked slightly, but Acting Attorney General Todd Blanche says that he is confident that this is going to be a secure visit.
Tyler, let's switch gears, as we must, to Iran. President Trump has convened his national security team to discuss Iran's proposal to end the war. Now in its third month here, what's the latest reporting?
Well, at this point, it appears that diplomatic progress is really remaining stalled because this White House maintains that it's not going to enter into any deal unless Iran addresses and puts curbs on its nuclear capabilities. In fact, the U.S. Energy Secretary Christopher Wright joined us on Bloomberg Television earlier today, and he was pretty clear that the U.S. isn't going to compromise when it comes to this point. The issue is, reporting indicates that Iran doesn't want to negotiate about its nuclear program right now. They're trying to postpone that dialogue. And instead, the proposal that has been put on the table would see a potentially reopening of the Strait of Hormuz in exchange for the U.S. lifting its naval blockade and some maybe other concessions, according to Iranian state media, such as compensation for damages, a legal framework for the Strait of Hormuz, assurances that the U.S. isn't going to attack Iran again. The thing is, a lot of these things are non-starters, at least publicly, for the U.S. And the reporting does indicate that the White House is very wary of this proposal. In fact, we had Secretary of State Marco Rubio just yesterday say in an interview that Iran cannot retain any control over the strait in a potential deal, and that the U.S. blockade isn't going anywhere. In fact, we've really seen more of a doubling down on it in recent days. And Paul and Scarlett, a research firm, Kepler, put out an estimate yesterday that shows that it appears that Iran's excess storage capacity for oil could be filled up in the next 12 to 22 days. And we know that that is leverage that the U.S. is looking to keep.
And in the meantime, there's very little traffic, if any, going through the Strait of Hormuz. We see foreign leaders increasingly frustrated with this standoff and the diplomatic impasse as well. I was struck by the comments made by the German Chancellor, Friedrich Merz, who said the U.S. was being humiliated by Iranian leaders, and he didn't see what strategic exit the Americans are now choosing. So the relations between the U.S. and continental Europe, already kind of not so great, before the war, has just gotten worse and worse.
Right, and part of his comments, Scarlett, is that the German chancellor went on to say that he felt this way because of the economic damage that the war is inflicting on the German economy. Because, as you made the segue too, a lot of this does have to deal with the fact that traffic is still at a standstill when it comes to the Strait of Hormuz, though actually overnight, data tracked by Bloomberg did appear to show that the first LNG shipment did make its way through the strait, though our own analysts say that this shouldn't really be taken as optimism since the tankers that they are tracking with LNG on it, the rest of them appear to be staying put at the moment. But it does contribute to that economic anxiety that we've heard world leaders talk about before, and how many of them have said that they're not going to engage in the war in the way that President Trump has wanted them to, such as deploying military assets to help with the Strait of Hormuz, they say, until there truly is a longer-lasting ceasefire in place and not those risks if they were to go into the waterway. But Scarlett, as you well know, that's only inflamed tensions for this White House and brings us back to the start of the conversation and those tensions with the U.S. and the U.K., because part of that is President Trump threatening to withdraw from the NATO alliance, and I would bet he wasn't too happy with the German chancellor's comments yesterday.
Tyler Kendall, thank you so much. We appreciate that. Tyler Kendall, Bloomberg's Washington correspondent there with the latest news out of Washington, D.C. Let's go back to these markets here. Again, the S&P down 39 points. That's a 0.5%. The NASDAQ a little bit more, down about 220 points. That's about 0.9%. Brian Jacobson joins us here, chief economist at Annex Wealth Management, joining us via Zoom from Brookfield, Wisconsin. Brian, given this seemingly higher for longer energy situation in terms of the costs here across the board, have you taken down your GDP growth forecast? Have you ratcheted up your inflation outlook? How's it impacting your numbers?
Yeah, thanks for having me. Both, yes, a little bit. And I think that's really the key, is the magnitude of those adjustments. So coming into this year, kind of expecting around 2.5% GDP growth. Given the persistence of these high energy prices, we have modified that down to something closer to 2.3%, which is probably a little bit more on the optimistic side, because we do think that it is just a temporary setback, not a permanent disabling of the economy. So we think that we're resilient enough to kind of ride through this. In terms of the inflation, really it's all about the headline, right? In terms of how long does it take for that headline inflation to seep into core inflation. Thus far, it seems like maybe for core, it's only showing up with like airline fares, some things like that. We don't think there's a lot of room for it to really prop up core inflation, mostly because high energy prices it really reallocates the consumer's budget, right? What you spent on gasoline, you now don't spend on, convenience store purchases or eating out. And in fact, that's exactly what we saw in the retail sales data. So the key question is how long does this persist? And that's where I think that President Trump recognizes it's a midterm election year. This is not a popular conflict. It's not popular to have high gasoline prices. And he's probably trying to find some graceful way to tiptoe out of this situation.
Yeah, that off-ramp is something that markets have been counting on, really, as many people now choose to look past the standoff and anticipate some kind of end at some point. So, Brian, how are you thinking through the FOMC meeting that began today and will culminate tomorrow with the decision at 2 p.m.? We're not expecting any kind of change to monetary policy, but what will you be listening for? What do you expect to learn about the state of the economy, the state of deliberations at the central bank?
Yeah, well, what I would absolutely love to see is if somebody brought cake as kind of like a farewell thing for Chair Powell, given that it's likely his last press conference, because Kevin Warsh is almost a shoo-in to become the next chair. Now, obviously, the question is whether or not Chair Powell is going to stay on the Board of Governors, since that term doesn't expire until January 2028. Most likely, he'll say that let's see how this Inspector General's report comes out, right? So the DOJ basically punting the investigation over to the Fed's Inspector General. Most likely, they're going to make very short work of that, saying that, there's nothing to see here, and then he'll be able to kind of ride off gracefully into retirement. Now, I'm not expecting a lot of new information in terms of the economic outlook, because it's almost like what was going on during COVID, in terms of they always talked about how the path of the economy was going to depend upon the path of the virus. Well, here, the path of the economy, whether it's growth or inflation, is going to depend upon the path of oil prices. And that is completely outside of their control. So I think that they're probably going to acknowledge that we have elevated headline inflation. And so I'm really looking at sort of parsing the language. Do they emphasize it's in the headline and not in the core yet? To me, that would be a good tell to suggest that maybe they could then resume cutting if they don't think that the core inflation outlook has changed that much.
Brian, how's the consumer doing out there? We talk about this K-shaped economy. It seems like it's maybe even getting more pronounced every year that goes by. But how do you kind of analyze the consumer out there?
Yeah, it depends on which consumer, right? And I think that on Bloomberg, you guys have talked a little bit about it's going from a K-shape to a barbell shape as far as with the economic effects, where the lower income individuals being weighed down much more by these high energy prices. And if you look at, also elevated food costs and the such, because it is a bigger part of their budget. Higher income consumers, initially, they reacted not so much to the high fuel prices, but probably to the falling stock market. Now that the stock market has bounced back, it seems like it's, all cylinders are firing here for higher end consumer spending. So we've moved from that K-shape to more of a barbell-shaped economy, where you have, I think, still continued strong spending by the upper income individuals and continued struggles and penny pinching by the lower income individuals.
And the latest corporate results really point to that divide as well. Brian, we got news this morning that OpenAI recently missed its own targets for new users and revenue, and this is clearly not what you want to see before a company this size gets ready to go public sometime this year. If there's a complete rethink of what the future of AI looks like, what AI companies spending on AI looks like, how does that factor into your forecast for the economy?
Yeah, it is major, right? Now, the thing is, I think with OpenAI's numbers, we do have to think about, was OpenAI's loss, well, their slower growth, I mean, it still had gains, just Anthropic's benefit, right? So was it just a reshuffling of users from one service to the other? Because in aggregate, it seems like there's still that unsatiable demand for the compute and for the service. And so maybe this is just more idiosyncratic or unique to OpenAI. And I think that's the key thing that we're going to be listening for tomorrow when we listen to some of the hyperscalers who are beginning to report, is what are they doing? What's the guidance? Are they going to meet guidance for the data center build out, or are they going to say, no, we need to exercise a little bit more cost discipline here? Because the days of just, investing on the basis of your vision, I think are not completely behind us, but mostly, and it's going to be more about investing on the basis of discipline, fiscal discipline, which is all about what's the weighted average cost of capital, what's the return on the invested capital, and does it continue to make sense to invest at these rates?
Brian, thanks so much for joining us. Appreciate your time. Brian Jacobson, Chief Economist at Annex Wealth Management, getting an update on economic trends out there with oil higher seemingly for longer. Let's get back to the state visit, King Charles in Washington, D.C. Well, we want to do it from the perspective of, how are the Brits thinking about this? Tiwa Adebayo, a Bloomberg News reporter. She is based in London. Tiwa, thanks so much for joining us here. What is the view from the UK of the King and Queen's visit to the United States?
Well, this is a hugely significant visit for all of us here in the UK, but certainly for the royal family itself. For King Charles, this is his first visit to the US as monarch. He'd been over 20 times as Prince of Wales, but his first trip in charge, as it were. And for the UK, it's the first visit of a monarch to the US since 2007. So it's significant in that respect. But there's also this sort of appreciation that it's significant because of where the relationship between the US and the UK is at the present moment. It's no secret relations between President Donald Trump and our Prime Minister Keir Starmer haven't been going so smoothly as of late. The president saying that, that Keir Starmer is not Winston Churchill recently. And it's really thought that this is perhaps an attempt by the government to deploy one of the strongest tools in their arsenal when it comes to diplomatic relations with the US. We know how fond President Trump is of the British royal family. We saw that with the state visits that he made to the UK just last year. And it's a particular point of pride, perhaps, for the US, that President Trump is only the first president to have been granted 2 state visits to the UK. That is a fact that's got pride of place, actually, on the White House website. I did check before speaking to you, and it's definitely hoped, I think, from the side of the UK government that this might go some way in smoothing over those difficult relations that we have seen of late.
And we're looking at some live photos, if you're joining us streaming live on YouTube, of the UK delegation essentially arriving in Washington. We're seeing members of the cabinet lined up there, including Scott Bessent, Howard Lutnick. I see Stephen Miller there as well. As everyone shakes hands and greets each other. Clearly, this is part of the pomp and circumstance taking place here in Washington, D.C. There's a literal red carpet rolled out as well. Talk a little bit about the Canada and how this fits in with everything here, because not so long ago, President Trump was demanding that Canada become a 51st state of the United States. And King Charles went to Canada and address the nation, which is a member of the Commonwealth, in a way that pushed back against the U.S. just a bit.
Yeah, I mean, that's where we might see some of the perhaps areas of contention between the King and President Trump. You remember that speech last year, the opening of the Canadian Parliament, King Charles calling for a free Canada right around the time, as you mentioned, that President Trump was talking about annexing Canada and making it part of the United States. And that Commonwealth relationship between the UK and Canada and all of the Commonwealth nations is something that the King holds very dearly. The monarch of the United Kingdom is traditionally the head of all the Commonwealth nations, and that is a role that they take incredibly seriously. So there you can see there those slight areas of contention, but it's likely that we'll hear a similar sentiment from King Charles in his speech to Congress later. That is the real set piece of this visit. It's the first time that a monarch has addressed Congress since 1991. We've had some excerpts from that speech. We're expecting the King to take a reconciliatory tone, to call for peace, to call for the UK and the US to stand together at a time of perhaps confusion in the broader world. So looking ahead to that. But it's important to note that that speech, whilst the tone will be delivered from the King, it is written under the advice of government. So it is true that the King will be trying to put across their diplomatic ideas through that speech, as well as he did during the address in Canada. A bit of a difficult line to toe for the monarch, because the King traditionally stays above matters of politics in the UK. But when on diplomatic missions like this, of course, his role is to represent the interests of the United Kingdom. So we'll see that towing of the line as he tries to remain above politics, but also strike a tone of friendship and collaboration with the United States. So we're looking ahead to that, certainly.
Tiva, I wonder if you could just give us a quick snapshot of the politics of the UK right now. Prime Minister Keir Starmer under some pressure. How is this trip supposed to be used in the context of where the Prime Minister is right now politically?
we speak, MPs are debating whether or not Keir Starmer should be taken to a parliamentary watchdog over his hiring of Peter Mandelson to be the ambassador to the United States. Of course, Peter Mandelson was later found to have had quite significant links to the late financier Jeffrey Epstein. So the Prime Minister under significant pressure in the UK, not just from the opposition, but really from his own party, questions about his leadership, how long he can survive. And also there's the pressure that comes from voters. And really, I think what you'll see here is that Keir Starmer is looking for a win, a diplomatic win. It's been thought that till now he's been quite strong on diplomatic issues, and he's definitely looking to continue that. And this visit is a key part of that. It's been part of his diplomatic strategy for a long time. We saw him produce theatrically that handwritten letter from the King in the Oval Office, to the delight, I should add, of President Trump. So it's no doubt that because of the issues facing Keir Starmer domestically, he's really looking to make up some ground here on that special relationship, something that's so important to the UK and to the British government.
Tiwa, really, really great to get your perspective. Tiwa Adebayo is our Bloomberg News reporter based in London, really talking us through what's at stake here with King Charles III and Queen Camilla's visit to the White House, the speech that he will be giving to the joint sessions of Congress later on this afternoon. He's then making his way to New York, so we can expect a lot of security as well in the city, too.
Okay.
All right. In the meantime, let's go over for a reset to John Tucker for a check on the markets.
All right. Technology, one of the biggest drags right now in the S&P 500. You have the worries around OpenAI, its sales, and number of new users. Energy, maybe not surprisingly, best performing major industry group right now with oil prices higher. You have Brent up 111.35. That's the price right now. WTI at 99.90 a barrel. JetBlue Airways reporting a first quarter loss that exceeded estimates. Yeah, they're blaming higher fuel costs. General Motors raising its profit outlook for the year by $500 million, despite inflation in the cost of their raw materials. They say there's resilient demand for pickups and SUVs. How about that? GM shares actually have turned lower, down 2.7% right now. Traders also sifting through the latest economic data. On the eve of the Fed decision, consumer confidence unexpectedly edging up in April. The strength in the labor market is what they're pointing to. A bullish John Stolfus at Oppenheimer says investors should ignore the noise in the markets and prepare for higher returns.
The hedge funds jumped in and did a play where they went long, and now they're going to go, probably going to go, some of them will go short, or they'll have to change their positions because they're highly leveraged. But the overall trend remains pretty well intact.
Right now, the S&P 500 down 46 points, 71.27 on the index. The Dow 20 points lower, and the Nasdaq Composite Index is down 275 points. And we do have news on some of the basic food groups. Oreo is dropping a new flavor for the summer.
What is it?
It's already in stores, actually. Firecracker Pop has 3 layers of cream: blue raspberry, lemon.
Oh, for the 250th anniversary?
Yeah, I guess so.
Right?
Red,
that makes sense.
That's red, white, and blue.
Nice job.
I just figured that out. K-popers BTS stepping into the grocery aisle with the launch of a new Western Korean fusion food and beverage brand. This new brand includes instant noodles and postbiotic beverages available at Walmart.
Really?
Sounds like a commercial, but yeah, I mean, there you go.
And there's a huge teen contingent that will be lining up for that.
All right, whatever. I'm not even sure what that is. So we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Scarlett and Paul.
All right, thank you so much, John Tucker. We just want to show you again what's happening in Washington, D.C. This is at the White House. We're awaiting the start of the formal arrival ceremony for King Charles III and Queen Camilla. A red carpet has been laid out. We've seen the delegation arrive in advance. It's all bells and whistles right now, pomp and circumstance as the king and the queen get ready to arrive.
We can do state events pretty well.
Yeah, yeah.
You know, and we'll do the dinner.
And in this White House, this is something that they really prepare for.
Yes, they do an excellent job. So we'll see that, and we'll have the king and queen coming shortly to the White House here. Let's get back to these markets here. We had some more earnings. General Motors out with some numbers. They raised their profit outlook for the year by $500 million. Let's break it down with Steve Mann, Global Autos and Industrials Research Analyst for Bloomberg Intelligence. He's based down in Princeton. Steve, what do we learn from General Motors in their earnings release?
Actually, overall, the earnings was pretty good. And if this Iran war, doesn't drag on, I think they're going to have a great second half. Inventory is low. They've managed it very well. That means their pricing is pretty steady, up a bit, and truck sales are still going well despite the $4 gas prices. So second half production could ramp back up if the war doesn't drag on.
If the war doesn't drag on and if the company gets the relief from paying all those tariffs, my understanding is that increased outlook that Paul referenced does reflect the benefits of tariff cost relief tied to the Supreme Court deciding to strike down those reciprocal tariffs that President Trump imposed.
Yeah, they had a $500 million benefit, less cost from the tariff. There could be more coming. And, right now, their inventory is at actually below target, especially in the pickup truck side. So, and pickup trucks are the highest profit margin vehicles for them. So if they can keep production steady, increase the dealer inventory a bit by raising the production, that 8.6% adjusted EBITDA margin that they had in North America could stay up there or even get even better.
What's GM saying about, you mentioned the trucks, and that's what Americans, we like to drive, big trucks, SUVs, all that kind of stuff here. But with gas north of $4 a barrel, what's GM saying about the demand for those big vehicles?
Yeah, they're actually very cautious. The gas prices are up, oil prices are up $3 today, and I think that's having an impact on the consumer discretionary stocks, including GM, despite its a very good earnings results. But they are very cautious. Not only demand, but if elevated oil prices are staying up, it could trickle down into material costs, even though they haven't seen a huge impact from that yet. But a prolonged war could impact it. But the other thing that we've talked about is K-economy, right? It's very interesting to see what's happening today, where the high-end, expensive vehicles are actually doing well. Where we're seeing decline is really on the cheaper vehicles, where buyers in that segment are more cost conscious, and I think they are holding onto their purse strings. But it's all about the war.
Yeah, absolutely. It's all about the war. That affects everyone's willingness to spend, their mood when it comes to spending. What is GM offering by way of low-cost vehicles? How big of a lineup offering does it really have?
They do. I mean, they have, the Chevrolet Trax is selling very well. The Buick Envision, not bad. They do have a few vehicles. The EV Chevrolet Bolt, they just rolled it out, is one of the most popular EVs out there. That's going to help them, reduce some of the EV losses there. So they have a pretty diverse portfolio. But, I think if truck sales maintain where it's at, consumer sentiment gets better if the war ends, and even the commercial side, if commercial demand stays steady, I think they're going to have a decent second half.
Ford reports tomorrow after the close. Steve, is there a read across from GM over to Ford?
Yeah, definitely. Ford relies much more on their pickup truck. The F-150 is, the top selling pickup trucks in the U.S., not just to consumers, but to the commercial buyers. So it is a positive read across to Ford. The only thing that's on the risk side is, they had some delays on ramping up the F-150 or due to the Novelis aluminum plant fire last year. But again, look, they're going to get that aluminum shortage fixed up. And if the war ends, they're going to have to ramp up the F-150 production, and that's only going to improve their unit costs and profitability in the second half.
Steve, fantastic to get a preview there of Ford along with the wrap-up of what GM told us. Steve Mann is our global autos and industrials analyst. He is our go-to person for all things car-related. We continue to await the arrival of King George III and Queen Camilla over at the White House, and I believe they are just walking down the red carpet right now. You see a lot of flags there, Paul.
Yes.
The U.S. flag, the U.K. flag. This is the formal arrival ceremony.
Yes, and we've got President Trump and Melania Trump there as well. And again, there are a lot of the dignitaries all lined up waiting for the king and the queen. And this is just as we've been talking about some of our Bloomberg News reporters, this is an important visit for both the UK and for the US, and in large part to try to maybe just pave over and kind of reestablish that secret or that special relationship between the US and England that at times frays from time to time.
Yeah, reset that relationship because at least the tension between the political leaders, President Trump in this case and Keir Starmer, the prime minister, have been rising because of our European allies' unwillingness to do more in the Middle East and to do more when it comes to clearing the Strait of Hormuz. You're seeing now King Charles III emerge from his car and Queen Camilla also making her way over. They're greeting President Trump right now, and you see them shaking hands. Of course, they did sit down for tea yesterday, and the four of them will sit down together for a closed-door meeting, is my understanding. But
no press.
No press, but we've also seen the president invite the press in later on. I don't know that that's what he'll do in the presence of royalty, but
exactly. And then
we'll see how that goes.
The king has a busy schedule today, and including a 3 p.m. Eastern time address to the joint session of Congress, which will be very important. And again, as we heard from our reporter in London, our Bloomberg News reporter in London, this is a speech that will have some input from the government.
From 10 Downing Street, yeah.
Yep. And so that will certainly be people would be well anticipating that speech from the king in Congress. And then, of course, the state dinner tonight.
The big state dinner this evening, and then at some point, I believe tomorrow, he will make his way to New York, where they will also check out the September 11th memorial, pay their respects to the victims of the September 11th attack, and then continue on. But this is a big, big moment here as the two sides hope to reset their relationship, that special relationship that Winston Churchill spoke of.
Yep, very good. And now we see President Trump and Melania walking with the king and queen here. So it is quite the spectacle. And again, as you mentioned, what we're seeing on our screen right here, in addition to all the dignitaries assembled, is lots of flags, lots of American flags, lots of Union Jacks from the United Kingdom. So it's and a pretty big crowd there of people just, I think, wanting to be part of history there.
Yeah, we saw a lot of the members of Congress. Oh, there we go. We have the king greeting the cabinet. We see J.D. Vance there, Scott Bessent, Howard Lutnick shaking the king's hand as well. So they're making their way through the line. Queen Camilla in a big white hat.
Yeah, but so did Melania Trump also has a very nice big hat. So that's kind of how you roll, I guess, in those circles.
I mean, they kind of set the tone when it comes to dressing, don't they? The royalty.
It's spring in Washington, D.C. I'm sure the cherry blossoms are already out. Maybe they're already
I think that they've fallen by now, because in New York they've fallen already. And they're now making their way up the stairs. And again, they will be holding a meeting on their own. The president might make some comments here as he greets formally the crowd there and welcomes the king and the queen.
Yep. So they will. It's interesting to see what the conversation will be like in this closed door meeting. Wonder if some of that will be reported out at some point in time to see. Because I suspect
they know each other well, though. Because
they do, and I think
Prince Charles, when he was prince, had arrived, come to the U.S. I believe 18 times.
Yes, and as we remember, President Trump had made 2 state visits to the United Kingdom. That's the first time that's happened. So again, that signifies presumably a strong and close relationship between the Trump administration and the monarchy.
Absolutely. I don't think any mention of Canada will be made here, although that might be something that the king mentions during his joint address to Congress.
We haven't heard too much about Canada and 51st state recently.
No, that's died down.
It's died down. So there's other things going on in the world.
More urgent matters.
Yes, exactly right. So again, it's nice to see the pomp and circumstance. Washington, we do that very well, and particularly for our longest term ally,
Yes.
United Kingdom. So there you go. Should we go back to these markets here?
I guess reluctantly we need to,
Yes.
especially since we see some red on the screen right now. The S&P 500 losing 0.7%. The NASDAQ doing even worse, down by 1.3%. And of course, this comes on the heels of OpenAI's a report from the Wall Street Journal that its growth is slowing down, raising a lot of questions about the AI economy and what kind of position it's in, especially before this big IPO.
Yeah, absolutely. And you know, I guess if you look back and you think about it with a 30,000-foot lens here, I mean, AI is such, everybody's telling us we're in the beginning of the first inning, and there's going to be pitfalls along the way or just bumps in the road, and you know, maybe it's not going to be completely linear, but I can't imagine anybody pulling back from kind of the longer term investment and theme associated with AI. That just seems to be so entrenched in this global economy.
Absolutely.
Right now.
We're looking at an estimated $660 billion of spending from the hyperscalers this year for 2026. And of course, the big tech companies will be reporting earnings this week. We're going to hear from them whether they're going to stay with that. All right, let's get a reset of where things stand right now with the markets and with corporate news. John Tucker has our Bloomberg Business Flash.
All right, right now the S&P 500, Scarlett and Paul, 49 points lower, down about 0.7%, 7123 on the index. The Dow Jones Industrial Average is right now bouncing between gains and losses, up just about 4 points right now. The tech-heavy NASDAQ, on that report you mentioned from the Wall Street Journal about OpenAI, the misses there, down 317 points. That's a decline of 1.3%. And of course, some of the partners with OpenAI taking the biggest hits. You have shares of Oracle down just about 4.5%. CoreWeave shares also down close to 7%. After their earnings report, Spotify shares 13% lower. And then JetBlue, those shares, I mean, figure this out. They were citing fuel costs, but the shares right now, after their earnings report, 5% higher. Energy, one of the best performing major industry groups in the S&P 500, as fuel oil costs continue to rise. Brent, the active contract, up 2.3%. So we're looking at 110.74 a barrel. And then West Texas Intermediate, that is just under $100, $99.51 a barrel. And we check the markets all day long, right here on Bloomberg Radio. I'm John Tucker, and that is the Bloomberg Business Flash for you, Scarlett and Paul.
All right, John Tucker, thank you so much. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. And for those viewing here on YouTube, we have President Trump and King Charles. They just played the Star-Spangled Banner. And now we have the two of them moving off of this stage here. So we'll stay with them. But again, this is the assembled crowd is quite impressive. All the dignitaries, the members of the cabinet are there, and it's something you would expect when our longest-term ally, England and United Kingdom, make their way for a state visit.
And of course, this is on the heels of President Trump visiting the UK twice as president, getting the full treatment with a state visit, showing up at Buckingham Palace, and we did not spare any kind of the pomp and circumstance here for this visit by the King and the Queen. All right, as we await to see whether they make any comments, let's go back to the markets for a moment here and bring in Matthew Griffin. He is our equities reporter, and he's going to take a look at some of the stocks on the move here in this 11 a.m. Wall Street time hour. Matt, what do you have?
Well, Scarlett, thanks for having me on. And one stock I have had on my screen all morning is UPS, the parcel carrier ticker, also UPS. Shares currently down more than 4% after the company did beat expectations overall, but it left its full year guidance unchanged. That was disappointing investors who wanted more. They also reported margins that were weaker than expected in their U.S. parcel business. The adjusted margin there was 4%. Analysts wanted nearly 5%, and that's just the last thing investors want to see from UPS right now. They are questioning this company's plan to cut its less profitable business, for example, with Amazon. And so to see this pain in the U.S. right now raises more questions about how that's going. The company did say on the earnings call that there were some one-time items, weather, for example, but that's not really helping. Shares down as much as 7.2% today. That's their worst day since July.
All right, how about Hilton?
Yeah, so Hilton, the hotel chain, that's a stock I was actually watching before they reported earnings today. They were trading at all-time highs last week, even during the war in Iran, which of course has disrupted travel. So this was a closely watched report. Investors a little bit disappointed. That stock, ticker HLT, trying to claw its way back into the green, but still down about 1%. The hotel chain raised its full-year outlook, but less than analysts wanted, and it said it's going to see some effects from the war in the second quarter. For example, a hit to its revenue per active room, which is a key metric for hotels.
All right.
RevPAR.
RevPAR,
That's
yes.
what the kids call it.
Yes. That's what the analysts call it for sure. Vertiv is your last stock.
Yes, so this Vertiv, ticker VRT, maybe not as big a name as an NVIDIA, for example, but a major stock in the sort of AI infrastructure trade. They're down 8% today, almost 8%. It's sort of one of the second-order impacts of this Wall Street Journal report about OpenAI missing some of its own internal metrics. This company makes power equipment and cooling equipment. It gets 80% of its revenue from data centers, and its shares are up about 1,000% over the last 5 years. So when you have anything that calls into question the profitability of AI, the need for AI spending, that's going to hit a name like this, and that's why you see this weakness today.
All right, Matthew Griffin, thank you so much. We appreciate that. Matt Griffin, equities reporter for Bloomberg News. Back down in Washington, D.C., we saw King Charles and President Trump kind of do a military review where the U.S. military soldiers, sailors, airmen were assembled. Now they are back on the stage, the stage is set up outside of the White House. And fortunately, the weather's cooperating today, and President Trump is at the podium, so we'll see if he has any comments to make. It appears that he may has some comments coming up. So if so, we will bring that to you.
Absolutely.
Quite the pomp and circumstance. Down in Washington.
Yeah, a lot of dignitaries, as you mentioned. And of course, this comes before the bilateral meeting between the king and President Trump as well. For now, that meeting will be held behind closed doors. There's not meant to be press involved, but we'll wait to see whether there's a readout from the meeting or whether the president decides on the spur of the moment to invite the press in and make some remarks there.
Now they're having what I would characterize as a military ceremony, if you will. Looks like those are British redcoats from back in the day parading on the grounds of the White House. So that's quite impressive. And we have the president and first lady and the king and queen on the stage observing this ceremony.
All right, let's bring in Will Harris and talk a little bit about what else is happening in the markets right now, because we did get earnings from some of the big oil companies, not necessarily the U.S. ones, but BP coming out with results, and boy, they were pretty solid. Let's bring in Will Harris, Bloomberg Intelligence energy analyst. Will, is it as simple as rising oil prices means big profits for BP?
It's a little bit more complex than that, but the key element within BP's results was their oil trading, which they classed as exceptional. And so this is obviously downstream of the Iran war price volatility. Their trading unit has been capturing some of that volatility, and that was a big driver in the earnings beat, the significant earnings beat that we saw this morning. But we just caution that these trading beats, as we call them, are relatively lower quality beats, as you know, they are not necessarily repeatable. Although obviously a very nice little windfall for the share price.
All right, Will, we're going to have to stop it there. We have President Trump making some comments here. Will Harris, Senior Global Energy Analyst for Bloomberg Intelligence. Let's go down to Washington, D.C. right now. President Donald Trump is speaking.
Beautiful British day this is. And it really is. Your Majesties, members of the British delegation, friends, service members, and distinguished guests, welcome to the beautiful White House. Great honor to have you. Melania and I will never forget the spectacular honor Your Majesties showed us during our extraordinary visit to Windsor Castle last September. Now it is our tremendous privilege to host you, and you're going to have a wonderful short stay, but stay nevertheless. Then you're going over to Congress, and you're going to make a speech that's going to make everybody very envious of that beautiful accent of yours. Very elegant. He's a very elegant man. Here in the shadows of monuments to George Washington, Thomas Jefferson, honoring the British King, might seem an ironic beginning to our celebration of 250 years of American independence, but in fact, no tribute could be more appropriate. Long before Americans had a nation or a constitution, we first had a culture, a character, and a creed. Before we ever proclaimed our independence, Americans carried within us the rarest of gifts, moral courage, and it came from a small but mighty kingdom from across the sea. For nearly 2 centuries before the Revolution, this land was settled and forged by men, women who bore in their souls the blood and noble spirit of the British. Here on a wild and untamed continent, they set loose the ancient English love of liberty and the Great Britain's distinctive sense of glory, destiny, and pride. And that's what it is, glory, destiny, and pride. The American patriots who pledged their lives to independence in 1776 were the heirs to this majestic inheritance. Their veins ran with Anglo-Saxon courage, their hearts beat with an English faith in standing firm for what is right, good, and true. In recent years, we've often heard it said that America is merely an idea, but the cause of freedom did not simply appear as an intellectual invention of 1776. The American founding was the culmination of hundreds of years of thought, struggle, sweat, blood, and sacrifice on both sides of the Atlantic. Fate drew a long arc from the meadow at Runnymede to the streets of Philadelphia that ran through the lives of people born and bred on the British code that no man should be denied either justice or right. American patriots today can sing, "My country, 'tis of thee, sweet land of liberty," only because our colonial ancestors first sang, "God save the King." We see today a living symbol of this centuries-old bond, just a few dozen feet to the left where I stand. There, Her late Majesty, Queen Elizabeth, an incredible woman who I had the privilege of getting to know. Queen Elizabeth II, very, very special woman who is very greatly missed on both sides of that mighty Atlantic. Long ago planted a young tree. It was a very young and beautiful tree, and look at it now. It's tripled in size and tripled in strength, very much as our nations have even more than tripled. Like our nation itself, it was laid with British hands but grew in American soil. Today it stands tall and proud, reaching ever higher. And this morning it reminds us that the mightiest of trees, like the greatest of nations, must be anchored by the strongest and deepest of roots. In the centuries since we won our independence, Americans have had no closer friends than the British. We share that same root. We speak the same language. We hold the same values. And together our warriors have defended the same extraordinary civilization under twin banners of red, white, and blue. My wonderful mother, Mary MacLeod, was born in Stornoway, Scotland, the Hebrides, and that's what they call very serious Scotland. There's no question about it. Some places they say, well, it wasn't really Scotland. The Hebrides, that's real serious Scotland. That's where they had their greatest of warriors, the greatest of warriors. She came to America at 19, met my incredible father. We loved him so much. We all loved him. We loved her. We loved him, Fred, and they were married for 63 years. And excuse me if you don't mind. That's a record we won't be able to match, darling. I'm sorry. Just not going to work out that way. We'll do well, but we're not going to do that well. 63 years. And my mother, I just see it so clearly. She loved, and I told the king this, she loved the royal family, and she loved the queen. And anytime the queen was involved in a ceremony or anything, my mother would be glued to the television, and she'd say, "Look, Donald, look how beautiful that is." She really did love the family, but I also remember her saying very clearly, "Charles, look, young Charles, he's so cute." It's my mother. My mother had a crush on Charles. Can you believe it? Amazing how, I wonder what she's thinking right now. But beneath those beautiful flags, 8 decades ago, Prime Minister Winston Churchill and President Franklin Roosevelt famously met on a ship in the North Atlantic to outline a vision for the free world after World War II. That understanding of our nation's unique bond and role in history is the essence of our special relationship, and we hope it will always remain that way. The ship where the two great leaders met was called the Prince of Wales, the very title that His Majesty the King held longer than any other individual in British history, and he held it with great pride and respect. It's said that when Prime Minister Churchill first met this future king many decades ago, he was so impressed, he made the statement, "He is so young to think so much and so well." And the bust of your great Prime Minister rests proudly again in the Oval Office. We're very proud to bring it back. We brought it back. Throughout His Majesty's life, the world has witnessed that same thoughtfulness which first struck Britain's greatest Prime Minister. His Majesty's intellect, passion, and devotion have been long, really a blessing to the British people, but not only to his own country, but to the cherished bond between the United States and the United Kingdom. And I am very certain that it will continue that way long into the future. In a few hours, His Majesty will stand in the heart of the United States Capitol as the very first British king ever to address a joint session of the United States Congress. So he's going to be addressing Congress, and I'm going to be watching. I was thinking of going, but they said, I don't know, that might be a step too far. I would love to go. It's not supposed to be protocol, but I would love to be with you. But there, the direct descendant of King George III will speak to the direct successor of the very body that gathered in Independence Hall on July 4th, 1776. If John Adams and George Washington or the King's fifth great-grandfather could see that sight, they might be absolutely shocked, but probably only for a moment. Surely they would be delighted that the wounds of war healed into the most cherished friendship. Think of that very, very long ago difficult war, and yet those wounds did indeed heal into the most cherished of friendships, most cherished. They would be moved beyond words to know that the soldiers who once called each other Redcoats and Yankees became the Tommies and the GIs who together saved the free world as brothers in arms and brothers in eternity, and nobody fought better together than us. If they could see us today, our ancestors would surely be filled with awe and pride that the Anglo-American Revolution in human freedom was never, ever extinguished, but carried forward across centuries, across oceans, and across history until it became a fire that lit the entire world. So today we look back on 250 years. Let us remember what has made our countries the two most exceptional nations the world has ever known. And together let us go forward with even stronger resolve to carry on our sacred devotion to liberty and to the traditions of excellence that have been our shared gift of all mankind. Your Majesties, thank you once again for making this important visit. We are so honored. May God forever bless the United Kingdom, Great Britain, and Northern Ireland, and may God bless the United States of America. Thank you very much, everybody. Thank you. Thank you.
President Trump there addressing the crowd here at the welcome ceremony, the formal welcome ceremony for King Charles III and Queen Camilla. And of course, this takes place right before the two go in and sit down for a bilateral meeting. We're not sure yet whether the king will be speaking here. We do know that the king will be speaking later on to a joint session of Congress this afternoon at 3 p.m. The president referenced that, of course, saying that he will not be attending because it's not part of protocol, although he very much would like to do so.
Yeah, he did indicate that. So, but in President Trump's speech just moments ago, just some of the familiar themes of the special relationship between the U.S.
and his
England.
own heritage,
yes,
as well. Speaking of his mother, who's originally from Scotland, and how she had a soft spot for King Charles.
Yep, absolutely. So, and a soft spot for the monarchy as well. So, all right, the king and queen and President and Mrs. Trump are leaving the stage right now. So that ends that part of the ceremonies here. Let's get a little bit of a reset here. Should we do that?
Yeah, I think it's time for that. We do have a market in decline, at least for equities. John Tucker has our Bloomberg Business Flash. John.
All right, and this Bloomberg Business Flash, Scarlett, brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver information guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Well, you've been hearing about it all morning long, this report of OpenAI from the Wall Street Journal about missing some of its internal sales goals, fueling worries about AI spending by some of the other firms. OpenAI, not publicly traded, but of course you have some of their partners, Oracle, those shares down 3.8%. Then CoreWeave, right now those shares trading down just over 5%, 5.2%. We have seen a record run for chip stocks, but it's kind of in the rearview mirror at this point. The chip makers, NVIDIA, Broadcom, they are among the biggest drags in today's market. Lindsay Piesga of Stifel Nicholas, meantime, says economic growth in the U.S. is going to depend on the length of the war with Iran.
If we don't see the conflict overseas solved in the near term, that could continue to put pressure on the consumer, the backbone of the U.S. economy. And if the consumer does fall to the wayside, we could see real GDP fall sub 1%. Absolutely.
Right now, the S&P 500, 46 points lower. That's down 0.6%. The biggest decline in terms of the index. NASDAQ right now, the NASDAQ Composite Index down 1.2%, down 292 points. The Dow has actually just turned higher. It's been bouncing between gains and losses. Right now, 25 points higher. And crude oil, that is higher. Brent, the international benchmark, up 100, right now $2.75 a barrel at 111.01. And West Texas Intermediate 3% higher, right now 99.65 a barrel. And on that front, tangentially, the United Arab Emirates says it's going to leave OPEC on Friday. The UAE believes that the shortages caused by the war is going to require some degree of agility to respond to market demands without being constrained by OPEC or OPEC Plus. OPEC actually has, I believe they have a meeting coming up on Sunday. And this is a deal that's going to create one of the largest music companies in the world. Record label BMG buying Nashville-based independent music group Concord. These companies have been two of the biggest buyers actually of music catalogs over the last couple of decades. BMG works with country stars like Jelly Roll. I heard him. Yeah. Concord owns or administers the publishing catalogs for stars like Daft Punk and Daddy Yankee.
Yes.
Sorry.
More of that.
I've heard Daft Punk. I don't know.
You have.
Jelly Roll. I don't know.
Jelly Roll's country.
Oh, Daddy Yankee got all his albums.
I don't know Daddy Yankee.
They also oversee a catalog of Broadway music, including the songs from Hamilton.
Okay, that I've heard of.
We're really dating ourselves. We check the markets and other Jelly Roll right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Scarlett and Paul.
All right. Thank you so much, John Tucker. And just a reminder for those of our listeners who are joining us on YouTube, where we stream live, you can see right now the President and the First Lady with the King and the Queen of the UK. I believe that's the southern portico.
Could be. That's
yes,
the
of the White House. This is a photo opportunity, of course, and you can expect to see this across all the newspapers and all the magazines. Yep. And of course, this is a formal welcome ceremony for the King and the Queen in Washington, D.C. to the White House. The four will then go behind closed doors and will expect a bilateral meeting between the King and the President. For now, it's closed doors to the press, but there will be a speech given by the King later on this afternoon, Paul, to the joint sessions of Congress.
Right, and that will be a special event, so we'll pay attention to that for sure. As John was just reporting, in the markets, we've kind of got some red and green here. The tech stocks taking it on the chin today. The chat, the whole AI story, just coming a little bit of a speed bump here. Let's take a look at these markets. What do we do from here? Walter Todd, President and Chief Investment Officer and Managing Director at Greenwood Capital, joining us via Zoom from Greenwood, South Carolina, which I'm going to put kind of equidistant between Columbia, South Carolina, and Greenville, South Carolina. That's kind of where it is, northwest part of the state. Beautiful state of South Carolina. Walter, what are you doing with this market here? We had what I think a lot of folks would term a reasonable sell-off at the beginning to reflect the uncertainties of this war with Iran. But boy, the market kind of snapped back pretty aggressively here. What do you make of it all?
Yeah, well, good morning. Thanks for having me. Yeah, it's been a one direction move since March 30th, and you talked about the technology stocks. Semiconductors had 18 straight positive days up through last Friday. Of course, a couple of negative days here. So it seems to be a bit of a overreaction to me personally in terms of the recovery. I think it's really predicated on earnings, and earnings have been good. 82% of companies beating earnings, 77% beating on revenues. So far, so good on that front. But of course, we've got a huge day coming up Wednesday afternoon, Thursday afternoon, about 24% of the market cap of the S&P and 5 companies reporting. So I think we would need to continue for the market to continue to work, and maybe even not that is the case. We need to see earnings continue to come through.
What is your sense of how investors are positioned for this big market cap earnings day on Wednesday? I mean, these are consequential names when it comes to where the S&P 500 and the NASDAQ head, right? You've got Microsoft, Meta, Amazon, Alphabet, and Apple on Thursday.
Yeah, I mean, that's been the leadership. I mean, tech, broadly speaking, has been the leadership off the lows. Only 3 sectors have outperformed the S&P off the lows: technology, communication services, consumer discretionary, kind of the big 3. And of course, consumer discretionary dominated by Amazon. So we'll get a good look at that. So I think it seems to me like every single dip, even the kind of the lows in some of these semi names this morning were bought to a certain degree. And so investors seem, anxious to continue to put money into the market on any little pullback. From our perspective, for our clients, we have been taking some money off the table a little bit incrementally. So when you have these, for example, last week, Texas Instruments, we're fortunate enough to hold that in portfolios. The stock was up 20% in one day. We still hold it, but we pared back our exposure to that name. That's an example of the kind of tactical moves we think you need to make in this type of market.
So, Walter, I guess kind of late last year, kind of October, November, we saw the beginning of a rotation out of some of those big cap, high multiple names, maybe into some more value parts of the market, including some small and mid caps. But boy, is that a longer term trade here? Because we've had those tech names snap back pretty aggressively here.
Yeah, so the equal weight S&P versus the market cap weighted S&P at the wides earlier this year, to your point, the equal weight was outperforming the market cap weight by 6 to 7 percentage points. Today, that's less than 2 percentage points. So you've really seen some equalization there. But from our standpoint, we think having a broader, more diversified portfolio makes sense. You definitely want to have some exposure to those names. Clearly, they're market leaders, but we think that trade into down the cap scale, if you will, and into other areas of the market, like energy, for example, obviously has pulled back during this recent period. Healthcare has kind of been left for dead, no pun intended there, and we think there's some values that are cropping up in those areas as well.
So talk a little bit about those two sectors and what specific parts of it look attractive right now. Within energy, you can go upstream, downstream, or midstream, the pipelines. Within healthcare, you can really focus on big pharma or go smaller to the biotechs.
Yeah, it's a great question. So within energy specifically, we think the kind of the equipment and services areas, long-term attractive. There's obviously a lot of unfortunate damage that's been done to infrastructure. It's going to need to be rebuilt. Look for more oil, et cetera. So that's a good space there. And then the big integrated names, you get exposure to upstream and downstream within those names. Saw BP report, for example, today with very good numbers. And then on the healthcare side, we have a broad diversified portfolio within healthcare. So we've got exposure to some of the service names like a United Health, for example, but we've got exposure to biotech and pharma. Also, kind of the worst space in there has been medical equipment, and we do have some exposure there, but we think there's some real values kind of emerging within that space. So we would still, it's been a bad place to be currently, but we would not avoid it. We'd actually be putting more money into that area of the market right now.
Walter, what are you telling your clients as it relates to fixed income here? I mean, you consider 2-year Treasury, boy, 3.83%. You can clip that coupon. That's not a bad way to make a living. Or do you try to take some credit risk on top of that?
Yeah, so we do a blend typically within a fixed income portion of a portfolio. So we'll have, right now we're about 50% Treasury agency, 50% corporate. So we do, spreads have really tightened back in off the wides from when the war started in early March. So there's less value in corporates than there was, say, a month ago, but we still see some value there within the corporate space. And again, kind of that 3 to 4 to 5 year kind of duration is where we're targeting. And as you say, you can, particularly in a high quality corporate, you can still get 4.5 to 5% within that maturity range, which we think is a good complement to equities.
Before we let you go, Walter, what is the number one question that your clients are asking you?
Probably, how is the market at all-time highs given the backdrop that we see around the world? And honestly, I don't have a good answer for that, except to say that the market is really dialed in on earnings. I mean, I think that's really it. And so that's why it's such an important week and time period right now as companies report. That'll kind of dictate how we navigate through the rest of the year and certainly through the summer.
Walter, thanks so much for joining us. Really appreciate it. Walter Todd, he's the president and chief investment officer and managing director at Greenwood Capital here, giving us thoughts on these markets. Well, we just witnessed the formal welcoming of the King and Queen of the UK by President and Melania Trump earlier today, and they are in meetings right now, bilateral meeting between the president and the king, and then of course the king will be making a speech to the joint session of Congress at 3 p.m. Wall Street time today, which will be key. And then there's the state dinner tonight.
The state dinner this evening. So there's a lot going on. It's a packed agenda. We want to welcome Tiwa Adebayo. She is Bloomberg News reporter based in London to kind of give us a preview of what folks in the UK are looking for from this state visit. How high are expectations for the king to help at least smooth some of the ruffled feathers between the US and the UK?
I think expectations are really high in the UK. Just to give you a bit of context, these sorts of overseas visits are quite few and far between for the royal family of late. They've cut down the size of the monarchy dramatically. It's slimmed down, and we had some figures in the last couple of years showing that the spending on overseas trips has gone down dramatically. And that means there's really sort of this immense pressure to make them count when they do happen. Everyone in the UK will be aware of the perhaps challenges that the special relationship has faced recently. I thought it was interesting that President Trump referred quite heavily to Winston Churchill in that welcoming speech. He famously said that Keir Starmer is not Winston Churchill just recently. So there will be pressure and perhaps spotlight on the king to try and smooth over those relations. He's in that bilateral meeting with the president as we speak in the Oval Office. Perhaps they will be discussing the issue of Keir Starmer. Perhaps they'll be discussing that special relationship where the UK and the US can really work together, particularly as we see geopolitical tensions rising around the world.
Tiwa, what do you expect to hear from King Charles when he addresses the joint session of the US Congress?
Well, that speech has been written with the advice of the British government. Of course, the King will deliver it in his own tone. We do expect him to take a reconciliatory tone to really emphasize that the UK and the US need to stand together in defense of democratic values. We mentioned the tensions going on in the world. He's expected to really call for collaboration in the face of that. There are some reports that he could mention his sympathies after the attack we saw over the weekend at the White House Correspondents' Dinner as well. Of course, there were some questions as to whether or not this visit would even take place. Because of that, Buckingham Palace confirming over the weekend that things would go ahead as planned. So it's expected that the King will really use that speech as an opportunity to perhaps extend an olive branch and really to re-emphasize just how important that special relationship is. And perhaps, I think Keir Starmer might be hoping he'll do a bit of that legwork for him when it comes to that diplomatic relationship.
You mentioned that this speech that King Charles will be giving to the joint sessions of Congress was composed with contribution, with input from 10 Downing Street. I'm curious as to what the Prime Minister, the government would like King Charles to really prioritize as he delivers his message to the U.S.?
I think that Keir Starmer will want the King to really perhaps focus on the history of the relationship. You know, the fact that the UK and the US have this long tradition of shared goals. It's thought that the government really want to deploy the royal family where they can, and especially King Charles, to perhaps neutralize some of the maybe sort of negative sentiment that we've seen between the two nations of late. And it's thought that they're going to continue to put across that message of working together. The UK is at an interesting juncture when it comes to its standing in the world more broadly. Of course, we're a few years out of Brexit now. Keir Starmer thinking about whether or not to align himself and the country more closely with the European Union. Will that come at the expense of the relationship with the United States? So it's a difficult position to be in for the United Kingdom, and it's thought that bringing in that noble figurehead that we have in King Charles will make things a little bit easier.
Tiwa, thank you so much for joining us. Really appreciate getting your reporting. Tiwa Adebayo, reporter based in London for Bloomberg News. And again, a big trip for both our British friends as well as the U.S. And again, you know, trying maybe kind of just repair to a certain extent that it has been damaged, that special relationship between the U.S. and UK.
Yeah, and nominally this visit is for King Charles to mark the upcoming 250th anniversary of U.S. independence, and it's something that, of course, President Trump referenced in his welcoming speech to the King.
I have to learn what the term is for the. I remember as a little kid, I was like 12 for the bicentennial. That was easy.
Quattris, and I'm making words up now.
I have to go look it up, but it's not as easy as just saying bicentennial. Well, more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We're brought to you by Chapter. The average couple spends over $300,000 on health care in retirement. Want to know how much of that you could keep? Find out today in under 20 minutes with one free call to Chapter. Go to askchapter.org to get started today. So stocks right now linked to the build-out of AI infrastructure from the computing providers to the makers of semiconductors and power equipment used in the data centers. They are falling after that Wall Street Journal report that said OpenAI missed its own goals for revenue and new users. And also weighing on risk sentiment, the rise in oil with not much indication of an end to the war with Iran. Strong earnings, they have lifted the markets lately. Of the 170 companies in the S&P 500 that have reported so far, 78% delivered positive earnings surprises. And Darryl Cronk at Wells Fargo says April's stock rally is backed up by pretty solid fundamentals.
All you have to do is look at tech and financials being 45% of the market cap, almost half of the entire index from a market cap weighting standpoint. And tech earnings are growing at 35% for this quarter. And financial earnings, which doesn't get the same press that it probably should, are growing at 22% this quarter, right?
So the S&P 500, 52 points lower right now, down about 0.7%, 71.21 of the index. The tech-heavy NASDAQ Composite Index down 337 points. That's a decline of 1.4%. Dow's actually higher, 59 points higher. And doing some of the heavy lifting there, the results from Coca-Cola, those shares, they are up 6% right now. So the prediction markets where, of course, people like bet on anything or bet or, make predictions, I guess we'll say. That's being touted on social media as a lucrative side hustle for young people squeezed by rent and student loan bills. Oh, please.
Yeah.
In reality, so here are the facts. Most traders are losing money. This according to an analysis by Bloomberg. Over 100,000 accounts lost at least $1,000 on Polymarket.
So much for that side hustle.
Yeah, since the beginning of 2025. So
wait, who's making money then?
Bots.
Yeah. That sounds about right.
So anyway, we check the markets for you right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio. All right, we've got Geetha Ranganathan with us. She's the media analyst for Bloomberg Intelligence, and we're supposed to talk about Spotify, which we kind of will. Spotify reported their quarter results were good. Their guidance was a little disappointing. The stock's down 13%. There, I gave it to you. That's the analysis. What I want to know, Geetha, is AI and music. Is AI a threat to recorded music?
I think it is, Paul, and I think that is what we're kind of seeing reflected in, the Spotify stock market, stock price reaction today. So for Spotify, I mean, the way that they've generally framed this is that it is actually AI is going to be a positive for them because, you have AI tools that can create more personalization, that can enhance music discovery, that, can help with customization, can help with better ad targeting. So all of the things that they're saying the right things. The problem is that they will have to obviously undertake significant investments for all of that to actually happen. So we know that Spotify already offers one of the best user experiences. This is why they have a 35% subscriber share of the global music market. So there's no doubt that people really love their Spotify app, but they're going to have to really invest heavily. And I think that is what the street is getting a little bit uncomfortable about.
So how exactly is AI a competitive threat here? Do people then, is the concern that people won't subscribe to Spotify because AI can serve up music better and cheaper? Or is it that AI-generated music takes the place of what Spotify can offer?
Yeah, it's actually a combination of both, Scarlett. So yes, AI-generated music, and we've seen a number of platforms kind of emerge over the past few months. I mean, Suno, Udio, all of these are, yes, Suno and Udio, they're the big ones that have come up, which just offer you AI-generated tracks. And people are actually tuning into those, so they, if you just look at downloads, for instance, those have kind of been off the charts. And so there's obviously a very real fear that, these can become real competitors to the traditional DSPs, to a Spotify, to a YouTube Music, to a Amazon Music. But then I think the bigger threat for Spotify is that, remember, Spotify is a pure play audio streamer. It is up against all the other big tech companies that are already investing very, very heavily in AI capabilities. So you look at YouTube Music, you look at Amazon Music, or you look at Apple Music. These are all companies that are already going to be spending something like $700 billion in capital expenditure this year just on AI developments. Google, for instance, just introduced something called Lyria Lyria 3 in March, which basically allows for AI-generated music up to 3 minutes of a music track. And so this is a real risk for Spotify because, now the hyperscalers can really gain market share.
Wow. I just went on to the Suno, is AI for music creators, creating stunning original music for free in seconds using our AI generator. Make your masterpieces, share with friends, and discover music from,
Wait, is music then labeled AI generated or not? I don't get it.
It is, but people still like it because you can.
But there's no connection to anyone who's making it, is there?
Yeah, there has been actually. There have been a couple of AI generated artists that have actually topped some of the Billboard charts. So it's surprising, but they've done it. So it right now still very early, but it can become a big thing pretty fast.
And
hold on, AI-generated music cannot hold concerts, right? That's the other big part of it, right?
Unless you get a robot or something.
That's no fun.
See, I'm telling you, it's all coming. So, all right, so that's music. And now that brings you to probably the biggest fear in Los Angeles and Hollywood right now, which is AI-created just content in general. What are the big content creators, the Disneys of the world, the Paramounts of the world, what are they saying about that?
Yeah, so the really big thing that I think everybody is looking for is this big WGA contract, the Writers Guild contract that kind of comes up in a few weeks, actually, negotiations. And AI is obviously supposed to be a big key topic there. So far, we've not really heard any major rumblings. Yes, we've heard something from Paramount in terms of offering AI efficiencies. We've heard about Netflix talk about AI efficiencies, but nothing really significant or radical on the content creation side. So far, it's pretty benign, but all that can change pretty quickly too.
Geetha, got to get your take on what's happening between President Trump and Jimmy Kimmel. Jimmy Kimmel making some jokes before the White House Correspondents' Dinner that referenced Melania being a prospective widow. Jimmy Kimmel says it was a reference to the age disparity between the president and the first lady in light of what happened over the weekend. President Trump calls it despicable and now is calling on ABC to fire Jimmy Kimmel. Is this something that could pose a threat to the company, to Disney, to ABC?
Yeah, it's definitely controversial, Scarlett, and it's kind of a PR nightmare for the new CEO, Josh D'Amaro, who really doesn't have much experience in kind of navigating all of this Hollywood talent stuff. So, Bob Iger, the previous CEO, obviously had his fair share of these moments. He kind of knew what to do. We do have Dana Walden, who is the content chief and who actually helped navigate a very similar issue a few months ago when, we had a similar controversy with Jimmy Kimmel and the whole Charlie Kirk debate. She kind of obviously helped smooth things over. I don't know how things are going to play out this time, but obviously President Trump, again, with his whole rhetoric of, revoking ABC's license, and Brendan Carr, who is the FCC chair, also kind of chiming in. Obviously, lots of, noise, lots of political maneuvers here, but I'm not necessarily sure that anything tangible is going to happen, at least in terms of licenses. But again, it's a PR nightmare for them.
And what I'm noticing this time is we're not seeing any of the station owners groups like Sinclair Broadcast Group or Nexstar either drop his show or threaten it. So we'll keep an eye on that. Geetha Ranganathan, she covers all the media industry stuff for Bloomberg Intelligence out there. And there's always a lot of news out there. And the next big trade is kind of Paramount Skydance closing at some point soon, hopefully.
Time Warner shareholders said okay,
Yep,
so now we have to see how regulators go.
Regulators to sign off, and apparently that's not going to be a problem, so get that deal done. S&P 500 down 55 points, the Dow up 58 points, and NASDAQ down 355 points. That's 1.4%.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney. We are live here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube as well, so head over to youtube.com, search Bloomberg Podcast, or head over to Bloomberg. We'll find us there. You can find us there. All the live video, Bloomberg.com, as well as on YouTube as well. Coca-Cola reported some numbers today, some pretty good numbers. Stock is up 6% today on the news, up about 14.5% year to date. So some good numbers out of Coke. Ken Shea follows all the consumer finance companies for Bloomberg Intelligence, joins us now. Ken, talk to us about Coca-Cola. How was their quarter?
Yeah, hi, Paul. Coke's quarter was strong. You know, it's hard to characterize it in any other way, really. Organic growth was up 10%. Expectations were 7%. And it was a balanced performance also. It was not relying on price mix as much as they had been in the past. Volumes were up 3%, which is pretty good for this mature company. Results were also broad-based geographically and by product line. I think the key takeaway here is that it shows the company's ability to be agile during a period of low consumer confidence. You got a war going on. You know, a company that's in 200 countries is always going to have a pocket of strength and weakness. And this quarter showed that by far there's more positive things going on than negative here.
So unlike Pepsi, which has the snack business, Coke is pretty much pure play beverage company. Which one is more rewarded by the street? Which one do you think the street likes better?
I think generally speaking, the street has rewarded companies that with more focus and more focus, I guess is the right word. And Coke has always generated a higher multiple on the street. Also, food tends to have more problems when it comes to cost inflation. When you're a beverage company, particularly with Coke's business model, you can offset a lot of these inflationary pressures because you're offsetting it to third-party bottlers. So that kind of dovetails into probably your next question, which is how are they faring in this period of high commodity costs? Pretty darn well, I would say, because again, they get to push off the production of the finished product, the distribution, and therefore these are companies that are incurring high gasoline prices onto third-party bottlers, and Coke is not incurring them by far as much as they are.
What's we're now a year into these tariffs now. What is a company, a global company like Coca-Cola, what are they saying about how they're navigating tariffs? Are they kind of finding a new normal?
Tariffs are not really a big thing for Coke, again, because of its business model, where it pushes off, the procurement of a lot of materials to their bottlers around the world. And they're not immune to it. I mean, their aluminum, as a result of the tariffs, the aluminum costs are higher. That certainly affects the North America, the U.S. Bottling companies, gasoline prices, and so on. So it's a minor hit to Coke, but the margins were strong. And matter of fact, the operating margin widened in this quarter. 34.5% was the comparable number. I mean, that's almost like an Apple-like operating margin. This company's highly profitable. It's been resilient, and I think it's part of that relief. About what we hear about the macro environment is being reflected in the stock price today.
Yeah, I mean, they have, I'm looking at 2026, $17 billion projected EBITDA, and they dropped a lot of that down to the free cash flow line, about $12 billion. So that's pretty darn solid. Do we still have cola wars out there, Ken?
I would say, yeah, it's an inherently competitive business. You go down to the soda aisle, you see lots of different products by different companies. But having said that, I think high innovation is good for everybody because you're expanding the pie. So Coke talked about today about some of its innovation, cherry float, Coke, Diet Coke Cherry. This kind of mirrors things that PepsiCo and Keurig Dr. Pepper, for that matter, are doing. They're experimenting with innovative new flavors, bringing excitement to the category. And so I think that competitive spirit is good for the category as a whole.
As a kid, I'd be bummed out when my mom would buy the store brand cola as opposed to Coke or Pepsi. Is that still a thing out there?
Private label is not really a material threat. It serves a role in the marketplace, but I think many retailers are more than thrilled about having Coke and Pepsi on the aisles to bring customers in. And even if they don't make a big margin on that product, it brings traffic in where they can buy other things. And so I think any retailer that doesn't have Coke and Pepsi products are probably alienating a lot of consumers.
That's right. All right, Ken, thanks so much for joining us. Really appreciate it. Ken Shea, he's a consumer finance analyst for Bloomberg Intelligence, joining us via Princeton, New Jersey, where a lot of the BI folks are located here. Looking at the market here, we've got the S&P off 52 points. It's about 0.7%. A little bit of a pop in the Dow's, up about 80 points. But the real hit on this OpenAI growth concern story is on the NASDAQ, down 340 points. That's 1.4%. WTI crude oil, we are higher. We're up by $3.46, just below $100 a barrel. Brent crude up at $111 a barrel. So again, going the wrong way. We'll keep an eye on energy since that's been a big driver there. 10-year Treasury yields, we're looking around 4.35%, up a couple of basis points here. So we've seen interest rates certainly move up a little bit. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on SiriusXM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. Tom Keene writing in for a couple of quotes. He wants Bitcoin. We're down about 1.2% here, $76,000 per token. And the VIX up slightly, about 18.6, but then squarely below 20, suggesting not that much angst in the marketplace. We'll have more coming up. This is Bloomberg. Good morning.
From ABC News, I'm Michelle Franzen. Happening now, a royal visit to the White House. King Charles and Queen Camilla arriving for day 2 of their trip to the U.S., greeted by President Trump and First Lady Melania for a military ceremony and review of the troops. The president, in a speech, highlighted the historic ties between the two nations.
We speak the same language. We hold the same values. And together our warriors have defended the same extraordinary civilization under twin banners of red, white, and blue.
After holding bilateral meetings with President Trump, the king addresses a joint meeting of Congress and then attends tonight's state dinner at the White House. The Trump administration rejecting an Iranian proposal to reopen the Strait of Hormuz with a toll and push back talks on Iran's nuclear program. ABC's Tom Sufi-Burridge has more from Tel Aviv.
The Trump administration is betting that the pressure on Iran's economy, which was already in dire straits before the war, is going to be enough to really pressure the Iranians to the table and into concessions or even capitulation. And the Iranians appear to think that they still have cards to play in their stranglehold over the Strait of Hormuz. The pain that's inflicting on the world economy, pushing up energy prices and gas prices in the U.S., with the midterms just months away.
The investigation continuing into the attempted assassination of President Trump at the White House Correspondents' Dinner. Suspect Cole Allen charged yesterday. The Justice Department now demanding a federal judge lift his injunction, blocking the president's ballroom project.
An overnight filing written in the syntax and tone of the president's own social media posts accuses the plaintiffs in the ballroom lawsuit of suffering from Trump derangement syndrome and being, quote, very bad for our country. Government lawyers now insist the president needs the ballroom for his safety. But in pointing out the inherent risks of large-scale events in D.C., the filing also raises questions about whether the Secret Service can keep the president safe at any event outside of the White House.
ABC's Stephen Portnoy, you're listening. Opening arguments getting underway today in a case that pits 2 of the richest men in the world against one another.
Both Elon Musk and Sam Altman are expected to take the stand in this civil trial. Musk is suing Altman, saying he was tricked into investing in OpenAI as a nonprofit when Musk says Altman intended to turn the company into a for-profit business. OpenAI did just that last year and appears to be readying itself for a near $1 trillion IPO later this year. Musk left OpenAI in 2018. His SpaceX company is also expected to file a public offering before the end of the year. Mike Dubusky, ABC News.
A proposal for a new tax on billionaires advancing in California. ABC's Sophie Flay has details.
Supporters of a new tax on billionaires are celebrating, appearing to gain more than enough signatures to get the proposal on the November ballot in California. The measure would impose a one-time 5% tax on the assets of more than 200 billionaires living in the state, factoring in their stocks. art and collectibles, and their intellectual property.
Governor Gavin Newsom, along with Silicon Valley tech executives, oppose the proposal. Some movie lovers are apparently willing to pay big bucks for better sound and screens. Ticket prices at some movie theaters now hitting $50, and that doesn't even include popcorn and drinks. Regal Cinemas charged $50 for opening night tickets to the latest Dune movie. AMC adding a surcharge for some popular films. Michelle Franzen, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Today in Washington, the King's speech. Welcome to the Tuesday edition as King Charles blankets the nation's capital with a White House visit today. And yes, a rare speech to a joint session of Congress. It's only a few hours away. Will he influence the president's relationship with the UK's political leadership? Does he mention Iran or Ukraine? We'll get into all of it coming up with Bloomberg's Tyler Kendall, and we'll dig into the latest proposal or counter-proposal, whatever we call it at this point, from Iran when we talk to our geoeconomics analyst, Jennifer Welch. Speaker Johnson wants a vote on FISA tonight if he can get it past his own rank and file, and it's not looking great right now. We'll talk about it with our political panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us. And we start, as always, on Wall Street. Little up, little down, depending on where you look. We'll give it over to Charlie Pellet at World Headquarters in New York. Hey, Charlie.
Hi, thank you very much, Joe Matthew. Indeed, familiar story. We do have oil higher. Right now, we've got West Texas Intermediate crude trading just under $100 a barrel. 99.92 on WTI, surging 3.7%. Barrel of Brent, 111.33, up by about 2.9%. We are seeing a sell-off in tech giants. That is dragging down stocks as concerns resurface today about whether vast investments in AI will pay off. S&P right now is down 48, drop there of just about 0.7%. We've got NASDAQ down 313 right now, a decline of 1.3%, while the Dow is up 95, up by about 0.2%. Shares of Coca-Cola contributing to the gain in the Dow. Coke shares after earnings, by the way, up now by 6.1%. The VIX just above 18. We've got the 10-year 4.35%. Spot gold is at 45.86 the ounce, down 2.1%. And West Texas Intermediate crude up 3.6%, 99.93 a barrel. Brent 111.29. That is a gain of 2.8%. Lindsay Pieggs is chief economist at Stifel Nicolaus, and on Bloomberg surveillance this morning, she told us she is concerned about risks to the U.S. economy from the Iran war.
If we don't see the conflict overseas solved in the near term, that could continue to put pressure on the consumer, the backbone of the U.S. economy. And if the consumer does fall to the wayside, we could see real GDP fall sub 1%. Absolutely.
Lindsay Pieggs of Stifel Nicolaus. OpenAI is pushing back against those concerns over its sales growth, saying its consumer and enterprise businesses are, quote, firing on all cylinders. This despite a Wall Street Journal report about the AI startup missing internal targets. We're seeing a lot of artificial intelligence and AI-related shares falling after the Journal report. Case in point, Oracle now down by 3.9%. CoreWeave down almost 6%. And among chip names, Advanced Micro Devices down 4.1%, while NVIDIA right now lower by 3.1%. Again, recapping, S&P 500 index is declining by 0.7%. NASDAQ 100 index ahead of big tech earnings tomorrow, down now by 1.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Balance of Power continues now. Once again, your host, Joe Matthew.
All right, Charlie, thank you so much. With the sense of royalty in the air today in Washington, we welcome you to the Tuesday edition of Balance of Power here on Bloomberg Radio. If you want to see, you should actually get on YouTube today to get the program. Search Bloomberg Business News Live on YouTube, and you'll catch our live stream, because we've got a lot of great visuals coming out of the White House and a little bit later on from Capitol Hill as King Charles makes his way across both ends of Pennsylvania Avenue. It's an historic day here, they tell us, in the nation's capital. And the program, once again, is being produced by Cece Cherendoff, with us, backed by popular demand in New York, because producer James is gone, and we're not sure when he's going to be back. As I mentioned to you last week, America's producer is abroad, and we had heard that he was on assignment in the subcontinent, but now we're starting to get pictures of James. People are starting to spot him at various places, gas stations, bars and restaurants. Do you see him if you're with us on YouTube, is that James or Sasquatch? It's hard to tell right now. It's kind of like a game of Where's Waldo. There was another sighting in Las Vegas. I think it was Stadium Swim. I can't tell the picture. Look at this crowd. He's in the crowd. I have to pick him out. If you get to YouTube, back it up and you'll see what we're talking about here. James, as I mentioned, if you see him, don't approach him. Don't try to feed him. Just send a drink over if you can. CC and I are going to man the fort here in the meantime. I'll tell you something else, by the way. You saw that first pic of Bigfoot there. I was looking for James on the South Lawn when they went on the tour with the King yesterday. Did you see the beehive? We're peeking through the trees here at this beehive. That amazingly, I think this is pretty incredible that the President of the United States, Donald Trump, no fan of the Obamas, is showcasing on the first visit from the King Michelle Obama's beehive. This is from the Obama administration. Remember the garden kitchen? This is a whole Obama thing. I thought Republicans didn't like this. But now they've added this new White House-shaped beehive. They've added to the production that allows them to produce, I believe it was 250 pounds of honey a year. That's kind of cool. You guys ever heard of apiculture? I never heard about that before today. The science and practice of maintaining honeybee colonies. I learned so much living here and following the beat every day in Washington. Even Tyler Kendall is well-versed on apiculture. On this day that the royal visit takes place at the White House. You know how Donald Trump talked on the campaign trail about it? He said, I'm friends with kings and queens. And in fact, he is today. We had the anthems playing. We had the marches from the different military branches on the South Lawn. This is the real stuff, the pomp and circumstance that will resolve later in a state dinner. Here's the president from earlier today.
Our ancestors would surely be filled with awe and pride that the Anglo-American Revolution in human freedom was never, ever extinguished, but carried forward across centuries, across oceans, and across history. So today we look back on 250 years. Let us remember what has made our countries the two most exceptional nations the world has ever known.
Meanwhile, the King's sitting there saying, wait, 250 years, so it's all about you. By the way, the pool, White House pool, says the King's gift to the president, a framed facsimile of the 1879 design plans for the Resolute desk, which I think is still being resurfaced. Did the desk ever get back in the Oval after Elon's kid wiped his nose on it? They've got a different one in there now still, right? I'd like to get some news on that. They are, by the way, having their bilateral meeting today. I thought for sure they would let reporters in, if only for the photo op. You don't have to take a question. But I'm guessing the King maybe didn't want that. You know, we're told frequently, well, at least this week, that the King is not consumed with and will not comment upon day-to-day politics. But he might mention Iran and maybe Ukraine when he speaks to Congress later. Tyler Kendall's been preparing for this day. She's ready to receive the King and the Queen and is with us right now. Bloomberg Politics and Washington correspondent. Great to see you. You're heading back over there a little bit later on. They're behind closed doors right now. Is this a get to know you? Are they drinking tea, or are they talking policy?
Well, probably a little bit of both, but more likely the latter, and that's why it's probably going to remain closed. There had been reporting that Buckingham Palace wanted this to be behind closed doors because
I believe that.
We know that technically this is a visit to mark 250 years of the U.S. declaring independence, but of course the underlying thread that we can pull on is that there have been rising tensions between the U.S. and the U.K., and this is a visit seen as maybe helping to solve that rift between President Trump and U.K. Prime Minister Keir Starmer. In fact, President Trump alluded to that himself. He told the BBC in an interview last week, quote, absolutely, he thinks that it could help to repair the rift. So this isn't necessarily a secret that the King's visit is intended to help maybe get this a little bit more on smoother ground.
A preview of his remarks, the King's remarks today by Buckingham Palace, brings forth the talk of reconciliation and renewal. I love a good alliteration. Two countries have always found ways to come together is what the king will say, and what he will call one of the greatest alliances in human history. That's stuff you expect. But will he talk about Ukraine? Will he talk about geopolitics at all? We're told that he will specifically reference NATO and the AUKUS nuke deal, so why not, right?
Right. I think that it is expected, though he's not expected to speak about it in totally political terms,
Understood.
but by the standards of what we typically hear from the royal family. This is supposed to be a little bit more direct than normal. So, as you mentioned, the military alliances that President Trump has threatened to pull out of, not necessarily AUKUS, but of course NATO, amid the tensions in the Middle East. And that's actually really been a subject of conflict between him and UK Prime Minister Keir Starmer, because the UK hasn't met the US's demands when it comes to Iran, including deploying assets to the Strait of Hormuz, and then how that translates into what that could mean for other military alliances, like, of course, AUKUS. The reporting does indicate that he will touch on this. He also will likely touch on the planned attack over the weekend at the White House Correspondents' Dinner, according to our own reporting. So perhaps lending a note to the president there. I'm sure you picked up on this on President Trump's remarks that we already heard earlier today, where he really praised the bond between the two leaders. He himself said that he wished that he could be there in the chamber, but he's not going to end up going. This is just for both chambers of Congress, but is considered to be historical. No other royal leader has done this since King Charles' mother did in 1991.
Way back in the last century. So so 35 years. So it's a big deal when this takes place at 3 o'clock. It's still 3 p.m. Eastern time. If you want to see it here or hear it on Bloomberg, it should be kind of fascinating. This is picture the same room. It's a joint session of Congress. Imagine like the president at the State of the Union, but in this case, it's the king. And we'll be, they're going to be watching everything from what color socks he has on to, whatever he might be saying to try to read tea leaves and get through this. Did you try the coronation quiche yesterday? Did you get the quiche?
I didn't get the quiche.
You didn't get the quiche? I didn't either.
Get the quiche.
They had this garden party at the British ambassador's residence. The idea of Ted Cruz eating quiche alone, I feel like, is news. But that was the kind of the first stop. Today, it's the White House again. They're in there right now, and then they'll go up to the Hill later on. Tyler, we're going to talk to our colleague Jenny Welch in a minute about everything that's coming out of Iran today. And the president, before the king arrived, actually truthed about it. Iran has just informed us they are in a state of collapse. I can't imagine how that message was delivered exactly. They want us to open the strait as soon as possible. We do know that the White House is cool on this most recent peace proposal, right?
Yeah, so diplomatic progress at the moment appears to be halted. Within the last couple of hours, CNN has been reporting that Iran is going to submit a revised proposal to Pakistani mediators, since the reporting has indicated that the White House doesn't really love what's been put on the table, which essentially would be almost like an exchange that we could potentially see the Strait of Hormuz reopened if the U.S. drops its military blockade when it comes to the waterway, but also maybe make some other concessions. According to Iranian state media, Iran wants the U.S. to pledge to never attack it again, to give compensation for damages, to set up a legal framework for the Strait of Hormuz, but not to touch the nuclear issue yet. And the administration has made very clear that that needs to be part of the dialogue now before they agree to any sort of deal. So we'll see what ultimately comes back, because President Trump did meet with national security advisors yesterday, and the consensus is they don't love what was put in front of them.
This is why oil prices have been responding. Tyler, you're going to head over to the White House. We'll see you there in our next hour. Tyler Kendall, live in Washington. We'll talk more about the gift that the president got from the king, and we'll spend time with Jenny Welch next here on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got a major sell-off in tech stocks underway. The Dow higher, S&P, NASDAQ 100 index, Russell 2000, all moving lower. A sell-off dragged down stocks as concerns resurface over whether vast investments in AI will pay off. The Dow holding on to gains after Coca-Cola earnings, up 88 points right now on the Dow, up by 0.2%, but the S&P is down 47, a drop there of 0.7%. NASDAQ now down 311 points on the NASDAQ Composite Index, down 1.2%. And ahead of major tech earnings tomorrow, we've got the NASDAQ 100 Index down by 1.3%, with our Mag 7 Index lower by 0.6%. The VIX below 19 with a 10-year 4.36%, the 2-year 3.84%. Gold at $45.82 the ounce, down 2.1%. West Texas Intermediate crude 99.75 a barrel, up 3.5%. Barrel of Brent now above $100, $111, up by 2.7%. After earnings, we've got Coca-Cola shares surging 6.3%. Its focus on smaller sizes is paying off with cash-strapped consumers as the world's largest beverage maker boosted sales last quarter by more than expected. So again, Coke up by 2.3%, rival PepsiCo up by 2.4%. And General Motors has raised its full-year profit forecast, but says the war in Iran is fueling higher than expected costs. GM shares down 1.9%. Other automakers lower as well. Ford down 1.6%. Stellantis down by 1.9%. Again, recapping. S&P 500 index down 0.6%. NASDAQ 100 index down by 1.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
All right, Charlie, thank you. Big day in Washington, and glad you're with us here on the Tuesday edition of Balance of Power as the King Charles will make his way from the White House to Capitol Hill in a couple of hours' time for a rare speech, as we've been reminding you, to a joint session of Congress. We got word on the gifts. That's part of the deal here, right? I mentioned to you the king gifted to the president a framed facsimile of an 1879 design plan for the Resolute desk. It's pretty cool, right? They're redoing the Resolute desk thanks to Elon's kid right now. But in return, now I've learned, to complete the story here, the president gifted His Majesty a custom facsimile of a letter written from John Adams to John Jay in 1785. But indeed, the price of gas today is what matters at $4.17 in average nationally, which means half the country's paying more than that. And the president on Truth Social this morning, curious, I don't know if this came in a call or a letter or what, but the president says Iran has just informed us that they are in a state of collapse, in quotation marks. Presumably they said this. They want us to open the Hormuz Strait, he says, as soon as possible, as they try to figure out their leadership situation, which I believe they will be able to do. Exclamation point. Thank you for your attention to this matter. Exclamation point, signed by the president. Now, this all comes as the president gives a thumbs down to the latest peace proposal from Iran to reopen the strait, set up a system to end the blockade and deal with the nukes later, and that's obviously a non-starter, as the president said enough times that Iran cannot have nukes. So this continues. Oil prices keep rising. Did you hear what Charlie said? Crude prices in New York just shy of $100 a barrel, and we were in triple digits this morning, up a little more than 3%. Brent is up a little less than 3% at $111 a barrel. These numbers are not sustainable. I think we've already established over the past 7 or 8 weeks. And so there's a question about what do we do with the oil in the ground here? Are we going to have to start closing wells? Because Iran has started loading oil onto tankers in the Gulf, and they, of course, cannot get out. There's great reporting by Bloomberg today. Tankers laden with Iranian oil. I love that term in this case. Clustering off of Chabahar, which is a port in Iran just outside the Gulf, but just shy of the blockade line. About 6 to 8 of these super tankers idling in the water because they can't put the oil anywhere else. They're in some cases putting it into barrels and putting it on trains. They take a train to China here, but at some point they're going to have to start closing wells. And so the hope within the administration is they just keep turning the screws here. and seeing if we can outweigh Iran when it comes to the Strait. Jennifer Welch is a specialist in this, as you've heard from Jenny many times here on the air, and she has a whole team in our newsroom dedicated to observing and solving and projecting these very issues, projecting solutions to these issues, and trying to understand what the impact will be in our economy. It's one of the coolest things we have here in our Washington bureau is the Bloomberg Economics Geoeconomics Department. Think Becca Wasser, Adam Farah, all the smart folks we have from that group work for Jenny Welch, and she's with us right now, our chief geoeconomics analyst. It's great to see you. Welcome back. Are we getting closer to an inflection point here where Iran has to do something different?
I think both sides are waiting for the other to blink. Both sides are hoping that the pain is going to reach a threshold where they have to compromise. You know, for Iran, it's looking at the United States and noting, as you did, that gas prices are rising, popular disapproval of the war is rising. President Trump is facing midterms later this year and hoping that he'll blink. President Trump is probably looking at other things. He's looking at the opportunity for the U.S. to export more of its oil and gas. It's looking at the stock market, which has held up fairly well, considering the Strait of Hormuz has been closed for almost 2 months now.
Yeah. Wow.
And he's looking at what he sees as political fracturing in Iran. He's looking at the economic pain that they're under and hoping that they're going to blink. But I think the reality is we don't even know if talks are going to be happening again. We thought they were going to happen over the weekend. They got called off. Both sides still seem very far apart on what would be the key terms of a deal. And until you see some wiggle room there, it's hard to imagine them reaching something that's going to return the Strait to anything that looks like normal.
So to think that we are on the verge of negotiators getting on airplanes on Friday, and we now have no idea when talks might occur, what does that tell you about where we are in this process?
I think it tells me that we could be in a state of limbo for quite some time.
As opposed to going back to a military action.
Now, that I think is a key question, because President Trump does have this escalate to de-escalate doctrine that he's employed, including with this blockade. And we see U.S. military assets continuing to flow into the region. Obviously, everything that was there already is continuing to stay there. That gives him a lot of options. And so I think there is this question of when does his patience, for lack of a better term, run out? And does he seek to exercise that leverage? He's threatened, again, to resume his threatened strikes on power plants and bridges in Iran. But he had also unilaterally extended that ceasefire for an undetermined amount of time. So I think what's key to watch here is his statements and kind of body language over, does he actually start to feel under pressure and like he wants to really push them to the negotiating table? I'm not seeing that in the last 24 hours, but things can always shift quite quickly.
Is there some truth to what he said? I can't imagine that Iran is projecting that it's in a state of collapse, but is it?
I don't think that they would call and tell him that. I think there's a grain of truth here, right? Which is that, yes, Iran has suffered many of its senior leaders being killed in U.S. and Israeli strikes, but the systems moved very quickly to replace them. Yes, command and control is probably fractured, in part because of security measures the regime has taken to protect people who have survived those strikes and their successors. And so communication is probably more challenging. We think the supreme leader, for example, has probably been significantly injured, and so it's not clear how communication with him is going. And it's probably fractured in the sense that there was always different factions in Tehran, but now with a new supreme leader and with the Iranian Revolutionary Guard Corps especially being empowered, that factional fighting is probably shifted in a degree. The IRGC is probably exercising a lot more influence over even diplomatic decisions and negotiations than they might have been in the past. That probably certainly does make figuring out who you're negotiating with and whether they actually have the capital to make a decision more difficult. But at the same time, some of this is just an exaggeration of trends and things that anyone who dealt with Tehran before would know.
Okay, well, so is that a reason to not send Jared Kushner and Steve Witkoff back to Islamabad? Do we need a professional diplomat to pursue that role?
Well, I think that leads to a question of, especially if you're having a negotiation over very technical nuclear issues. And this was debated earlier on before the war began when Steve Witkoff was leading the negotiations with the Iranians. And there's reporting out there suggesting that maybe it was a misunderstanding of some technical concepts that led to a breakdown in those talks. I think that is certainly a question that is out there. That being
Isn't that inherently dangerous? I mean, for someone who works in your world, that
that's how bad things happen.
That is how bad things happen. And these negotiate, especially over something as complicated as technical issues, and especially with a partner like Iran, where the frictions, the history, the scar tissue, and the differences are so major. You look at something like the 2015 nuclear accord, that took years to negotiate, and a lot of shuttle diplomacy with very, very smart people.
Yes, right. So if we're projecting months then here of potentially $100 a barrel, maybe more, $4 a gallon gas, you're tasked with figuring out what that means for our economy. How many points are we shaving off GDP? Could this force a recession? We're seeing incredibly strong earnings in this earnings season that we're in now. Does it bring that to an end?
The remarkable thing is that actually oil markets in particular and the U.S. stock market have not reacted in the way that we would have expected them to, thinking about how long the Strait of Hormuz has been effectively closed for. I mean, if you had told someone 3 months ago what happens if the Strait of Hormuz is closed for 2 months, you would have expected much higher oil prices than what we're seeing today.
A global recession, right?
Global recession. Now, the U.S. is a little bit more sheltered because we're a net energy producer, but you look elsewhere around the world, especially at Asian economies that are heavily dependent on supplies coming out of this region, and the pain is already quite sharp, and it's going to get sharper now that people have used up reserves and there's no more or much less at sea to pull from.
Well, so, okay, now we've been talking about the potential for the expectation for physical shortages. First hitting the UK, rolling through Asia. Are we almost there?
For the global economy, yes. I think certainly for those Asian economies, probably in the next week or two,
we're hearing countries run out of jet fuel.
Yes, jet fuel. Even places like India, where cooking oil is a really important good, and obviously one that everybody relies on, not just businesses, but a lot of individual customers. You're likely to see those pain points really start to sharpen over the next few weeks.
Cooking oil, something people don't talk about, and of course we remember the fertilizer impact, helium, other essential ingredients to manufacturing that are all being held up. Is there a point to which this means recession?
I think this could lead to certainly a dip in global growth and higher inflation in many economies, especially the more energy-dependent ones. The U.S., again, will be a little bit more cushioned, but also some of these effects are going to be future forecasts. So you mentioned fertilizer. Farmers don't have fertilizer. They're not planting as much this year, which means harvests are going to be a lot smaller next year. And that is on top of, recall, the Russia-Ukraine war, which took a lot of agricultural exports offline. So this is just going to be compounding effects that we are already seeing in the global economy from U.S. tariffs and other structural shifts. And I think, yes, put global growth on a slower trajectory than we would have expected before the war, and one that's likely to have lasting repercussions, even if the strait were to reopen tomorrow.
Is there any world, he asks you with 30 seconds left, where President Trump, President Xi have their meeting in a couple of weeks and figure this out together, using China to pressure Iran to the table?
I think there is a significant chance that China could play a role in this, as they may have played in the initial ceasefire. Yes, and I think that is something President Trump is
he
hoping.
banking on this, right?
I think he is hoping, and from Beijing's perspective, it does want the war to end, but it's also upset at the U.S. blockade.
All right, keep that in your pocket. What Jenny just said is incredibly important, and when that bilateral meeting takes place, when the president goes to China, it's what everyone will be talking about. Let's hear it for geoeconomics at Bloomberg Economics and our friend Jenny Welch. Thank you, Jenny, for the analysis. Our political panel is up next, only on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. Oil higher, stocks lower. In fact, the S&P 500 index right now trading very close to session lows. We're down 53 to 7120. That is a drop of 0.7%. A sell-off in tech giants is dragging down the market as concerns resurface over whether vast investments in AI will pay off. The Dow, however, higher. This after Coca-Cola beat estimates. The Dow up 50 now, up by about 0.1%. We do have shares of Coca-Cola advancing. In fact, Coca-Cola shares up now by 6.1%. NASDAQ is down 332 points, down 1.3%. Again, the S&P keeping it all in context, down 0.7%. The VIX below 19 with a 10-year at 4.35%. Gold down almost $100 the ounce to $45.85, down 2.1%. West Texas Intermediate crude holding below $100 at $99.67, up 3.5%. Barrel of Brent, 110.72, up now by 2.3%. The Senate votes tomorrow on Kevin Warsh, President Trump's nominee to succeed Jay Powell as the next Fed chair. So what will be on Warsh's to-do list at the Fed? Robert Kaplan is former president of the Federal Reserve Bank of Dallas. He's now vice chair at Goldman Sachs, and he was a guest this morning on Bloomberg Surveillance.
He's going to accelerate, in my opinion, and work closely with Mickey Bowman to accelerate, move along bank deregulation, particularly tailoring for smaller banks, which they're still in the process of trying to do. He's going to work more closely. We know that with Scott Bessent on the balance sheet.
Robert Kaplan, former president of the Federal Reserve Bank of Dallas, now vice chair at Goldman Sachs, interviewed on Surveillance. An earnings miss at JetBlue, but shares are moving higher. JetBlue up now by 2.9%. Wall Street was able to look past the miss due to JetBlue's strong demand commentary, with the company noting trends strengthened as the quarter progressed. Among rivals, United Airlines down 2% today. American down by just about 0.4%. Delta down 1%, but again, JetBlue up by 2.9%. Recapping, S&P lower by 0.8%. West Texas Intermediate crude surging to $99.67 a barrel, up by 3.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
All right, Charlie, awfully close to $100 a barrel again in New York. Brent is looking at 100 in the rearview mirror. We'll bring back Charlie in about 20 minutes with more on the markets here as we keep our eyes on Capitol Hill. The King will be speaking a couple of hours from now. 3 p.m. Eastern is the start time to the joint congressional address. And we're watching the White House for any news on Iran, having thrown back, it seems, to Iran the most recent peace proposal. Update, by the way, on the Resolute desk. I stand corrected. It's in the Oval. Just want to make that clear. This was, after the King gave the president a facsimile of the design of the famous Resolute desk. He did remove it, remember, after the incident with Elon's kid in February 25. It has since been returned to its prominent position, reports USA Today. During the short refurbishment, he had the C&O desk in front of him, of course, famously used by President George H.W. Bush. So they wiped the musk off the desk, and I guess it's back where it should be. Our political panel is also standing by for the speech. The King's at the White House right now, by the way, meeting with the president privately. Now, you've seen this routine. If you're with us, I mean, you could probably talk about it just as easily as anybody. There's a TikTok. There's kind of a turnkey, right? You get the roughly 11:30 arrival from the world leader. Then the president brings them into the Oval Office, probably tries to embarrass them in front of, well, it depends on who it is. There may or may not be a state dinner later. Then they go behind closed doors. They have lunch and all the rest of it. Different today. The King not interested in having a gaggle of reporters spray questions and yell, and so there's no press allowed, and the meeting is closed door. They're a bilateral meeting in which they could be talking about all kinds of stuff. Maybe it's small talk. Maybe they're talking about hobbies, talking about horses. What do they have in common? I don't know. They also might be talking about Iran and Ukraine and Keir Starmer. And there are questions about exactly to what extent the King might acknowledge geopolitics
and the tensions between our two countries when he speaks later on. There was some reporting on this, that he will talk about reconciliation, as I mentioned a little bit earlier. Reconciliation and renewal, the theme of the speech. But he's also supposed to mention NATO. That's a tough one for the president, right? The AUKUS nuclear defense deal. And yes, the war in Ukraine. Even as he takes the long view, the king is said to not be consumed with or comment upon day-to-day politics. But this could be an important address. Sometimes messages can be delivered in very subtle ways. It's the nuances, for once, that Washington will be paying attention to. How about our political panel? We bring them in now, I'm glad to say. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are both with us. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick is partner at Stone Court Capital and our Republican strategist. What do you think they're talking about behind closed doors, Rick, and how political might be that conversation?
Well, my suspicion is that President Trump is being very political because he's just a political animal. I don't think there's any non-political bone in his body. And the king, who's been trained since birth to not be political, is probably desperately trying to figure out how to not get sucked into those conversations. It would be a fascinating conversation to watch, historical in its own right. But my assumption is probably half of it will be fun chat about previous experiences with the president and his mom, and other things that the stories that King Charles can tell the president that might be entertaining and informative. But I must say, I got to say one thing about this gift thing that you talked about earlier. If anyone looks at what the letter was that John Adams sent to John Jay, it was basically that America has to rely on itself and not expect any goodwill from England. I mean, I couldn't believe that that was our gift to the Brits.
Jeannie, I guess it's on brand. I don't know. Does this meeting make Keir Starmer or bring Keir Starmer a little relief, bring him back into the fold here at the White House? Does it change our relationship, or has the president decided there's the political leadership, I'm not dealing with them, I'm a royal guy, and I'm friends with the king?
Well, Joe, first of all, I thought you were going to be using a British accent the entire show today, so I'm still waiting to hear this. And by the way, we do know one thing we're talking about. The Daily Mail had a report today that the king and president may be like 15th cousins or something. And you know, I watched Truth Social when you can't, Joe, and the president posted and said he was very excited about this. So he may or may not raise it with the king. But, you know, we may all be really related to the king if you go back that far.
Well, I guess so, huh?
Yeah, I don't think Keir Starmer is sweating this much, at least not based on what he had to say yesterday when he said publicly to the British people that I will never drag you into a war that is not in the interest of the British government, the British people. And so, you know, you don't get the sense that Keir Starmer is sweating this very much. Let's not forget the animus coming from Donald Trump to Keir Starmer has raised his profile in a way it was pretty low prior to that. So he has benefited in the polls from this little feud, or the tension, I should say, with the president. And he seems to be milking that. And of course, to Rick's point, the king's charge here today is to go into the White House and in private try to make headway in terms of restoring and, as you said, revitalizing this relationship. And the king is schooled at that. And I don't think the king is going to be shy about that. By all accounts, behind closed doors, this is a guy who knows how to make this case. They just don't want cameras and photos and things like pesky reporters there recording that. So it's a violation of his constitutional rule.
Well, you wouldn't want to deal with us if you came to the United States, I'm sure. What'd you guys make of President Trump? He's speaking there on the South Lawn about how his mom used to always watch the royal stuff on TV. That's how he fell in love with the whole culture. And she thought that Charles was so handsome. He said that his mom had a crush on King Charles. They're walking around the Beehive. Rick, is Washington obsessed with royalty still? I knew we fought a war to get away from it, but to see Ted Cruz eating coronation quiche at the ambassador's residence yesterday is really making me wonder.
Yeah, I suspect there weren't very many people who said when they got an invitation to go to the embassy to see the king, oh, why would I do that? We beat those guys back in the 1700s. No, it is an Anglophile town. And I must say, I'm particularly interested in the greatest Anglophile of all in Washington is Representative Tom Cole, who is the appropriations chairman. It's his birthday today, and he has a PhD in British history, and he is the biggest Anglophile of the day, and he gets to host the king in his chamber. I mean, it's an amazing coincidence.
I saw a tweet about Cole. Indeed, a PhD in British history. Quote, "I'm not allowed to smoke in my office," he said, "either today or tomorrow, Rick. It's out of respect for the king. Not by order of the king. It's by order of the speaker." That says something if he's not smoking in the office, doesn't it?
Yeah, that's going to disappoint a lot of other members who are probably looking for a good cigar today after the king's visit.
All right. So, Jeannie, how does the president turn this maybe into a benefit? He's got the king back at the White House later on today, and you know how it goes. There's a state dinner. There's going to be a toast. This is the kind of stuff, you know, that gets in People magazine, is on the Twitter feed. People are going to see this whether or not they're interested in politics tomorrow. Is this an opportunity?
It absolutely is. And listen, the president is off to a good start. He was succinct. He stayed on message by all accounts. He was, lauding the royal family. We know, back as you mentioned, to his mother, he loves the royal family. So he's off to a good start on that. I think the real challenge here is, from a policy perspective, does this change anything long term? And of course, you mentioned a litany of things that the king may talk about in Congress. Congressman Ro Khanna is also adding to that list that he may have a message for the Epstein survivors. And it's unclear if he will or if he won't. Wow. But that's, of course, something that could rankle President Trump, perhaps. I'm not sure. So, we have a lot to look forward to in that speech. And then, of course, there's the Financial Times reporting that the British ambassador, putting a recording out today of the British ambassador from earlier last year, I think it was, saying that the only special relationship between the U.S. and another country is the relationship with Israel, not the U.K. And the British ambassador is walking that back a bit. But these are some of the tensions, along with the tariffs and the Iran war, that you wonder, for all the pomp and circumstance over these 4 days, are they really able to make great headway in a long-standing relationship like this?
Mm-hmm. Boy, there's a lot there, and we know how pleased the president was to hear references to Epstein on Sunday in his interview with CBS. I don't know, Rick, it's been a couple hundred years here, but how did it make you feel to see redcoats on the ellipse on the South Lawn today?
It's a scary feeling to see the Brit invasion. Once it was the Beatles, now it's the British redcoats. But it makes my heart feel good that I can always look back when General Charles Cornwall surrendered to Washington to end the British tyranny over the states. And that's what that reminds me of.
That's fantastic. I don't know. I guess it reminds us of our long history here, Jeannie. I'm pretty sure they burned the house down last time we saw that, right? Didn't they burn down the White House? That's not going to happen today.
They did, and let's hope not. And of course, people are remarking on the irony, Joe. We kicked out a king to gain our independence, and now many of us are looking at a king to come back and sort of reunify us. So there's a bit of irony with what we're seeing here 250 years later.
It's pretty amazing. We're going to carry this speech. Apparently, he will speak for 20 to 30 minutes or so. And he's going to be up in New York tomorrow, Jeannie. Does New York stop down for the royalty stuff the way Washington does?
Not quite the same way, but Joe, I would if I was invited to see the king, which I am not. So, but yeah, New York should.
Listen,
everybody should.
I don't know how you think I felt that to learn this morning there were 400 people on the list at the British ambassador's residence. Who wasn't at this thing other than me? I thought Michelle had a lock on this, but boy, I'm going to find out who else was in this bureau at that party. Things happen when I'm in this studio I never hear about. Rick Davis and Jeannie Shanzano, of course, will stay with us. We've got our best together today, and our panel will be back in our second hour as we welcome our global television audience
And Kaylee Lyons, of course, joins the conversation. The speech is about, 2 hours away here from the king, of course. In next hour, we're going to spend a little bit more time on this. The latest from Iran with a proposal that the president just said no to. And Florida redistricting. We're still watching the math on this. After Virginia got its house together, or not, depending on how you look at this, Ron DeSantis might have the last laugh. We'll have all this ahead right here only on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lyons.
The King's speech in Washington. Welcome to the Tuesday edition as King Charles prepares to address a joint session of Congress just a couple of hours from now following a royal visit to the White House. I'm Joe Matthew alongside Kaylee Lyons in Washington with big questions, Kaylee. about to what extent the king might go to in acknowledging geopolitics today.
Yeah, typically there is some separation between the monarchy and everyday politics, but at a moment like this one, especially as we're seeing a fracture in what has been described as the special relationship between the U.S. and U.K. politically, how is the king potentially going to talk about that in veiled terms, perhaps, when he addresses Congress later this afternoon ahead of his state dinner at the White House this evening? A lot of pomp and circumstance taking place, which we know President Trump tends to be a fan of.
That was quite the arrival ceremony this morning on the South Lawn for sure. And we're going to have the latest on this from Bloomberg's Tyler Kendall. She's at the White House, and we're going to talk to Bloomberg's Ed Ludlow, who has breaking news and an important story that's going to shake the world of AI when this is released just a couple of moments from now. Kaylee, we've got a busy hour ahead.
Yeah, and it's AI and demand for it and concerns about it that's shaking markets today. You're seeing that with some serious downward pressure in the tech space. So let's get a check on that now as we turn to Charlie Pellet up in New York. Hey, Charlie.
Well, hello there, Kaylee. Indeed, the Dow higher, S&P, NASDAQ 100 index, all trading lower. We are looking at a sell-off in tech giants. Let's get right to the numbers here because we've got NASDAQ lower now by 293 points, down 1.2%. NASDAQ 100 index down 1.3%. All of this with the S&P down 48, drop there of 0.7%. The Dow, though, holding on to a gain right now of 25 points, up by about 0.1%. Concerns are resurfacing over whether vast investments in AI will pay off. The VIX below 19, the 10-year 4.35%, with the 2-year 3.83%. Gold down $88 the ounce to $45.93, drop there of 1.9%. And a surge in crude. We're off session highs, but still looking at WTI 99.29 a barrel, up 3%. Brent 110.44, up now by 2%. The United Arab Emirates is leaving OPEC, dealing a blow to the group and its leader, Saudi Arabia, as the global oil industry grapples with the massive supply disruption caused by the Iran war. We are seeing oil majors in the U.S. trade higher. ExxonMobil up 2.2%. Chevron now higher as well by 2.2%. ConocoPhillips up by just about 1.7%. So again, recapping here, the Dow higher, S&P, NASDAQ both declining. NASDAQ 100 index down 1.3%. S&P right now down by 0.7%. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you very much. As Charlie was just running us through, it's another day of OpenAI being big news and a big driver in these markets. After yesterday, of course, we got the news that Microsoft agreed to drop its exclusive rights to resell OpenAI products. And one day later, we have some news that Amazon is going to jump in now that that exclusivity has been waived. This is reporting that just crossed the wire from our very own Ed Ludlow, the co-host of Bloomberg Tech, and he's joining us now here on Bloomberg TV and radio. So Ed, walk us through what Amazon AWS specifically is going to do here and what the CEO told you.
Yeah, what they're specifically going to do is make OpenAI's frontier models, latest models, available in AWS. AWS is the #1 cloud computing provider by some distance in the world. But the story is they were late to the game. You know, Microsoft made a very early play to get in with OpenAI as an investor, as a technology partner. And AWS kind of waited 3 years to really try and catch up. You're right, the exclusivity of Microsoft ended, and Amazon has wasted no time, though this was the piece of news that was hiding in plain sight. Here's what AWS CEO Matt Garman told me.
Well, we're quite excited about the partnership that we're announcing with them today. For a long time, when we built Amazon Bedrock as a way for our customers to access frontier models and access AI models, we've always started with the position that we wanted to offer choice, and we wanted to offer all of the best models available out there. And today we're excited to be bringing OpenAI into Bedrock. I think it's something that our customers have asked for a really long time.
And we're talking specifically about frontier models, not just open-weighted models, which was
that's right. We've had open-weight models for a while, but yes, this is the frontier model. So starting in preview today, we have OpenAI's model 5.4 and 5.5 is coming in the next couple of weeks. We're also collaborating on a new offering which we call Managed Agents, featuring OpenAI, which is a complete managed agent capability so customers can really easily make stateful agents and build agentic applications together with Bedrock and OpenAI. And it's really just the start of a long-term partnership that we've established together. As the teams have gotten together, we see opportunity for us to really invent new capabilities for our customers to go and build interesting applications together. And really excited about working together with the OpenAI team and unlocking more things that customers can build on AWS.
We are in a strange situation where OpenAI models can now run on AWS, but Microsoft will benefit financially because of the latest terms of their agreement. They've ended exclusivity, but OpenAI continues to make payments to Microsoft. How do you think about that?
Oh, that's okay. Look, Microsoft has benefited from the growth of AWS since the very early days, in fact. We've supported Windows licenses, as an example, I think since 2007, 2008. I can't remember the exact year. But so Microsoft has benefited. They build great software. They have good partnerships, and they should benefit from those. But customers really want to use those technologies. SQL Server is a good example that runs great on AWS. In fact, many of our customers tell us that SQL Server runs way better on AWS than it does on Azure. And so for those customers, running in AWS is where they get the best reliability, the most security, and the broadest set of features. And so that's great. And if Microsoft benefits because their software or their partnerships or their licenses are being used inside of AWS, that's great. And in this case, we partner with Microsoft, just like we partner with Oracle and other providers that build software. And we want to make all capabilities available on AWS for people to build.
All right, really important news here, straight from the CEO, Ed Ludlow, talking with us live again on Bloomberg TV and radio. Ed, what do you make of the stock reaction here? I realize we look at Microsoft and Amazon. Amazon was up a lot coming into this today. It's down about 1%, but Microsoft is up about 1%. Are they being rewarded for distancing themselves a bit from OpenAI?
When I said that this was kind of the news hiding in plain sight, what I was specifically referring to was a post on X by Amazon's overall CEO, Andy Jassy, yesterday. So as soon as the Microsoft exclusivity ending news broke, Andy Jassy posted on X saying, well, that's very interesting. And I'm paraphrasing, but that Amazon would be expanding its relationship. That's in the short term. People have been writing for a long time that this would be the net beneficiary. Amazon would be the net beneficiary in a world where Microsoft decouples a little bit from OpenAI because they are the #1 cloud computing provider. And in that interview, you heard the term bedrock quite a lot. That is just a platform by which very large enterprise companies and other software companies can access the models. The benefit of doing so is that all of those other companies already do a lot of their computing with AWS. So if they're going to access AI models there as well, it becomes a one-stop shop. But the market sell-off of today, you guys may have touched on it already, you may touch on it more. I would just point out what he said, that demand right now is outpacing supply, because for the world, that's what they want to hear about.
Well, yeah, Ed, that's what I wanted to ask you. How do we reconcile that against the Wall Street Journal report about OpenAI not meeting its own internal targets? I know the company is pushing back. Does that mean that it shouldn't be as worrisome to financial markets as we're seeing right now?
Well, it's important to look at the specifics of what the Wall Street Journal reported, right? They talked about how OpenAI missed its own internal targets. They're their own targets. And that related to backward-looking 2025 financials, like revenue. But the figure that's in the here and now is that ChatGPT is not yet at 1 billion active users on a weekly basis. You know, ChatGPT is also a consumer-facing tool, right? Where Amazon fits into this is that they have a lens into enterprise workloads. And by that, let's not be abstract. They're talking about very large companies who have a big IT spend, and they know what the demand is there. And the commentary that from a chips perspective or a power perspective or a capacity perspective, the demand is still running ahead of supply. It's just day one for OpenAI being available on AWS, but it's a good indicator of how supply constrained that market is. And you'd think the market would see that as a good thing. It's an enviable position to be in.
As we talk about OpenAI, I've got to ask you about Sam Altman and Elon Musk. They're both in court today. It's day 2 of the trial. Understand that witnesses could be called as soon as today. And will we hear both of them called to the stand? I guess would be one question. And my gosh, what could we possibly learn in discovery? The messages between these two guys could be quite a book.
Yes, it could be quite a book. I was just talking with colleagues and editors here in the newsroom. I haven't myself covered a trial since the Elizabeth Holmes Theranos trial, where I decamped to San Jose for 6 weeks. In this case, it's in Oakland, but, you know, do you see Musk first? Do you see Sam Altman first? Those are real probabilities. We do not know. You know, I believe Mr. Musk was photographed arriving in Oakland. Jury selection's done. I think the main thing is that you need to understand that this is a suit by Musk against Altman principally and the other co-founders of OpenAI in abandoning their original stated mission. But there's also a suit, you know, an action against the company itself. And going through historical record of what happened at this company's founding is interesting. But the timeline, the period in between, I think you're exactly right. Learning through disclosure of documents and evidence of through a witness, you will learn a lot about how that company's changed in the last 10 years.
This is going to be rich. Ed, thank you for bringing us breaking news. This is important for our audience, and it's always great to see Ed Ludlow as the co-host of Bloomberg Tech with breaking news on OpenAI and Amazon. We'll be watching those stocks as we get our way through the trading session. And as we make our way closer to the King's speech, yes, indeed, 3 p.m. Eastern Time, King Charles, now at the White House, will make his way to Capitol Hill to speak to a joint session of Congress. And as we've been discussing throughout the day, there are a lot of questions about how close he might walk to the line, making some political remarks, at least geopolitical remarks, or if we'll be reading tea leaves here following what could be a 20 to 30-minute speech to both the House and Senate membership. Earlier today, it was all the pomp and circumstance of a royal visit as the president literally rolled out the red carpet at the White House. Listen.
Our ancestors would surely be filled with awe and pride that the Anglo-American Revolution in human freedom was never, ever extinguished, but carried forward across centuries, across oceans, and across history. So today we look back on 250 years. Let us remember what has made our countries the two most exceptional nations the world has ever known.
So some friendly words from President Trump as he greeted the monarch at the White House. And of course, he will do so again later this evening for the formal state dinner. But there is the congressional address in between, as Joe was just mentioning. So let's get more now as we turn to Bloomberg Washington correspondent Tyler Kendall, who is live on the North Lawn of the White House. So Tyler, of course, also on the schedule today is bilateral meeting between President Trump and the King. Has that wrapped up yet? Do we have any idea what conversation happened behind closed doors since the press wasn't invited into this one?
Well, Kaylee, it has wrapped up, but press was not allowed inside. It did remain private as intended, and reporting indicated that that was at the request of Buckingham Palace. It is our understanding that the King is going to start to make his way over to Capitol Hill. President Trump spoke very briefly to reporters afterwards, where he said that they had a good meeting and that he has a lot of respect for the King and Queen. And that came after his remarks earlier today, where he praised the bond between the U.S. and the U.K., calling it a cherished bond. Because, of course, as you both know, this visit by the King is intended to mark 250 years of the U.S. declaring independence. But we know in the backdrop that the U.S. and the U.K. have had heightened tensions recently when it comes to differences between President Trump and U.K. Prime Minister Keir Starmer. And this visit may be intended to help to smooth that relationship. In fact, it's not necessarily even in the backdrop. President Trump himself acknowledged that in an interview with the BBC last week, saying that the King's visit to the White House could, quote, absolutely repair that rift that we've been seeing. Now, when the King addresses Congress, as Joe already mentioned at the top there, we're not necessarily expecting him to be overtly political, but the palace does preview that he is going to tout the strong alliance between the two countries and highlight in particular the NATO and AUKUS military alliances amid what has been, as you both well know, Joe and Kaylee, attacks by President Trump against threatening to pull out of at least the former, the NATO alliance, amid disagreements when it comes to the conflict in Iran.
Well, it's interesting, Tyler, some of the reporting that we've seen based on an early look at least some of the King's remarks. He will actually make reference to NATO. He will talk about the AUKUS nuclear defense deal. He'll talk about the war in Ukraine. I guess it's just a question of how he gets to them. Might he mention Iran, or is that a step too far?
It does seem like it's a possibility. In fact, from excerpts released by Buckingham Palace, Joe, the king is expected to say, quote, "Time and again, our two countries have always found ways to come together," because we know at this moment the rift between the U.S. and the U.K. really has focused on the Middle East and those allies not coming to meet President Trump's demand when it comes to securing the Strait of Hormuz, for example, and what has been some pretty stark rhetoric from some European leaders, including the German chancellor just the other day, criticizing this White House's actions when it comes to the war. So we'll see if the king ultimately ends up getting there. This is going to be a rather condensed speech, if you will. Right now, Buckingham Palace is saying it's going to go about 20 minutes. In Washington standards, it's not necessarily that long, but I think we could expect probably a likely reference there, because the backdrop, at least today for this White House, while we are talking about this foreign visit, we are still getting headlines when it comes to Iran, because at this point it does appear that progress on those negotiations remains stalled.
Well, and on the subject of Iran, Tyler, we of course heard from the president on Truth Social this morning that Iran has informed us that they are in a state of collapse. Oh, excuse me, I'm still recovering from White House Correspondents' Weekend. Iran is in a state of collapse, Tyler. He says they want us to open the Hormuz Strait as soon as possible. Is he alluding here to the deal that reportedly Iran had sent over that would see a reopening of the strait but a delay on talks for the nuclear program specifically?
It does feel like that, Kaylee, and there is some new reporting out from CNN within the last few hours that Iran may be revising that proposal to send it over to Pakistani mediators, because the sense from the White House, including from that post from the president himself, is that they weren't very happy with the proposal by Iran, which our understanding is that we could see a reopening of the Strait of Hormuz in exchange for the U.S. lifting that naval blockade and maybe making some other concessions, according to Iranian state media, such as paying for damages, compensation for damages, pledges that the U.S. wouldn't attack Iran again, and some sort of legal framework for the Strait of Hormuz, many things that at least publicly have been non-starters for this White House. And perhaps the biggest sticking point here, though, is that Iran has indicated that they want to postpone negotiations and dialogue around its nuclear program, and we know that the White House says that's not going to fly for any potential deal. In fact, we had the U.S. Energy Secretary Christopher Wright on Bloomberg Television earlier today saying that that is the point that the U.S. will not be able to compromise on. In fact, we've really just seen the U.S. Bolster its position, too, when it comes to that naval blockade. We can say overnight there was that news that it did appear that an LNG tanker did successfully transit through the Strait of Hormuz, but Joe and Kaylee, our own analysts, have said that there should be cautious optimism around that. The data that they are tracking at this point shows that, for the most part, that traffic remains at a standstill.
All right, Tyler, thank you so much. Joining us live from the White House, Tyler Kendall, ahead of not only the King's speech, but the state dinner that will take place at the White House. Still looking for the menu here, Kaylee, which surely will be released later, but we'll also be looking for the toast. The press pool will be allowed into the dining room for this. And the toast is frequently something that makes the rounds on social media, right? You're going to see this in everything from People magazine to sort of lifestyle shows, and that's a way for the president to reach people that he normally could not.
Yeah, and the question's going to be, what message will he send?
That's
and
right.
As Tyler was just running us through, what message will we get from the British monarchy? Will it be a political or geopolitical one, more so than you would typically expect, or certainly more so than we saw when the King's mother, the late Queen Elizabeth, last did an address to Congress like this, all the way back in 1990.
That's right. I don't think they'll be singing American Pie at this state dinner. That took place a couple of months ago. We'll have our panel up next, only on Bloomberg.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. West Texas Intermediate crude oil just topping $100 a barrel. WTI right now trading at $133. It is up by 4.1%. Again, $100.34 on WTI. Barrel of Brent pushing higher above 111 right now. Brent crude up by 2.7%. All of this as the Dow Industrials just turned lower, have been higher for much of the morning. The Dow now down by 6 points, drop there of under 0.1%. A sell-off in tech giants dragging down stocks as concerns resurface over whether vast investments in AI will pay off. The S&P down 53 now, down 0.7%. Nasdaq down 325, drop there of 1.3%. And ahead of Mag 7 earnings tomorrow, we have got the Nasdaq 100 index down 1.4%. Indeed, our Mag 7 index right now down 0.7%. 10-year at 4.36%. The 2-year 3.84%. Gold at $45.89 the ounce, down 2%. And again, West Texas Intermediate crude $100.30 a barrel, up now by 4.1%. As you heard from our Ed Ludlow, Amazon says it will make OpenAI's AI models available to its customers after Microsoft dropped its exclusive rights to resell OpenAI products. Earnings news, Coca-Cola topped expectations. We are seeing Coca-Cola shares rallying now by 5.7%. Rival PepsiCo up 2.1%. GM after earnings right now little change, down under 0.1%. Again, West Texas Intermediate crude above $100 a barrel. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet with the latest on Wall Street. Thank you so much. We here at Balance of Power are bringing you the latest from Washington, which, of course, is waiting with bated breath for the address to a joint session of Congress that will be given by King Charles just over an hour and a half from now. He will be addressing the chambers, which, of course, could have a very different composition a short time from now after the midterm elections in November, not just because of a potential shift in the balance of power here in Washington, but because there are dozens of members who currently sit in the House of Representatives who have decided not to seek re-election for another term. And crossing just moments ago, we add another member to that list. Republican Congressman Daniel Webster of Florida announces he has decided not to seek re-election. And this is especially interesting, Joe, as this is the former Speaker of the Florida House, who was opposed to the redistricting effort that is now being pursued by Florida Governor Ron DeSantis, which, of course, is a redrawing of the congressional districts to potentially net Republicans 4 more seats. Congressman Webster, who, of course, will soon no longer be a congressman, has suggested that redistricting is a, quote, slippery slope.
Well, as you're connecting the dots on all the stories here, funny how they come together like this, because Republicans in the Florida legislature are taking up the new maps today. New congressional maps, remembering that Virginia did its own just a couple of weeks ago that gave at least nationally Democrats a +1 advantage. This map would give Republicans an edge in 4 seats now held by Democrats. So to what extent this changes the equation remains a question, and if in fact Ron DeSantis can push this through. At one time, not a great friend of Donald Trump, but he seems to be doing what the president wants here.
Yeah, rejoining in the redistricting wars that, of course, began in Texas and have reverberated far beyond the Lone Star State. But the question, of course, for Ron DeSantis in the aftermath of what we have seen in special elections all across the country as well was whether or not you risk dummy mandering through these gerrymanders because of an erosion of the coalition that elected Donald Trump and Republicans largely into the majorities last go-around in 2024.
Or it just could be a fizzle where it's a wash in the end. And after all of this effort, all the money, think of Prop 50 in California, all the hand-wringing in Texas, that you end up with the same balance you had before. Let's see what the panel thinks. Kaylee, Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick, Republican strategist, partner at Stone Court Capital. Are you still rolling your eyes, Jeannie, like when we came out of Virginia, or does Ron DeSantis give Republicans the leg up?
Still still rolling my eyes, no surprise. But I do think, Kaylee mentioned dummy mandering. That is, of course, a big question mark. Does all of this backfire on the GOP? Mm-hmm. But another idiosyncrasy, if you could put it that way, of the state of Florida is that they have a amendment, a fair district amendment. And that says that they are not supposed to be redrawing maps for partisan reasons. And this is why I question the number 4 that he went after. We had talked about, well, maybe he'll go after 2, maybe 3. Mm-hmm. But the bigger the number, the harder it is for them in court to argue that this is not partisan. Of course, we all know it's partisan, but the harder it becomes. And so I think that's another aspect of this that we have to look at is the sort of maximalist, as I know Rick called it, aggressive way in which he's done this. Does that backfire on them in court because of this amendment?
Well, so Rick, weigh in here as Jeannie's talking about the potentially partisan nature of this. Of course, the Florida governor maintains that this is just a realignment due to population growth and an undercounting in the 2020 census. Call it what you want here, I guess. But do you think he might be making a mistake?
Yeah, it's really doubtful. I've been saying for quite some time that this effort to redistrict in midterm is a fool's errand. One, because you had to assume the Democrats were going to react to it, and they have, and so there's no real advantage today. But two, we've been watering down perfectly good Republican districts all along the way. And in a season where the Democrats have a huge advantage going into the midterms, the last thing you want to do is water down what otherwise would have been safer seats. Democrats have been winning in districts that have plus 17 Republican histories to them. And if you apply those to these new districts, goodbye, fellas. 4 more Republicans going down because we made the mistake of midterm redistricting.
Boy, well, I don't know if it impacts the balance of power in the midterms here, Jeannie. We're told that money is extremely lopsided in favor of Republicans right now. How would those two rationalize each other?
Yeah, and of course, Donald Trump, he has an enormous amount of money. And one of the sort of big questions about the Virginia case was why didn't the Republicans spend more in that case? So I think we have to see if they feel the need to spend in the Florida case. There was a big story on the front page of the New York Times talking about what a difficult midterm this is looking like it's going to be. We've all talked about that before for Republicans. Money can help that, but it may not be enough. And another wrinkle in this whole story is, of course, we are waiting for the Supreme Court to issue a really important ruling on the Voting Rights Act. If they do that and it goes in a direction that leads to redistricting in the South, this Florida redistricting may not be the end of the redistricting wars, because you may see states like Colorado and New York who have these ballot initiatives jump back into this fray. And so there's a whole lot that can happen even before November. And, so far, to Rick's point, this has been sort of a tit for tat and nobody has come out ahead. I suspect that's where we're headed now, but there's a lot of money being spent and a lot of energy focused still on redistricting across the country.
Well, and of course, when we consider where all of this is headed, Rick, it is an attempt by both sides to try to guarantee that they can retain or get control of the House majority after November. That said, having the House majority sometimes isn't all it's cracked up to be, as it can be very difficult to keep that majority together, especially when it is as narrow of a majority as the one that House Speaker Mike Johnson is dealing with right now, including, as evidenced just yesterday, around the issue of FISA reauthorization of Section 702, key intelligence gathering powers that have been given that the administration argues is vital to stopping terrorism threats here in the United States. He can't seem to get alignment with conservatives on this. This couldn't get out of the Rules Committee yesterday. They had to adjourn. Maybe they're going to try again today, Rick. But how do you think the Speaker finds his way out of this one? Is the solution actually not going to be found in the House, but the Senate jamming something down the House's throat?
I mean, at some point, the Speaker's got to take a look at this and say, you know what, I am tired of living in this caucus. We don't get anything done. It's the least productive caucus in modern history. And he's got plenty of Democratic votes who'd be willing to vote on the FISA deal. And so, like, when are we going to just start doing bipartisan deals? He can't get this bill through. He's got 10 members who have already said we're not voting for this bill, yet he keeps bringing it up, for a vote. I mean, it's just stupefying to me that our country is being held hostage by caucus politics. The more power that Johnson could have would be cutting a deal with Democrats, passing these bills, getting that agriculture bill done, getting the FISA deal done, and starting to act like a powerful speaker who doesn't have to be held captive by 10 people in the Freedom Caucus. I mean, honestly, I scratch my head every time I see this replayed, and it's been done over and over again, why anybody would be allowed to be holding hostage the most powerful man in Congress.
Well, Rick's really getting to it here, Jeannie. Would there be 10 or a dozen Democrats willing to vote for FISA renewal to make the difference, or would Speaker Johnson have to compromise on something I'm not thinking of? What's the Democratic amendment that would make this pass the House?
I think you may get 10. He may have to compromise a bit. And there's a lot that Democrats would like him to compromise on. We are still looking at DHS being closed. We're still looking at the issue of ICE. I mean, the list goes on and on. But, the reality is that Speaker Johnson is a weak speaker, and Donald Trump is the actual Speaker of the House. That's how this thing has played out for so long. And what is perplexing about the entire FISA debate is these are the same debates we had in 24. They're the same concerns that have been expressed. The White House waited till March, almost April, to try to push this forward. The president, as far as we can tell, has not been pushing for this. He needs to get on the phone and make this happen. Unfortunately, he is the one that can move this House. Mike Johnson can't. And that's been shown repeatedly. It's been when the president got on the phone. The only question mark on that is, does the president's low approval ratings and plummeting numbers make these caucus members in the Freedom Caucus and elsewhere feel like, hey, we don't want to listen to this guy. He doesn't have support either. Then they've got a real problem. But I suspect that it's going to be up to the president and the White House to push this through. But there are Democrats who would support it. Listen, FISA is very important to our security, and we are in a time of war.
Well, just quickly, Rick, in our final minute here, do you think we are approaching the point where the arm twisting, even from President Trump, is no longer as effective?
Yeah, I think it's a really important point Jeannie makes. The closer we get to the midterms, the uglier the polling data, and it's just getting uglier and uglier, whether it's the president's approval or Democratic advantage over Republicans in re-election to the Congress, more Republican retirements, as we pointed out. It's going to be every man for himself at some point, and it may be that point now. Change into the summer is awful hard. Everybody who's normal goes on vacation. These members want to have a conversation with their constituents. Whoops, too late. You can't have it at the beach. So I think right now you see the characteristics of, like every man for himself, do what you can to save yourself, and to heck with the caucus.
All right, Rick Davis and Jeannie Shanzana, our political panel and Bloomberg Politics contributors, joining us today on Balance of Power. Thank you both so much. And we still have more ahead. As joining us up next will be the Finance Minister of Ontario. We got to talk tariffs and also Canada's new sovereign wealth fund. That's ahead on Bloomberg TV and radio.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Dow back in the green, higher now by 21 points. A little changed, up under 0.1%. Both the S&P and NASDAQ are trading lower. We are seeing a sell-off in tech giants that is dragging down stocks as those concerns resurface over whether vast investments in AI will pay off. Right now, we've got the NASDAQ 100 index down 1.2%. All of this ahead of key tech earnings tomorrow. Right now, NASDAQ is down 283, drop there of 1.1%. And again, the S&P 500 index down 45. That is a drop there of just about 0.6%. 10-year at 4.35%, with the VIX holding just above 18. We've got spot gold down $82 the ounce to $45.99, drop there of 1.8%. But everybody's watching crude. West Texas Intermediate bouncing around at $100 a barrel, up 3.8%. But look at the spread with Brent crude. It is an $11 spread right now. A spread with Brent at 110.98. Brent crude up today by 2.5%. So again, recapping here, S&P 500 index down just about 44 points, down 0.6. All of this as crude oil surges. WTI back above $100 a barrel. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington as Balance of Power continues. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. With the latest on the markets, we'll get back to Charlie in about 20 minutes' time. Top of the hour, 2 p.m. Eastern, as Bloomberg Business Week Daily gets moving here following the trade, of course, throughout the day as we talk politics here in Washington. And you can't separate the two when it comes to the energy markets, as we've made clear over the past 7 or 8 weeks with the standoff in the Strait of Hormuz. We are watching oil prices in New York back to triple digits. There it is, $100 a barrel for West Texas Intermediate. Brent was already well on its way. It's at $111. They're both up, well, I guess Brent's up 3% now. WTI is up 4% with no break in sight, and gas prices are moving higher as well. The latest from AAA today on a national average, $4.17 a gallon. Could there be an inflection point coming? Kaylee, this is a fascinating story that you can read about on the terminal, that Iran is running out of oil storage, and they're getting to the point now where they have to start reloading tankers, and those tankers are now lined up in the Gulf in front of the U.S. blockade. At a certain point, they will have to start putting this oil in barrels, in tanks. They might start taking it by train to China, and then they might have to start closing wells. And this is why we have this waiting game underway here to see who blinks first. Michael McGlone, of course, from Bloomberg Intelligence, our senior commodity analyst, joins us right now with his take on what's going on. Mike, we've got around 6 to 8 super tankers just idling there, laden with oil, and it looks like they're going to be loading up a lot more. Does this waiting game favor the United States?
Oh, absolutely, Joe. The price maker status has switched in the world from the Middle East to the Western Hemisphere, centered on the U.S. And the U.S. is accumulating with Canada a surplus near 8 million barrels a day of crude oil and liquid fuels that it has to export now. And what just happened today with the UAE leaving OPEC is adding to my view that we're probably going to get towards $50 a barrel in WTI crude oil by the time we get to midterms. That's partly because what crude oil does, you're seeing it today. I think we're near the upper end of the range in WTI, near $100 a barrel. It's breaking stuff, breaking the global economy. And if the stock market goes down, it's going to do what it did in 2008. It went to 147, and by then the year it was 32.
Well, let's talk more about the UAE leaving OPEC after, 6 decades? Mike, the justification is in part the disruption from the war and the shortages it caused that they say is going to require agility to respond to market demands. They don't want to have to coordinate their response with the cartel, which can be something of a laborious process. But I wonder, as we consider what the market demands are actually going to look like, what kind of response you do think the UAE and the producers still in OPEC are going to have to be calibrating?
Well, so, Kaylee, add to the UAE, Venezuela, and Canada, all the way down to Argentina. There's a lot of incentive for more supply. At the same time, we're seeing demand destruction. But what you see there is a paradigm shift in what the cartel did. It pumped up prices too high. It helped support landman and bring all that supply to the U.S. And now that cartel is redundant. It doesn't really do its job anymore. And the UAE is saying, hey, let's just take advantage as long as we can and bring on more supply. So they've been exporting around 3 million barrels a day. They can easily bump that up to 5. drive, and they have access to the Gulf of Oman. They don't have to be stuck in the Strait of Hormuz. But if you've also seen that in futures, what's happening today, now you're quoting front month futures in Brent, it's around 110. That's the June contract, which is going to expire on Thursday. But if you go out to June 2027, it's actually down on the day. It's down at $79 a barrel. The market's looking forward to all that supply.
Just quickly, Mike, we're going to talk in a moment, I'm glad to say, with the Minister of Finance from the province of Ontario. We talk a lot about the extent to which this is helping to enrich U.S. interests as an oil exporter. What does this mean for Canada?
Oh, same thing. U.S. and Canada combined, that's 8 million barrels a day. But major exporters, just a lot of that Canadian crude has to come down through the Gulf to get out. Now, they've put on other alternatives, maybe through the West Coast. But major suppliers of crude oil, not just that, biofuels via grains, corn, soybeans, wheat, canola up in Canada. And they're having problems with demand. Now, fertilizer is a bit of an issue, but there's a lot of supply in that space from U.S. and Canada in food and energy.
All right, Bloomberg Intelligence senior commodity strategist Mike McGlone joining us from Miami, all the way down south. Thank you very much. But it is north to Canada that we go next, although he's joining us from our world headquarters in New York. But the finance minister of Ontario, Peter Bethlenfalvy, is joining us now here on Bloomberg TV and radio. Minister, welcome back. It's great to have you on Balance of Power. If we could just continue the conversation on the energy shock emanating from the Middle East due to the war between the U.S., Israel, and Iran. How is Ontario, Canada, feeling the ripple effects of that shock already? And how is it affecting your outlook as finance minister?
Well, great to be with you again. Great to be here in New York. You're in Washington. Great to see you. It has a double-edged effect. Clearly, you just heard that for Canada, we were a big oil-producing nation, big agriculture, fertilizer, potash, all those things, great. But we're feeling it in Ontario at the pumps. That's where we feel it. And it'll flow through to the supply chain if this persists. I think that's an impact. So mixed emotions about the price of oil right now.
Interesting. What is an average gallon of gas for you, Minister? We're at $4.17 today. Does that sound familiar?
Yeah, it is. I spent 2 decades of my life here in New York, so very familiar. Not that high. It's $1.70 a liter. I haven't quite figured out the conversion between liters and gallons, but we're roughly the same. We're roughly the same, and we feel the pinch at the pumps. We cut the gas tax in Ontario. We're a government that cuts taxes, so 4 years ago we cut the gas tax, so it's diminishing the impact somewhat, over 10 cents a liter, but still, or the equivalent at the pumps in the U.S. in terms of gallons. But it affects the price of everything, and affordability is an issue.
Well, just like it is here in the United States, and an issue that, of course, has only sharpened due to the war with Iran, which, as we were just discussing with Mike, has seemingly reordered and perhaps structurally so global energy markets and energy producers like those in the Gulf states. And, of course, the energy production we have seen in the Middle East has empowered many of those GCC countries to have massive sovereign wealth funds that they can use to invest in other areas, be it technology or here in the United States or what have you. We learned yesterday, Minister, and you well know this, that Canada is now getting into the sovereign wealth fund game. This was announced by Prime Minister Mark Carney yesterday, giving essentially the Canada Strong Fund seeded with $18.4 billion from the federal government. What's your reaction? What's your role in this, if any?
Well, we have our own that we launched about 4 months ago, or a couple of months ago. So we're going in the same direction. If you think about what we're doing in Canada right now is major projects, big infrastructure. So that doesn't just mean a pipeline to the west to build more supply to markets in Asia, Southeast Asia, but also pipelines up through the north, through the Arctic, and east through Ontario. We import a lot of our oil from the Middle East in eastern Canada, and it gets refined in eastern Canada. We'd like to ship American and Canadian oil into those refineries. And, of course, we're shipping a lot into the U.S. We're a big exporter of oil into the U.S. We're your largest import market for energy. So this will help fund those major projects, tens of billions of capital required to do that.
Interesting. Looking at the size and scale, for instance, looking at Norway's fund, which is in the area of $2 trillion, you mentioned $18 billion. How much could this grow?
I think it could grow exponentially. And if you think about Canada, I mean, what we have up in Canada, your previous guest talked about oil and gas. We got an abundance of that.
Yeah.
We also have an abundance of agricultural products. He mentioned that as well. But I would add critical minerals, rare earths. We have all the minerals that the world needs for technology. And that's from a safety of supply, security of supply, and we have abundance of those minerals. So all these things, I think, are going to really add to not only the safety and security of the North American continent, I would add, but also from an economic prosperity point of view.
Well, and Minister, you mentioned Ontario's own version of this, the Protect Ontario Account Investment Fund. Have you found a private sector asset manager for that yet?
No, we're in the process of doing that. They're a couple months into the process, so hopefully conclude that shortly. But what that really is we have a lot of, an incredible amount of entrepreneurs in Canada. We have tremendous support from U.S. investors and investors around the globe. We just want to make sure that Canadian investors, we have some of the largest pension funds in the world, are based in Toronto and in Canada, to put more of that capital to work in the growth areas. We mentioned energy. We're talking oil and gas, but Ontario has a massive footprint of nuclear energy. Over 50% of our province generates the electricity in Ontario. And by the way, I was in Midtown yesterday, and one company said, You're powering our building here from Ontario. So we ship electricity out of Ontario. We're also going to be big in defense industry. We're going from 2% of GDP to 5%, and on a Canadian $3 trillion economy, that's another 90 billion Canadian, or about 65, 70 billion US per annum. So a lot of growth opportunities, and that's part of our strategy with our version of the Wealth Fund.
Minister Bethlen Falvey, I don't mean to interrupt. When you start increasing defense spending at a time like this in Canada, are you intentionally looking around the world for defense contractors to meet those needs? And by that, I mean looking away from U.S. contractors?
No, it's not either or. It's all of the above. I mean, the U.S. is our closest friend and ally and economic partner. Yeah, we're going to go through a negotiation on the USMCA deal with the Section 232s, but we're always going to have a very firm, long-standing economic relationship with the U.S. and that includes defense. I'm very confident of that. But the president and others have said you got to do more, and Canada's answering that challenge. So we're going to 5%. There'll be a lot of domestic, not just manufacturing, but drones and cyber technology. We've got to protect the North as well, the Arctic. So we're doing our share, and that's going to be a big growth industry for us in Canada.
Well, you mentioned the economic relationship between the U.S. and Canada, Minister, which of course has been rocked by President Trump's tariff policies ahead of what could be a renegotiation of the USMCA trade agreement. What is your understanding of the status of that right now, and what position Canada is bringing in terms of relative strength to those potential renegotiations, given everything that has gone on since President Trump came back into office?
Well, we're not only friends and allies and a long shared history together, but there's economic interests on both sides of the border. We're stronger together. I think we do I'll do in Canadian dollars, $360 billion of trade a year, so $1 billion a day. 1.8 million Americans wake up every day to work on something that gets shipped to Ontario. And I think we're the number one or two, 26 states we're the number one or two trading partner. And if we were a country, we'd be in Ontario, the 20th largest. So there's economic interests on both sides of the border. We have a lot of natural resources up in Canada that the U.S. We trade with, and obviously the U.S. has a lot of attributes too for us to be able to sell into. So there's a lot of mutual commercial interest to, I think, get a deal done, and we'll work it out with our neighbors.
Mark Carney has said that Canada will not rush a tariff deal with the U.S. In our remaining moment, Minister, do you approve of that approach?
Yeah, I think we want to get a deal that's good for both sides. And I think there is a deal, but through any negotiations, there's pre-positioning and what have you. I'll be in Washington tomorrow meeting a number of people from Congress. The dialogue, the two-way flow of information is essential. So, look, I'm an optimist, and I think just by force of geography and nature, culture, language, all those things, we're gonna get through this together.
Well, we wish you luck on your travels and your meetings with Congress. He is Minister of Finance for from Ontario, with us from World Headquarters in New York. Peter Bethlen-Falvey, we thank you so much for the conversation. I'm Joe Matthew in Washington alongside Kaylee Lyons, and we'll have a lot more to talk about on the late edition of Balance of Power. That will be after King Charles' speech to a joint session of Congress, which Kaylee's about to get going an hour from now.
Indeed, 3 p.m. Eastern is when that is scheduled. We'll hear from the British monarch potentially a little bit more about politics than you would typically expect. And of course, after his speech, he will look forward to a state dinner at the White House this evening. It's a lot to cover, and we will do so when we reconvene with you at 5 p.m. for the late edition right here on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Welcome to Bloomberg Business Week Daily. Yes, indeed, across Bloomberg platforms. It is Tuesday, April 28th, 2026. AI, it is definitely back in focus big time.
Yeah, dragging down tech stocks, concerns are resurfacing over whether vast investments in AI will actually pay off. This coming, just as traders are gearing up for a slew of mega cap results. And then, Carol, there's also geopolitics.
Yeah, absolutely. That's our day in a nutshell. So ahead this hour, investors questioning OpenAI's growth, fueling that tech sell-off that Tim just mentioned as it breaks up with Microsoft and Amazon swoops in and says, I'll date you, basically.
That is basically what's going on. I like how you're looking at that. Plus, speaking of breakups and moving on, the UAE turning its back on OPEC.
This was a kind of a wait what moment. This is after decades of being together, of course. And from AI to the war, what matters to global CEOs and how do they grow against it all? We'll dig into that. A new survey over at the folks at EY and EY Parthenon. They kind of looked into it, so we'll tell you what they found out.
We got a packed hour right here on Bloomberg Business Week Daily. Charlie Pellet is standing by, and he's going to get us kicked off in the Business Week studio. Hey, Charlie.
Well, hello there, Tim and Carol. I'm keeping an eye on oil right now, specifically West Texas Intermediate crude, also the spread with Brent. It is up to an $11 spread this Tuesday, right to the numbers, with WTI trading above $100 a barrel, $115 right now, $100.15 to be clear. That is a gain of 3.9%. Barrel of Brent, $111.12 right now, up by about 2.7%. So again, an $11 spread between the two. Dow Industrials holding on to a gain, barely up 4 points right now. Little changed. We do have the S&P down 40 right now, drop there of just about 0.6%. NASDAQ Composite Index down 260 points for NASDAQ, a drop of 1%, with the NASDAQ 100 Index right now down by just about 1.1%. All of this with the VIX currently at 18. We've got the 10-year 4.35% with the 2-year 3.84%. Gold is down $83 the ounce, down 1.8%, $45.98 the ounce. But again, crude bears repeating, $100.06 on WTI. Now by about 3.8%. A sell-off in tech giants dragging down stocks as concerns resurface over whether vast investments in AI will pay off. OpenAI, though, pushing back against concerns over its sales growth, saying its consumer and enterprise businesses are, quote, firing on all cylinders, despite that Wall Street Journal report about the AI startup missing internal targets. We are seeing some closely tied to AI tech names selling off. Oracle down by 3.1%. CoreWeave right now down 4.2%. And among some of the chip names, Advanced Micro Devices down 2.9%, with NVIDIA lower now by 2.2%. Big tech reports tomorrow, namely Google, Microsoft, Amazon, and Meta. Thursday, of course, we will be hearing from Apple. So again, recapping here, we've got the Dow higher by 18 points right now. Little change there. S&P down 0.5, but again, that crude quote bears repeating, just above $100 on WTI. Barrel of Brent at $111. I'm Charlie Pellet. Carol and Tim, that is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. So the story that we've been talking about a lot here at Bloomberg, it is our most read story on the Bloomberg. It deals with OpenAI pushing back against concerns over its sales growth, saying its consumer and enterprise businesses are, quote unquote, firing on all cylinders, despite a report about the AI startup missing internal targets. Wall Street Journal was the ones who came out first initially, kind of bringing up some of these growth concerns over at OpenAI.
Yeah, late yesterday, they said that OpenAI had fallen short of several internal targets as rivals gained ground. OpenAI described that report as, quote, prime clickbait.
Yeah, and we've seen shares of several OpenAI backers and partners, including SoftBank, Oracle, CoreWeave, sinking on the news today. The Journal also reported that OpenAI's CFO, Sarah Friar, has expressed concern that the company may not be able to afford its future computing needs if sales don't grow fast enough. So there's that, and then there's, of course, some Amazon news that we're going to bring in, because Microsoft has backed away from working exclusively with OpenAI Amazon has swooped in.
Okay, needless to say, there's a lot to get to. When we were on our editorial call this morning, planning this out, Carol said, I know the perfect person to speak with, longtime investor, Rudina Cesari, who invests in companies where AI is the core of the architectural foundation. She's been investing in, Carol, identifying the next generation of winners as the AI disruption in spend and impact continues to evolve.
She came to my attention at Bloomberg Invest. Tim and I were both there. Rudina, good to have you here. You are the founder and managing partner of Glasswing Ventures. When you joined us at Invest, you said to me something to the effect that when we talk about innovation, very hard for the horizontal players to respond. OpenAI and Anthropic, for example, you said the models that have been trained on web training, they will take us very far, but not far enough. Do you think some of what we're seeing is kind of falls into your thinking? Although we should point out that Amazon is now working with OpenAI. How do you see this story? Because I think we're trying to make sense of it.
Thank you, Carol and Tim, and good to see you both. So what is transpiring is a first mover, in this case OpenAI, experiencing something that we have not seen in tech in a long time, getting the followers to be truly fast followers and actually take market share. So it's very interesting to watch because OpenAI came right off the gates with ChatGPT and had huge usage, largely driven by curiosity and interest and hype. And then you have Anthropic, which for a long time was viewed as a distant second, come right off the gates with the notions of trust, and they were going to be compliant, and the use of their models and output was going to fit into enterprise workflows. And then the third player, Google, they have always been consumer oriented. So OpenAI went for it all. Anthropic focused on enterprise and Google focused on consumer. And Google, with $1 billion consumer channel, had a real advantage. The reality has so far shows that those two players have caught on and are perhaps holding back the growth of OpenAI.
Rudina, one question that I think a lot of people have when it comes to this technology, at least from a consumer perspective, and look, this is where
that one can do. There are so many mundane tasks that you can actually have these platforms far beyond what the weather will be like or Google search. We have hopped a generation of capabilities. So go ahead.
I don't think everybody gets that. I mean, I will tell you, I will admit, I tried to vibe code some elements of our program and to make our very heavy script more automated, where we do a lot of manual work. It didn't work for me. So there's a lot of people missing out.
I completely agree. So I think a couple of suggestions. One, if you have a 20-year-old or younger, have them show you.
That's a good idea.
Quite neat.
I talk to my 23-year-old a lot.
Can she come in and help us?
Maybe. Okay. Go ahead.
But more fundamentally, Tim, first of all, it's not the chat function that will probably help you get better, at least in the context of Claude. It would be the co-work capability. So I will go, let me put my mom hat on. I have a theater-oriented child. I always want to know when there are auditions, when there are plays. So I have built all of that on co-work purely on prompting, not a single line of code. And I've even asked it to generate the content in a tile format. So that is something that I enjoy, ingesting and digesting as information, and it's actionable. Very, very basic and yet very powerful. So the number one sort of mindset should be what task can, the OpenAI apps or the Claude, various uses can actually generate for me or take over for me.
So OpenAI did say, Rudina, just to kind of start to wrap up here, the company continues to see its push for more computing capacity as the great enabler, allowing it to deliver a better product experience to our customers. I mean, is OpenAI, should we be worried that maybe it's a lot of money chasing something that isn't going to pay off, ROI, if you will, in the longer term, or we shouldn't go that far yet?
The fundamental question is, what is the something? If we are talking about horizontal platforms, I think it's fair, at least in this moment in time, I think it's fairly clear that it will be winners take most, not a single winner, and that we will see specialization along consumer and enterprise, and even within these markets, perhaps, smaller verticals. That I think will persist. When you look at the enterprise workflows and particularly vertical industries, I think we will see a number of new players that we probably don't even know the names of, or I do. They've not made it to the public markets yet, that will really have specialized data, specialized architectures, and truly delivered high ROI productivity and beyond for the enterprise market.
So one last question. So there might be a world as we continue to see this build and spend and attention spent on AI. You know, you said to me about customer promiscuity. You know, customers use Gemini, next using ChatGPT Enterprise, and next day Claude. You know, we're using everything because it's no high cost to switching around, but that will not continue. So there will be some fallout. These models, all of these large LLMs, might not be around in just got about 40 seconds.
I think they will be around. I don't know that they will be in the same form that we see them today. And then you will also see highly performing new models, new labs, and new players.
All right, going to leave it there. Hey, come back soon. I'm so glad we could catch up again. Rudina Cesari, she's founder and managing partner at Glasswing Ventures, joining us there from Boston. All right, so the OpenAI concerns, I think it was a bit of an eye-opener today, and we saw it play out in some of the stocks and certainly pressure on the tech sector. But so too is news out of the Middle East. Again, looking to see when we can hopefully, fingers crossed, wrap this up, hopefully sooner rather than later.
Yeah, after 6 decades of membership, the United Arab Emirates will leave OPEC next month. It's a significant blow to the group that raises questions about its future at a time when the industry is grappling with the massive supply disruption caused by the Iran war. Right now, Brent up to $111 a barrel, WTI, Carol, up $100 a barrel.
All right, so let's bring in Mia Gindis. She's Bloomberg News oil markets reporter here in studio. Mia, this feels kind of big. And I think when we saw these headlines about the UAE saying so long, I think for me it was a bit of a shocker. I just assumed that there's power in numbers, certainly in the Middle East and in OPEC. But what's the backdrop? Because there's been tensions, my understanding, between the UAE and the OPEC leader, Saudi Arabia.
Yeah, well, thank you so much for having me. I'm so excited to be back. I think I speak not only for myself in saying that when I saw that headline today, I did kind of a double take in my screen because, you know, there's obviously so many other high stakes developments happening every day while we're sort of in the throes of this conflict. And this was one that I think a lot of people didn't see coming. The context is that the UAE has certainly butted heads quite a few times with Saudi Arabia, which is the de facto leader of OPEC. UAE has wanted to raise supply. It has a far lower fiscal break even than Saudi Arabia, for example, or other members of the group. It's about $50 a barrel, whereas Saudi's is about $90 a barrel. So for them, it makes sense to pump more, especially now when WTI is at 100 almost, Brent is at 110, and take advantage of these prices. And they have among the highest amount of spare capacity of most members of OPEC. So they're really in a position where they can reap the benefits of what's going on. It's just a matter of being restrained by the group or not.
But for so many years, and like Carol said, strength in numbers, this idea of acting unilaterally and going out into the marketplace and saying, this is what we're going to do. We are representing the various interests of these OPEC countries. How does the UAE now do that alone?
So I think in the past, it was a matter of, you know, how do we come out with this decision and risk sort of totally upending oil prices? And the UAE has even said that this was a really opportune time to come out and kind of announce this break from the group that they might have been possibly, you know, this is totally my speculation, but it might have been something that they wanted to do for a while. They just couldn't risk the market impact. Another part of that is that a lot of these Gulf countries have made an effort to sort of diversify away from oil, which is really the crux of a lot of their economies. So
is that the case for UAE, or are they more reliant?
It's the case for both, you know, UAE, Saudi, but like I mentioned, the UAE's break even is lower than Saudi. So they're just, you know, by default in a better position to sort of lead this break than another member is.
What impact might this have on global energy markets? And I am curious, does it weaken OPEC? And, you know, it just feels like this moment in time where we know the region, the Middle East, has been looking to broaden out its economy. And it has been doing so with some successes and some maybe not so much. But I just wonder, you know, are the fortunes perhaps changing literally and figuratively of the Middle East right now?
Yeah, I mean, this will have a major impact on global energy markets, oil markets, obviously, specifically, in the long term. But in the short term, it's not going to do much. Like, I think everybody was shocked by that headline today and the reaction of the oil market. Barely a, what was it, maybe a $3 move? And if this had happened a few months ago, this would be the story of the day. Whereas today it's sort of, gotten lost in all the other kind of news and speculation over the war. So in the short term, it's not as if the UAE could have gotten those barrels, can get those barrels out of the Persian Gulf right now anyway. So it doesn't change much. When the conflict ends, however, we'll have to see what the dynamic in the group is, right? So we'll have to see if other members follow suit. I mean, I haven't heard any sort of messaging that others are planning to. We'll have to see if people keep up with output quotas. There were a few cheaters that existed, that might become more prolific if Saudi it continues being restrained. If Saudi decides to compete with the UAE and try to grab market share by driving down their prices, I mean, then we have possibly a full-on price war on our hands. So it really depends.
It also comes at a time where, if we look at U.S. production, U.S. production over the last generation or so has really increased. And I'm wondering what this means for the U.S. and its role in global oil markets.
Yeah, I mean, it certainly means that one competitor has gotten stronger. It's a big one for Donald Trump, who was known to butt heads in the past with OPEC and has been wanting them to raise production for a long time with the aim of bringing down energy prices in the United States. So I think this will really shift the landscape among oil producers, but it's going to be really hard to see what that picture looks like until the conflict comes to an end.
So it sounds like, though, it could potentially longer term, if it becomes a bit of a free-for-all and people cut prices to gain greater share, that the world benefits, at least for a while, perhaps, right, in lower global energy or global oil prices.
Yeah, I mean, I guess it depends where you stand in the world, right?
Sure.
Like
that's true.
The U.S.
But I wonder,
and UAE, yeah, certainly would benefit, but there's definitely a lot of countries that are, less developed, that are maybe relying on those oil prices to sustain their economy, that this is going to be pretty painful for, in theory.
You mentioned the question about everyone's kind of looking at the, can we call it a cartel still? Like the group?
Yeah.
Group.
Yeah.
Looking at the group and saying, who could be next if it is indeed weakening? Does it give and provide cover to other countries that might want to leave OPEC? Are they in a position, are other countries in a position to go it alone? Or do they need OPEC?
The UAE started just by virtue of its size and its standing and the allies it has with the United States, I think
10% of production.
Exactly.
More than 10%.
Yeah. Is in a better position to make that move. But if, for example, Saudi continues to restrain their output, this could potentially make it so that other producers are more willing to cheat, and so we'll have to see how it plays out.
I forgot, there was another story in the Bloomberg too about the UAE telling some oil buyers to take Gulf supply outside the Strait of Hormuz. So people figuring essentially a workaround, it sounds like. Anyway, great stuff. Really appreciate it. Mia Gindish, she's Bloomberg News oil markets reporter, joining us right here in studio.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow turning negative once again, down 14 right now. Little change, but still down under 0.1%. NASDAQ trading lower by 232, down 0.9. NASDAQ 100 index down 1% now. S&P lower by 0.5%. A sell-off in tech giants dragging down stocks as concerns resurface over whether vast investments in artificial intelligence will pay off. The catalyst for all of this, OpenAI missed several sales targets after rival Anthropic PVC gained ground in the coding and enterprise markets. The VIX right around 18, 10-year 4.35%, the 2-year 3.84%. Spot gold down 1.8% right now. Gold below 4,600, 45.97 the ounce. Crude, major story. It is trading right now below $100. Did have a print on WTI above 100. Right now at 99.80, up by 3.5%. Barrel of Brent, we're looking at an $11 spread between the two. Brent crude 111.18 right now, up by 2.7%. Airbus suffered a steep profit drop in the first 3 months of the year as aircraft deliveries slowed to the lowest since 2009. ADRs of Airbus down now by 2.5%. JetBlue shares higher after earnings this morning. JetBlue up now by 1.2%. This despite the carrier reporting a larger first quarter adjusted loss per share than analysts were expecting. Recapping, S&P down 0.5%. WTI 99.50 a barrel, up 3.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Hey, folks, we're looking at shares at Disney. They've been down pretty much throughout the day. Kind of took a leg down at the open, down about 0.6% here. Some headlines crossing from the FCC telling 8 Disney-owned and I assume operated stations to file early license renewals. So this has to do with some of the DEI concerns.
Yeah, the FCC is going to start an early review of the TV station licenses owned by Walt Disney's ABC network. That's according to a person familiar with the regulator's plans. Brendan Carr, the chairman of the FCC, believes it's appropriate to accelerate the license renewal process and evaluate whether ABC is operating the stations in the public interest due to concerns over the company's diversity, equity, and inclusion practices. But the backdrop, of course, is what happened yesterday. And the reaction from the president and the first lady to Jimmy Kimmel's comments.
Yeah, on his show Monday night, Jimmy Kimmel defended some comments he made citing the First Amendment right to free speech and said a joke he made about the first lady, Melania Trump, becoming a widow was a reference to the age difference between the president and the first lady and not to a potential assassination. These comments on Monday night obviously were ahead of the White House Correspondents' Dinner, where we know there was a shooter and who has now several charges against him, including a charge to assassinate the president. But yeah, this isn't the first time that Jimmy Kimmel has been in the crosshairs of the White House.
No, I mean, just don't forget what happened last fall in the wake of the assassination of Charlie Kirk. And Carol, as you've been speaking, Disney shares have ticked down just a little bit lower, not at their lows of the session, but falling below where they were since about 11 o'clock on this news.
We should say this FCC starting an early review of the TV station licenses owned by Disney's ABC network. This is according to a person familiar with the regulator's plans, our Kelsey Griffins, writing this out. You can check out the full story. It's on the Bloomberg. We do want to get, though, to the latest on the war. President Trump saying Iran has asked the U.S. to lift a naval blockade of the Strait of Hormuz while the two sides negotiating an end to that 2-month-old war.
Iran has signaled that it may be willing to accept an interim deal to reopen the strait in exchange for Washington ending its blockade of Iranian ports while postponing a more complex negotiation over the country's nuclear program. The U.S. leader has told advisors he's not satisfied with Iran's latest suggestion, and the president's administration has previously said any deal, Carol, must include agreements to curb Iran's nuclear activities.
It's a lot, and we can see it's a little bit tricky because it's been going on for a while here in terms of negotiations or lack thereof. Ed Price, former British trade official, now senior non-resident fellow at New York University, often weighs in on geopolitics for us. He joins us now. Ed, good to have you back with Tim and me. 2 months in, what's been gained, what's been lost, and do you think they're making any progress? Will there be some kind of, resolution to this?
Hey guys, well, there's always going to be a resolution to anything. I'm not sure that it's anything more than a mess, a hot mess right now, albeit thankfully it's not a nuclear level hot mess. And I think that's ultimately a way of saying that that's what the president and his team are thinking about. Right at the heart of this is whether or not Iran should be permitted to develop a nuclear weapon. Now, there are two sides to this story, right? One is that we've done something pretty egregious. We've done something illegal. We've made this huge mistake that will echo through the ages because we attacked Iran without any warning and without any justification. I think if you take your view back a few years and think about the attack on Israel, and then another year back to 2022 when Russia attacked Ukraine, you can see the bigger picture, and you can see that there was always going to be some sort of clash between the US and Iran. So it wasn't done perfectly, I don't think, and it's still a mess, but it's still something that there is at least a convincing argument in favor of.
But Ed, there's still so much space between the objectives here of these two countries from the beginning, and the president actually just reiterating this now on social media, sending out a post that says, if Iran had a nuclear weapon, the whole world would be held hostage. I am doing something with Iran right now that other nations or presidents should have done long ago. Yeah, go ahead, Carol.
Yeah, and that was from this morning.
This is just now.
Oh, okay.
This is a new one. Yeah.
Oh, forgive me.
Yeah, this is a new one. And yeah, this is specifically with regard to Germany. And again, though, he's repeating what he said throughout the day today. Ed is the point, and I think Carol's right on that. The question, though, is about where they meet, because if the U.S. says no, it's not okay for Iran to have a nuclear weapon, and Iran says, well, we're going to push these negotiations aside, then how does the conflict end? It's sort of back to Carol's question.
Well, let's separate rhetoric and reality. The rhetoric, which is the talking, the two sides sitting around a cyber table via Pakistan. They're not together all the time in person. It's the two sides arguing about things that they've been arguing about for a very long time. But the reality is that the Iranian regime has been degraded. It's been shown that if it continues to mess around, the United States will use hard power. And so I entirely take your point that we don't really know where we're at with the nuclear question with Iran, but we do know that we're further away from the Iranians having a weapon. So I can't see for the life of me that because the Iranians haven't agreed not to have a nuclear weapon, that's any way a bad thing if we're degrading their physical ability to make war.
So does it make sense to you then that we open up the strait, move on, and work out the nuclear deal later, or do you think if we do that, Iran's going to be like, yeah, okay, we'll get back to you on it?
So they're going to continue to try and get a nuclear weapon anyway. Right. There is no deal that they will agree to or honor. There is no deal that we will agree to or honor. It's all rhetoric. We go back and forth because we have to speak to our populations. We have to give our populations some reason for this ongoing struggle. But what we've done is we've got down to the brass tacks, to the reality of it. The Iranians have been funding a terror network for 50 years. They were behind Hamas, they were behind Hezbollah, and the United States has finally, thank God, decided to do something about it in reality, which is in the hard power domain. So whatever the Iranians say, whatever we say as the Americans, it's all nonsense. It's about whether or not the Iranians are going to get a nuclear weapon. And if they continue, I'm afraid to say we'll probably come back and hit them again.
Oh, go ahead, Carol.
No, well, go ahead.
Well, it seems like you can't do this. It seems like you can't do this, and a country can't do this with the way that Iran's leadership is right now. And the president has talked about the idea of regime change, but the Ayatollah's son is now in power, and some reporting has indicated that the IRGC, this is out of the New York Times over the weekend, the IRGC is more so in control of the country right now, and that's what's leading to this idea that there's not really a clear person or party to negotiate with right now. And it seems like there's still more work to do when it comes to so-called regime change.
Well, regime change would mean, I think I've seen estimates up to 500,000 troops on the ground in Iran, American troops. So when we say regime change, I think we should be careful because we're not actually going to go in, control and occupy Iran. So you're right to say that it might be that people in the regime are now in a position of greater political power inside Iran, and that is a tragedy and that shouldn't have happened. But again, I'll go back to what I was saying, which is that I'm not so much interested in regime change and not even so much in behavior change, but in the ability of the Iranians to make war. So they've demonstrated that they can hold the international economy blackmail. They've shown that they're going to throw throw missiles wherever they want, whenever they want. All the more reason that we did what we did and we degraded their ability to make war.
God, I just feel like everybody wants to make war, to be quite honest with you right now. I want to go to a couple things I want to throw at you ahead. We've got King Charles of the UK. He is at the top of the hour or a little bit after 3 p.m. Wall Street time going to address Congress. He's here in the United States meeting with President Trump. You've got that on. And this at a moment where we've seen incredibly strained relationships between what has been a historically friendly relationship between the U.S. and UK. I don't need to tell you about that. You've got that going on. And then you've got, you know, Iran, Russia, that China alliance, and China and Russia's assist to Iran in this war. I'm just trying to understand how this world is being molded going forward.
Well, 250 years ago, a mad English king started imposing random tariffs on Americans and introducing standing armies into their cities, and the Americans freaked out. And 250 years later, we have a mad American president imposing random tariffs on Americans and introducing standing armies in the form of ICE, and it's the English king that's freaking out. And that's a way of saying that history is pretty ironic. We've come full circle in the UK-US relationship. I'm a British American, and the British half of me is very much supplicant to the American half. But you're right to put that in context, which is that there is a power bloc emerging in Eurasia. China and Russia, and for that matter, Iran and North Korea are pretty much all on the same page, and they're trying to reshape the world. They're trying to tear down the post-war order. And I think that President Trump, for all his follies, was correct to see that and correct to do something about it, which was effectively to say to NATO, which means the Germans and the French and the English, please get on with rearming quickly. But the way that he's done that, of course, as I say, has freaked everybody out. So, yeah, you're right to say that there's a context, and you're right to say that the US-UK relationship doesn't look that rosy, but there's a method in the madness.
Just in 30 seconds that we have left, Ed, what's the message then that the king sends to this joint session in just about a half hour?
Well, he's going to say all the usual things about how important the UK-US relationship is. The translation of that will be, please don't leave us in the lurch for 5 or 6 years before we've had time to rearm, because the Russians are on the march again. So that would be my interpretation of whatever his remarks are.
Fascinating and terrifying, our moment in time. Ed Price. I am too. Ed Price, thank you so much. Good to check in with you and have you here, back here on Bloomberg Business Week Daily. He is, of course, Senior Fellow Non-Resident at NYU, former British trade official, joining us remotely from New York.
Well, some other news coming out of Washington. Former FBI Director James Comey has been indicted for a second time since Donald Trump returned to the White House last year. This, according to people familiar with the matter. These charges were brought by prosecutors in North Carolina, said the people who asked not to be identified, discussing a case that hasn't been made public. CNN did earlier report this indictment.
Yeah, one of the people said the indictment was related to a photo last May that Comey posted in which the numbers 86 and 47 had been formed by seashells. Critics said that could have been a reference to killing Trump, the 47th president. Not funny, crazy, but we are living as we said. Comey deleted the post at the time, said that was not his intent. All right, that is the world we are living in on this Tuesday, April 28th. Stick around, everyone. We're back in a moment.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. West Texas Intermediate crude holding above $100 a barrel. Brent, the global benchmark, above $111. Right now, we got WTI up by almost 4%. Barrel of Brent up by almost 3%. And again, we are looking at an $11 spread between WTI and Brent. A sell-off in tech giants dragging down stocks as concerns resurface this morning over whether vast investments in artificial intelligence will pay off. Right now, the S&P is at 7134, down 39, drop of 0.5%. The Dow swinging between gains and losses, right now down 60, drop there of 0.1%. Nasdaq Composite Index down 0.9%. The Nasdaq 100 Index down by 1%. All of this ahead of major tech earnings tomorrow, specifically Mag 7 names. And of course, we got Apple coming up on Thursday. The VIX just above 18 now, with the 10-year at 4.35%, the 2-year 3.84%. Gold down $84 the ounce, down 1.8%, $45.97 the ounce. And West Texas Intermediate crude bears repeating, $100.16 on WTI, up by 3.9%. The FCC will start an early review of the TV station licenses owned by Walt Disney's ABC network over potential, quote, unlawful discrimination. Disney shares now down by 0.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie, tracking the markets for us on this Tuesday. We are tracking what's going on in Washington, D.C. We do want to take you to the House chamber, and you can see members of Congress getting ready for the King and Queen of the United Kingdom to enter the chamber. And that, of course, was Vice President J.D. Vance and Speaker of the House, Mike Johnson.
This speech, which is set to begin in just about a half hour, will be only the second time a British monarch has addressed a joint session of Congress. It follows Elizabeth's address back in 1991. She was greeted with a standing ovation from American lawmakers who were assembled at the Capitol.
Yeah, and it comes at, we've talked about this a lot. It comes at a time where there is a lot of tension in the relationship between the United States and the United Kingdom, particularly from President Trump and, of course, Keir Starmer there. So we're going to continue tracking and take you there as we mentioned, that the King and Queen are expected momentarily. All right, in the meantime, two of our big themes. We've talked about the war. We've talked about also AI, artificial intelligence. Questions continue around the spend, the build out, what it all means. We'll get a big read on it when 5 of the Mag 7 report their results, most of them tomorrow after the closing bell.
This should not come as a surprise to anybody, but this is also on the minds of business leaders. According to a new survey on growth coming from EY Parthenon. Here to tell us more about it is Mitch Berlin, EY America's vice chair at EY Parthenon, joining us from Barcelona. Mitch, we're going to get to the survey's finding because it certainly overlaps with what Carol and I were just talking about. But what are you talk to leaders all over the world. You're in Barcelona right now. What are you hearing from them just about the challenges in today's environment?
It's certainly a more challenging environment than it was a year ago. And I would say the majority of the CEOs and executives that we're speaking to are now revisiting their strategies that they had put in place a year back. And a lot of these strategies were really focused on growth compared to the prior years where they were more focused on efficiencies and operational effectiveness. And what they're looking at, both for organic growth and inorganic growth, is really understanding the current environment and how it impacts those plans that they put out a year ago. So they're looking at inflation, interest rates, the impact of tariffs, supply chain challenges coming from the crisis in the Middle East, and really saying, if we were going to grow organically in a certain geography, does that still make sense today based on what's going on? If we were going to invest in certain products, does that still make sense given the supply chain challenges? They could be petroleum-based products that could just be impacted by the overall flow of goods. So they're evaluating that. And for inorganic growth, more M&A, they're really looking at those things, but also the cost of capital. The cost of capital a year ago, we expected would have gone down more than it has now. We'll be lucky if we get beyond 1/4 of a point turn this year. We were initially thinking 1 to 1 1/4 turns. So for a significant deal that you're leveraging, that can impact the ROI that you're calculating on that. And those deals may make sense anymore in today's market. So people may hold off a little bit on some of the M&A decisions they're making.
So that's a full basket, if you will.
Yeah,
Mitch, no doubt about it, a lot. So do they feel comfortable enough? I mean, in terms of M&A or pulling the trigger on spends, we're going to get a great read, certainly on the AI spend this week, but I feel like the hyperscalers, the Mag 7, are in a category all to themselves. So I'm just curious, are they feeling comfortable pursuing strategies, growth strategies or otherwise, or are they still kind of or perhaps kind of holding off?
They still are comfortable pursuing deals. Look, we know from history that the companies that invested in turbulent times came out of those times better than their peers that didn't invest. And this is no exception. If you look at the first quarter of 2026, it's the best quarter from an M&A perspective than it's been since 2023. The deal volumes, the values rather of deals are quite significant. They're up 74% year over year. So we're still seeing deals happen, and these are much bigger deals than we've seen in the past. So these are mega deals that are $5 billion plus deals. So deals still are happening.
Why is that? Is it the regulatory? Is it the regulatory environment? Is it? I mean, the path for rates. Like, what is it?
It's a little bit of both. Part of it is that the regulatory environment is more friendly towards deals, although we did see the first deal stopped in the Trump administration. So no deals have been stopped until about last week, where I think a pharmaceutical deal was actually halted and terminated. Others have figured out other ways to get through by divesting certain products or geographies and such, have been able to get their deals through. But we have seen the first killed deal, but that's the first in 18 months, which is very different than the prior administration. But companies also know that they need to transact to transform, and organic transformation takes longer than inorganic transformation. So if you're a life sciences company and your patent cliffs are coming towards an end, you invest in R&D to build your R&D pipeline. If you need to move into new geographies, the easiest way to do that is to acquire a like business in the geography that you want to move into. So transformation still needs to happen, and M&A is the fastest way to that, and that's why they're still moving forward with these deals.
AI, also a great way for transformation. Is it worth the spend, the ROI, or are they still trying to figure that one out, Mitch?
It's still early days on that, but I think we'll find when people figure out exactly what to do around AI, the juice will be worth the squeeze. We're looking at, right now, a lot of AI is focused on efficiencies, so it's really automating point solutions, where the value really will come is when you can automate an entire value stream, so an agentic AI solution that really replaces an entire humanly led value stream with automation. And when you change the processes around that and that level of significance, you're going to see the benefits from that. We're also looking at AI now from a growth perspective, which is relatively new, really using AI to predict, what markets will my products be popular in? What products should I invest in? Can I serve more customers using automation, and how much can I use AI to actually grow my top line versus just taking costs out of my bottom line?
Yeah, Mitch, I want to go back to what you said about the replacing entire value chains. Just in about 45 seconds, that all sounds pretty good for everybody except who's being replaced. So maybe good for shareholders, maybe good for executives, but what about those people who get replaced?
You see a lot of headlines around layoffs and such, and there'll be new jobs created through AI. There'll be jobs that will be eliminated through AI. And I look at, when I look at what we do for a living, AI will do some of the work, but then that allows us to add more value around insights and such that AI can't do. And so jobs will be taken away, but new jobs will be created. I think the key for folks is that you have to be open to reskilling yourself and really understanding, how do you, what is adjacent to that solution, and how can you add value around those adjacencies?
All right, really appreciate it. Fun to catch up with you. Mitch Berlin, EY, America's Vice Chair at EY Parthenon, joining us from Barcelona. In the meantime, we do want to just quickly take you back to the nation's capital, and there we find Speaker of the House Mike Johnson alongside Vice President of the United States, J.D. Vance, calling to order members of Congress there as they are awaiting the King and Queen of the United Kingdom. The Speaker and Vice President also appointing members from their respective chambers to the Escort Committee for His Majesty Charles III of the UK and of Northern Ireland.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we're just about 15 minutes away from UK King Charles of, obviously of the United Kingdom and Northern Ireland. See how I did that?
I love it.
Anyway, he and his wife, Queen Camilla, they will be entering the House floor there. And speaking to members of Congress.
This is a historic day.
Yeah.
It's been many years since
Hasn't
the last
happened
time.
a lot, right?
Yeah, it has not happened a lot. We expect all the senators and members of the House to be there. That speech is set to begin just after the 3 o'clock hour begins, and we will bring it to you live as soon as it happens.
The House Assistant Sergeant at Arms, Seaton Gardner, will be announcing the President's cabinet, so we'll be watching that, or has been doing that as members continue to shuffle in. So we'll keep an eye on it, and certainly we are going to take you there as King Charles gets ready to make a speech. As we've said to you, this is coming at a tough time between the United States and the United Kingdom. As the United